is hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
It's the spooky season I see coming at you. Huh?
I wear this dress year round because I really like it. But yeah, it's like a voodoo doll dress, but I wanted to amp it up. So
Yeah, we need you in New Orleans or something like that. Looking good,
What's
good.
that? Jack Skellington night at the...
Oh, The Nightmare Before Christmas.
Nightmare Before Christmas.
Yes, yeah, that could be.
Classic.
I think this is.
Classic.
You remember that one?
Of course, yeah. Are you kidding me?
But I love Halloween, so I will be wearing. I have a lot of Halloween themed clothes, so I'm just gonna wear them all this week.
I like it.
Yeah.
You should do it. How about you? You got it. Are you?
No,
I mean,
I'm on a flight. I'm going out.
oh, that's right.
I'm going to miss my day.
Yeah.
You could still dress up on the plane. I bet people will be dressed up on the plane.
You get one.
I don't want to dress up as Tom on the plane. That's not... I don't know if anybody needs that.
You get one on the plane usually. You'll get. I've traveled
probably.
on Halloween. You get one. You get a flight attendant sometimes.
Yeah.
That'll dress up too.
Especially now, like the Halloween costumes that are really kind of just like pajamas,
Yeah.
like with the head, like the Tipsy Elves ones.
Yeah, I'm
Like,
a furry.
I'd wear that on a plane.
Yeah.
Like that looks hella comfy.
Yeah, I'm a furry for my grandson. I'm gonna be a bear. So I got like one of those onesies zip up.
Hey, their kink is not your culture.
No.
they're
Well, he called me a furry. I just thought I was a bear.
Yeah,
I didn't
yeah.
think about it until then, but he did it to me on Thursday, so I figured I'd say it again. So anyway.
Are you locked and loaded with your candy? Are you ready to?
Oh, I am locked and loaded. I don't know, over 200 candy bars. So I'm all good.
Are you-
Usually, he's one of those that like buys 100 of them and then he'll think, I don't think I have enough, and he'll go and get about 2 or 3 more batches.
Exactly what happened. We got like
Yeah.
96. I think it was 18 to a. I don't know. It was 18. We got 94, something like.
Yeah, I can't do that math. Yeah, I don't know.
We got like 4 of them. My wife said we don't have enough. I said, well, come on, we'll go to the store. We'll get some more. And then as you get them, we don't have. What about the kids that don't have nuts? We got to get the gummy things. All right, get the gummy things. Oh, then people really like the sour stuff. So all right, we'll get some sour stuff. Before you know, we
What
have
about the gluten-free kids? I don't know.
So we have about 200 or so. But I hear it's going to be cold. You were telling me it's going
It's
to
going
be
to be freezing, apparently. I don't know if it's
going
going
to be like 55 on Friday.
Yeah.
Actually, Friday. I don't know when your village does
Yeah.
the actual Halloween, but
Yeah.
on Friday, the actual day, I
I'm
think
not
it's supposed
sure
to be
what's
like
gonna do it
55 and sunny.
Yeah.
Yeah.
I just know our winter is going to be freezing. At least that's what they
say.
tell us.
Yeah.
That's what my peeps say.
Yeah.
Your insiders?
Yes.
Your farm
Yeah.
to table friends or
Yeah.
something like
Going
that?
to be perfect for ice fishing.
Perfect for ice
And
fishing.
I'm sorry, how many times have you ever ice fished in your life?
I'm going to be.
I'm sorry, my brain stopped working. You're gonna go ice fishing
Yes.
with Frankie up in like,
No, maybe I should hit
Rhinelander?
up Frankie.
With Joey
Yeah.
and the guys?
Yeah.
I like that. I've never been ice
We
fishing.
were trying to last
I've
year.
never been invited to be ice fishing.
Oh.
Sweetie, you're too delicate for ice fishing.
Maybe Vinny. Maybe Vinny, that's your next up.
I can't go.
Yeah.
This is the
They have the whole setup, like the little tent, the little pop-up
these guys?
thing, and the
these his kids, his friends over there. These are the chosen few.
oh,
They'll have they'll have somebody bring out the house for them, and they'll have an outhouse and a nice little like a heated seat. You guys, these people are chosen.
it's like glamping.
Yes, it's like glamping.
No.
They'll have somebody else take the fish off the pole for them.
No.
Somebody was
Certainly not. Certainly. Mm-hmm. No.
But it's gonna get real cold. 'Cause I think a couple, like maybe last winter. I don't even know if the ice got thick enough.
It didn't. We had
Yeah.
to cancel it.
Yeah.
So we're.
Last year it didn't freeze over.
It just wasn't thick
frame.
enough.
Wasn't thick enough. Yeah.
To be.
Because I remember one year, like a bunch of people like parked on Lake Geneva, and then their cars went into the lake.
Oh.
Yeah.
Oops.
Whoopsies. That's not good. Bat, are you get into your candy stash? Because I had to yell at my parents because I was like, because they get maybe a dozen trick or treaters, they don't get a ton, but they buy candy, but they just eat the candy, and I'm like, you guys, you got to stop doing that.
You can't eat the supply.
Right? Yeah, you can't get high on your own supply.
Right, get high on your own supply.
Yeah.
So we are veterans at this. So we get like the little, which have become smaller and smaller, by the way. Like the little pieces.
Sure.
Of candy, so you can
The fun size,
Yeah, the fun size.
Right,
those
Snickers.
have been hit by shrinkflation like no other.
Yeah.
Those things
doubt.
are.
Oh yeah, it used to say Snickers, now it just
micro.
says S.
Yeah,
Just
They're
says
micro
S.
now.
They're micro.
Yeah, they're definitely micros. Yeah.
Yeah, but if you eat 20 of them, like
So that's been open.
Okay.
That's been open.
Yeah.
But the big bars we haven't touched, to my knowledge. I haven't looked down there. You know.
The extras will get distributed for like birthdays and
No, I don't like it when
Christmas.
people-
You know, like they'll get.
When
you guys
people
are
bring
like
it
in
into the
September. Well, not
office.
you, but most of the kids. What's that?
Yeah, I don't like it when people bring it into the office.
Because then you feel obligated to eat it or something.
Yeah. I do support. I think you can send your candy to service members who are serving. So I think I support that. Send them your candy.
That's good thing to do.
Yeah.
Good thing to do.
Yeah. How was your weekend, Nikki?
Forget about his weekend. I saw you were on your bike again.
Yeah, we did. It was. I told you I was gonna ride this.
I know,
weekend.
but I just tweeted out some pictures. You got it done. It was a beautiful weekend for you.
Yeah, it was the flannel ride. So we all wore flannels, and I love a theme for a motorcycle group. I don't know, but there's probably
Gang. Call it what it is.
Yeah.
It's a gang.
It's like more like a riding club. No, there's like 150 of them.
Okay.
Yeah, 1%ers.
We're not 1%ers. But it was cool because we rode through Oak Park. If you've never been to the Oak Park suburb of Chicago, it's a beautiful historic suburb. A lot of Frank Lloyd Wright homes. And so a lot of the homes were beautifully decorated for Halloween. And so obviously 150 motorcycles coming up, a residential street, you can hear it. So people were coming out of their houses and they had like their phones, and so we were waving to all the kids. Like we were very well behaved, I will say.
Sure,
but we ended up. You will like this. We ended up. So we rode all the way out to like Downers Grove and that area, and we ended up at a Twin Peaks in Warrenville.
Oh wow!
Which is I guess
What's Twin Peaks?
It's a Hooters knockoff.
Yeah.
It's a Hooters.
Don't they do isn't it ribs?
I had boneless wings. I don't know. They might have it, but they had like burgers, wings, stuff like that. Just ass out. So I tipped very well. I felt bad. I was like, it's cold. I was like, y'all have to be freezing. So I left a really nice tip.
That's good. Twin Peaks. All right. Well, you're a motorcycle gang. That's where you guys go.
Yeah, but service was so slow. By the time I came back, it was dark and it was cold.
No, you haven't been. You probably know because you've been in the South and stuff like that. You lived down. Did you live in the South?
I was born in Texas.
I went to Charlotte. Beautiful city, great time, wonderful people at the show, absolutely outstanding.
Who are you going to throw under the bus right here?
I'm going to throw all of the city of Charlotte on the bus in a moment.
This is Tom's job. You're usually the one that's like more, patient.
No, it was perfect.
An everyman type guy. But you've now ascended.
No, I'm not.
You've ascended, and now you're gonna throw him under the bus.
You just have to lower your expectations, but they work at a different pace.
Yeah.
It's like the financial hub. It's like the second largest financial hub.
Yeah, 100%.
They keep bankers' hours.
But restaurants and getting a cup of coffee and stuff like that.
Oh.
Wonderful experiences. Nice. Food was outstanding.
Sure.
But outstanding. It was great. The food was actually awesome. Probably some of the best food we've had on the road for a show. Was out. Was.
Do you have barbecue or what? Do you have like
no,
southern?
we had like a farm to table restaurant.
Okay.
It was awesome. Don't ask me the name of it right now. It was kind of an odd name, but I can get it if you really want it. People in Charlotte.
Do you get like a meatloaf, fried chicken, or what do you get? Like what?
I actually got scallops, if you can believe that, because we had like 8 million appetizers.
I'm sorry. In what farm in Charlotte do scallops come from?
They drove 3 hours to get them. They went to the coast and came back.
Okay. I was like, what?
It was awesome. It was awesome. I mean, the food was just outstanding. But it's a much sweeter, lower pace. Everybody's kind of working at their own time.
Sure.
It was really nice.
Sure.
Very nice. And you feel good, like waiting an hour for your food, like because they make you feel so nice.
Yeah.
It's very Southern hospitality and stuff like that. So you didn't mind too much.
Yeah.
But you definitely got to put it back a little bit. Like I went down there for a cup of coffee at 6 a.m. They don't open till 7.
You get so upset about when you're on there. You want every place to be open at like 4 a.m.
Well, coffee in the room.
Sure, I get that.
I've
It's not
seen like
good.
the people clean their panties in the coffee pot and stuff. You haven't seen those?
What kind of videos you watch?
What is your algorithm? Who?
I don't know about that.
No woman has ever cleaned her drawers in a coffee maker.
It's a dipper. I'll show you that
I think that's
on
clickbait.
TikTok.
Okay.
I'll show it to you.
All right. I don't.
Obviously, I'm not doing it.
Okay.
I mean, my panties wouldn't fit in there, but I mean, they're doing it.
Wow.
I'm telling you, so I don't do the coffee.
Illuminating.
Oh yeah.
Yeah. Anyway.
But that's good. But you had fun in Charlotte. We got lots of photos back
Great
from
crowd.
people. People had a great time.
Great everything. It was awesome. Yeah, really, 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 really nice. Very, very nice. Very nice. Can't say enough about it. Love Charlotte.
That's good.
Yeah. A lot of NASCAR down there, too.
How were the flight? Were there any flight delays or?
I got in, I got out, no problems.
Okay.
Up, down, in and out, under 2 hours. It was phenomenal.
So no issues with TSA, no issues with
TSA.
Air traffic control.
Smooth as can be.
Okay.
I heard Britt had a 3-hour delay.
Oh, okay.
But she was on United, we were on American. I don't know if that makes a difference to anybody.
Gotcha.
Ooh.
Yeah.
Gotcha.
Americans usually
I know, it was beautiful. It was great.
surprising.
Did you get to board early with Tom?
No, Tom lost his status. He's not like the next of the show.
no.
Yeah, he's got to go with his own pocket. You know how
Sure.
it is. His hands, they're
Sure.
real,
He's an
real
independent
small.
contractor now.
Yeah. His hands are real small. His pockets are real deep. You can't get in there. He's like a pterodactyl. You know how it is. So he had to go on my dime, and he got like the bad cheese and the regular.
Ooh,
bad
you got to
now.
pass him the warm nuts.
Yes. So I got to pass.
Very
him
nice,
one.
very
Yes,
nice.
it was good. Actually, no nuts on this one.
That's funny.
Wow.
Yeah,
Whew,
yeah.
Really upsetting.
It's not like it used to be.
Yeah.
No.
So you only got one show left,
Yes, that's it. Austin. Yeah.
and then
All done. End of an era.
it's been a
Old
busy
man out
year
the
for
pasture.
you were all over.
Yeah. Hey, listen. Come for the last time to see my sidekick. Right? I mean,
Yeah.
in Austin. I mean,
Yeah.
that's the last time you can come out. A week from this Friday, the last time you can come out and see my sidekick.
Yeah.
I don't know what to tell you.
And TP will be there as well.
You'll
Oh.
be there. I think the lovely Liz and Jenny will be there. There we go. We just put it up there. Anton's
Wow.
Nightclub. You might think it's at night. No, it starts at 8 a.m.
Yeah.
Not 8 p.m.
That's how we get these places at a discount.
Right. 8 a.m. I know.
Not much of a discount.
I know. It's a nightclub. It's 8 a.m. Show starts at 9. We'll be there an hour before. Shaking hands, kissing babies, doing whatever we got to do. So limited seating, but you still got some time. tastylive.com/events. Come out and see my sidekick for the last time. Tom Sadnoff will be there. It's a great show. You're going to love it.
That's nice.
Liz and Jenny, too.
That's great.
Yeah.
How about you, Nikki? How was your weekend?
It was good. Hung out. Went to the dunes.
I was gonna say, because you had a dog.
Yes.
How was the dog sitting?
Fun. It was fun.
What happened?
Love the dunes.
Who?
Who?
What?
What am I, an owl?
You been where? Where who?
What did you do?
I went to the dunes.
The dunes?
Yeah.
Indiana dunes?
Yeah.
Oh.
Yeah.
With a dog?
Did some hiking. Yeah, with the dog.
You did hiking?
There is a trail there that you hike that is walking along a trail.
With the
There's
dog?
some water.
It's sandy.
Yeah.
It's nice though.
Sandy,
It's
it's fun.
it's nice.
Yeah.
It's not bad.
Yeah. Dog wasn't allowed off leash though.
Right. Yes.
Which
for
is-
good reasons. It's for the dog's own safety and to
Yeah.
protect the nature
Is this a
environment.
good dog? Does the dog go off?
Good
leash?
dog.
Yeah, and hang out
Yeah.
with you and stuff like that?
Well trained golden. Like one that is off leash trained.
Does it make you want to get a dog?
kind of
now?
like Goosey was.
Yeah.
Yeah.
Good dog. It does make me want to get a dog, but then it's like
Too much responsibility.
it's too much.
Yeah.
I don't have enough space. It's just not. It's not right.
Pets are the new kids. So
Yeah. I don't know. I don't want to get a small one either.
What?
You know, 'cause you need, like, a
small dog. Small dogs live forever.
But you can't get like.
That's the problem.
Yeah, that's the problem. I've learned from him. And if you get like a well-trained golden and you got him in like a small condo,
It's hard.
it's you can't
Yeah, but if you
do
get
that.
a little dog, I'm telling you,
I don't want them- I
A
don't-
man walking a little dog just throwing the panties
There's
at you.
nothing worse. I've done it. I mean, you know.
You got to use the coffee filter to clean the panties after that.
No.
I've walked the little dogs. I mean, when I was, courting my wife, there's nothing worse than like out there at 2:00 in the morning walking two little furry small dogs to make you feel really small.
No, the best was when my parents would dog sit for me, my sweet Chihuahua, Kalita, who lived to be 17, by the way.
Oh, my God.
And I would do like a handoff.
Baby Galita.
No, I would do a handoff
Now I
with,
just let it go.
with my dad, and my dad this is how I know that my dad just truly loves me. He would take my dog and I would give her to him, and she's in a car seat wearing her pink jacket, and he's going through like the toll lane, and the toll booth lady's just laughing her ass off because this big black man is driving a car and there's a chihuahua in a car seat.
That's cute. We do that for our kids. I could see.
Yeah. And he'd have to have Walker and.
But if it was your dad's dog, he would have left it at the dunes. I'm telling you right now, I know he would have. I know.
No.
You'll have a good life here.
You should get a dog, Nikki.
You should not get a dog.
Yeah.
You shouldn't even think about it.
I have a pretty decent amount of freedom right now. I kind of enjoy it. So.
Nah. Anyway. Hey, we got a great show for you today, whether you got 4 legs or 2. A lot of good content coming your way on this magnificent Monday. At the top of the 8 o'clock hour, we have an options jive. Kai's coming in with his research corner. Kai gives his outlook for the market for the week. I wanted to check in with Kai. That's at 8 o'clock. Then at 8:40, we got Dr. Jim in the house. The skinny on options abstract application. The universal applications of the normal distribution.
You don't need a dog. You could take care of Dr. Jim. That would be like having a dog. He's needy. You do something with him, that would be great.
Anyway, you say that to Dr. Jim's face. I dare you.
Yeah.
No, I do all the time.
That's going to be at 8:40.
He admits it.
And then, did anyone bring you Bojangles?
No, and I did not have a Bowberry biscuit, although I promised I would. I didn't pass
They have them at
one
the
of them.
airport, right? I don't know. I've never flown into Charlotte.
I never passed
Okay,
one.
I don't know.
I believe they are at the airport.
Okay.
The last time I was with Dr. Jim in a Charlotte airport, and we end up going there. I had one years and years and years ago, but I didn't pass one. So
Okay, I got you.
Or I would have gone.
I'm just curious.
I would have tried it.
And then we have a market measures at 9 o'clock. To manage early or trade late. What does that mean?
We're going to find out.
I think it's pretty self-explanatory. I mean, you're going to manage early. You're going to wait all day long. You smoke hopium. See if
Okay. And then we have live from the trade desk. We got Quentin and Ryan in the house. So
October is back on.
Is it? Yes.
It's about time. It's really
there's
late.
only 5 days left, so get it together,
really
Bitcoin.
late. It's got some work to do too.
Hey,
It's
come on,
back,
Bitcoin.
baby.
It's back, baby.
My arse.
It's back, baby. Anyway, that is our schedule for today. You guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news, coming across the wire.
This
Leading
just
story,
in.
top story, jump in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It's October the 27th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
The week ahead for investors is going to be jammed-packed. The Fed Reserve's latest interest rate decision is coming, I believe, tomorrow. And yeah, I'm on the first headline. You're going to have a ton of tech stocks reporting their earnings this week. You have Microsoft, Amazon, Apple, Google, Meta, the Fed interest rate decision. It's jam-packed, baby.
It is jam-packed and volatility's going to go under 18 in a moment here.
Well, it got killed last night. Last night it was in the 17 handles. Like
1775, yes.
I mean, they killed it on Friday or on Thursday and Friday, really.
Which is just about as low as it's been.
Yeah, but they took we talked about it yesterday. The weekend came out
Immediately, if not sooner.
Bigly.
Yeah.
Bigly, hugely.
Bigly, yeah.
Bigly.
Friday we never moved. I mean we moved. We were open and then we just ran higher. I mean, we just stair-stepped higher,
Yeah.
No volatility.
Are you guys planning to trade all these big name tech earnings, or should you just trade the Q as a proxy? Like, what's the strategy?
It's a good question.
Definitely going to look at all these.
Yeah, I think you have to.
You have to.
Especially with, what's going on in the market.
Is the IV decent enough in them, though?
We'll
Relatively
see.
speaking, I mean, it's going to represent the earnings volatility. It's going to have the highest IVR. And I don't know if it's going to be enough to warrant a trade that sells premium, but I think you have to look at them. I mean, the ETFs are going to have low implied volatility. You got nowhere to hide for volatility right now. Or nowhere to pick a fight.
Well, one of the things sending the market higher in the overnight sessions, the U.S. and China have sketched out what looks to be a framework for new trade guidelines surrounding rare earths and tariffs. An official deal has not yet been inked, but top Chinese and U.S. economic officials hashed out a framework of a trade deal for President Trump and President Xi to decide on later this week. And again, the market is up, loving the news. Sorry, I forgot to put the headline there. What are you guys doing in China exposure stuff or rare earth stuff or anything?
The rare earth stocks like MP is down a handful. USAR is another one that's kind of been thrown around. It's down a little bit. You have some of the uranium plays like Quad U.
A what?
U. Which is down as well, so you're seeing a little bit of a pullback.
And they're off of their highs too. All of these stocks, right now, more mid-price to lower mid-price. They really took the air out of these. So it's still good IV rank in them. But you look at a stock like you just mentioned, UUU, and even if you just stay in November, you got 50-cent wide markets on a $20 stock. You got to have an opinion on the direction.
Baba up 5 or 6 right now.
I was going to ask, what about like a FXI, Baba, Baidu, PDD?
You're going to be hard-pressed to find a stock that isn't up today.
Yeah.
Yes.
It's going to be one of those days where it doesn't really matter. I mean, we just mentioned like...
it's October.
Yeah, that's for crypto. MP is down like this. I imagine some of the frothier stuff or some of the more like headline-driven stuff like that might not be, the flavor of the day today just because everything else is up. I mean, NVIDIA's up 4 or 5, Microsoft up 8, Meta up 8, Google up 7. They're all it's gonna be buy them all.
Well, see, if this is up, let's talk about the softs. Treasury Secretary Scott Bessent said that China will make substantial purchases of U.S. soybeans. He was on the Sunday morning talk shows, and then he disclosed that he himself was a soybean farmer, and everyone was like, girl, what? It was like, you were worth $600 million, sir.
And they will
but I guess he owns farmland.
China will be buying those soybeans using the tastytrade platform.
Taking delivery?
I hope so.
Are they taking delivery with the tastytrade platform?
Yeah.
I hope so. What are the softs doing?
I don't know if we want that. I don't want to be in bed with...
Okay, then they won't be.
Yeah,
they won't be. Whatever is the best...
We will facilitate them through the government.
Okay.
U.S.
will be buying...
It's a government contract. Yeah.
So, Nikki, are you putting soybeans in the government portfolio now?
They're all on their highs, by the way. Highs.
I had a wheat position that expired last week, so GFY to this news. Because I've been waiting for this. And didn't
wheat's
get
up
anything.
2.5%. Just give you a percentage. Soybeans up 2%. They're all corn's up almost 2%.
That's great.
0.5%, but they're all well off of their lows. If you remember, just a month or so ago, these were all making new lows, kind of like oil, and then it just popped. These have just popped.
Okay. Well, we will keep an eye on the softs.
IV rank's going to go up in all these softs, on the way up, too. So the volatility is always to the upside, or expected move velocity is always to the upside.
This headline says 10-year Treasury yields may hit 6% in the next year or two on problematic inflation. Once banks become incentivized to boost loans, household and business spending will likely support higher inflation. That's according to one economist. Of course, all eyes are on the Fed this week and if they're going to cut rates. I just wanted to look at bonds in general, nonsense headline aside. But
how many economists do you think there are in the world?
I have no idea.
A bazillion.
Okay, and we picked this schmagegi?
Yeah, I don't know.
To give us his...
Not only are there a billion economists, but there's all the keyboard economists.
Of course. But to give this schmagegi to give us his 2-year...
Schmagegi.
Give us a 2-minute one. Give us a 2-day one.
Sure.
No, everything's 5 years.
Everything's 5 years now?
Yeah. Well, but rates are probably going to get cut this week. What can we do in bonds?
Yeah, cut, not raise, which they're looking at here. But anyway. Bonds 118.10 down 9 ticks. I mean, they're off their highs into the 119s. They're near their highs. It looks like rate cut.
No. Do you think there's a trade here? I mean, we traded it from the short side. We had that call spread. I think that was a what's your assumption trade, which we caught basically at the top.
We got it. Yeah, that was definitely a directional trade that we caught on the top.
Is it tradable now? Like, do you even like?
IV rank is 7. I mean, I think you got to be directional. You're kind of in no man's land here. I think you could probably buy a dip. You probably sell a rally. But I think here you just kind of sit.
Yeah. I agree.
Okay. It'll be interesting to see what happens. Hey, President Trump has picked Michael Selig, no relation to Bud Selig,
Good.
as the Commodity Futures Trading Commission's chair, an administration official. And Selig himself said on Saturday, Selig is the chief counsel for the CFTC's crypto task force, and he wants to go all in on crypto. So LFG, I guess, for the new CFTC head. But this brings me, I didn't have a more specific Bitcoin story. Let's just talk about Bitcoin, and it's up. It's the play this week. Screw you, gold.
Yeah, up over 4%, trading just under 116,000. You remember just going back to 8-10 days ago, this was under 110,000. So nice move. All of it really last night, this weekend.
Yeah.
What do you do in like an IBIT or Coinbase or?
You take your profits because you've probably been playing it from the long side because just being a contrarian, they've just been all getting kind of hammered. IBIT's going to be up $2.50, $3, and off of its lows of under 60 to 65. So moving about $5 with Bitcoin moving about 5,000.
Yeah.
Okay.
It's going to be a good day for those peeps.
Yeah. We'll see who has. Now you see who has the paper hands and who has the
Diamond hands.
diamond hands.
Diamond hands.
Yeah.
Hey, there's something interesting, and maybe you can shed some light on what this means. Margin debt is at a record high. Investors buying stocks with borrowed money suggests confidence that the market will keep rising. If only that were true. Margin debt's recent jump to a new high is potentially worrying. FINRA reported last week that the total margin debt in September rose for the 5th straight month to reach a record $1.13 trillion.
Margin debt on what? Just out of curiosity. It's such a blanket statement.
I was hoping that you could explain. You have 40 years of experience.
A blanket, kind of
like statement. People that are using margin for stocks, right? Yeah.
Right. That's what I would think, right?
Yeah.
So they're gonna have a great day today.
Yeah.
Sure. So now I don't know what they do with that.
YOLO.
Instead of 1%, they're up 5%.
Right, exactly. So far, so good.
Well, it works until it doesn't, but should we be worried about the other side of that?
It was funny. We were talking about this before the show started, actually, about how, the bubble just keeps getting bigger and bigger and bigger.
Mm-hmm.
You're going to eventually have your 10%, 15%, 20%, whatever, move lower. But will that bring us back to where we were in October? Where are we going to, how much higher are we going to go?
Is it at much higher prices?
Right. I mean, so if it happens at higher prices, does it really hurt? Of course it hurts, but does it really hurt? I mean, I don't know. I mean, last week, what were we up? 2% on just about Dow, IWM, Russell, and SPYs, all up 2%. I mean.
These headlines, I feel like, are made for scaring people. I mean, it's the same thing with like the money on the sideline headlines. Like there is more money, a multiple of dollars are available now compared to 5 years ago. Like the number has to be bigger. The margin debt,
just by the nature of it, sure.
Yeah, the basket of stuff is 3 times what it was 10 years ago.
Right.
Like everything's going to be big record high numbers.
So
it's going to be like that.
Stocks is $300.
In 10 years, we're going to say margin debts are the highest on record, and it's because in 10 years from now, there's going to be 3 times the money that we have right this second. So,
and the prices are higher.
Prices are higher.
So it takes more money.
So it's like, you just
self-fulfilling prophecy kind of thing.
Yeah.
When you see the headlines that margin debt is winning, like when they start saying that, then somebody's looking to get more.
You are getting those with the retail has been buying every dip, retail's winning.
Yeah.
That's usually like when they start
That's problematic.
Those are
Yes, because then all the retail gets, FOMO, and then everybody jumps in, and then the boat gets too lopsided.
Yeah. We're like, it feels like 70-30. Like you're kind of starting to get to the end of the craziness.
Yep.
But still lots more to go. No doubt.
Hey, if you're looking for a job, it might help to have Gold Trader on your resume. A Gold Trader hiring spree is driving up pay rates as bullion market booms. Trading houses, hedge funds, and banks are on a hiring spree for specialist gold traders as interest in the metal soars, creating a battle for talent that is driving up pay package incentives in what has historically been a niche market.
Well, when it goes higher, it makes geniuses out of a lot of people. It happens to be down 2% today, but again, like this is here. You've had a move from what 4,400 to just about 4,000 on gold. I mean, is this a pullback or is this an opportunity to buy? I mean,
can I go to gold school? Like, how do I get like certified to?
There must be some charter you can
right?
get, like
Yeah. How do I get my gold
sure.
certification?
Yeah.
Because
6 months ago, nobody cared about gold. These jobs didn't exist until the last month.
Gold created these jobs.
Yes.
63 IV ranking gold, still good. Not as high as it's been, but probably a lot more manageable for most people. So I think gold's still in play.
Yeah.
Okay. AMD stock at the end of last week popped nearly 8% on a report that IBM can use AMD's chips for quantum computing error correction. IBM plans to launch this particular type of large-scale quantum computer by 2029, and the partnership is between AMD and IBM.
IBM had a huge.
That's 2 days. That's a 2-day bar.
Yeah,
It's the most insane chart I've ever seen.
IBM's is?
Yes.
Yeah.
Wow.
Yeah.
It opened, so after earnings, it opened at 260.
Yes, exactly. Yeah,
And it was just
265 or something
a
like that,
straight buying spree back to basically unchanged on the day.
It closed at 285. It was down 20 or something, 15, 20, and then it just wrapped.
And then the next day it was up, 25.
That's wild.
So the 2-day bar is 260 to
310. Yeah.
But it's a 50.
IBM.
Yeah, IBM.
What's the IV in there now?
It's 35 now.
But it's post earnings, so get in there.
Yeah,
So
every Tuesday and Thursday. I didn't want to get people excited for option trades today. It's Monday, so I didn't want to say nothing. But IBM, IB rank at Thursday. You would think the markets would be better in IBM. They're not as good option markets. They're not as good as you would think they would be. But IBM definitely.
What about AMD though?
IBM actually is unchanged this morning, but as we just said, big $50 range. AMD always goes up, and it's not disappointing. Now it's up around $6, 258 or so.
Short the 275 calls.
Oof. Sucked to be you today.
Yeah.
No.
Also, I think Nvidia moving up this morning. I don't have Nvidia.
Yeah.
I don't have an Nvidia.
190.
Up about $3.5, $4. Yeah.
Yep.
I don't know why. I think it's just up.
Yeah. Right. Closing in on highs.
Okay.
Everything's closing in on highs.
Yeah. Can't miss today.
No,
Everybody's a genius today.
Here's a headline. Using certain words is a choice. I would have gone with maybe another word, but this is what I saw repeated, so I guess this is a verbatim quote. President Trump and President Xi will consummate. No. The TikTok deal on Thursday, according to Treasury Secretary Scott Bessent. Again, certify, make official, establish, but consummate. That word, it's doing a lot. Who's getting screwed by whom here?
Yeah.
They're going to follow each
top
other on
bottom?
Facebook. That's what that is. They're just going to follow each other on Facebook.
on TikTok.
On TikTok. They didn't become
The
TikTok
U.S.
official.
and China are ready to move forward on a TikTok deal. The two countries, again, are going to consummate things on Thursday.
It's an odd word to use, but it hasn't everything been odd these last couple of years?
I was like, honey, that is a choice. But that does affect stocks like Meta, though, which would be threatened because you can't trade TikTok, ByteDance, but you can trade Meta. And they have earnings this week.
Yeah, up $8 or $9. IB rank at 32, probably going to grow. It does have earnings on the 29th. Today's the 27th after the market closes. You got a couple of days to go for Meta.
In other tech news, Australia is suing Microsoft over AI-linked subscription price hikes. Australia's competition regulator sued Microsoft, accusing it of misleading over 2.7 million customers into paying higher prices for its Microsoft 365 software after bundling it with the AI tool Copilot. And then Aussie said, "Nar."
Microsoft can do no wrong, even when it does wrong. Stock's up around $7, $6.50, $5.30 and change. Microsoft IB rank at 28, and it's got earnings coming out on the 29th. As you've mentioned, all these stocks kind of have earnings coming out this week, later in the week.
Yes. Are you going to do anything in Microsoft, Nikki?
Yeah, it's another one we'll look at. I mean, it's near the higher end of where it's been trading, and today it's going to open higher, but it's been kind of not moving much. I mean, it's been choppy in this range since it had kind of the explosion to the upside.
After April.
After April, and you had like the OpenAI stuff. And
I mean, it was under 400. It's over 500 and change.
Yeah. Microsoft, Meta, I think is a little bit more interesting because it's kind of still, it's on the higher end of where it's been trading, but it's not like it's blasted through, previous all-time highs here.
Okay.
If you look at, Microsoft is basically a double in the last year. Meta is kind of
only a double.
Meta is not nearly there. I mean, we're basically at the highs that we had, in February before the drop off. So,
OpenAI is reportedly interested in developing a tool that could generate music from text and audio prompts, and they've been working with students from the Juilliard School with help with creating training data. I don't know if you've heard on social media, this is a picture of Curtis Jackson, aka 50 Cent. I don't know if you've heard the AI soul renditions of like 50 Cent and Ludacris, like reimagined as like 60s and 70s soul. It's bonkers how good it is, but it's just like a little upset because it's all AI.
Sure.
Yeah. I hope those people didn't sign any documents. Or if they did, they had a team of lawyers looking those over.
What do you guys think on just general principle about AI-generated music?
How do you stop it?
Yeah, how do you stop it?
It's like here. How do you stop it?
Yeah, but it's just such a talent, like real musicians and songwriters and with their craft. And
Agree. No argument there.
To be able
Somebody
to just type
talent.
some words.
I don't want to be equal with these people just by writing an AI script.
I
agree.
Well, anyway, OpenAI, that's what they're working on. So good luck with that. Hey, GM had a juggernaut of a week last week. Stock just skyrocketed, hitting, I think, all-time highs. But they announced they're laying off more than 200 salaried workers in the latest round of job cuts. The layoffs come days after the Detroit automaker, like I said, raised their 2025 financial guidance. The job cuts were primarily in CAD engineers, that's computer-aided design, who worked at the company's global tech campus in Detroit.
I mean,
that describes the market as you started this with. GM is blasting off. It's like GM hasn't moved in
5 years.
Yes.
I mean, it's almost the last time it traded in the high 60s. Was about 5 years ago. So IB rank of 9 in there. I mean, it's good on GM. I think for everybody who has that in their portfolio. I mean, these are the dividend paying people that are now participating. Maybe that's a little bit of a bell going off that we're exhausting this rally when GM is in the news.
This next headline is a Mad Libs of a headline, and it hurts my head, and I don't even know what this means, and I read this article like 5 times. Ferrari aims at AI generation with crypto auction for Le Mans car. What? So Ferrari, which is the ticker RACE, is tapping into crypto markets and tech-rich youngsters with a planned digital token that its wealthiest fans can use in an auction for a Ferrari 499p. What?
I don't know here either.
Somebody help me.
I remember when Ferrari went public, it was a couple of years, I think it was in the high hundreds when it first came out. It's 400 now. I think up to 550 or something like that. Earnings are November 4th. Markets are not really tradable here.
So I guess you buy this token and maybe you could afford a piece of the spoiler on the back. I don't know.
You could say you own a piece of Ferrari.
I don't know.
Be more fun if they after the race, they chopped up the car and sent you a piece of it.
Oh, yeah, like they do with the memorabilia of the hardwood floors of basketball and stuff like that.
Oh yeah, Yeah, there you
Not
go.
a bad idea. Not a bad idea.
Hey, Boeing's back to the drawing board. Striking workers at a Boeing defense in the St. Louis area rejected the company's latest contract proposal on Sunday, sending a strike that has already delayed delivery of fighter jets and other programs into its 13th week. What are you doing in Boeing?
I have not looked at Boeing.
Getting this Boeing going? Yeah, I haven't looked at it either. I've ranked
222.
16th. Earnings October 29th. Boeing's been higher, just like every other stock that we've looked at, except for race, actually, just a moment ago. November markets are good, not great, but quarter wide. Maybe there's something to do in Boeing. Ivy rank is low there. Probably find some other place to play.
Okay. But they do have earnings this week, so just look out for that. They do on the 29th before the market opens. Swiss pharmaceutical giant Novartis has agreed to buy a biotech company called Avidity Biosciences for $12 billion. Novartis will pay Avidity shareholders $72 a share in cash, which is a premium of 46% to the company's Friday's closing price. The deal is expected to close in the first half of 2026.
Huzzah.
Huzzah. I know you're probably
We
not
have
trading
are either
biotechs,
of these
but
tradable?
I don't know.
Not mine now. If they are, I've never traded them. No. NVS, Novartis, 128. You found one of the stocks that's lower this morning.
Aha!
Yeah, wow.
Street hates it.
Earnings October 28th. It is just a skosh off of its highs of 132. So Street might not hate it. It might hate it today, this moment, but it hasn't hated it.
It seems like that $2 is about the $12 billion.
Yeah.
They need to buy this company.
Yes,
so
probably.
Avidity specializes in developing an innovative class of RNA therapeutics. So if that helps you, there you go. Hey, Nike is working on motorized sneakers as they seek to reclaim an innovation edge. Get out of here. Nike last week said they are working on a footwear system to help casual athletes and mobility impaired people move faster by what? Hurdling them down the street?
No, they've been working on the leg apparatuses and stuff like that.
I think so. I just want people to be careful. I don't know that they would. You know what I'm saying? Like, you want to put these shoes on your grandma? Like, just be careful.
hey, I'm a grandpa. Okay?
I know you are.
Maybe you do. Maybe you do want to put these on.
Known as Project Amplify, it is a collaboration between bionic footwear company DeFi. It still remains in early stages. Nike is also introducing a line of shoes that can tap into the mind-body connection. Okay.
They just have to say quantum soon, and then then Nike can get out of its own way, trading at 69 and change, up around 50, 60 cents. I mean, we had this conversation at the show in Charlotte for a moment, like, what's cheap? Like, what's a cheap stock? There are no cheap stocks. Nike, relatively cheap.
Okay.
What it is. Ivy rank at 20.
But Nike could benefit, if we are hammering out the trade deals with, Vietnam and China, Nike directly benefits because of their tariff exposure. So maybe that moves a little bit more this week. I don't know.
Cheap relative, yes.
Right.
Yeah. You are correct. Earnings in December.
Disney warned that ESPN and other networks might go out on YouTube TV at the end of this month. YouTube TV wants more favorable terms to carry Disney's networks. YouTube TV has around 10 million subscribers. Disney's existing carriage deal ends with YouTube at 11:59 p.m. on October 30th.
Is there a lightning stick now that you could put in the back of your TV that basically does away with Netflix and all of these things?
Does away with Netflix?
So you don't have to pay for Netflix anymore. Is this true?
What does Vinny have you buying?
It would be illegal.
Please don't plug it into any of your computers, okay?
You're going to go to jail. That's a federal crime.
This is the kind of thing where. And I've said this to my mom before. And I was like, Ma, there's a lot of AI stuff. You get a phone call that sounds like me, that I'm kidnapped.
Nobody wants me, Ma.
Take a breather, okay? Take a breather. Think about things. This is another thing. You got to watch these.
Let's unpack this.
The bill keeps going higher and higher. I think it's in the 400s now.
So someone told you that you could plug something into
No, you still have Comcast. That's why it's in the
that you could get everything for free? Do they also have magic beans to sell you?
Yeah.
That's sad.
Yeah.
I can't believe you played
What are you guys doing in either Google or Disney, I guess?
Disney, where good traders go to die, 111.
Google up $5 or $6 here.
Yeah, going to be new highs, 264, new all-time highs, or new yearly.
So I don't know why YouTube is like nickel and diming Disney because, like, I don't know, whatever. Just these corporate
ESPN
fights.
is the reason why cable is so expensive.
It is.
ESPN is like a third of what the cable cost is. So, yeah, if I was YouTube, I'd be squeezing them too. But we always get this headline from YouTube because then,
They always have peerage disputes. And like whatever. I don't know. It's just, I'm just annoyed that I have to have like 15 different services that I pay for. Like I miss cable.
Yeah.
Just having just one thing. Yeah.
No.
Because now it's just. Hey, shocking news! Shocking news out of the SEC. Brian Kelly is out at LSU, and the coaching carousel has just gone nuclear. Penn State and Florida also fired their coaches. They had a 5-3 start, but he won't even be in Baton Rouge to see the end of the Tigers season. Everyone is up for grabs, but my Hoosiers. My beautiful Hoosiers, locked in Coach Kurt. He's still mad. Even when we're beating a team by 50 points, he just is angry on the sidelines. And I love the energy. I love that for him.
What do they rank now, the Hoosiers?
What?
What are you ranked?
Number 2. We stayed at number 2. Stayed steady.
Yeah.
So.
Yeah, my son-in-law is from Indiana, went to Indiana. His family's all... Like they now watch.
We're a football school now. What is happening?
Right, exactly. What is happening?
No. Like Fox Saturday kickoff was broadcasting from Bloomington. We played UCLA, but I was like, what are we doing? Like, I love it. The stadium's full. The energy.
Yeah, the energy.
The crowd.
Great.
It's electric. But Brian Kelly is out. I don't know if you care at all.
Yeah, no, curious.
Yeah, no.
Yeah.
Okay.
No.
LSU.
Sad.
I just didn't like the way he left Notre Dame. Like, I'm not a Notre Dame fan, but I just thought it was kind of bad. Like, he didn't even talk to those kids, man. Like, you should talk to your players before you leave.
And I don't know how
he just took the money and ran like a thief in the night.
But I don't know how you can't talk to the players because you fall in love with them.
No, that's what I'm saying. Is like that's why I was just not a big fan because I was like, what he did to those kids.
Yeah, but they're all making like $1 bazillion, so they don't care about his.
I know, but
I don't think at the time there was NIL when he was at Notre Dame. I don't.
Oh, so they weren't getting paid.
Well, not like now.
Yeah,
I don't know.
Did you see Rex Ryan break up, crying on air with?
That was tough.
Osgood.
Mangold.
I'm sorry, Mangold. Sorry, yeah.
What? You guys are just saying words.
His center for
Nick Mangold. Yeah, he had like a kidney disease.
Oh, he died. I saw that headline.
He needed like a donor, and he like posted something like 2 weeks ago or something.
Oh, that's sad.
About like needing it.
Yeah, I didn't think it would come so fast.
Yeah, it was sad.
But it was sad.
Yeah.
Also, Scattaboo got his
sad
ankle,
too.
And then like Jackson Dart.
That was the most
like devastating. I was like, I want this to be like a romance novel. Like, he was so upset.
I didn't hear.
Scattaboo.
Yeah, I didn't hear what happened.
Dislocated his ankle, like fractured his ankle.
Like foot 90-degree angle. Like
didn't want to say Francis.
And it was
Francis. Did I call it? I told you.
It was bad.
It was bad. It's sad but then Dart was just like on his knee, like inconsolable, like on the field. But reportedly, Scattaboo was yelling, "Let's effing go!" Like as he's being carted off of the field. I love that kid.
He's a good one. I didn't see it.
Yeah. Yikes. Finally today for my viral video of the day, if you've ever tried to clip your dog's nails yourself, you know it can...
Impossible.
Yeah, right, it's impossible. Like, I had a 5-pound chihuahua and I had to take her somewhere and they had to put like the Hannibal Lecter mask on her. But this pet owner found a low-cost solution. Maybe this will work for you. Check this out. Pretty smart.
Oh, that's good.
Yeah.
Out of sight, out of mind.
Oh, that's good.
See?
Oh, that's great.
Yeah.
He's so cute, but so angry.
Yeah.
All right, thank
That's
you.
good. That is
I thought so.
good.
I did my best.
Should I get one of those? Is that what
You should.
If I walked around with that.
I think that's a Bichon Frise, I believe. It looks like a...
Right.
I think you're right.
Yeah.
What would you say if I showed up to your house on Christmas with one of these little things?
Congratulations on your new alternative lifestyle.
So cute.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send. We'll be back in 90 seconds with Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
tastytrade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We are back, son, and you know what that means? I just had a very nice customer. Let me give them a shout out. No name, comes from China. No, there is no name on the email, but I guess it's sold at Walmart. It's called VC Box V5 Pro 2025, newest version, smart digital device for home entertainment. So there you go. For your
Good luck with that.
Let's take a look at what's going on with the market before we get to confirm and send. Even the S&Ps, I saw them open last night, Sunday night, when you were doing the show, up around 45 or so. Mm-hmm. They're up around 57, so they've just been steadily climbing. You can see the high lows here. They're about 6 handles off of their highs. We're looking at new highs in the even the S&Ps, new highs in the NASDAQ. Russell up 25, same, and the Dow up 230 and change, all near their highs, all up around 1-ish%. I guess the Dow up 0.5% is the lagger of the group. Volatility in by 57 cents, just under 18 last night, just over 18 right now, 1803. Bonds down 9 ticks. I guess bonds take a back seat to the market when markets are making all-time highs. As I said, the market was up last week. I don't know, Russell was the leader, up like 2.5%. The Dow was up around 2%. I think SPX was up around just under 2%. Bitcoin over 117 just a moment ago, coming back a little bit to under 116, 115.7, still up $4,450. That's on the futures. You'll notice that the Bitcoin Cash is trading very near the same price, only up around $160 because that's the market all night long, as opposed to the futures that close and then reopen. Ethereum futures up 200 and change. Oil basically unchanged at $61, but oil, you played a nice move there. A little early on the move, took a little bit of heat from around 58, 58.5 to down to about 56, 56.5, 57, something like that. Now 61.5. Oil IV rank at 32. You would expect it to go higher as oil goes higher. It's unchanged right now. Gold down 80 some odd dollars, but it's had almost a $100 range here in oil. In gold here today. 4,054 down 83 cents. Silver down a full point. They're both about a 2% move. Silver and gold following each other in tandem right now. Every other equity market is basically up. So I won't start quoting those, but we'll go right now to confirm and send. Let's take a look.
Cool.
Right now it looks like blue skies. Monday, October 27th, son. We made it. Halloween week.
It's crazy.
It is
almost
crazy.
At the end of the year. It's nuts. Got a couple months.
Yeah, really. It really is.
Crazy.
I know,
Another one in the books.
Sometimes when I roll early, my new position has much lower extrinsic value than I'd like. Am I rolling too soon, or is this just part of trading in a low vol environment?
Yes, it's part of low vol environments. I mean, you're getting less extrinsic value across the board, especially when you are rolling positions that are probably slightly in the money as well. So it depends on the underlying. But yeah, generally, like if you're rolling too soon, you're probably not collecting a ton because you haven't let any of that extrinsic value or decay come in. But really, it's a reflection of low volatility environments. When you have high volatility, you don't realize how juicy and amazing it is until it's gone. And we talked about that when we had the one-day sell-off where stuff goes 3x. You know, you're selling things for $1, they're now marked at $3, $4, $5, and it's great, and there's opportunity there. And then the next day when vol contracts and and it goes poof. And you're like, well, shoot, I wish I had done something. So, yeah, it's
or I'd done more, or I did anything.
Yes.
Volatility, we talked about this ad nauseum. I mean, it's mean reverting a lot faster than price. That doesn't mean that those options that are $2, $3, $4 can't go to $8 or $10. But the volatility is going to contract on them. It's a given. Like, I mean, it's the most constant thing that I know of right now. But yeah, good answer. Don't have too much to add to here. All I can add is something you didn't ask about, because you're talking about extrinsic value, which is great to look at. Delta is king. You know, if you have less extrinsic value on your roll-up, you probably have more extrinsic value on the side that's beating you up, you know, right? If it's out of the money and now getting closer to at the money, it's going to have the highest extrinsic value. So you might be getting it all on one side. But Delta is king. Keep your Delta in line. Next question, please.
If the Fed starts cutting rates early next year, do you think volatility will expand or contract?
So you should probably do the opposite of what I'm going to say here, because I'm the world's worst commodity trader, and I think bonds are a part of the whole commodity world. Maybe it's just the world's worst futures trading here. You know what? I don't think anything changes. I think everything is predictive and looking out in time. If volatility is on its lows, you might expect it like it is now. Maybe you expect it to stay bid or go sideways a little bit, because how low? I mean, volatility is just directional bias risk, and that has a premium to it. How low can it go? It can't go. I guess it can go as low as it wants. I mean, it's been down into the 9 handle. We're 17 right now, but it can't go to 0. So there has to be some premium on that. So they start cutting rates. I think that probably eventually hurts the market a little bit, because you lose that kind of thing. You know, now I don't know where we're going to be. Are we going to be 8,000? or we're going to be, 6,500 or 6,000. I mean, or 5,000. I mean, it depends on where the market is, what volatility is going to do. So I think it's a random question, a random answer to this question.
Great. Next one, please.
How do you approach trading earnings for the major banks compared to high growth tech names like NVIDIA or AMD, or throw any other stock you want in there?
Well, a week ago, I would have said they've got some juicy premium. So you can do whatever you want there. But now the volatility's contracted. I think that's kind of coming a little bit too. But I think with these tech names, I'm a little bit more conservative compared to the banks. Like the banks, I don't even trade for earnings. Like those are not...
They're not that exciting.
Yeah. If I'm going to trade any of these, I do something sort of defined risk or that has some positive gamma to it, because you don't want the tail risk, I think. So, I mean, but for earnings, you have to understand it's a shot. Like you are, whether you're being directional, selling strangles, just doing puts, just doing calls. I mean, you're taking a shot here. Small is how I would say.
Market highs, earnings tend to have a bullish bias to them. That's where the whole putsch was invented. I believe was for earnings. Now, even like I said, at market highs, they have a tendency. Like, think about what a company's doing here. If you take a step back for a quick second here, they don't want to come out and say all along that we're gonna miss.
Yeah,
we're not doing good. And if they're doing good, they don't want to get too frothy because they want to come out with good earnings, so they keep the momentum, perceived good earnings, so they keep the momentum going. So earnings typically have a bias to them to the upside, even banks. Now, banks have had some regional bank problems, so maybe volatility will be a little bit bigger in there, but I really think it's a non-event, and you really can't find anything to play in the banking as you can in all these other high flyers. Next question, please.
When setting up a strangle, should I trust the platform's probability metrics more than the expected move, or are they essentially saying the same thing? Do you trust the expected move?
I trust the expected move. I mean, 80%.
It is what it is.
Yes. That's the tradable market.
Yeah.
I mean, so if you don't trust it one way or the other, buy it or sell it. And that's what I'm asking you
That's
to
what
do
you're
every
doing
day.
when you're trading. I mean, that's exactly, you're
trading,
saying the market is projecting it's a 10-point move. I think it's going to be more than that.
That's
I mean,
correct.
that's your trade.
Now, what strategy do you want to use to fit that assumption? You're
we get that email all the time. It's like, what percentage of the time does the expected move actually, is the move actually inside that expected move? And the answer is that you'd have to be hyper selective on what you're looking at. Like the expected move for the rest of the week and for the rest of the month and for the rest of the year, they're constantly changing. They're going to change when volatility changes. The minute we look at it on the open is going to be different than 30 minutes later. So you have to, it's dynamic. It's not like you look at the number a week ago and you say, oh, the expected move is $10. I'm going to measure it based on that. Now volatility's come in. The expected move for the next 10 days is going to be less.
Well, it would have fit your assumption if you were saying, you know what, all these volatilities have been coming in and going lower, and I don't think this stock is going to do anything in the next 10 days, so I'm going to sell some of that premium. Or market's been going up, volatility's high in here, I'm going to start selling puts or do some sort of bullish strategy in here ahead of time, and now the market accommodated your assumption. It could have gone the opposite way too, but the market accommodated your assumption. But you get paid, not double, but you get paid twice as much, or you get paid 2 times. You get paid for having your directional bias correctly, and if you sold premium and volatility contracted, you got that extra oomph of volatility contracting, so you get a little bit more bang for your buck for having your assumption right. And that's the goal that we try to play.
Yeah, that's the trade. The trade, you're like all the metrics that you're looking at, the probabilities, all that stuff, it's going to constantly change.
Absolutely. Good job. Even the S&P's holding steady, up 57, NASDAQ up 300 and change, Russell up 24, Dow up 238, Dow still the lagger, only up half a percentage point. Bonds I know. I mean, at these levels. Anyway, bonds down 8. Looking across the board here, gold down 75 is actually upticking a little bit, about $30-ish off of its lows. It's $30 on gold. Moves now like,
It's not. That's an inside move.
It's well inside the expected move, right?
I talked about that on Friday with Mike. It's like the $30 used to be a week in gold. And if it moved $30, that was like it
was a headline.
That was a wild,
number.
yeah.
Yes.
Now it's, you're getting $30 moves in 30 minutes.
Crazy market, crazy moves, crazy opportunity abound. And the softs, as Vanetta mentioned, are still bid. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. We've got an Option Jive Research Corner with Kai next. We'll be back in 90 seconds with Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
It's options.
jive.
It is time for an option jive, and we got my man Kai in the house. How are you, Kai?
I'm doing fantastic. How about you?
I'm with you now. Everything's wonderful. Are you kidding me?
That's nice.
You even getting applause now.
Yeah.
Look at you.
Yeah.
Yeah, you've come full circle. We used to go, oh, Kai's here. Now you're getting applause. Yeah.
Really?
Not so bad.
All right.
All right, what do you got for us, Kai?
We got a tons of stuff because it's the last week it was a busy week, and this week is going to be even busier.
All right. Well, let's see that. Well, you do have earnings coming, right? I mean, I know you're going to mention all that, but you got a lot of earnings coming.
Yep. Well, this is the business earnings week for this season for sure.
Yeah, like half the market cap or more reports earnings this week. So of the S&P 500.
Yeah, and also 5 out of the Max 7 is going to announce earnings.
And we already had Tesla last week. So
you know what? I just read an article that Tesla just dropped out of the Max 7, taken over by the Broadcom a couple of months ago.
Ooh.
Oh, look at that. Who knew?
I didn't know.
Who knew?
I was searching Tesla, but actually it was like a number 8 right now.
Wow.
Unbelievable.
Wow. Tesla 1.4 trillion, and then AVGO is 1.6.
Yeah, I've mentioned AVGO a lot on the show in the past about how it's been a market leader, and it really, I mean, this is a stock that's gone from, I don't know, under 200 to 360 this morning, up another $6.
Broadcom, I think 2 years ago, none of us even talk about it.
No.
And whenever viewer or whoever talking about the Broadcom, we just tell them, oh, the market bid and ask spread is so wide.
They were
boring.
Yeah.
And
they
right now,
split the stock, and now they need another split.
Yeah. Yes.
So anything right now touch the AI becomes Mac whatever.
Yeah. And that's why Tasty will be going AI here momentarily. Just kidding.
Which means heads are rolling.
Yes.
It's the end of us.
Yes. Yeah,
They'll have holograms of us.
Right.
They have enough of our content to program that in. So
yeah.
Don't wish for that.
No. Well, what do you got for us, Kai? Give us something good.
All right, last week. So what happened is one of the biggest news from international is Sane Takaichi. I practiced.
I feel like you should pronounce that. You should be like you sounded like us trying to pronouse that.
Right. It should roll off.
It should roll off your tongue.
Yeah.
Like what happened to you?
Sane Takaichi. Does that sound better?
Much.
I know.
Okay.
Much.
Yeah.
She became the first female PM of Japan. So that sends the yen going down again after the small rally.
Mm-hmm.
And also the interest rate went up a little bit. And the second one is last week we had really strong earnings week from quarter 3. The volatility increased a lot. So we're going to see the slides for all the earnings. We have more number of companies has double-digit move up or down. It's very volatile for the earnings trade. I don't know how many earnings trades we put on last week, but it's pretty big.
We hit Tesla. Tesla was a good one, but we got out on the open. I had a call ratio spread where I did the closer at the money long call spread. It worked out well, but had I held it, it probably would have reversed on me.
Yeah, because
I would have had to hold it a little longer, but I closed it. Yeah. I mean, volatility came in pretty significantly.
It worked. You did good.
Yeah. But there were some big moves.
Yep. I put on the Thursday. I put on earnings trades for Deckers. It was down like a 17 or 15%. It's hit like very close to the sweet spot, like $1.50 off the sweet spot. Only 7% of people interested in my trade on the YouTube poll.
You got to work on that, pal. Got to work on it. 7%. Ooh. That's worse than even a Batista does.
Yeah, you could do better than that.
Yeah, you could do better.
Yeah.
And all major indices except the Russell 2000 hit all-time high again. Yeah, the Russell is very close. Let's see in the next 2 days.
Yeah, maybe today.
Maybe today.
That's 2550-ish. It looks like we're right about.
Right there.
Yeah, we're right there.
Yep. Knocking.
And a little bit better than expected macro economic data, CPI, PMI lifted all the sentiment. So that's why they send the markets to the upside on Friday. And is it Wednesday? I don't remember.
Mm-hmm.
We shall see.
Yeah.
Mm-hmm. So this upcoming week, it's also a big week for a lot of things. Can we go to the next slide? So definitely bigger news is the Wednesday. We're gonna have the Fed meeting, announce the interest rate. 98.5% of the percent of the market investors expect a 0.25% a cut for interest.
It's common.
Yeah, I mean, it's a given. It's a known. Like anybody who's trading on this, watching us here today or trading, you know it's baked into the market already. The surprise would be if they didn't do anything or they raised by 50 basis points, which looks like that's not a non-event. I mean, that's a non-event. So it's business as usual. Yeah. This is almost like the sun's going to come out tomorrow. It's a known.
It is.
The sun's going to come up at least.
And just for the 0DT trader on Wednesday, if you put on the trade early in the morning, you might not see the premium go down anytime before.
Good point. Yeah, good point.
That is
point
true.
to make.
I tried 3 times in the past 3 meetings. The premium actually went up, and the price didn't even move. The underlying price didn't move. The premium went up.
Yeah.
The expected move is $18, 18 points on the ES right now for today's expected move for the day. So tread lightly there. Volatility is definitely in.
And the second one, politics and trade talks. So the possible first meeting between Trump and Xi in Asia, the first time in his second term. So we already saw some positive news, which sent the soybeans overall market up so big. Soybeans up a lot.
Yes.
I saw the futures.
Yes. Softs are going nuts.
Softs are going nuts. You usually don't say that about it. Man, they've reversed from all-time lows to basically close to mid-range for the year. Like in corn, soybeans are making close to new highs.
In months, yeah.
Yeah, really this month, like at the beginning of October, they were all, just off of lows for the years.
Yeah.
Now, like soybeans are just off of highs in the last 2 weeks. So commodities very trendy movement and further than you think. So be careful in there. I've always had a hard time with commodities in general.
Yep. And also we have one of the business week of this earnings season. We're gonna see the picture in the last slide. Yeah, 5 of the 7 Max 7. So last week we still had a pretty good week following the week before. SPX is up almost 2%, and the rest of the indices are up more than 2%. So really green week for everyone.
Yeah,
easy.
It's easy. It's easy.
Yeah,
you see now here, like last week, again. Near highs, right? And you say, I missed this move, and there's another 2%. I mean, 2% is a huge move in a week.
It's
unbelievable.
Really big for
I mean, I know we get them often now, but 2% is a huge move in a week.
Yeah.
I don't know how to say that any more powerful.
We rarely see 5%. You remember we have data. We rarely see 5% move in a month.
Right.
Yeah.
So this is 2%. Is huge.
Yeah. Crazy.
I remember of the what is the average long-term
it's like
annual return?
10 or
somewhere between 8. Used to be 10 to 8, then 10 to 12.
Yeah.
Now it's more than 12%. But we have 2% every week.
Yeah.
Unbelievable.
Good time to be alive.
Yeah. Okay. So expect move from last week. We hit right at the border of the expect move 1.9%. So it's there. The implied volatility at the beginning of last week was high. It was almost 21% for VIX. Right now, it dropped below 16%. I didn't check the futures this morning, but after Friday, it's 16.4. So which brings down our expect move for this week's 1.4% for SPX.
Yeah, 80 points in the E-minis puts us. That's the expected move for the E-minis.
Yeah,
SPX will
about
be
1.5%. I mean, a little bit less. You're right there.
You probably can.
Yeah, it hasn't moved.
Break in 2 days.
Yeah.
Either today or tomorrow.
Yep.
Oof.
Talking about IVR. Next slide. It's pretty mixed. Equities, gold, Bitcoin, all those inflated implied volatility the week before has actually dropped. Euro, natural gas implied volatility increased. Bonds and crude oil actually not changed that much. So it's kind of
even with crude oil rallying, it hasn't changed that much. You'd actually think it would go up a little bit. Volatility, it hasn't yet. So see volatility expand in crude oil today. Maybe that's something to look at. So
the vol coming out of the equities over these 2 weeks is epic.
Yeah.
Has been epic.
Absolutely mind blowing.
Yeah. So some interesting thing or major moves from last week. Go to the next slide. One is definitely gold. Gold last Tuesday had one of the biggest down day in history. At least the data can show. One of the reasons, of course, is because the underlying price is more than $4,000, the most expensive in history. And percentage-wise, it was down 5.7%. On that day, that's the top 0.05%, less than 0.1%, half of the 0.1%, which is still significant considering the percentage move. It's a huge move.
Incredible. I mean, it's trading like a meme stock. It's trading like Bitcoin.
Yeah.
Was it like before Bitcoin went to 100?
Yeah.
This is like what the day-to-day felt like.
That's right.
Was
That's
this
right.
sort of price action.
Yep, you're right. Yeah, well said.
Yeah. Crazy. But that volatility has come in pretty significantly. In the middle of last week, we were looking at gold volatility, and it was like in the 30s, 32, 33, 34. It's
Monthly
now,
implied volatility you're talking about. Yes.
Monthly.
Yep.
Yeah. It's now in the 20s. So it's come in very significantly, despite the IV rank still being high, because you just, for most of the gold trade for the last 2 years, it's been 15 to 20% implied volatility. Now we've been in a 20 to 40 for the last,
Even a butcher
8-9 weeks.
like me can get bailed out in gold. Like,
you still got a little ways to go.
I still got $3.50 left to go, but I was out about $10 on it. So I mean, I'm getting bailed out now, but I can outweight them.
Yeah,
I can weight them. Yeah.
Cool.
So next one, Japanese yen. Following the international news we saw, so yen's value dropped, declined 1.7% last week. Weekly basis, this is actually not that big, but it's closing at the lowest point since this February. I think it bounced tiny this morning.
Yes, small.
Pretty much sitting at the bottom since February.
Yeah, actually giving it up here a little bit, but yes, up small. Slightly near lows. Has not been strong.
Yen basically unchanged, right? At yearly lows, right?
Do you think it's another good time to visit Japan right now?
Yeah.
Vacation. Oh, Mike is on.
Mikey will be there.
Yeah, he's doing it again, right?
Yeah.
It's like his third time or something like that. Yeah.
Second.
Second time? Good for him.
Yeah.
Euro up small. Pound, I think, is up small.
Yes.
But all at the lower end of the range. Unlike the yen, which is at like yearly lows.
Yeah, very low.
Euro, British pound are near their lows of this trading range, well off of their lows.
The dollar's been weak. I mean, it's been stronger over the last couple weeks.
Yes.
But it's down 20%.
Just to give you an idea, the British pound was in the 120 handle. It's in the 130 handle. So,
Big
dollar's
move.
been weak relative.
Yeah.
Yep. So the top 5 and bottom 5 movers in SPX, and which are also liquid. The top one's GM up 20%. ISRG, I believe it has the earnings last week up 19%. LVS 16, all big moves, like double-digit moves for the top and bottom 5 last week. It's a really volatile week last week. And the top one at the bottom is Deckers, which was my earnings trade, down 13% weekly. SMCI, NEM, Netflix down 12%. Netflix down a lot following the earnings the week before, right?
Yeah.
Still dropped 12%. Louvre down 6%. Airlines down,
Sister not feeling good today.
My sister's not very happy. 32 and change for Love after being up to around 34. She's very disappointed.
Oh, no. But she'll get an 18-cent quarterly dividend.
She's got that going for her. SMCI has been a little bit of a dog, too. I know it's on your downside here, too, but it's been a dog as of relative, too. All right. Awesome. Good job.
Yeah. Now talking about the earnings last week, so you can just see this chart. I've been doing Research Corner for 2 years. This is the busiest chart I've ever created for the earnings review. Double-digit moves. So we have 1, 2, 3, 4, 5, 6, 7, 8. We have 8 underlying have more than 12, 13% move up or down in a week. But overall, it went up. Overall, the market is positive post earnings. Right? We have Cliffs, GM, Netflix, ISRG. Airline, Dow, Deckers, and what is the other one? Ford. Even Ford was up 12%. Unbelievable.
Yeah,
Don't say it like that.
No, but we were talking about that with Vanetta. It's like you know that you're kind of towards the things are getting a little crazy when GM and Ford are on the top of your movers list.
Right, and a 10% move is huge with the amount of volatility that's out there now. Usually the volatility is pretty low. You don't get a 10% move. Somewhere between 5 and 8% is where we've been sitting. You're looking at 15, 13, 14%. These are 2-3 times the expected move.
These are one day, like a one day move.
Phenomenons, actually.
Yeah, crazy.
Yeah, good job.
Mm-hmm.
Yeah, so from the long-term perspective, this quarter, so far we have, can we go next slide? So far we have roughly 450 companies announced earnings, and the week before is only 100, which means we have more than 350 companies announced earnings. Last week was busy and the turn and actually flip the winners and losers from negative to positive. So we have 52% winners, and average return turns to positive 0.5%. 0.5% is actually pretty decent return.
50-50 shot either way. I mean, like it skews to the upside. Net, I'm sure, on this when you look at these.
Yeah, the more earnings we have, the numbers we're getting closer to 50-50. We already did that for almost 3 years. It's every single quarter is very close to 50-50. Yeah.
You just remember the tail.
Of course. You always remember the one.
Right. The big names.
Yeah, the big names are always like the focus, but you always remember the huge moves, and you're like, you equate all the earnings to what like IBM did. You know.
Yeah.
Oh,
yeah.
All right. So last slide is the upcoming earnings slide. See, we have these are the important ones. I didn't include all of them. These are very important liquid ones. A lot of people will consider trading these. See, Wednesday, Thursday, definitely the two biggest and most important days: Meta, Microsoft, Google, Chipotle, Starbucks. Thursday we have Amazon, Apple, Coinbase, right? MSTR, a lot of people trade too. Roblox, a lot of people interested in. Friday is more like a oil energy company.
Yeah.
What are the important ones? PayPal on Tuesday, EMPH. Some people trade it. Tom hates it. Booking.
Yeah. Well, because he can't get an account. I mean, that's all.
Booking is so expensive right now. I don't understand this company. Why don't they split the
stock itself? Yeah,
$5,000.
Yeah,
right?
Yeah. It's untradeable.
Yeah. I'm broke to buy even one share.
Yeah,
that's right.
Expensive.
And then watch it move.
Yeah.
All right, good job, Kai. We're gonna take a quick 90-second break and come back. We're gonna catch the opening bell next. Even the S&Ps really have moved about 4 handles all morning.
They're at the highs right here, up 60.
Yes, about 4 handles from the high.
Yeah.
We'll take a quick 90-second break and come back. We've got more Tasty Live right after this. This is Tasty Live. A lot of lives there. Live, Tasty Live. Come back live. Tasty Live.
Frequent trips to Vegas, or there was a year I did a couple of them.
What's the most financially irresponsible thing you've ever done in your life? Doesn't necessarily have to be trading specific.
Financially irresponsible, that's a big question. Like people would say like going to college these days, I don't know. Renting, I like renting. I like the flexibility. I don't know. Maybe renting, I guess, by the book is financially irresponsible. Actually, you know what my biggest purchase right when I started my job was $4,000 on a PC setup, which was not a good idea at my salary point.
I mean, anytime you take a trip to Vegas, it's pretty financially irresponsible. I would say that frequent trips to Vegas, or there was a year I did a couple of them, which was pretty irresponsible.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
We are back, son. The opening bell is imminent, and I mean like imminent in like 45 seconds or so. Even the S&Ps, as you just mentioned, trading right off of their highs of 68.90, 68.84. But we've had a very small move so far since we've been on the show for the last hour and a half, maybe 5 handles on even the S&Ps. NASDAQ up 311. Russell up 24. I guess the Russell is the lagger for the week. Last week, not making new highs, just off of all-time highs. For us traders, though, it's at highs. You know what I mean? Yeah. Technically or not. Dow up 260. Volatility in by 55 cents. Bonds down 5 ticks. Volatility is anemic. And Bitcoin under 116 now to 115.7. I'll let the market.
Ooh, that was a weak ding.
Yeah, it was a weak ding. You have low D.
That was a really low D. That was sad.
Yeah.
That was a sad D.
That was sad D.
God.
And that's all on you, son.
You can't blame me for that. I mean,
I can blame you for whatever I want to blame you for.
Mm-hmm.
I mean, that's just the way it is. You're allowed to be blamed for stuff, aren't you?
Yeah. No, I take it. No problem.
Understood.
All good.
Understood.
Yeah.
What's moving around for you? Do you want to take a quick look at what's moving around in the market? Or?
Yeah, of course. What do you mean?
Okay, let's take a look to the upside for people who are looking at that. Meta up 12, MSTR up 9, App 11 up around 9, Microsoft up 7. That's going to be close to, well, not to new high since we had that big spike up there back in July, but relatively speaking, Meta was an underperformer. It's not an underperformer anymore. Lulu up 7, AVGO, which Kai just mentioned a moment ago, up 7. Google up 6 and change. Tesla up 5 and change. Let's see what's not going up in the market. Obviously, gold, GLD, which is following gold. Gold is down $96 now, back near its lows, about $20 off. MP, you mentioned it this morning, those rare earth stocks down around $5. NEM, which is an oil derivative. You mentioned it makes the list here, son.
Yeah,
$2 and change.
It's in the meme sphere. Super insane volatility. I did a crab trade, buying the 25 in December and selling 2 of the 35s against it in November, and I did it at basically like a small debit, like 60-cent debit, just selling that tail volatility. The furthest out of the money calls were trading at like $3. It was insane.
How's it look this morning? Is there anything?
It's all right, 10, 15 cents. I don't have a ton. Like, we're kind of in that weird spot where, you still have 25 days to go till expiration in November. You've had a big move, so a lot of stuff that I have two-sided positions on. I'm now tested on the calls, which has made, the trades that were 10, 15% winners are basically scratches now.
Right.
Volatility has come in, which is helping a little bit too. But nothing. I was hoping I'd be able to take some stuff off, but not so much here. I might look to do. Let's see what these call diagonal spreads are trading at.
What are you looking at?
We did those call diagonal spreads with Ryan last week for October in IBIT. So we could take a couple bucks out of those. Oh, I don't have my ding on.
Oh man, that's why we had low D. You just filled your IBIT at 366. I think you did that.
We'll have to have them enable my ding.
So you did that at around.
I got your ding.
Thank you.
You did that around a 270-ish debit.
I took like 90 cents out of each.
Yeah. So the 366. That's an IBIT up $2 and change.
My ETH one has moved about 60 cents a contract. They were 60 cents a position. I did 2 of them. So we got a couple bucks there. We're going to take that one too. And then I'm going to look to sell calls against both the long shares that I have in ETH and in IBIT. But we're going to do them in the shorter duration to kind of play into that vol. Like I'm thinking the 35 strike calls in ETH, about the 30 delta in November.
ETHA is what you're trading, right?
Yeah.
And it looks like
For $1 and change here.
you did a 290 credit or so.
No, those are my closes for the diagonal
gotcha,
spread.
gotcha.
So I'm gonna, because I'm long stock, so I have 200 shares of both.
So you're just really just taking profits on some of these things that have moved, right?
On the call diagonal spreads, and now I'm gonna sell calls out against the stock position that I have in both.
Very nice, very nice.
So I'm gonna do those at like $1 and change here. I'm gonna sell the 70 strikes in IBIT as well.
Oh, look at you!
Good
job.
It's a nice little up move here.
Nice little up move indeed. You ready to take a quick 90-second break?
Sure, yes.
Let's do this. I'll let you get your bearings. Volatility down by 50 cents, 18. What do you think about the market here? We haven't, before we leave, what do you think about the market here? We haven't had one move of 5 handles all morning. Expected move on the E-mini S&Ps around 19.5. This is a little bit of a phenomena that we've been seeing. Pre-market volatility a little bit low on these E-mini S&Ps. It was down around 18 or so. It's up to around 20. So maybe selling right now, selling the E-mini S&P premium pre-market is not paying. Remember, we did it fairly early on in the day on Thursday. We're able to make some money on the trade, but it expanded a little bit before it went lower. What do you think about that? Maybe kind of waiting. I mean, our research shows around 8:45, 9 o'clock, about 10, 15 minutes from here. Maybe we do something then, unless you have a directional bias.
Yeah, I would. I mean, maybe you get a little bit of a pullback, but I just don't see much downside this week. And so, I mean, maybe you get 10 handles today to the downside, 10, 15 handles. That would be awesome. But I don't know. I don't know if you step in front of the train this week.
Very good.
There's too much. There's going to be too many news events. There's going to be too much to be too short here.
Let's see
I think.
Let's take a quick 90-second break and come back. We got more Tasty Live as volatility upticks a little bit here. E-mini S&Ps are only up 51. I say only up 51 because it's the biggest move that we've seen, about 5 handles to the downside. We'll take a quick 90-second break and come back. We got more Tasty Live. Immediately following these messages, we've got, nothing says Monday like this, man. The skinny on options, abstract applications. Dr. Jim is in the house. You're not going to want to miss this. We'll be back in 90 seconds with Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We are back, son, and you know what that means? Nothing says Monday like this, man. That's right, Dr. Jim, the Skin and Options abstract application. Man, you're bigger and bolder than life right now. How are you?
Man, I appreciate you. And I got some layers put in last week. Like, I got some layers put in. And my girl, like, she sets me up. Like, I go in, I don't even have to tell her anymore.
Why don't
like,
you just go to extensions and get it over with?
Hey man, it's one step at a time. We got to do this. We got to do this one tranche at a time. We can't be going full position size on the first trade. We got to layer into this thing, man.
Baby steps.
How long are you gonna let it go?
No, I don't know. This is probably the max. I'm probably at position limit right now, I would say.
Are you looking to do the new, like, the mullet kind of action? That's kind of in right now. You could do that. You could pull that off.
Vinny's got a mullet.
No, I could.
Yeah.
I could 100% pull it off, but I told my wife, this is so funny you brought that up. I told Autumn, I said, listen, I've never had long hair in my life before. It's been fun a couple years, whatever. I'm not going to keep it forever. I said, but listen, I'm just telling you right now that there is going to be a transitionary period. Like whenever I finally say, all right, I'm going back, short hair, fade, whatever, I'm like, we're going to do a solid 6 weeks of like a legitimate mullet. Like I'm just going straight on the sides. Right over the top. It's going to be great.
But you're going to preface it by saying it's only a week. This will just be like a little fun cut to have for a week, and then I'll go to. But you run the risk of kind of enjoying it and kind of liking the new vibe, and then what do you tell her?
I mean, I just, I don't know. I figure it out again. It's just like you do when your positions are tested. You take it one day at a time.
Yeah.
Like you can't be thinking weeks in the future. I'm thinking right now. Like I'm thinking today. And so yeah. But speaking of that, so Tony, I heard Nick say, right in the previous show, I'm pretty sure he said like, hey, like it's going higher this week. Like there's no way it's going lower. Like whatever. Like
yeah, I glossed over that. Yes, but thank you for bringing it to the attention.
Did he just paint the top? Like is this it? Can we get short now?
I mean, I've been saying that for about the last year. So I maybe I'm wrong this time. I think I've built enough goodwill as the two boomers here have been.
We're doing significantly better. How about this? We're a lot more consistent than we've been.
Yeah, and we're not married to positions anymore.
Yes. Yeah.
So
So he's been going. Listen.
So you think that with the big tech earnings and Uncle Jay, you think all these things happening this week? There's just no way. There's no way we see any downside. And I say no way. I mean, you can see some downside. It's all probabilistic. I understand, but
we're a tweet away from a good 1%, 1.5% move lower.
a scary event that would be. I mean, I think this week is. You got the China stuff, you have the Fed stuff, you have all the earnings. Like, I just think there's going to be a pump to this market. And if you want to get short, I don't think you're going to miss the downside this week. Like, I just don't. But that's me, and that's what makes a market. So,
I always say I'm going to miss the top, and I'm going to miss the top. But you don't want to. So far, why would you fight this? Volatility's lower, 1805.
You got all the big earnings coming up. They're all going to be spending. They're all going to be big numbers.
I think the
China
real
news
conversation we're having between the lines is just keeping things a little bit smaller than you normally would. Like, if you want to get a little bit longish delta on some of these plays, just keep it in check. You know what I mean? There's some big FOMO out there. We're moving 50 handles overnight on a Saturday. Remember, we don't move 5 handles on previous Saturday into Sunday night. Move. So keep your powder dry here. I mean, we've had a powder. Right. I mean, Friday was a boring day. I mean, we opened higher and then we just kind of stepped higher. Now we opened 50 some odd handles. I mean, if we closed up 40, would that be a down day? I don't think so. You know what I mean? So keep your powder dry here.
Yeah. No, I think that's fair. I think that's super fair. Speaking of not having down days, did you guys see my Patriots yesterday?
I thought you were going to go Colts.
Good,
the chat was calling for the Colts.
They look good, dude. No, it's been Patriots from the beginning. I don't understand how you guys don't understand that. And so it's just, Drake May, all those other guys, man, they look good.
You are a beautiful thing. You know that?
They look good, man. And I think this is our year. I think we had a little bit of a quiet spell there without Brady, but I think we're back.
You're a beautiful man.
Yeah. No, Drake May looks amazing. I mean, that kid is a stud. The interviews with him, he's like a humble kid. I mean, he's
very likable.
He's awesome.
Yep. Yeah.
Yeah. So he's a good, because he runs too, right? I mean, he's a good fantasy guy, is he not?
Oh yeah, he's like the number 4 QB right now. I mean, he's a runner. The Patriots offense has looked amazing.
Yeah, but they only have like 1 loss or something, right? Don't they, Patriots?
No, we got two. We got two.
But they look really good. They look really good. And, that's what you hope. You have a young quarterback who sticks to the program, not a prima donna, not painting his nails.
Not like getting caught betting them with the Bears taking 6.5 like you did this week.
That line that I took, 6.5, was before the Lamar kerfuffle, which is beyond weird.
Yeah.
It's a little bit. There's probably an investigation there.
I would think
into what happened there, because that line moved to like 2.5 or something like that. That's why I had to take 6.5.
Sure.
Giving me 4 points.
Yeah.
I'm in a
fantasy football,
a fantasy betting pool, and not having the best week this week, but I am leading for the season. So my partner over there likes to give me some flack. He doesn't even know what time the games are on.
This is true. They're on. They're not like
they're on every day.
They're on every day.
Yeah,
all hours
every Sunday at noon.
Right.
Yeah.
That's pretty good. Good. Don't you have the whiteboard? Is that this weekend coming up here?
Yes.
Whiteboard tour?
Yes, he does.
San Diego. Yes. Be out of here Friday. Gonna be a fun time. The last one for the year. So if you want to see me,
when's the last time you've been out to San Diego?
San Diego. I think we did last year or 2 years ago. It's one of our more frequent spots. Yeah, yeah, it's great out there. I mean, long flight. The flight home, a lot of time change. It's a struggle. I might have to take an extra day off just to recover.
I could see. Yeah, very soft. Your species over there.
Yeah, so.
Hey, man, I mean, you got to milk that, Nick, because you're in that generation, right? Like you're in that generation where you need.
We don't expect anything from you.
Yeah.
Like I need a personal space day. Like that's
exactly.
I'm gonna need that.
A recovery day, a rest and relaxation day.
That's right.
Yeah. Definitely.
Yeah. Yeah. And so, that's too funny. That's so funny.
These
All right,
kids,
well-
these kids now, these guys.
It really is sad.
Yeah, sad. Hey,
Whatever.
GFY. All right.
Yeah. I raised them differently, but this is the way it turned out. There's nothing I can do about it.
There you go. And then you've got Vinny coming up in the ranks.
Oh,
what generation?
Oh, he's not even gonna work. He's just gonna take whatever he leaves behind. Video live off that for as long as he can,
I'm gonna give you a quote, son. Unfortunately, you missed it, but I'm gonna give you a quote that somebody else gave me. Who used to sit in that seat. I worked really hard when I was young and made some good investments, so that Vinny doesn't have to work when he's my age. Okay, that's what it is. You, on the other hand, you're shit out of luck.
Yeah. I didn't catch the wave, unfortunately.
Oh yeah, Vinny's got it made. Like Vinny, not only is Vinny gonna have, Vinny's gonna have obviously, the Batista heritage and the Batista, inheritance, but Vinny's gonna have all of his Optimus Prime robots just doing everything for him that needs to be done.
Yeah, exactly. Exactly. It'll be perfect. It'll be fine.
No, come on. I instilled good work ethics in all my kids. They've all been very pleasurable to deal with as they've become adults.
There you go.
You look like you're being held hostage.
You guys wanna do some
I'm gonna try to
finance?
blink in Morse code.
Yeah. I think you gotta do like this. Like this is like the I'm being held hostage sign. You're like, I think Isn't that what they teach you in like school? Like, I think it's like if you hold your
I grew up in school when we didn't have to worry about that. All we had to worry about was what Nicky Demutis next to me was going to put down on his paper so I could copy off of him. That's all I had to worry about. Sorry. Go ahead, Dr. Jim.
No, it's good. We could do some finance today, though.
Sure.
Let's
do it.
All right.
Nothing happened here in the market. Markets have not moved, by the way.
No, not at all.
Almost down
Not at
100.
all.
That's about the biggest mover. Yeah.
There you go. So, all right, the universal application of the normal distribution. Gentlemen, are you guys ready to be wowed and with some oohs and ahs this morning? The normal distribution, there's a reason why we keep coming back to it. Like there's a reason why this thing continues to be the foundation statistically of what we do, and I wanted to talk about that this morning.
Let's do it. I'm all ears.
Let's go. All right, so Beth hit us here on the intro slide. Without question, our core philosophy at Tasty is grounded in the underlying statistical foundation of the marketplace. And within the financial markets, there are a number of different distributions that we encounter on a regular basis, like, log normal distributions. Chi-squared comes up from time to time. Leptokurtic distributions, I've talked about that on this very show. And so, there's a number of different distributions that we have to kind of contend with on a daily basis. But interestingly, we still come back to the normal distribution as our default setting, which might seem a little bit off place. Like it might seem like, why are we not taking into account these other distributions? Like, why are we not doing things that are tailor-made for these other distributions if they're the things that happen to be present in the marketplace? And I want to show this morning exactly why that is the case.
Let's do it.
You guys ready?
I'm ready.
Beautiful. Okay, so one of the things about normal distributions, and this is going to be a good kind of introduction into what we're going to talk about this morning, it continually shows up in all kinds of areas in our lives where you have enough observations. So once you feed enough observations into almost essentially fill in the blank, it could really be anything, you're going to start to see the results become normally distributed. You're going to start to see this kind of bell curve kind of emerge. You could really do it with anything. If you had enough people in like a room, if you were to do like the height of all the people in a room, you would see a normal distribution. Test scores is an obvious one. Here's another one. If you were rolling dice, like if you were playing craps or whatever, and you're rolling dice, you're going to see a normal distribution of the actual rolls of the dice if you give it enough rolls of the dice. You know what's interesting, and I don't know that you know this, Nick. I've brought this up before with Tom, but did you know? So you've played craps before, I assume, right?
I am not a big craps player. When I looked at this, I was like, this is great for my backgammon game. I intuitively know this sort of distribution of your, 6, 7, 8 is kind of like the most high probability. Everything else kind of tails off from there. But this is great for my backgammon game. So I might have to send this around.
I didn't know you were a backgammon player. I'm a bit of a backgammon player myself.
Oh, well, next time you're in, I'm ready to roll. I would
I
say.
haven't played it in a while. I'll have to brush up the old skills. But
of the distribution
okay,
of players, I'm certainly on the right tail. I'm a double
interesting.
sixer.
Okay, so look at this guy. Look at this
double
guy.
sixer.
He's a backgammon shooter. He's calling market tops. I mean, look at this guy. He's really doing some things.
Well, the you people, as you would say, call it sheshbesh. So
What do they call it?
Sheshbesh.
I had no idea.
Yes.
Look at that.
My peeps.
That's the name of the game?
Yeah. In Israel, that's what it's called.
I didn't know that.
Sheshbesh.
Yes.
Interesting.
I learned something
All
today.
Okay, interesting.
Another useless thing I don't need to know ever again.
I try to help.
Okay.
Yeah.
Well,
we had the most epic backgammon games ever on the floor of the exchange when the day was over.
You guys play? Huh?
I thought it was gin. I thought the game of choice was gin. Did you guys mix it up?
Intraday was gin. Intraday was gin. Hands down. End of day, backgammon. At the end of the day, we would have Brandt & Associates was a small brokerage market maker firm that I cleared through. And they would give free beer, and pistachios.
Ooh.
And if you ever wanted fat traders to come and stay after hours, beer and pistachios was the key. That's why we have pistachios here to this day, because of Brandt & Associates. But anyway, they would stay, and I watched people put Rolexes out on the table. I didn't play that much because, I worked all day long and I decided...
Trying to keep your money.
Trying to keep my money, but I watched 5-figure checks get thrown across the table. Rolexes get thrown across the table. Leon, you know who you are. Big backgammon player.
Yeah, he's probably not watching this show. He's probably like in jail. Or
no.
Somewhere.
No, he's still around. Julie Mundo, got to give him props. He was up there. Any degenerate game Julie was there for.
Yeah.
So he was good too. But I digress. Go ahead. I apologize.
That's really interesting because backgammon. I haven't played. It's been years, but it's mostly luck.
It is. Well,
yeah, it's not really. There's not a ton of skill involved. Like once you understand the basic strategy, it's pretty much just luck.
Well, there's different styles of play. Like some people are more.
No, when you give the cube, when you're playing for
when
you play with the cube.
Yeah.
Once you so you don't. I can see. I'm looking at you. Don't play with the cube, right, Dr. Jim?
So the
I don't even know what that is.
Okay, you play. Yeah, see, you're not a backgammon player.
No,
you're the go fish.
Hey, now.
You're the go fish of backgammon.
No.
Wow. Okay.
That's
okay.
what you are.
All right.
You play with
okay.
the cube, so you're playing for $100, and then you give the cube double. So if I'm winning during the game, I can give you the cube. Now the game is worth $200. You can forfeit the $100, or we're playing for $200, and you're behind because I'm giving the cube because I think I'm winning.
But then if you have the cube, then I can double it again.
All of a sudden you get a good roll, or 2 or 3. Now I could take it, go to 400 for the game. And 4 becomes 8, 8 becomes 16, 16 becomes 32, 32 becomes 64. You can keep going and going.
Yeah.
So it becomes quite an expensive proposition.
But yes, a lot of it is roll luck. But there is
when you play with the cube, you got some strategy there. Do you have
the cojones,
the intestinal fortitude to take the cube?
All right. So I think I'm gonna withdraw.
Yeah.
From that. Yeah.
Like I said, you're the go fish of backgammon.
All of a sudden I'm gonna be owing Vinny $6,000.
Right.
I don't know.
And it's a quick game too. You can be done with a game in 5-6 minutes, and when you get the doubling in there, the numbers can get big.
Okay. All right. Fair enough. Well, anyway, if you ever find yourself playing craps one day, one thing that you should understand is and this is not my opinion. This is objective fact. If you want to bring us back to the slide there, Beth, it is without question statistically more advantageous to play the don't pass line than to play the pass line. So just so you know, if there's an edge to be had in craps, it's on the don't pass line. Now, you're not going to make too many friends, because nobody walks up to the craps table playing the don't pass line. That's obviously the house. That's obviously against the shooter. And so just know that. But if you want to be, we're talking about probabilities. We're talking about managing at 21 days. If you want to be in a statistically superior position, you got to play the don't pass line.
Yeah, you can't do that. I can't do that. I got to go with the
got to go with the crowd.
Yeah,
right?
you can't.
Like you want the rah-rah behind you. You can't.
I'd rather lose the money than walk away with it.
Right. You're a
Be
don't
like, "That
pass guy, right, Dr. Jim?
I'm a don't pass guy,
Yeah,
so I actually
hate guys like you who don't know about the cube and backgammon.
You come
and
up
the don't pass.
No, the don't pass line guys are like the one bet guys. They come up and they're like, they throw the $100 down. They
kind of want you dead.
Yeah, they take it and then you never see them again. And you're like, damn, that guy came in and nuked our table.
So I was actually that guy too. So real quick, so number one, I was a don't
You're
pass
a
guy.
miserable
but I also,
existence for a human being. Even the S&P is new highs for the day right now.
I took it to a new level. I would shoot from the don't pass. So when I got the dice and they were like, I would get the dice and I'd put don't pass. And like, are you betting against yourself? And I'm like, watch what happens. And I'd go snake eyes, boxcars. Like it was unbelievable. People were shocked. But then also I would go to blackjack tables and I would sit down at the table, and if I won like 3 or 4 hands in a row, I would get up and leave. I would take my money and get up, and people would get so upset because of what you just said, Nick. Like, you're ruining this, you're ruining that. I'm like, y'all don't understand randomness.
Yeah.
Like, y'all don't understand. You have no idea what's going on here. Like, you think like it matters? It doesn't matter at all. And I'm like, y'all are gonna lose all your money. I'm walking out here with $60.
Now I know why you gave up
too.
gambling. You miserable SOB, you.
I think I was pushed out. I don't think I was allowed back in. But okay, so rolling dice is a good example. Okay, so Beth, go ahead and hit us here on the next slide. So the magic behind the normal distribution and its universal applicability traces back to what is called the central limit theorem, which we've talked about before on this show. If we assume a large number of observations, so that's going to be the law of large numbers. We've talked about that on the show before too. It's been a while, so I may bring it back here pretty soon. The observations are independent and random, so they have Markov properties. We've talked about that before too on the show. I might bring that guy back. And both the expected value and the variance or standard deviation are known beforehand. So that gets into a geometric Brownian motion. When that happens, here's what's fascinating. The central limit theorem applies, and now it actually doesn't matter what the underlying distribution might be for whatever you're looking at. It could be log normal, it could be leptokurtic, whatever. The actual samples that you pull out of that distribution are they themselves going to be normally distributed. And that is a very, very important finding for us as traders because, so Beth, go to the next slide. So the mathematics behind this is really, really, really fascinating, and it's so applicable to what we do every single day as it ties into the Tasty research. Like, I mean, there's a market measures coming up right behind me. I mean, Bat, do you know what is the market measures on this morning? I didn't see the schedule.
So
do you know?
It's about like managing early.
Yeah, early or late.
Okay.
To manage early or trade late.
Yep.
There you go. Managing early, right? I mean, that's not the perfect example with this fit right here, but still, when you think about all the things we've done, right, and over the years, it's like looking at the effectiveness of a Strangle, the effectiveness of, a short put over time, the effectiveness of, wide iron condors, whatever it is. I mean, I know for a fact, because I used to have these thoughts myself, that a lot of traders and viewers are looking at these stats and they're like, all right, this is really impressive. This is very encouraging. But are they going to apply to me when I start trading in my little portfolio or my big portfolio, whatever? And the answer on this slide is yes. And the reason why is because of the central limit theorem. So let's walk through kind of what we see on this slide. On the left-hand side there, as n approaches infinity, so that just simply means as n, your number of observations, gets larger and larger and larger, here's what begins to happen. The x bar, which is the sample mean, that is going to begin to approach the population mean, which is that mu, that U-looking character that you see right in the middle of this term on the top. The sample mean is going to begin to approach the population mean. Now, let me stop for a second and actually explain what that means to us in this very context. That means the traders out there, right? The Tasty traders out there that are trying to apply the Tasty research to their portfolios, their samples in their portfolios, the 40 trades they do this month, the 40 trades they do this week, whatever it might be, their samples, if they give them enough observations, they're going to start to approach the population results,
which the population results would kind of be like the Tasty research results, because the Tasty research results are looking at SPY for the last 20 years or QQQ for the last 30 years or whatever. So they're looking at the whole population of data going back decades and decades and decades. Our portfolios may only be 100 trades for this month or whatever it is. The central limit theorem is showing us that if we give it enough opportunity and enough observations, our results are going to begin to converge on the population results. And they're going to do it in a normally distributed way. So there's going to be variance. There's going to be deviations around the mean, which is what you see right there. That's what the normally distributed mu with a variance of sigma squared over n. That's what that means. It's just showing us that there's going to be a deviation. Of course, there's going to be bumps and there's going to be bruises along the way. But if we give it enough observations, the sample mean approaches the population mean. And then the last thing I wanted to point out here is if you look at that second term that's on the slide, the x bar minus mu over sigma root n, that is a z statistic, and that is showing us the deviation from the sample mean and the population mean, because there is going to be deviations, of course. There always is. That is what is referred to as a z statistic, and that is essentially when you look at a normal distribution and you say, hey, this strike on ES options or whatever is 2 standard deviations away, or it's 1.5 standard deviations away. That 2 standard deviations, that 1.5 standard deviations, that actual number is called a z-score. And that has a statistical basis itself. And maybe we'll bring that guy back to it. I did that a few years ago, I think, on the show. But the point that I wanted to make this morning is we use the normal distribution all the time. And the reason why is because we're always taking samples out of whatever underlying distribution might be there. The central limit theorem shows us that the sample distribution is going to match the population distribution. And when we're trying to apply our portfolios to the research results, if we give it enough time and we give it enough observations, they should converge in the end.
Should is the optimal word, and usually do. Yeah.
Well, it takes the number of occurrences. That's the big key.
Gold making new lows, down 113. Gold's falling
nearing
off here.
4,000.
Yep. Sorry to interrupt you, Dr. Jim. Markets
no,
steady,
it's okay. They
steady
took the metals out.
Since Nick said steady as we go, we're up about 10 handles. So give him his props.
There you go. There he is.
Right. All we know is by the dip. All we know.
That's all we know.
Jim, you're on our side. You're an optimistic guy, an optimistic market guy.
No, I'm definitely an optimistic market guy. I still view things through a contrarian lens, though. I still have to say, when I'm looking at this, I'm seeing opportunity on the short side. I'm seeing opportunity on the downside. And the reason why I feel that way is essentially, if you were to get short here, you might be wrong, you might be right, it doesn't matter. The thing that I always look at is if you get short and you're wrong, you're probably not going to get hurt that badly. You're probably not going to have to contend with.
I've been market wrong, and it hurt. it hurts worse than getting the cube on 4 and not taking it.
I was just going to say, is it as bad as getting the cube, though? Because that sounds pretty bad.
Not as bad as getting the cube on 16 or 32, but it hurts. It hurts.
Okay, all right, fair enough. I just feel like if you think about... because I think about what is the thing that's going to do the most damage to what we do? What is the thing that's going to hurt us the most? It's the big outlier move that gets away from us.
Sure.
Right? That's the thing that's going to do the most damage. Okay, where is that more likely to occur? In my view, it's more likely to occur on the downside than the upside. Yeah. And so looking at it that way, it kind of informs the way that I like to trade. But I don't know. Yeah. I mean, do I really want to be on the other side of Nick Batista? It was easy to be on the other side of Tom Sosnoff. This is a lot different. I'm not sure.
I know.
Well said, Dr. Jim. Well said. There's nothing else I can add to that comment. Well said.
There you go. Let me get him a few takeaways. I gotta watch some YouTube videos about this cube situation and bring myself up.
Please do. And I want you to come back next Monday and report back, okay? Because think about it. If we're playing for $100 and I give you the cube on 2 and you take it and you give it back to me on 4, that means the lead is changing, right? It's almost like a horse race. And it's on 4. Now I give it to you for 8. We were playing for $100. Now we're gonna play for $800, and you're on the downslope and you take it. And then you're on the upslope again, enough to advantage where you want to give it to somebody else. You give it to them at 16. Now we're very late in the game. It's like we're making the turn.
Here's the thing is that the probabilities don't change.
The probabilities don't change,
pass
but
line
time is running
still
out.
in play.
So you don't have your number of occurrences to get your probabilities to come into play here. Now we're playing for 1,600, and we're coming around the back stretch, the end turn there. What do? It's a very hard, and if you have a personality that thinks you can always win, the ego gets in the way. It's very quickly becomes very humbling.
So here's my request.
And that's why he has a day job now.
And that's why, hence why I'm here.
Yeah.
Hence why I'm here.
Can we start it at $1 instead of 100?
You can start wherever you like. Sure.
Can we start it like a quarter?
Yeah.
Yeah, sure. Okay.
You certainly could.
All right. Fair enough. Okay.
I'm sorry. Your takeaways. I apologize.
Yes. No, it's all good.
You got me back to yesteryear, and it was a lot of fun.
No, I understand, man. I understand. I totally understand.
Especially after having a good day on the floor, or even a bad day on the floor, and you feel like you can push it a little bit here. You've pushed it, right? I mean, you've kind of done things you shouldn't have done when you should have done them.
Are you kidding me?
Right.
Of course. I would imagine those games. Were more exciting on the down days. Would be my guess. I mean, the up days are the up days, and you're pushing it, you're going for it, whatever. But I would imagine, and I don't know if exciting is the right word, but let's say memorable. I would say they're more memorable on the down days.
Well, when somebody's on tilt, you remember, you can have an up day in the market, and as a market maker, you're taking the other side of everything. Like a day like today, you're taking the other side of everything, and everybody's looking to adjust delta or get long here, and you haven't had a downtick, much like on Friday. You probably get run over unless you overhedge. You're probably going to get a little bit run over here. So if somebody's on tilt and then they want to play backgammon, it usually led over into that too. So it was fun to watch.
It was a little momentum going from the floor to the backgammon game. Sure. Yeah. Okay.
Yeah.
Fair enough.
Yep.
Okay, well, let's try the takeaways again. I don't know. What do you think, Beth? Third time? We'll give it a shot? I mean, I don't know. It might not work. Every time we place a trade, we lean heavily on the math and stats of the market. And in that analysis, the normal distribution just continues to guide our day-to-day decision-making. Because regardless of the underlying distribution, the central limit theorem shows us that our results will ultimately revert back to being normally distributed.
Okie.
Very nice.
Yeah.
Dr. Jim, good job.
There it is. Man, look at that.
Good job.
Great visual. I'm gonna print that one out. Give it to my friends.
Oh, so there you go. You should see.
Send the distribution.
Put on a
just so they know.
refrigerator.
Yeah.
There you go.
It's a good thing.
Yeah.
Even the S&Ps are a good thing too. They haven't had a downtick. They're up 62. Volatility collapsing a little bit, 18. Expected move on the E-mini S&Ps. Now that we're over 9 o'clock, back down to 15, is about as low as it's been. We're going to take a quick 90-second break and come back. We got more Tasty Live with a market measure next. Dr. Jim, excellent job. I don't know what else to say.
Thank you, my friend.
You're welcome. We'll take a quick 90-second break and come back. We got more Tasty Live with a market measure next.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade's Money Match event, unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Today's episode of Market Measures is brought to you by Cboe. Cboe is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out Cboe's Retail Trader Suite at www.cboe.com/minis.
Nicky, we are back, son. You know what that means. Time for a little more Tasty Live with a market measure sponsored by the Cboe. Before we do, let's take a quick look at what's going on in the overall market. Even the S&P's holding steady, up $60. They haven't moved too much. They just made new highs a moment ago. They're just coming off of that right now. NASDAQ up 3 and change. Russell up 18. Dow up 260. That's all about the same. Volatility traded under or at 18 just a moment ago. It's 18.05. Bonds are down a tick. I've been really kind of quiet. Not a lot of movement. Like if you notice here, the change isn't moving a lot on all these. But you've made a few trades here. You've actually opened, closed, adjusted 12 different trades. What are you doing with your positions so far that you have?
So we did the ETH and IBIT stuff on the open, sold some calls there. I actually had puts left over from Strangles because I legged out of the calls, so I put those calls back on. So I'm now I have shares in IBIT and ETH as well as short puts, and then I'm equal calls to it. So I'm like 3-3.
Okay.
But it's a little bit of it's basically a straddle here.
Sure.
Where we're at. I'm short, out of the money premium. I've got some static long delta, so I've got a little bit of a buffer, more of a buffer to the upside.
IBIT was over 60. It's been over 70. It's sitting at 65.
Yeah.
I mean, you played a little bit of price reversion to me. Volatility still good in there.
Yeah.
IB rank of 50. Monthly implied volatility is in the 50s also.
Yes.
So you got both sides on more than a directional trade right now, correct?
Yes. So that was I'm long delta, but now I'm less long.
Sure.
But I lean long in both of them.
Got it.
And then in NEM, I bought back some calls at the 100 strike. I did a crab trade into earnings. That position is basically flat. I'm long the...
wanted the stock to go higher. That's what a crab trade does.
Yeah, it was like neutral to bullish. I mean, I'm out net on the position like $1. So I'm long the... where's my... I'm having a little kerfuffle here.
That's okay.
My,
it's hard to talk about...
Well, no, my platform froze up. I clicked too many times.
Stop clicking.
I'm a little bit of a clicker.
Stop clicking. Clicking.
So I bought in the calls. I have a crab trade in NEM. I bought back the put in CoreWeave. So we sold that. I think that was a fast market trade.
CRWV.
CRWV. So I took like $100 out of that. I mean, the stock was up $6 or $7.
It's only up $1.50 right now, so you did really good. You're right. CoreWeave traded.
Well, but it was up on Friday too. I mean, it's had a.
It traded up to 136 this morning on the opening. So
yes.
So it's up $14 in the last 2 days.
Yes. So I closed out of that. I sold out the 15 strike call in SBET. This was a covered call. I think this was a what's your assumption trade, I believe, something like that. Started as a cover call. We've scalped out of the call. And now into this rally today, SBET is kind of a high beta ETH play. So it's a treasury or became a treasury company that now just buys ETH, kind of like MicroStrategy.
SharpLink, is that what you're talking about?
Yeah, SBET.
Yeah.
It was up about $1 and change.
Yeah, it's up 60 cents right now. It's got earnings coming. Markets are okay, not great in there.
I sold my break even is around 15. I sold the weekly 15 strike put against it. When we put this trade on, we did it because we don't do
call.
The 15 strike call.
Yes. Yeah, you said put. Go ahead.
Oh, sorry. We did this trade as not like I'm not looking to hold SBET as a core position. I would love to get out of this trade. And so instead of selling a 20-day option where it's going to take a long time for me to get out of the stock, if we get a move to 15 this week, it's gone. I'm done. I take my money and run.
You got long delta. You long stock short the 15 calls on an uptick on the stock you sold the calls.
Yes. In this weekly.
Yeah.
It's just like I'd be gone. I have another 80 or 90 cents of upside here. If the stock goes above 15, I'll take 90 cents more out of this position, which puts me at a small profit.
And you got an implied volatility of
through the roof.
100. So you've got $1 expected move on this $1,500. Sorry.
Yeah.
$14.50 stock. You got $1 expected move. You sell the 15 calls for 50-ish cents. The stock is around $14.50. You're taking what you expect the expected move to be, all of it to the upside, give up the upside to get the buck. That's really what you're playing for. Yeah, good job.
Baidu, I bought a put to turn my ratio spread into a butterfly. So I made that into a free butterfly. This was another trade that I think was a trade idea from Fast Market last week. The stock's up $6. I could just take the position off if I wanted to take 40, 50, 60 cents out of it. I bought the put, gives yourself a $5 shot at added a $5 width of max value out of that butterfly on the downside. So I'm long the 120, 115 put spread and short the 110, 105. So anywhere in between 120 and 105, I have up to $5 of value that I can capture out of that trade. Small shot.
I like it.
Rather than taking the trade off the table. I got long a micro gold contract about 13 points higher. I figure maybe we bounced from 4,000 a little early on that one. And then I closed out of an Oracle Strangle. That was another trade that we did end of last week that came in 20%, over the weekend.
Good job out of you.
Took some risk off.
So you're managing the positions, you're managing the trades that you can, right? And you took a little bit of a flyer in gold here too, right?
Yeah. Yes.
To the long side.
And I'm going to take off. We put on an Aussie Swiss franc trade, if you remember, with Frankie.
I do.
So I'm going to take that out for $40-50 too. So, and that's the TastyFX products.
I like it.
Yes.
Good job.
So,
All right. Yeah. Back to our regularly scheduled programming, looking at...
and I'll post comments on all those after the show.
Of course.
I'll give you a better breakdown there.
We've got to manage early or to trade late. Market measure sponsored by the SIBO. Go.
All right. As the days until expiration tick down, the value of options fluctuate with time, underlying price, and volatility, according to the Greeks. Of course, the Greeks are what we look for and what we're trading throughout the duration of the trade. Closer to expiration, option Greeks tend to grow. We talk about gamma risk a lot. That's really the key one. As you get closer to expiration, these options become, have the fluctuation becomes wider relative to the value left to capture. So highly responsive option prices can result in rapid profits as short options fall to worthless. So this can also go the other way. They can be rapid losses. So you have to kind of weigh that risk reward. In an efficient market, these rapid profits are expected to be paired with larger risks. Of course, we've seen that time and time again of, big moves last hour of the day or something like that, where people get their face ripped off. That's why we manage positions here. But if the option market is liquid, we can enter or leave a trade when we want to. But when should we want to?
That is the question.
Let's do it. Let's see. So the study we're looking at is 10 years. We're looking at the SPY here, 2015 to 2025, considered selling the 16 Delta, 45-day Strangle, managing at 21 days, contrasting these trades in terms of profit and risks with selling 21 days till expiration, options held until expiration. So we're looking at 21 days versus the 45 days managed. Compared the results and looking for some takeaways. So what do you think is going to be the takeaway here? You've done this for 15 years now.
What's this?
You've done this for 15 years now. You know what to do here.
I mean, if it doesn't show you that you should be aggressive with your managing here, and managing early has got to win, I'm going to give up. I mean, higher implied volatility has got to be key to this. I mean, you can't just take one sentence. You got to take it all. I mean, holding to expiration's got to increase risk. I mean, but it also, you know what? In low volatility environment, when you have a really small expected move, if you roll early and you get a move in the opposite direction, it really hurts you because you're in the longer dated options and now volatility has expanded. So with lower implied volatility, I don't mind so much holding on to it, but you are assuming more risk.
Yeah.
But let's see what happens.
Cool. So this table summarizes the SPY opened with 45 days to expiration and managed at 21 days. Higher IVR trades earned more premium and slightly higher average profits despite a similar win rate, and this with like a 1 standard deviation Strangle. Selling options in higher IV environments generally offers better risk-adjusted returns, but still carries larger drawdowns. And with all these, you can see the probabilities play out. Like this goes to kind of what we talked about that just ad hoc this morning on Confirm and Send. The probabilities are what they are when you hyper analyze a specific occurrence, which here is a 16 Delta, 45 days, 21 day management. It plays out, but you can't say, it's ever changing. It's going to change throughout the duration of the trade. So you can see average P&L obviously is going to be higher as volatility increases. Your CVAR is higher as well, but not by the same magnitude. So you can see your average P&L doubles when volatility is higher. Your CVAR is basically the same. I mean, there's a little bit of extra risk there, but that's priced into the market is what you can take away from this. The standard deviation of P&L, the same kind of story there. When you're trading higher IV, you're going to have likely more tails, but the total risk is relatively the same across the board.
Very
good. So now we're looking at opening trades at 21 days. Holding to expiration introduces greater risk and volatility. Hence, the trade is approaching its expiration date. So specifically, holding 21-day trades to expiration results in about a 34% increase in the tail risk and a 30% rise in the profit volatility. And that's just your spread of P&L from profits to losses. Your P&L volatility, over time, you want to keep that kind of on the tighter end. This is a much wider distribution. A 6% only drop in average profit, so you're not really changing much of your profit, of the average profit, but you're widening out the tail profit of both profits and losses. And a 33% reduction in the collected premium, obviously, because you're selling these 21 days versus 45 days. And it's noticeably more efficient to just do the 45 days to 21 than it is 21 to 16. And so you can see here your win rate drops a little bit, average P&L drops a little bit because you're just selling less premium.
Right.
Your tail risk increases because you're selling less premium, you're closer to the stock price. Things move more from a P&L standpoint. As you can see in the deviation of your P&L, it gets wider. So all these things, there's more risk with these trades as you get closer to expiration. That's just the story here.
That is the story. So keep that in mind.
Yes. So a couple takeaways here. Managing trades early results in significantly reduced risk across a variety of metrics. While many short premium positions turn rapid profits near expiration, everything goes to zero. The extrinsic value goes to zero at expiration. That is also when the largest losses occur. So these options just have a much wider range of value. Historically, these losses have been more costly than the extra profits that you get from these trades. Many aspects of the short premium portfolio come down to personal trading style, but when it comes to short premium positions in the ETFs, trading longer duration and managing early has been a clear winner over the past decade. It's a much tighter distribution of returns, which, is what you want if you're planning on doing this for a long period of time. You have the wide range and, you catch a couple of those on the wrong side and it's a problem.
So you're really looking to be active here. I mean, this is not something that you just set and forget. You got to massage positions and maintain your discipline throughout this. And it gets very, very difficult to do, especially when volatility starts to contract and you go in one direction. You kind of ramp up a little bit on your size because you've got the FOMO, which we've talked about.
Yes.
I'd rather see you go into some individual stocks, some new trades, than ramping up in the same position that you have now. I'd rather you take advantage of price change that we've had in the market today than stay in the same products that you have and ramp up your style in there. So be careful out there. Keep your stuff tight. We're going to take a quick 90-second break. I'm going to get a drink.
Cool.
Take a quick
you okay? Do we have a DNR for you?
No, I want you to resuscitate me.
Okay.
I don't want to go anywhere. I want to stick around.
Am I the beneficiary? It depends.
It's a crowded space, son. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. You think I'm going to give you a say to resuscitate me? No, it's a crowded space. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. We've got Quentin and Ryan coming in. We'll be back in 90 seconds of Tasty Live. Unbelievable.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Class is in session.
Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son. You know what that means. Time for a little more Tasty Live with this man. My road warrior, my travel buddy, Q. How are you, my friend?
Fellas, I'm good. How's it going?
Good to see. Good to rep the old Tasty Works shirt there too.
Vintage.
Oh, sorry.
Vintage from Papa Marty. Actually, he gave me this shirt.
That's a collector's item, right there.
So yeah, vintage.
Vintage, as he says.
Yeah.
Nice.
Yeah.
It's like Target. You got that
like
Target.
Yeah.
You got that vintage shirt at Target.
You know, they don't make this anymore.
Yes.
So gotta rep it. It makes me feel cool in the office. They're like, whoa, what's that?
You've been around a long
Put that
time.
up on like
right?
StockX or something. You know, you get a couple bucks for that thing.
Yeah.
Game worn too.
Yeah.
Game
worn is
Yeah,
right.
you get the stench of the trade desk.
Right. Yeah. Straight up from the trade desk.
Yes.
You want to hear all the tears of my,
How is the trade desk, by the way, at market highs here? What's the breadth of the market there?
Yeah, so typically, we see a lot of calls as the market's going up. But after a down move, sometimes if it goes right back up, people are like, all right,
Because everybody's buying the dip.
Yeah,
everybody's happy. They're like, oh yeah, I don't need to call these.
I don't want to say
guys,
that the customers maybe think they're lucky or something like that, but it's all right, I'm doing well.
So you got to be getting phone calls. Sorry to interrupt you, Q. You got to be getting phone calls.
Not lucky either. Smart, tactical.
About gold now. Because that's the new thing that's cheap at $4,000.
Yeah, so we had some calls
cheap relative
this morning.
Right?
That people were long gold. They got long gold at the highs.
The
just
FOMO.
unfortunate. Yeah, turned around. They just got long gold at the wrong day.
Yeah.
And then turned around. People are like, how can I adjust this trade and selling calls against it? That's actually something interesting. Selling calls against the future and how that changes the buying power. If you're using intraday leverage on the outright contract, it'll actually subtract from your buying power selling the call. because then like once you add the options position on, it's a different position. It's margin different
risk profile.
And different risk.
But that's going to change, right? Like you don't get the margin for it. Is that what you're saying?
Correct. Yeah, it'll actually increase your buying power requirement for the
It'll make it worse for you.
Yes, yeah, because you're already using the intraday leverage. If you're not using the intraday leverage, won't make a differse or it'll lower your requirement.
Right.
Typically.
But I read that they're going to change that soon. That they're going the what would it be, the CFTC is looking at it to margin it just like you would like a stock versus an option, which would lower your buying power. They're looking about it as lowering your buying power because you are taking risk off the table. If I'm short a future, if I'm long a future and it's going lower, my risk is to the downside. If I sell a put, I'm reducing the delta to it. I must be reducing my buying power, but it's not margined that way right now.
So, yeah, and if the CFTC will change that, I'm curious as to how it will be implemented, because the reason there's a difference is, so let's say you're long the future and then you're not using the intraday leverage and then you sell the call against it. Typically, it will credit your buying power or it will keep it the same.
Yep.
But if you're using the intraday leverage, and the intraday leverage is broker to broker specific, so I don't know if there's like a limit the CFTC will use or something like that. But like we at tastytrade, we do 4 times leverage. Other firms, you could trade an ES contract for like $100, which is,
But you got to close it at the end of the day.
Well,
you don't have
it's like a perp. It's a perp.
Yeah,
like
the
stop.
The firm will close it out for you very quickly.
Yes.
In firms like that.
Yes.
But if you're using that intraday leverage and then you sell the call against it, it's not using the intraday leverage and taking the credit against that. It's going to span margin.
Yes.
Which anytime you have an options position, the CME looks at it for 16 different risk scenarios, and then it's the span margin. And so that's why it increases the buying power if you're using intraday leverage.
Well, you know way better than me because you're on the desk and you're doing this all the time.
Yeah, I haven't heard
just a retail
of that
investor
news,
like everybody
just because
else.
I'm in the market. I'm just seeing whatever's there.
Sure.
In terms of the news, I would be curious to how they implement that. Yeah.
It's encouraging though for retail traders that trade futures options. Yeah, very nice.
All right, let's get into the list, fellas.
Let's do it.
Top 20 symbols.
Good job, Q, as always.
Top 20 symbols going through the system and their IVRs. You've got Tesla at 14, NVIDIA 19, PLTR 32, GLD 51, IBIT 48, Amazon 35, AMD 49, Meta 28, SoFi 34, Robinhood 32, Google 43, SLV 40, ETHA 67, Intel 37, Micron 45, Apple 20, Microsoft 28, TQQQ 20, Oracle 45, and TSLL 7. You know, Nikki, I met the guy in North Carolina in Charlotte who told me to stop saying the percentage. Very nice man.
Okay, good. All right, good.
Yeah.
So it's real what he's saying. He's not
making it up.
He's not making it up.
Nikki's not making it up.
I feel bad because I said it in a not. I
didn't
tried to
take
go
it
about
any
it
type of way.
jokingly.
No, don't worry.
My delivery was wrong, and that's my fault.
No, I thought it was fine. Shout out to Mikos, very nice man.
Mikos is great. He's in the chat right now.
So
he's here every day.
Yeah, he's great. Shout out to him.
Okay.
Super nice. Had some great questions about the platform and stuff like that. Some great suggestions as well.
Kind of cool meeting the people on the road that you
I love
talk
it.
to or converse with, right?
Yeah, I mean, I love interacting with the customers, whether it's over the phone, in person. It's a special connection. When you trade, it can be a lonely business. So it's very nice to be able to come to these events, and it's free, which is great. And then, see all the different people, see that, the trades we're placing are real, see that, I mean, I don't think most people think this, but that it's not a scam, right?
Right.
We're really doing this. And, especially the recent tour, it's just a bunch of trades being placed. It's real. We're using the platform and stuff like that. And so, I think that's super unique. I don't really think any other firms do that,
No, they
and
can't
so,
trust anybody with the money. They would steal it.
It's great. Yeah, I mean, I don't know any other firm that's, given
$500,000 in
$500,000.
with it?
Yeah.
Right. Right.
Yeah, so it's really nice that we do, show that it's real, proof of concept, everything like that.
We got one more of those shows left, Austin.
Yes, yeah, I'll be there as well. Should be super exciting. Yeah.
Did you like seeing my sidekick again, Tom Sosnoff? Did you like seeing him?
Oh, it was great. Always a pleasure to see him. We get taken out to a nice dinner. Wait, I want to talk about that. Some of the rules about dinner. I don't know if you've ever heard this, Nikki, but no scallops. You can't order scallops as a man. That's something you can't do.
Oh, that's a new one.
Yeah, coming
That's
from
what
the
you
big
order.
Saz.
Because I am a big dog. Okay?
Yeah.
Well, it came from Tom and you, I guess, as well. But then, someone at dinner did get the scallops.
Well, you notice that person's not on the show today? I got the scallops, but the person who wanted to order them, who has not made his chops yet, he hasn't made his bones, as we used to say back in the street.
The person who wanted the scallops will not be here.
He can't do it.
Maybe here tomorrow.
He had to order
not here today.
veal shank. You know what I mean?
Yeah,
Like, he had a-
man.
Right.
Yeah.
Yeah, me.
On the other hand, have proven
Yeah.
my worth. I can order whatever I want. If I want a petite filet, nobody will
You
say,
can order whatever you want.
I know.
Can't do that. I mean, I get it. I get what you're saying.
Yeah.
But
Don't push it.
Hey,
No, don't
come
push
on.
it.
No.
Well, and then also, I heard...
That's like a Scott Sheridan thing. The petite filet. He would get the petite filet. Oh, did you have the petite filet? It's great there. It's got no fat. I don't like when the fat's around it. I don't want to cut around it.
Well, and then there's also, you can't take the leftovers. No takeout. Like if you're on a date, no leftovers.
No leftovers.
Really?
Yeah. Which I'm a huge leftovers guy because I don't want to waste the food.
Yeah.
But Tom's like, no, just don't do it.
Man, he's gotten very cantankerous since the man thought
I'm taking notes. Wait, have you ever heard of the book Real Men Don't Eat Quiche?
Yeah.
That's a book.
it's
Yeah.
an old one.
So yeah, my dad's told me about that book. That's
Yeah.
what dinner felt like.
Right.
Okay.
Just learning, the way, on the road warrior. I'm learning to be a man.
Yeah.
That's learn to be a man from these two.
I appreciate your restraint to, let
If you want to get ahead
a crippled old man tell you that.
If you want to get ahead in life, take everything you learned on the road with us and throw it out.
And then just do the opposite.
Just throw it completely out. I mean, you're going to meet no one, okay? No one with our attitude.
Yes. Yeah.
All right.
Or maybe you'll meet a MILF.
You never know. Hey, you never know.
It could be kept.
Yeah.
I've got a girlfriend, but could always meet a guma.
All right.
Yeah.
Throw that out there. Good. She's
yeah.
not listening. You're all right, man.
Yeah, she's not listening.
You're all
Don't
right.
worry.
You don't have to mention her.
Yeah.
It's
Yeah.
We won't.
Okay.
We won't tell.
Hey, my 30 minutes with the gumatas,
But I'm going to let you go before you get in more trouble. Okay? This is just like being out on the road with us.
Thank you.
I'm going to let you go before you say something else stupid. Okay? Take everything back that he says. He takes everything back that he says. Who is our next gentleman here? Play some dee for me. There we go. New father. That's right, Ryan. How are you, my man?
I'm doing well, Tony. We're feeling a little bit better, and I've cleaned up slightly since last time I was here.
Good.
The beard was getting a little long. I thought you were going for a new. I thought you were going to go.
Nah, he's getting into the. He's got to take care of the kid now, waking up all hours a day. It's exhausting, isn't it?
Yeah, losing my mind a little bit.
Right, and this little guy hasn't even moved yet, right? Like you put him down in one place, he's still there.
Yes.
Right? Yeah. Wait until they start moving. It's you'll learn. You'll learn. It's quite exhausting. But you'll have fun with it. You'll have fun.
I'm learning quickly. It's getting better.
Yeah, sure. October finally came here, the 27th. I mean, I know we have a full week left, but Bitcoin was over 117. It's back down to 115.5 though, kind of giving up a little bit here. Well off of its lows of 106 or so. So we're in the middle of the range here. Maybe we can get a little something going. What do you think?
Challenging month for both the bulls and the bears.
Mm-hmm.
We saw an all-time high 126 earlier, and we puked it up a couple of weeks ago, and now right back, as you mentioned, where we started. I think the month, depending on what chart you're using, I've got one that shows opened at about 1464 and a little bit higher here today. I think it continues. I'm encouraged that we've kind of retaken 115 for now. That was kind of the level that I'd mentioned where, it's a simple approach, but you want to try to stay on the right side of some of the moving averages, I guess, one way to look at it. So that's the number there. And then seeing the same thing, about 4250 I'd like to see in ETH. But both are certainly trading a little bit better this morning.
ETH got up to just under 43, traded up to, on the futures at least, just under 43. The cash got up to 42.5 or so. Your SUI, I've been buying on the way down, got as low as 230, got as high as 270 something, trading around 260 something, got up to 270 something, but I missed it. I think I was sleeping. That's bad on me. So that's been moving around a little bit too, some opportunity. But like you said, I think the first thing you said was really the most telling thing. I'm kidding you about October because you brought it up there. And then what did you call November? You said?
Morvember.
Morvember's
I
coming.
saw that.
I guess you can.
MOAR.
More.
Yeah.
More.
Give us
Got
more.
It. Got
Yeah.
it. Morvember. Got it.
Yeah, like roar, but like more.
You have to get your moors out. Is what you have to do.
Yeah.
But I think you're right. I think it's been trying for both bears and bulls. We've had an extended move to both sides.
That's kind of good. That's good though. I think for most markets, like you want to see.
Yeah.
If you're trading Apple, you want to see two-sided action, and I think that's good to see underneath the surface. Where it's not I guess with crypto, it's very sentiment-driven, and so like the moves to the upside.
Nobody hates it. Everybody loves it, kind of thing. Like there's not too many haters.
Yeah, but
there are haters, but I don't know if they trade it. Like I don't know if haters trade it. I think you're just long or more long.
Yeah, that's probably a good point.
Yeah, if you're a hater, you don't have a position.
Yeah.
Yeah,
exactly. My opinion.
Exactly.
Now, personally, like, sure, the chop, great, two-sided action, whatever, guys. I'd like to see this go straight up to 150, but
yes,
you know, that's just me.
Yeah. But if you're trading this is good.
Absolutely. I mean, it's been good for, and we're going to talk about this on OTCL today, liquidity pools. So some of the DeFi stuff where you can generate yield, it's implicitly a short vol position. You're making markets in there, so you want to see, both ways. That's benefited.
Are those pools still high interest rates?
Yeah. We'll talk about this in a little bit, but it's variable, but 20, 30, 40% depends on the position and what pool you're in. So that's been cranking, and I think it's been great for option traders, right? We talked about this last week where you had high vol in ETH opportunity to, if you go in and you put on the equivalent strike of what $3,500 would be in ETH or pick your level, you were able to sell some premium in there. Mm-hmm. And if we jump to our slide, you'll see that that's come down quite a bit from where we were. For a second, Bitcoin implied vol was right around 50, back in the low 40s, and ETH back in the 60s versus where we were. Realized still, and it's obviously backward looking, still elevated there. But implieds on a 30-day basis here have come in quite a bit from where we were. So again, had an opportunity to sell some premium in there.
Yeah, we did the call diagonal spreads when you brought up that because I already had shares and puts on the downside. So we did like cheap call diagonal spreads where you're selling front volatility, buying back month volatility, a defined risk way to kind of capture what you were looking at with just on the put side. And we took those off this morning. Obviously, it's been a good move, but you also got that volatility contraction, which is mostly in that shorter duration. It's not the longer duration options hold their value, especially on the upside, because you have this upside skew. Yeah. And so, you kind of benefit from both the directional move and the volatility contraction because it's so heavily weighted towards the front in these two.
Yeah, like you look at Jan and Feb options, they don't move so much with, huge implied volatility.
But you still got the gamma. Yes. So when you get this move and the vol contracts, it still helps you in those longer duration options because
of course the direction has got to help. Skew. Yes. Yeah. But playing that, we love the 45-day strategy, but playing the shorter dated options on rallies on a net long position the way you've been doing and not marrying the position, trading the position, reducing your cost basis on the product. I mean, with call skew, I think it's Nirvana. It's the best of both worlds.
Yeah.
Yeah, and you have extremely liquid options in IBIT, of course, and in ETH to an extent, and you have these on a weekly basis, so you can.
Yeah, you got penny wide markets in IBIT in 4-day options. It's even the 25-day.
They tend to trade on like nickel. You can put in option orders at 103.
Sure.
But it tends to trade at like the 5s and 0s a lot. But from a liquidity standpoint, totally tradable. They're probably my most active products now because of the volatility.
Yeah, I've been trading this a lot more. I've been selling just pretty straightforward, selling puts on the downside there. And then the other thing I like about it is I carry the long deltas through the shares or through the ETF and going out a month, 2 months at a time. And you are, as you mentioned, you're able to sell some premium or at least generate some yield more so on the upside quite a ways away from the current price because people are betting on much, much higher prices.
Yes.
And so, if you have a position at lower prices and you want to go out there and you can sell the 35 strike or the 40 strike in some cases, depending on how much time you have, and you can generate a little bit of income on the position while still remaining bullish, obviously.
Yeah.
But that said, guys, vol has come in a little bit, so we have smaller expected moves. The expected move for Bitcoin on a 1 week basis, and that's just a 1 standard deviation implied volatility calculated range here. That was about $7,000 for Bitcoin last week. We've come in a little bit here. Apologies, I've got a typo. It should be 121.4 on the upside, 108 on the downside, which is kind of that level where we've seen some buyers show up recently. ETH, the bottom of the range there, has moved up as well with the price action. So about a $400 move, 37.50 on the downside and back to 4,500 on the upside for your 1 week, 1 standard deviation move. And you got Solana, SUI, and XRP there as well. XRP has had pretty low volatility versus what we've seen historically. 29 cents is not much of a move there. Sometimes we've seen this go, 50 cents, 75 cents at a time. But just something to note, I suppose. Somewhat relatively low volatility in there.
Mm-hmm.
Good job out of you. Gold hanging out right at 4,000. Place your bets. Really hasn't had too much of had an early rally in gold, down to only about down 36 or 40 at one point. It's down 136 right now. So you really haven't had an uptick in gold at all today. Oil's up 35 cents. Even the S&P's hanging in there, up 54 cents. Not too much movement there. You got PayPal, UNH, UPS, Royal Caribbean, I think SoFi, Wayfair, if you're looking at that. Dow up 196, giving it back a little bit.
Russell, too. The Russell.
Russell's only up 7 or so.
1.25%.
Yeah, volatility 1816, catching a small little bit here. Wouldn't be surprised if they try to test them a little bit to the downside here. See if we give up a little bit on these mini S&Ps. We'll see. Hanging out at almost the top of the hour, 9:54. Ryan, good job out of you.
Yes.
We're going to take a quick 90-second break. We'll come back. We got Liz and Jenny next. Peace.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of tastytrade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This
was not a paid, you're not getting paid for this advertisement.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette over there, I did it right, is Miss Jenny Andrews. How you doing, Jenny? Long time no see.
Good, Liz. Good. How are you? You're still in your Kentucky Blue. You rolled in. Did you get in yesterday?
Can't stop, won't stop. And we got in late last night. I don't have a voice. I think I lost probably 6 pounds. This was the craziest weekend. I'm officially a dock worker. I did my first tailgate and I thought it was gonna be 36 people. I probably had 90 people in and out of my tailgate, and it was awesome.
Well, it's a good thing you bought extra spots so you had a bigger space.
We actually took, because we got there so early, we had 2 spots and we took like the back too. So there was so much, because we were right, if anybody's familiar with Kentucky, we were right by the catwalk. So we were a popular tailgate spot. So
nice. Fun.
Yeah, it was a super good time.
I was in Florida laying by the pool, 84 and sunny. I logged more pool time this trip than I think I ever did.
Oh, and I almost jumped through the phone at you when you're like, oh, it looks like you had a nice sunny day. I was like, it was raining.
You know what? I checked the weather.
Yours was nice and sunny. There was no sun in Kentucky on Saturday.
I was checking the weather by my son, knowing that he's not that far from Kentucky, 2 hours away. And I thought it didn't look too bad. I thought it looked sunny.
No sun. It was rain during setup, which made me look like a dock worker the entire day. Because like as I'm getting everything out, it was just like pouring rain on me and Annabelle. But it was good. Like it was a fun, good time had by all. But that's why I was like, sunny? What do you mean? I only talked to you for like a minute.
Well, so yeah, I had a lovely time in Florida. I got back last night, but now that I'm home, I've got a lot going on. Lily's car won't start. Even after trying to jump the battery, it won't start. My furnace is broken in Michigan City, so there's no heat. It's freezing up there. So now I just have just a lot of fires I've got to put out this week.
Lots of stuff going on. I won a bet with our trade desk. We had the Purdue-Kentucky basketball game on Friday night, and Kentucky was not supposed to win, but I won a king-size candy bar.
What would be your request?
We're going to have to go in for me to collect it.
What would be your request if you had to pick a candy bar?
You know what? I'm going to put him on a manhunt. I want a king-size whatchamacallit.
Oh, yeah, whatchamacallit. I like those.
Okay, but you know what is bonkers, Jenny? Can we pop in the platform, John? I want to show a couple things real quick. So we're in the platform. Gold. Remember we had Tim Knight and listening to him talk? This 4,000 level is a key level, and we crossed it today.
Okay. All right. Yeah. So we'll see what he has to say today. It was fun having Tim Knight on Wednesday. That was a lot. Was it Wednesday? Yes, Wednesday. Tuesday, Wednesday, we do last call. So that was a lot of fun.
And hold on, I just have to say this before we go any farther, because we were just talking about your car problems. Somebody says it sounds like the alternator.
I don't even know what that all
I'm saying is that just put that word in your back pocket when your guy comes.
So then I hired someone now who's going to come to my house and put in a new battery. So if he puts in the new battery, it still won't start. Then
it's the alternator.
And then I have to hire someone else to come and put in an alternator.
I mean, I would just hire a mechanic that can do both.
I don't know.
I don't know if you've got a battery specialist and an alternator specialist, but I believe they are something together. But yeah, I just
the alternator. Thank you. I wish I was handy. I wish I had a handy mechanic nearby, but I don't. But
you know what's so funny is I took auto shop in high school, and I had to, because like I said, I know people know this, but my dad was in a wheelchair, so he made me take auto shop. I can change an oil. I can change your tire. What else can I do? I can rotate tires. I can change brake pads. I can do all of it, but I cannot change an alternator.
Can you change an alternator, Liz? Can you come over and change the
I cannot change an alternator. You need oil? I'm your girl. You need brake pads? I'm your girl. But nothing.
He's probably right. And I probably just threw away money having this battery guy come out and put in the new battery.
Well, you don't know. It could be anybody. Could be anything.
Well, no, it makes sense. I mean, we were trying to jump it, and it was having some power because I could see some lights flashing on it. So the battery wasn't totally dead. I don't know. This is just one thing in a litany of problems I'm dealing with right now. The furnace, the furnace. I've got a deck pulling away from a building. I've got a lot of stuff going on.
I'm on easy street. My tailgate's over. All I have to do is put away stuff, and I'm going to sit like this the rest of the day. Just kidding.
Until you come over to help me change the alternator.
I can't change an alternator. I can give you new brake pads. I'll come over and give you brake pads.
I wonder if with YouTube we could just look up how do you change an alternator.
I don't think so.
Because I've got an AutoZone down the street. All right, so back to gold. I know we had that pair on where we were like long gold, short NASDAQ. That's probably not working today.
So no, because short NASDAQ is not working. Long gold is not working. I mean, we're not down much. We're down $20 on each.
And you know what? With some of Tim Knight's predictions, they're not tomorrow. They're long term.
Yeah, they're long term, right? They're not. Nothing is immediate. Correct.
I see predictions as if he's like Nostradamus. We're gonna hold on to that QQQ GLD forever until.
Well, you can hold it until you're right.
Yeah. No.
The other big movers today were your Bitcoins. Hold on, IBIT and ETH are having a banner day.
I know. So, okay. I'm glad we kept our ETH going one more day because we had a position, like a long call that was expiring last week, and we rolled it out for one more week, that long 27 call. And then the other position we have there is just a short put spread. Maybe put in a GTC for 50% on that short put spread.
We collected very little, but sure.
Yeah, I mean, why the heck did we do that and collect?
I don't know.
I don't know either.
So it's in.
Okay, just leave that. Leave that. And then our long call in ETHA, maybe hit me with the chart. Let me see the ETHA chart.
Hold on, I want to go to it as well, just to kind of show this. So it's the long call, and I believe when we bought it, they didn't have extrinsic value. It still doesn't have extrinsic value, right?
And we bought it on Thursday.
And look at this.
Okay, so do we hold till October 31st? Do we continue the October thought here? Do we hold it until the 31st and just say, hey, we're going to sell this on the 31st?
That was our ultimate goal with this ETHA.
Mm-hmm.
And so we'll sell it on Halloween Eve.
Yeah, we'll sell it. Sure. We'll sell it on Friday. We'll sell it on Friday. The 31st is Friday. We'll sell it on Friday.
Yeah, on Halloween. So we'll sell it on Halloween.
And IBIT, what do we have going on here?
So here we have a zebra with a strangle around it, correct? So yeah, we've got...
No. There's a zebra.
Oh, wait, hold on. Let me just go to...
I think it's another put spread. I think it's a zebra with another put spread.
IBIT. We have a zebra and a put spread. You're correct. So let's take a look at the put spread. I want to see what we're getting out of that one, because I think we collected more on this one.
Yeah, we could... Okay, so that put spread looks pretty good. So we could take some risk off of our crypto position by buying back that put.
So hold on, I want to show you something, Jenny. I just went to close. So I didn't look at the prices. I'm just hitting the puts and I went close 50%. Okay.
Mm-hmm.
It's right where it's trading.
Okay, great. Wonderful. Excellent.
And we'll get back $7. I'll penny it down a little bit. You know what I mean? Or penny it up. It's penny wide markets.
Yeah, because then at least we're taking some risk off the table with our crypto.
Yeah, IBIT is ouch.
Now we don't need to leave a zebra. We don't even like to have a zebra short term. So let's see the IBIT chart. I know it's probably gotten as high as 69 or 70. Ooh, 72.
Yeah.
Should we close one and leave one? Should we close IBIT and leave ETHA, or leave ETHA and close IBIT, or so we don't have, or just leave them both? I'm not sure.
So I'm not going to lie to you. I kind of want to take, I think if we're going to take it short term, I want to close one. I'm going to close this and I'm just going to, we're getting back $8. I'm just going to buy this. I'm going to get back $500.
Okay. And then we just have one long call until the end of the month.
We're taking some risk off the table if it falls back down, right? This is kind of a...
Yeah, and we're really taking this October to the extreme, but that's fine. Let's keep it going. I mean, you've still got your long crypto. I've got my long crypto, and they're, it's not like we're closing ours.
No.
Just because we're getting a little bit of a bounce today.
No, and then when you look at the chart, I'm glad you said hit me with the chart. When you say a little bit of a bounce, let's take a look at it again. We're getting a bounce, but it's not... I don't know that I would... We wrote it down so far. Why close it here? Do you know what I mean?
Right. One thing I wasn't watching the market too much, but one thing I was watching while I was in Florida was Intel, because they came out with earnings on Thursday night. And so Friday, I know I was walking around Magic Kingdom, and I think I sent you this text from Magic Kingdom, and the text was like, Intel can't hold a rally.
I know, I could hear how mad you were.
Because Intel was up over 40 on Friday early, and then if you look at the chart and look at Friday's move, by the end of the day, it was barely up, maybe unchanged, maybe even down. Where is it?
Do we not have Intel?
I bet we had a GTC and it probably closed on Friday.
Okay, so
we just had puts in there.
Intel, I'm gonna go.
Yeah, our GTC hit.
Okay.
All we had was a short put.
Okay. So Intel is, let's take a look at the Intel chart. It is up. It did go up and then came right back down today. It's getting a little bit of wings. It's getting its wings underneath it again.
But take a look at Friday's open versus Friday's close. Like if you go on that red bar,
open 40
and the high
41, right here.
Yeah, and high was 41.12 and it closed at 38.28. So at the end of the day, I was pretty frustrated with Intel that it just it can never hold a rally.
Yeah, that's frustrating.
I know.
That is frustrating. Okay, well, Intel
36 rank. Do we want to do anything in there? Do we want to sell a Strangle?
What if we did? Okay, so we'd go 25 day or 53 day with a 36 rank. 53 day?
I think I'd stick with 25 day.
I know. I feel the same way.
Yeah.
Okay. So if you're taking a
Or
look
do
at
a Jade Lizard. Put on a Jade Lizard.
I was thinking the exact same thing because you can sell. You got to make sure you can get enough for the call spread. So I'm going to do call spread first. So 43, 44, because it's 25 days. I'm going to bring it down. Yeah, that's fine.
Yeah, that's fine. And then there we go. Now that's 36. You know, after earnings, it hasn't gotten. It was the lowest we've seen was 38 and change. So
yeah,
sure. Jade Lizard.
I can take it down one. I actually like that round numbers. Not that it matters. I'm going to go 36. So this is the Jade Lizard and Intel. We're selling the 36 put and the 43, 44 call spread. We're getting 110. It's only using $473. So that's a good return on capital.
Yeah, not bad at all. So at least we're back into Intel. Because if you have it and I have it, I like to have it in here so we can keep an eye on it during the show.
Yeah, I guess our GTC hit and we were both gone on Friday.
Right, I'm sure it hit Friday and it was probably a good thing we had that GTC in because it was up and then it dropped back
Up
down.
and then down. But now we're back in, and I'm going to put immediately in a GTC for 50%. Okay, so that's in. I'm going to keep pushing things out. So Jenny, you do the other side. We've got Intel. Hold on, I'm going to go all symbols today. So
yeah, so far I see IBIT out.
2 IBITs and 1 Intel.
Okay, got it.
2 IBITs, 1 Intel. Okay, perfect. So that's in there. Anything else that needs SPOOs have been sitting here up 58.
I know I didn't like between the car and the furnace and like I never got to put in my SPX 0DTE trade today. I don't know where they were at 9 a.m.
At 9 a.m. they were right about here because I did put it in.
Okay, and are you still in it or are you out?
I am still in it.
Okay.
Yeah, I'm still in it. Because I did the 50 Delta one, so I'm right there. Like everything is right there. I think I'm down like $10 on it. Do you know what I mean?
Okay, I see.
So, but you know what we do today? I'm glad we went over our crypto stuff. The crypto does seem to be getting a little bit of a bid. Let's take a look just in honor of their crypto segment. Let's take a look at the Bitcoin chart. 115 is pretty good.
And also today,
it got as high as 117. I didn't see that.
I think I heard Tony mention it. I was listening to them today, but wasn't. I thought I heard Tony may have mentioned it, but yeah. So that's a nice move for Bitcoin coming back up into the mid to high teens.
Yeah, that's not bad.
What? Today is the expiration of natural gas.
Tomorrow.
Oh, tomorrow?
Yeah, because it's one day. We have 0.
Oh, okay.
Yeah, it's tomorrow, and it doesn't look like we're gonna win. It's going to have to fall quite a bit, but we did lock in a profit.
Yeah. So, and if you go back to our positions, I'm just trying to glance down the P&L, anything else? JD, is that a roll?
So here's CoreWeave. We're up 34%, and I think it's kind of expensive.
Yeah, I think those puts hold up a decent amount of capital. So sure, we can take those out.
Yeah, close to $1,000. I don't mind closing those.
No.
This week has some massive earnings, Jenny. Massive. I think you're looking at the big tech stocks have earnings this week.
Why don't we go to Twitter? Maybe Bob's got his list out.
Let's pop in. And I've got Twitter up. I'm going to do that, but I wanted to shameless self-promote too. Mike, the whiteboard tour. So you've got Mike, Katie, and Nick. They are heading to, where are they going this weekend?
San Diego.
To San Diego. So they're going to San Diego this weekend. That is my birthday. They are going to be performing and drinking beer on November 2nd, which is my birthday, and I'm very excited for them. So if you're in the San Diego area, go out, check this out. They have a great show. And then
wait, did you just make it up that they're going to be drinking beer?
No, they drink beer at this.
Oh, they do?
Yes.
Oh, I had no idea. I might have gone to one of them.
I know.
I had no idea.
It's funny because they're letting them drink beer. They don't let us. So, but yes, I'm pretty sure that you can go have a drink with them. I don't think you can have as many drinks. I think everybody gets one. I'm not sure. I'm just kidding. I have no idea. But then the following week, Friday, November 7th is the last, At Work by 11. That's the last show with Tom and Tony, the two partners in crime.
Yeah. So that is the last time, that people have a chance to see Tom on stage, and he's great. And Liz and I were going to surprise him and just show up in Austin and surprise the boys. But the cat's out of the bag because I heard Tony say it this morning. So Liz and I will be there as well.
I know Tony and I called Jenny. I was like, what the heck? Nobody's supposed to know we're going.
I know. But I guess it must have come up in Charlotte because I don't know if you've seen the emails. We're getting our own mics in Austin too. So we might have a role.
We're getting mic'd up?
So apparently this was discussed while they were just in Charlotte with the Brittany and the boys, and we're getting mics. I don't know what we're doing, but I've seen the emails like, "Do Liz and Jenny get mics now?" Yes. So we're there, and we might be on stage.
I thought we were checking people in, so I was really excited. I was really excited to not have to. Don't get me wrong, I love being on stage, but I like meeting the viewers, and I was really excited to not have a mic and just kiss babies and shake hands.
Oh my gosh, when I was on the plane, when I was on the flight going back and forth to Florida, I said, this is the first time I've been on a plane in a long time where I'm not working on a stage show. Because usually like every time I'm on a plane, I'm working on a stage show at some part of it.
Yeah.
And so this was my first time, but if I knew we were getting mics, I could have been working on the stage show.
I mean, maybe we're doing some singing. I don't know.
Maybe we're going to do the intro. I don't know, but like Tom's last time, this is a must-see show because it's Tom's last time on tour, and Liz and I will be up there doing a dance, maybe singing a song.
We're not sure, so don't set your bar real low. No, but we're excited, so that'll be there. And then there's one more. The last of the tours for this year is then Dr. Jim, and he is in Tampa, right at home, on December 7th. So that's good.
Oh yeah, that's nice.
I mean, I'm gonna pop into Twitter, but this should be a fun couple weeks to wrap up the tours.
Yeah.
And then, okay, so I'm coming in here. I'm gonna go top down. We see you, Blue Wackadoo. We will get to you. You might be the top one. Okay, so yeah, I went to him first, and then he was done for the day. So an hour ago,
let's take a look at Blue Wackadoo. Done for the day. Collected a couple taters, $649. Thank you, Mr. Market.
That's not a bad day. Not a bad day, I will tell you.
Not a bad day. Not a bad day.
Yeah, not a bad day at all. And then this is what he was doing. So I just want to see from the time he sent the one, and I will get to Bob. So 1 hour ago, he pushed this, and then within an hour, he was out.
I like it. I think I'm going to start because the SPX trades, I feel like you can't just one day go all in like Jack Tucker or Blue Wackadoo. And Jack Tucker is a much bigger scale. Blue Wackadoo's more, my speed. But I think I'm going to start slowly ramping up my size with the zero DTEs. Slowly ramping up.
What else are we working on with the zero DTEs for you? What else are we working on?
Consistency.
I used to say that to my kids all the time. What are we working on?
We're working on consistency. No, but I think it's okay. It's okay to say like, whoa, vol's super high.
No, I get it. I mean, Eric does the same thing. Blue Wackadoo will be like, hey, vol's very, very high. So he will actually tone down his sizing depending on the situation as well. Which, I mean, I'm just kidding because I just know that Jenny's like, she comes in and she's all over the place. That's the only reason I was like,
sometimes I'm doing the iron fly, sometimes iron condor, sometimes just the foot spreads. But again, it's kind of like, if vol's super high and I can sell this iron condor and it's so wide. Yeah. But I'm going to have Jacob. I've got some requests for Jacob. So as soon as this show's over, I'm contacting Jacob.
I know, I'm very excited for that. And we also have on deck too. So we're going to try to not redo, but we're going to incorporate one of our things from last week so that it can be packaged together because it wasn't packaged appropriately thus far, the YouTube. So we're going to kind of redo something that we did on the floor last week and hopefully add to it.
Yeah, part of Jacob's piece last week, we're going to revisit along with some additional content in there. Right. Yeah, exactly. We're working on the when we push these out, the zero DTE pieces. So we're working on it.
But I also like, and kind of, I'm kind of tongue in cheek saying we're working on consistency. We're working on consistency too, because what Jacob's doing is putting these things together in a process for us. They need to be packaged together in that. So it's not all over the place if somebody's looking for it.
Right. And someone can see like part 1, part 2, part 3.
Yes. So that's what we're really trying to kind of sink our teeth into from being from the trading floor. Because I know I've said it before, but I think that these zero DTEs are one of the biggest game changers that I've seen in a long time in derivatives trading.
For sure.
Yeah.
Okay, let's go to Bob's list. So we have.
Wait, hold on, I'm gonna show more because it's bonkers.
Today's list. As far as today's list, what jumps out at me is SoFi. There's a handful that.
Yes, PayPal, Royal Caribbean.
121 gigawatts.
1.21 gigawatts.
So I also want to, GLW, I'm going to look at it for kicks because I used to be in the Corning glass crowd and it used to be really hot and the fiber optics are hot again. My parents, their yard was all marked up. I was like, what is going on? And they're like, fiber optics are getting installed underground here.
Ooh, congratulations.
So I guess it's back. Corning glass fiber optic cables are back. What else?
Yeah, I think the big ones come in, Wednesday, Thursday. So you've got Meta, Microsoft, Google, Chipotle, Mexican Grill, Starbucks. Look at that's a big list. Then on Thursday, you got Amazon, Apple, Coin, Reddit, like Riot, Roku. Those are big. Those are some big movers. The market's going to move on those.
Right. Amazon, Apple, Coin, Reddit.
Yeah. Riot, MSTM. So today, I think this is the biggest week of earnings, is from my understanding. But looking at this, we will take a look at some of these. I want to look at SoFi. I mean, the things that jump out are PayPal and UPS and GLW, but I don't know that I'm dying to get into any of those. And I use
GLW wouldn't jump out only because I used to be in that pit. That's why I want to look at it.
Yeah. I'm going to repost this.
But I do. It's funny because I might have some old accounts. I might have some old accounts that have some old GLW or Bristol Myers or some of those old stocks in it. It's possible.
You probably do.
I probably do. I should look into that one day.
You probably do.
They were probably like the worthless, almost not Bristol Myers. That wouldn't have been worthless, but like Corning Glass was probably worthless. And then
okay, let's go. We'll jump back into Twitter in a minute, but let's kind of look at some things we're talking about. Let's look at Corning Glass, your worthless stock.
So when I left GLW, this chart only goes back 20 years, which is about the time, when my son was born. So when I left 20 years ago, if we go back all the way, where was Corning Glass?
$16, $18.
Yeah, then if it were pennies, I just left like penny stocks in this. I left anything that was worth almost nothing.
Yeah, but you left before your son is born, and this is 20 years, and he's 21 years old. So you left 2 years before this chart started.
Yeah, I left in 2004.
Yeah, that's what I'm saying. So this is 2006. You left 2 years before this chart started.
So, where is it now? 88.
88.
Back, risen like a phoenix.
Yeah, but you know what? For years and years and years and years, it was a $20 stock. So I'm just kind of years and years.
Oh, yeah. Fiber optics are back now. They were hot for a while. They were hot. I think, can't remember when it got hot. Back in the late 90s, everyone, it was the whole fiber optic phase. Like, our pit was so busy. Everyone wanted to get into the Corning pit because GLW was such a hot stock. It was the hot stock in the pit.
It was super hot. I remember that.
Mm-hmm.
I do remember that.
Mm-hmm.
Okay,
and now it looks like it is again.
So is there anything you want to do on earnings because of this? I don't want to sell this put. I just want to see how much capital.
No, I just wanted to look at it.
Okay. Now 3 million shares have traded, so it's not that bad. I mean, you could do like a Jade Lizard.
No, I just really wanted to look at it. I just wanted to take a look at it, see what it was doing, keep an eye on it. But I'm not going to put an earnings trade on in Corning Glass.
So you know what I wanted to do? I want to see if there's, let me change open interest to implied volatility. Because you know what? I'm not saying I'm doing this for every earnings. I'm not doing it for every earnings. But you know how we discovered that the buffer trade really helps with upside call skew? I just want to look at it on earnings to see if there's call skew here. And it looks like there is.
Yeah, it looks like there is. So it's basically, you buy a put spread and you're paying 211. So sell a put that has 211.
Oh, that stinks. Okay.
Yeah, it's not enough profit potential to be worth the risk.
Okay.
Let's move on.
Okay, so then let's look at SoFi because I know we're both in SoFi. SoFi, PayPal, EPS. Okay. SoFi is a $29 stock, 33 rank. I'm going to open up the options trading positions and we'll take a look at the chart too. Pretty liquid. So we were just in Corning Glass. And if you look at the volume up here, this volume is 34 million. Corning Glass at about 3 million. So this is a much more liquid stock, SoFi.
I'm pretty sure SoFi has, and I'm pretty sure it's like blown through my short calls. Yes, it has. I'm short the 28 calls against my stock. I collared my SoFi because SoFi was running up. And so I sold the 28 calls and bought the 25 puts. And
you're done. You're tapped out.
Yeah.
You're tapped out because once you sell the call against it, there's nothing you can do. But you made money on the stock.
Oh, no. I did my zebra. It's my synthetic zebra. I got the 25-28 call spread and the 25 puts. It's the synthetic zebra.
Oh, congratulations.
It's funny because I know I used to have a collar on SoFi because SoFi's had quite a run.
But that's another way to protect it. The collar protects it, but the zebra protects it. Like if you've made so much money, throw that on because then you can only only lose down to the last click.
Yeah, it's like the ratchet.
Yeah, it's kind of like the ratchet. Okay, but we're not in this. So what do you think about how about, I'm just kind of having fun here. I don't know if I definitely want to do this, but what about a double, let me turn this off.
Okay, I think I've got to read this on our Teams chat. Did you see our?
No, because I'm running everything and I'm looking at YouTube. So if you see this is like a Batwing trade. I'm just going to go to analysis and curve view. Let me know what I need to know.
Frank, I don't know if I can even say this on air. Frank had a crush. Corning Glass was the hot stock on the old trading floor, and he had a crush on the Becker broker in there when I was a runner for them.
I don't know if I can say it in there, but I'm going to.
I'm going. Hey, you're going to tweet it. You're going to message us during the show, Frank. Everything's fair game.
Everything's fair game. At least it was that. I thought it was something else. Okay, but Jenny, take a look at this. This is in honor of Bat.
Oh, a little Batwing.
It's a SoFi trade. We're taking in 60 cents, so it's not a lot, but it's not small. And if it goes up or down, we can stand to make a little bit more. We'd come in either long it at 25 or short it at like 34.50. What are your thoughts? What say you, Jenny Andrews?
It doesn't look bad, right? It looks pretty good on the P&L chart.
So the only thing that I might do, wait, hold on, I'm gonna go back to SoFi. I'm gonna go to the table page. I don't know. I actually think I might move this out, give myself a little bit more room. Still taking in 45 cents. I was just a little bit nervous about the calls.
Yeah, I think I'm honestly,
this isn't bad though. We're using $300. If it doesn't move, we make 45 cents and we'll close it tomorrow.
Will you just check how much the diagonal is? We were on that run for a while where it's like everything was going up and we were doing the upside diagonals. Can you just see how much
this will be cheap because
I'd rather risk $1.40 than have the naked options.
Okay, and then this is saying that it's going up. So this is a $3 wide. We're paying 140. So you're paying just under 50%, which isn't bad.
I mean,
I could move this up a little bit though. Hold on. Let me move it to here to give us a little bit more. So, oh shoot, hold on.
I just don't know if I want the naked option risk through.
Yeah, I don't mind the diagonals. I was just playing with it because you were doing that. We'll play 129, $3 wide.
Yeah, that's not bad. $1.30.
Okay, then we're in SoFi. What else do we want to do in the earning?
I mean, and honestly, diagonal, you could do it either direction. You could put on a put diagonal too. It doesn't matter.
No, you totally could. You totally could. I just saw that it was a cheap way to sell premium. That's why I was like trying to get creative.
Oh, yeah.
That's why I was just trying to get creative. It doesn't matter. Like I'm happy with the diagonal too.
I just don't know. I don't know. I don't want the risk of naked options, honestly. Because here's what we've got going on. This account is. I don't want to take a $400 or $500 hit on earnings.
No kidding. I hear you. Okay. The other thing, and I don't know if I can say this anymore, but I'm not a huge fan of PayPal product. But I say it all the time.
I know, but I use Venmo all the time, and I think they own Venmo. We go through this every
I like Venmo. Don't like PayPal.
Hey, Venmo. We love Venmo.
Love Venmo. Love Venmo. Love it. 2 thumbs up on Venmo. PayPal, not so much. Okay, so right here, PayPal is
it's been in that range. It's been in that range for a while.
It has been in that range for a while. Look at the expected move. This is what I find odd. The expected move is $5.70. It's got 100% implied volatility.
That's crazy.
That is pretty crazy, isn't it? So I kind of agree. I don't want naked options in this either. Do you want to just diagonal both and see what happens? Let's see how much it is.
What if we diagonal everything?
This is not bad because you're only risking $270 and it's $7 wide.
Let's diagonal. Let's go back to diagonaling everything.
Well, we only have 3 today. We're not going to really look at anything else unless we don't, you know what I mean? So, but it's it's an up day. So sometimes the market will follow whatever it's doing with the day. So I don't mind diagonaling.
If we wanted to make it cheaper, you can move it to the 71 because we're trading 70, 74.
Oh yeah, we do want to make it cheaper. We'll go to the 71 and we're only spending $219.
And that's $6 wide. So that's not bad.
Yeah, that's not bad at all.
Now, we know these are all like bullish. If you, like for that one, if we're risking 200, but make can make 500.
Yeah, 4.
Great. Yeah. That would be great. That would more than offset.
And honestly, we're going to look at them together, right? So if we lose on one, when we come in tomorrow, we're not going to be like, oh, we're going to put them together as like as an earnings little package tied up with a little bow, right?
Got it.
Okay, so what we looked at Corning, we looked at PayPal. I just want to take a look at UPS, and then we'll keep moving. Actually, I'm just going to look at the price of Royal Caribbean, and then we'll look at UPS. Royal Caribbean, $318.
Oh,
that is a load of malarkey, because I was buying it when I was my last Royal Caribbean cruise. I was buying it right around here because I wanted the cruise credit. Now it's a little expensive.
It's crazy, $318.
It is crazy.
Cruising's back. What's Carnival now? Because Carnival for a while couldn't catch a bid. It was like 16.
So Carnival did not.
It doubled. It doubled.
But it's not nearly as much as Royal Caribbean. Royal Caribbean's like 4 times what it used to be.
So let's go. So let's see what their market cap is. Like, what's Carnival worth compared to Royal Caribbean?
Where am I going?
Overview.
Yeah, there we go. Overview. Drop down.
So Carnival and its fleet of ships, 38 billion. 38 billion. And what about Royal Caribbean? And Carnival's also like Holland America, Costa, and
86 billion.
Yeah.
Yeah. It's big. It's big.
I told you when I was when we were in Disney, there was a whole group of people. I don't know if I told you about these people. They were maybe 10 years older than us. And it was 8 couples, probably 8 couples, 10 years older than us. They had these T-shirts on.
I don't know what's going on, but I want in.
Yeah. So they had these T-shirts on, and the back of their T-shirts was like each day. And it was like day 1, drinks around the world in Epcot. Day 2, VIP tour, first in line VIP tour. Day 3, like every day they had something cool. And then they were a day away from getting on a Royal Caribbean cruise. That was on it too. So they were combining 2 of our favorites, Liz. They were combining going to Disney and then getting on a Royal Caribbean cruise.
Love it. I like these. I like their style. I just pulled up Disney while you were talking about Disney. It's trading 112. Okay. UPS. Then, Jenny, we're going to pop back into Twitter.
I think that's where I bought it. I think when I heard like, oh, Disney's going to have that Taylor Swift series, and I bought Disney, I think it was right at 112.
Yeah, it hasn't done anything.
It hasn't moved since then. No.
Yeah, it hasn't moved. Okay, UPS is the last thing I want to look at. I don't necessarily know that I want to trade it. I just want to look at it. 3 million shares. UPS is down low.
We sold puts in there. Yeah, we're in it.
But let's see if we can let's see if that's what we want for our earnings trade. We can take off our 27% and just call it a day. I think we should.
Yeah, just take it off and forget about it.
And we're going to get back $800. We're getting a lot of capital back. We're going to have so much money to trade with tomorrow.
Especially if our 2 earnings trades go well.
Yeah. Hold on. Let me do this because I didn't push out the diagonals yet either.
I mean, I'm curious. How much is the UPS diagonal?
Let's take a look.
Like if they're all under 300, well, you're in the 25-day. You got to go.
Oh, yeah. Okay, hold on. I got to go near term. So the diagonal is selling the 4-day. You're selling the juice. The only reason we like to do these on earnings is the 4-day, you're not going to get much for it unless it's earnings, right? This is a dollar's not bad. It's an $90 product. You've got a $6 expected move. Ooh.
That's not bad. So you got a $5 ride for $2.
Yeah, that's not bad.
Yeah, let's do it. 3 in.
3 for 3. We'll see if it works. If we go 3 for 3.
For a while, we were diagonal city on earnings.
Yeah, until it took us out.
Well, until the market fell. Until I think, what was it, February? When did the market fall? February?
Yeah, ish.
January, we were killing it. February took a turn.
February took a violent turn. I'm going to take a walk down memory lane for you.
Yeah, we were like, ooh, January, we should just close all now.
And here is, maybe it was April. Well, no, February it started. It started in February, right? So here, it started like right here, February 20th, and then it bottomed on April 7th. So the entire...
So it actually lasted a long time.
Yeah, that was a big down move. It was a big down move. Big down move. Okay, going back to Twitter. So I'm going to get out of this one. Thank you very much, Bob. We appreciate it. We will be seeing all these. We'll be doing all those. And we're on last call, I think, Tuesday and Wednesday this week. So we'll have earnings stuff to do there, which is great. I'm going to go, and then we got
Libra on Nike. Any thoughts? Sure, let's take a look.
Take a look.
From Lisa. on YouTube. So if you're on YouTube and Frank sees it, he'll put it out there. So Frank's not mad at us. He shared with us our YouTube chat.
I mean, it looked like he was angry when he texted it. So, wait, what did she say? Put zebra?
Put zebra on Nike.
Okay, so that means you think it's going down. Put zebra means you want to short the stock. A zebra is a stock replacement strategy, right? So if I'm going put zebra, you're selling 150 delta, buying 270 deltas. You're paying, you can actually make it a little bit cheaper. You're paying $587 for a 1-for-1 short position in Nike. It's not bad.
No, it's not bad.
It's not bad at all.
And again, talk about risk in here. What I think is real risk. If in 10 days or 12 days, it's up to 72 and it's gone up instead of down, I think, paying $6 for this, it's going to be about a $300 loss. If it gets to 72 and there's still at least like 10 days to go, I think this would be about a $300 loss.
Well, then I just need to correct something Frank said. We're on last call Tuesday and Wednesday. We're not on last call today, to the best of my knowledge.
Not today. Tuesday,
okay.
Wednesday.
I just need to correct that. We're on last call Tuesday and Wednesday.
Yes.
To the best of my knowledge, unless Frank, you know something I don't know. So to Jenny's point, you're shorting the stock. If it goes to 72, you will lose, but it's not real risk because there will become the extrinsic value. I also wanted to kind of talk through why we like the zebra. So if you take a look at this green bar, the zebra, selling 150 delta, buying 270 deltas, you're replicating short stock. You make money anywhere. There's nowhere to the green bar, 1 for 1. If Nike goes down to 60, you make, $800, almost $900. It's defined risk to the top. I'm going to show this as well. So you make money 1 for 1 to the downside, and your risk is capped at expiration at this 587.
Right. So worst case scenario, this 587. When I said, if it went up to 72, if it went up instead of down, this would probably be worth about $3. We'd be at about $300. That's if there's still time in the trade, and it's our longs are at the money.
Yes, correct.
So I don't mind it. You can ship it.
I don't mind it either, but I figured while we're on this, and I like Lisa, I think I've shared a couple emails with her too. But so here you're spending $587, but you're picking up, as you saw, that 1 for 1 to the downside. So the reason that we do this is we're trying to wash extrinsic value. And if I was going to pay $587 for something, I can go right here and just buy this 74 put, which you've seen us switch our zebras to, but then you're paying extrinsic value. So then you're paying 75 cents extrinsic value. That's the reason we kind of like the zebra, is that there is some management to it. If it goes against you, those longs become the at the monies, and it gives you something to actually work with.
Right. Exactly. So I like it. And it's her assumption, bearish on Nike, but I don't mind the zebra. It's not too much risk for us.
Yeah, let's ship it. Okay.
Will you do me a favor? Because
look, Nike's bucking the trend. It's down with everything up. Yes. I'm sorry. What's your favor?
Let's see. I've got UPS, PayPal, SoFi, and I have all those.
There should be 2 UPSs. Yeah. 2 UPS, 1 PayPal, SoFi, Intel, IBIT.
Okay, got those.
Okay, and I'm going to ship the Nike. If we get filled, great. If we don't, we're filled immediately. Okay,
and we'll get that pushed out too.
And I'm going to, yes. So Jenny, only because we have a put zebra and Nike, I'm going to put something to close it to take $100 out of it.
Sure.
Because if we do get two-way action and it pops and then comes back up, I want to be able to make sure we take profit.
Sure. So it would go down. We usually don't have a bearish zebra. I know you say pops. Usually we have a bullish.
Yes.
Yeah. It's a bearish zebra. So if it drops down, it just needs to drop down $1 to get $100 out of this. So if we take 587, put it in for 687.
Right? 687 credit, and I'm going to put GTC in for that. Because I do think it wasn't our assumption, it was Lisa's, which is great. If we can take $100 out of it by risking 5, I'm 100% okay with that. Okay, so that order is in.
Now I keep thinking that I should call my battery and cancel the battery delivery, man.
No, there was lots of things that were all over, but you almost need to bring it to a mechanic. It could have been anything. Somebody said a starter.
But if it won't drive, how do I get it to a mechanic? I have to have it towed there.
You have to have it towed. That's what I'm saying. You should tow it.
I guess so. I don't really have time for this.
I know. That is the one good thing about having a plumbing contractor for a brother. He's always got a guy. Like, he'll send somebody to my house so fast, my head would spin, even a mechanic.
That's nice.
I know, it is nice. He always is sending people to my house that I didn't even ask for. I'll never forget the one day he sent a roofer to my house, not for my roof, but I didn't like the way my poles in my backyard looked because they were naked. They weren't like wrapped. And I was like, what are you doing here? He's like, your brother wants me to wrap these poles for you. I was like,
oh, that's nice.
I was like, okay, all right. Okay, so we're in on all this stuff. I do want to get filled on our core weave because we're taking profits.
Sure.
Okay, so we're filled in core weave. This hour is flying. It's already 41.
I know. Well, we did earnings diagonals. I'm kind of glad the earnings diagonals are back.
I know, and they were cheap. The problem is we diagonaled everything, and I think we got a little bit diagonal happy with like expensive ones too.
Then that was the problem. These cheap ones, $200, no big deal. We were putting on diagonals that were $2,000.
Yes.
We were like, oh great, we can make $5,000. Let's put on this $2,000.
We got a little trigger happy with our diagonals in February.
Yeah.
Yes. Okay. So I'm going to go back to Twitter and I'm going to go top down. We love it, Lisa. Those are our thoughts. We put one on. So she's in there.
Yes,
we've got Blue Wackadoo. Okay.
And was there anything else on the?
Oh, Ashvin, I needed to get to this because I saw this. He's like ready for some football. Go Cards. Sorry, Liz. So yes. They look adorable. I love seeing Ashvin and she's beautiful.
Yeah. So thanks for sharing that picture. We always love to see our viewers so then we can put a face to the name.
I know, I loved this, and I wanted to make sure we got to it, so that was fun. And then Day Friday. Now, granted, this was last week, but we were off on Friday. So this is not TP's Cherry Bomb today, but I thought it was worth a read. I read TP's Cherry Bomb, and he often recommends a trade with good upside, but the put he suggests sells for only 40 cents. I can't pull the trigger on such a cheap option. Instead, I think I sell the put buffer trade for 250 credit. So far, so good. What do you think? I don't mind that. So I just wanted to kind of show, because we glanced at a buffer earlier. So
the buffer has so much more profit potential.
You're still using a put, but you've got more profit potential.
You have more profit potential, but like just the one put, the one out of the money put can make money if the stock stays here or goes down. The buffer, you actually need the stock to go up, but it does have a lot more profit potential.
So wait, what should I do it in? I'm going to do something that's cheaper because I think Ford has probably got 40-cent options. Do you know what I mean?
Did we look at SoFi? I know we put in the diagonal in SoFi, but did we look at a buffer in SoFi?
We did, and it didn't look that good.
No, that was Corning Glass.
Oh, was it SoFi? Let's look at SoFi. Okay. So if you're going to do a buffer, you could do it for earnings. I'm just trying to look at something.
25 day. We would go to the 25 days.
Yeah, if you're going to. So this is going to have some profit potential. So let's just kind of go through the scenario here. It's got a lot of strikes, which is nice. So to TP's point, and he didn't sell this. We're not putting words in his mouth. But if you're going to take a high probability trade, you go down and you're going to sell a 50-cent put, right? You're using $240 to do it. You can make 50 cents. That's all you can make on this. It's a bullish trade. The buffer is kind of similar in the fact that you're trying to buy a put spread. So I'm buying.
And start with the 30, so it'll show up okay on the analysis page.
So 260, I'm actually going to make it a little narrower. So you're getting, you're paying 169 for this trade. The concept is you would then be long it wherever your short is. I'm going to go and then I'm going to sell a in the money synthetic covered call with the same extrinsic value of what I'm buying. So I'm going to go right here to this 132 and sell that put.
So basically we're selling that put. That's a synthetic covered call. And then it's like you have a covered call and then you have a long put spread. It's basically like a covered call where you're using the credit from the short call to pay for a put spread and give you some downside protection with the put spread.
We have other things in SoFi. That's why this looks like this.
Yeah,
it shouldn't look like that.
Go to analysis.
Yes,
and
let me take these off. I'm going to take off.
Unclick the call.
There we go. This is what it should look like. So we've covered everything. You can't lose. Then you just become. I really was glad that they brought this up because sure they're all versions of the same trade. That put gets you down to the 25 level. So you would anywhere up to the 25 level you get to keep that 50 cents. Well here anywhere to the 26 level you get to keep 9 cents. Whatever. You don't start losing until the 26. But there's much more profit potential if it goes up.
It has to go up. It can't just sit right here. Like if you just sell a put, it could sit here, could go down a little, and you still make that money. With the buffer, it needs to go up.
Yes. And I do like the buffer's profit potential, and I like I don't lose until a certain amount. So I'm willing to, sometimes I'm willing to risk more I would rather have that naked option with more profit potential.
Right.
So that was pretty interesting, and I'm glad they brought that up. This looks good because SoFi does have earnings too. So I was just going to try to take a look at it. If you said Intel, the same concept. If you wanted to be bullish Intel, now we're in the curve view. We have Intel in.
We have a lot more profit potential with the buffer instead of that Jade Lizard.
We do.
So we have a Jade Lizard with only $100 profit potential. The buffer, what would that give us?
So I'm gonna get it. Go to a different cycle though. Okay.
Yeah, you can go to December. I mean, people could put on a longer term buffer.
I don't mind them very, very short term, and I'd like them long term too. So let's keep an eye on this. We can make it a little less expensive, but for the purpose of this, I'm gonna go one strike in the money. So I'm gonna go. No, oh no.
Yeah, you have to make it narrower. Maybe get your break even at 35, because our short put that we just sold was the 36. So.
Okay, so this gives you the buffer. The buffer is from 40 to 35. You won't lose any money. And then you try to cover the cost of your extrinsic value by going and finding a call with that extrinsic value. So I can go to the 44.
Yeah, so if you had stock, you would just sell the 44 call for 212 and then buy that put spread with that 212 to give yourself some protection, some downside protection. Here we don't have the stock. We use that 44 in the money put. That is a synthetic covered call.
Yes. And this is, one of the things that I love about our job, Jenny, is taking a look at this. This was something that was brought on by, I can't remember, what was that researcher's name? Do you remember him?
Oh, yes. Ed. Right?
Eddie. Yeah, Eddie. You did something and I did a show with Eddie, and Eddie was talking about the buffer. And it's an ETF. So there's all these salespeople now that are putting together buffer ETFs. And the concept is, on paper, on the resume, they're like, well, here you go, Intel. Would you be willing to give up some of your upside for what is this? This would be maybe a 10% protection to the downside. And everybody's like, yes, where do I sign? Well, the ultimate buffer was buying the stock and selling that 44 call and then buying a put spread. That's all it was. Right. And so when Eddie was on, and then Jenny and I sprung board afterwards, we're like, well, synthetically, if you're just short the in the money put, that is your stock position. And then buying that put spread helps it.
Right. So, yeah, it's kind of nice. I know people do get frustrated, especially in the market we've been in where things have been going, up and up and up. People get frustrated then when they sell that call and like, oh man, I sold that call. But it does give
not with the buffer though. I think when you look
at the buffer is a synthetic covered call. It's a synthetic covered call, so it's the same. Like it's the same thing.
No. But if I'm doing this buffer, I don't have the stock yet, so I'm happy to take this profit, right?
Right.
So
if we have the buffer, you're happy it goes up and you're happy to take the profit. If you have the stock and sell the call to buy the put spread, you're usually mad when it goes up. It's funny.
Correct, because you've held onto that stock for so long. Yeah. But if I'm putting this in, this is my trade that I'm starting with, I'm happy because I'm risking $400 and it's using $485 to make $400. That's a pretty good return on capital.
Right.
If it works.
If Intel keeps going up. And then this is a 53-day trade. The way these buffers work, though, is we're not going to get that full $400 until very close to expiration. So this isn't like, oh, Intel goes up tomorrow and we make $400. Intel goes up tomorrow a few dollars and maybe we make 70. We have to wait on this, or Intel has to go up quite a bit.
Well, it's very similar to, hypothetically speaking, you have the stock, because I know you do, and you sold this 46 call against it, which we would be mad if it went up, and I agree with that. But if Intel goes up to 46, you have to wait anyway, because then your call has so much extrinsic value that you're not going to close that either way. Right. So even if you have the stock in that call and it goes up, you're like, great,
you're not closing it. Yeah.
But I'm losing on this. And that was the one thing that my father-in-law in the beginning could not wrap his brain around. He kept being like, I'm losing on these calls that I'm selling. I was like, time has to pass and it's got to be at expiration for you to make that full profit.
And some of them, I told you, Logan's account, like go to Oklo. He sold the 85 calls against his Oklo stock, and he still has it because usually
what cycle?
In December, we rolled it out to December. If you look at those 85 calls, there's still $400 left in them.
Yeah,
still $400. So if you buy stock, if you have a covered call, and there's nothing left in that 85 level, and he tries to sell the stock and sell the call and close it as a package, or buy back the call and sell the stock, that should close for $85 or very close to $85. That thing's still pricing $4 or $5 away from what it should be at expiration.
That's crazy.
I know. So then in his account, I just had him selling the 85 puts, thinking if it comes back to 85, great. If not, you're going to keep selling 85 puts.
Yeah, that's a hefty price tag.
Yeah, it is.
It's a hefty. There's Oklo. I like it. It's been one of your number one winners. It's a hefty price. Well, I had that in with it, But if you have the stock, so it's only $1,600.
Yeah, it's not 5,900. Right.
I had the call in too. Yeah.
Yeah. Right. That naked call.
Yeah.
Huh.
It's not as hefty of a price tag as I thought. Do we have anything in Oklo?
We did, but it might be gone.
I think it's gone. So the nuclear stocks, it's down today?
Yeah, it's down. It was up. I know they were up. It's down.
What the heck? So I saw that the open was 144.
Yeah, I know.
And it's at the low today. That's crazy. That makes sense why my account took a hit. Because I was glancing at my account. I was like, what just happened? It was Oklo.
But yeah, can you believe those 85 puts are still at $5, $4?
No. But I'm telling you, that's a hot stock. Hot. You know what else was down today? My UUU.
Oh, UUUU.
That was down. Yeah, that's down $3, which is a big.
That's a big move for UUUU.
It's a big hit.
Let's see. Take a look at UUUU, the trade page. How far can we get with puts there? Now you're going through earnings, but if you, what's the expect? You go to.
I mean, so the problem is you're looking at a little bit.
Yeah.
They're not that wide.
They're not that. You're not getting that much. You're not getting paid enough.
You're not getting, and the reason we're saying you're not getting paid enough, you can get paid if you're going to sell the 18, sure. But that's kind of close. What we're looking at is you're not getting paid for the expected move. You know, if you sell the 14, you're getting 62 cents, but it's only $188. It's not bad.
Speaking of getting paid, what was that put? There was a put that I wonder if we have it too. Like I sold it for $8. Okay, go to SYM. Do we have SYM?
I doubt it. No, we do not.
We don't. Okay, so I remember this came up on the show. And the SYM November 25th.
Oh, 67. No, SYM.
Yeah.
November 25th.
67 and a half puts. Okay. 67 and a half puts. Sold those for $8 20 days ago. They're still the same price. So 20 days later, they're still the same price.
Okay, here's the problem. Earnings.
Yeah.
So this is exactly what we're talking about. 28 days ago, we probably didn't. This you might not have known.
Did we have a trade that we got into and out of? Did we take a small win on it?
No, but I just want to I'll look. But this has 782,000 shares, so it's not that most actively traded. I'm going to guess this earnings thing wasn't there, but when you sold those puts, you sold those puts 28 days ago. They're still the same price. The problem is when you have earnings on deck, this implied volatility continues to inflate, leaving you holding.
Yeah, because I would have sold the 18-day if we knew earnings were the 17.
Yeah.
Now check our activity because we may have sold puts and then bought them back.
Let's take a look. SYM activity. SYM. I'm just gonna go whatever. I don't think we've done much in it.
Yeah.
No, it's an iron condor. Oh no. What do we got here? It's all puts.
10-8, and we got out on 10-15.
But it's all puts.
We did a buffer. I bet maybe. I don't know. We sold the 80.
You know what? We did a buffer and then we bought we had to buy the 50.
Yes. So we did a buffer.
Yeah.
Well, it's a good thing we took it off. I mean, we made like $200 on it. Probably a good thing because it would be back to $8.
Yeah.
So put the buffer back on. It was, look at the strikes again. Let's see if we put the same thing back on.
Okay, let's take a look. So it was November. It's the
80, 70, 62 and a half, 50.
So it's
80,
70.
60, 80, 70, like sell the 80. Yeah. Buy the 70, sell the 62 and a half and buy the 50. And we sold out of that for 10 something, 10. Ooh, it's 11 now.
Yeah. So you can see that's moved. But if I was going to do it today, I would probably choose a little bit of different strikes. I'm going to go 69 because there's less days, right? So I'm going to go, I'd still probably go 62.50.
But this, when we put that on, this went probably when I just sold those puts, and
there was so much profit potential when we put that buffer on. That's why we got to 100 on it.
Yeah. Yeah. Huh.
Yeah. All right. I want to go to Twitter. I know this is going so fast. I just want to make sure that we get to everybody. Okay. Alan Miller. We love Alan. Would you do a buffer in AI or does it not move enough? I like things that are moving a little bit more.
Right. Yeah, because AI, I mean, it's kind of been in the range or down, or I feel like AI hasn't had some big jumps. So, I mean, you can, Alan, but you'd need like a big jump up to really profit on the buffer.
It's got to move, right? Like that's got like when AI is a good premium selling vehicle because it's not moving that much.
But Alan had a wonderful time golfing in Florida. I think you were getting there. I think he was just getting there.
Yeah, he's gonna be there for 10 days with a roller bag, and you brought your entire suitcase down to Florida. Okay, and then good morning. May you please explain the earnings diagonal? Okay.
Okay, sure. Yeah, pick another earning. What else had earnings today?
Yes. Did we put it? No, we did put it in. I'll pick another one. Hold on. We'll just go down. I'm going to show you what we're doing. So let's go to UNH is too high.
What is CAR?
Let's go to Wayfair. Let's go to W. Okay.
Okay. Yes.
Wayfair, $86 product. The earnings diagonal is saying you're going to take the nearer term.
It's going to be expensive. It's going to be
expensive, but you're going to take the nearer term cycle and you go to the expected move for the nearer term cycle. So in this one, it's going to be the 96. I'll even go 95 just because. You go to the 95 and then you go to the following week. Now, some people go farther out, but we want to make it cheaper because we think we're just saying this is a bullish diagonal. And then you buy the at the money's in the 11. It's not that bad.
So this is $8 wide and you're paying $3.50. Basically, if it goes up, it's expected move. Great. We've got an $8 wide and we're only paying $3.50 on it. So we can make $4.50. That's a bullish one. Selling the option at the expected move in the weekly and then going next week's out, buying the at the money. You could do it to the downside too. This is bullish. You can do it to the downside too. You can
Same concept applies. You go right at the expected move for the 4-day, and then the farther out cycle, whichever cycle you want to pay for, you buy that one. So this is $4 wide, and it's $4.
Well, you're paying $4, but it's wider. It's $9 wide.
But it's $9 wide. So our ultimate goal is we want to pay less than 50% of the width of the strikes, and the strikes width is right here, the 77 to 86.
Yeah.
So that's
okay.
it.
That's it. And we are out of time. I got everything out. The last thing out is CRWV.
Activity, all symbols today. Yeah, last thing is CRWV. So perfect. We did quite a bit today.
All right. Well, okay. Good job, Liz. You were working hard. We did a lot.
Yeah, we did a lot.
Earnings. I'm kind of glad the diagonals are back.
We're back, baby. All right, Jenny, I will see you tomorrow on the SIBO floor, live from the SIBO floor. Everybody out there, remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
The future of trading is here. Join Mike and his whiteboard, plus the tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Hello, everyone. Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal and, of course, Ryan Grace from the Tasty Crypto team. Ryan, I feel like the last couple of times you've been on, it's just been a face ripper of a rally.
Yeah, we're starting the week off on the right note, I suppose, here. When you look at crypto, you look at everything in the market, I suppose, with the exception of gold. But, yeah, things are higher here today. I think we're all feeling pretty good.
Yeah. Up only, green market. Someone on the trade desk just asked me, how do you just keep buying them when it's up 60? I'm like, you just keep doing it. Like, you don't have to think. You just do it.
It's easy.
Yeah. What a wild market we're in here. But yeah, zero weekend risk. I mean, they were up like 35 yesterday on the open.
They were
5 o'clock. It's been crazy, but we'll see if something changes the tide here. But yeah. E-minis up 65, almost up 1%. NASDAQ up 400, 1.5%. Big move there. Dow and the Russell up as well, but not as much as the E-minis and NASDAQ. Bitcoin up 4%. Ethereum, much bigger move to the upside, 6.5%. Love to see it. Sitting at 4,200. Bitcoin at 115. Everything else to the upside, we're looking at wheat, soybeans. Good for the Thomas Westwaters of the world, sitting on, I actually have a long position there too. Heating oil, corn, you name it. Everything's up. The only things that are down big are gold. 135 points, sitting at 4,000. Live cattle, silver to the downside as well, which you might expect with the move to the downside in gold. And everything else kind of within that 1% range, which is expected. So, yeah. Kind of a big move here. Do you guys make anything of the big sell-off in gold paired with the big market rally? Is this the exit of the flight to quality, if you will, and into the equity markets, given the landscape of interest rate cuts, et cetera, et cetera?
I think it's just a little bit of a backup in rates here. I mean, we've had a little bit more chop in gold. If you look at the 2-year yield, it's moving back up towards kind of the top of the range that it's been in. I'm going to pull up the 10-year as well on my screen here. Not quite there, but, moving off of 390 closer to 4%. I mean, these aren't huge moves, but I think that's the only thing that, I can really point to there. I want to buy it underneath 4,000 personally.
Yeah, I think there will be, especially with a move like this to the downside, 5 trading sessions down 10%, a little bit more, almost 10%. But yeah, I think people will be looking to buy here once we find a floor.
And I think that's exactly what's going on right now. It's trying to find a floor. I feel like it's finding it a little bit. I mean, we talked about this more recently. That move off of on October 13th is the last, I think, kind of area where a lot of buyers and sellers kind of met, right? And you can see the low of 411.50. That's That's the area that we're kind of chopping around right now. It's trying to hold 4,000. It's broke through a little bit, but I've already tried twice today. This is my second time. So I bought at 40.11, and I said I would get out if it broke 4,000. I did at 39.97. It popped back up, and it seems like it's holding, so I tried again. And I bought again at 4,003. We'll see what happens. I think this time if I'd let it go at probably 39.85 maybe. Just depends on the fashion in which it falls off. I'd watch gold close today. Of course, gold closes at actual COMEX gold closes at I think 12:30 Central, 1:30 Eastern. So that's the time where maybe there might be some liquidation at the end. Pay attention to that. But other than that, it seems as though, you got gold and silver down, you got the rare earth metals down. I think this idea of China and U.S., what's going on with those relations, are sort of creating some of these moves. Every single one of the rare earth names that I pay attention to is down pretty big today. So that lets you know if they really, I guess, truthfully, if they have a deal, right? What's going on with these companies? So you can either look at it as right now you can get some of these rare earth metals companies at a discount, or maybe this whole craze is done. Who knows right now?
Yeah, I think it could be telling given the same direction move with a lot of the rare earth companies. Could be telling of the craziness going away, paired with the market going up, paired with volatility crashing, getting absolutely obliterated. The VIX futures at 18, VIX itself 15 handle, which is, when the VIX is at 15, that's basically peak complacency, honestly. We don't really see it go too much lower, but it's been a big fall from the 30s we saw just a week ago. Crazy.
Right. That's actually, I totally forget, and I wish I had my good friend Russell Rhodes, who's a genius at VIX stuff, but I forgot there is something that this is kind of telling us when you look at VIX spot versus the VIX futures. It's almost a $2 difference, more than a $2 difference. That actually kind of means a little something, but nothing major. But that it means something. I just forgot what it means.
Yeah. Well,
that's notable.
It's ultimately, I think it speaks to the contango in the VIX futures, where you have 1820 in the X contract, 19 in the Z, 20 in the F. So we are back to a point between these futures contracts of contango, 2 points between one and the third week or the third monthly there. So yeah, I think it's just a nod to the fact that we had some volatility, we had some true uncertainty, and that has quickly been wiped out of the market, at least right now. Doesn't mean it can't come back, but I think the market is telling us that the sea is potentially going to be calmer here to end the year.
The market is telling us things are about to get crazy this week. Look at this, man. Dude, Tesla's up 22, Meta's up 13, Spoo's up 60. Mm-hmm. I mean, gold and silver already acting crazy. It's not even Fed Day yet.
And It's not even earnings reports for everything. What? Apple, Amazon, Microsoft, Google, Netflix, all these companies are reporting. If we look at the earnings watch list and just go by volume, AMD on November 4th, Apple is this week and 3 days on the 30th, Amazon on the 30th, Google on the 29th after the close, Microsoft on the 30th before the market opens, so Meta on the 29th. So you basically have all of the big tech stocks reporting this week, and if they report big numbers paired with this calm projection in the markets and these things rip higher, I mean, we could be at 7,000. We could be above 7,000 in the E-minis in literally 2 days. It's crazy.
Buckle up. Just click it. Just buckle up.
But yeah, what a wild world we're in right now. But yes, we do have Ryan today, and last week we talked about liquidity pools, and this morning ran into Ryan. He's like, let's do these liquidity pools. So
yeah, I've got a special segment for you guys today. We'll walk through what these are, how they work, show some examples, have some slides that I put together. So excited to talk about that. A little bit of a refresher from kind of the buy the dip and everything all the time message that I'm usually coming on the show with. But again, I do think, we'll see, like you mentioned, what earnings look like. But I do think you're in an environment where Obviously, growth isn't collapsing. If anything, we're seeing a little bit of an economic expansion. We'll see what happens with some of the inflation data. That might be partially the explanation for why you're seeing things like gold kind of lose a little bit of the momentum that it's had. If I look at kind of one of those bigger inputs into inflation, it's going to be crude oil prices. Just haven't traded very well. Generally, the trend has been somewhat bearish in there. And so maybe you have an environment where it's almost a little bit of growth, inflation is kind of muted, Fed's cutting into that. I think, again, it's an environment where you want to buy stocks. If you want to be long equities, 7,000 S&P. I like the Russell personally. So we'll switch it up. That's been the message for some time. We'll take a look at liquidity pools today.
Love it.
But before we do, I guess we can, let's jump into our crypto update.
Beautiful.
Do it. Then do it.
So to kick things off, guys, as you mentioned, 115, almost 4,200 in ETH. Those are some levels that I think are important in terms of that trend, short term, shifting back in our favor as bulls. 115 was where you kind of retake, right around 115, where you retake the 90-day SMA, where some of the exponential moving average indicators that I use for momentum shift back into neutral territory. Would love to see higher prices, and you get back into that short-term bullish trend. Structurally, this has been bullish, but short-term, we've had a lot of volatility, a lot of chop here recently. If you go back over the last couple of weeks, for the month of October. ETH, that number for me is right around 4,250, so inching closer to that. Volatility has come in a bit as well, so given the chop, implieds have fallen a little bit from where they were, so you had an opportunity to sell some premium in some of the ETF options last week. But generally speaking, to start the week here, in positive territory, seeing some of that red shift back into kind of neutral. We'd love to see that momentum go bullish. You are seeing, in some cases, this kind of like competition for outperformance. We've seen ETH and Bitcoin go back and forth in terms of relative year-to-date performance. So Bitcoin's up 23%, ETH's up 25%, so 2% more there. Seeing XRP outperform here recently. Seeing Bitcoin Cash, that's one that's been swinging around quite a bit. We don't talk about it all that often, but there have been some pretty big trading opportunities in there. BCH is the symbol towards the bottom of the table. Bitcoin Cash back up to 567, up 20% over the last week, and generally, has traded pretty well, is outperforming Bitcoin year to date by 8%. So we see this in terms of the shift back into more neutral to maybe bullish territory, short term. If we go to the next slide, you'll see a continuation of that theme that we've talked about, where it still is really the larger market cap tokens, Bitcoin over everything. Again, seeing a bounce here in some of this stuff, but I wouldn't personally waste a lot of time with it. You probably will have that opportunity where it's just been so beaten up that when this stuff runs, if it does run, you get some massive moves in things like Aptos, down 83% versus Bitcoin, or even Doge, which is down quite a bit versus Bitcoin. But I just don't think that if you're trying to time it, I don't think the timing is now. You'll see this as well on the next slide. It probably just only looks worse when we look at it from the momentum perspective. So you still have a lot of things that just catch a bounce here and there, but have been continuously trending to the downside. So I'm less interested there. Next slide, we've got our relative performance. So Bitcoin market cap dominance, BTC spot D at 60%. ETH Bitcoin ratio here, Bitcoin's outperforming for the most part when we look at that ratio. Solana versus Bitcoin and Solana versus ETH, both Bitcoin and ETH outperforming Solana. And then Doge, as I mentioned, has just been relatively weak versus Bitcoin. Momentum in there is pretty bearish as well. So really no change from what we looked at over the last week. There probably will be that point in which you see an expansion in the ETH BTC ratio. It's just not here today at this stage in the cycle, though I think we're getting closer to it. Let's see what's on our next slide here. We've got our expected moves. Like I mentioned, again, not much of a change. The ranges have traded a little bit higher. I apologize. There's a typo on this slide. It should be 121, spot 4 for the upside of the 1 standard deviation range for Bitcoin. But you've seen implied vols come in a little bit. Sure, prices are a bit higher, but you have slightly smaller expected moves, not by much. Week over week, we're looking at about a $7,000 move in Bitcoin. We've got about a $6,700 move right now. $400 or so, give or take, has been the range in ETH. That is moving higher, so we've moved off of that 3,400 level at the downside, or the lower end of that one standard deviation move, back up to 3,750, 4,500, 4,550 on the upside. That definitely puts us back into bullish territory if we get that. Solana, SUI, XRP, really no change there. SUI gets you back up to $3. So if you've been bullish in there, feeling a little bit better about how that might be trading. Solana as well as hanging on to about the $200 level right now. But again, not much has changed. These have been kind of largely the moves that we've come to expect here within these market conditions.
Yeah, I think the nice thing about Bitcoin, Ethereum, and a lot of these other products that get the attention of traders is just that even when you have low implied volatility environments, Bitcoin, Ethereum, if we were to stick to Bitcoin, Ethereum, and Solana, they still have really decent trading ranges, and they do have two-sided action. So regardless of whether you're bullish, bearish, if you want to get in at lower levels, get out at higher levels, like there's been plenty of opportunities to do that on both sides. So even when volatility is low, Bitcoin implied volatility is still really good in terms of projecting two-sided markets and bigger moves than your traditional, E-minis NASDAQ, which are lower IV, still have gap ups and downs, but these products have been really good in terms of getting in at lower lows, getting out at higher highs, that kind of thing.
Mm-hmm. Yeah, it's been a great month for trading options in things like IBIT or ETH. That's not always the case because you do get that one-way move, and maybe it's to the downside. Quite often it's to the upside, and that makes selling premium in there tough too. Certainly if you're selling call options, I guess, versus selling those puts. But you can get that one-way move quite often in Bitcoin. It tends to trend. So a bit of chop this month has benefited anybody that's been in those positions. One more slide for you guys before we jump into this discussion around liquidity pools, but just an update on our cross-asset correlations here. It's all the same thing, and I think, again, that's largely being driven by the macro environment we're in, that backdrop of Fed interest rate cuts upcoming here this week, as well as another 25 basis points priced in for the December meeting. When you look at what's impacting equities, what's impacting risk assets here, largely the same thing. So no surprise to see, at least in the short term, a very strong positive correlation between the S&P, the NASDAQ, the Russell even, and the price of Bitcoin. The dollar and gold have been moving in the same direction. The dollar and Bitcoin have been largely moving in the same direction. So you've had a little bit of dollar strength, and you're seeing, coincidentally, seeing some strength in crypto as well. So you have a stronger positive correlation over a 3-week period in there than we typically observe. You go out a little bit farther and you see that there's much less of a correlation. Really no correlation with gold. And as you might expect here, a bit of an inverse correlation with bonds and certainly with volatility. So I look at the SPY at spot 8.6. I look at the VIX correlation as negative, spot 8.2. If you do get some selling, I would look out below when it comes to crypto, because you're going to get some spillover into those areas too, which is really no surprise to anybody. But yeah, quick update on your cross-asset correlations. Probably some of the strongest positive correlations we've seen to date, year to date for sure, between Bitcoin and the S&P.
Yeah, absolutely. And I think that speaks to what we opened this segment with, is just like when you have the inverse of what's happening today, where there is true turbulence in the markets, the VIX is at 30, VIX futures are backwardated, like you can get a sell-off in everything. Where what we're seeing today in isolation is the exact opposite. You're seeing, or really over the last 2 weeks, is you've seen strong positive correlation, a strong negative correlation with the VIX, and that can be expected with the fact that we did have that gap down in the E-minis and NASDAQ where the VIX spiked and volatility futures went into backwardation. But yeah, to Ryan's point, we are seeing significant market strength and positive correlation between your benchmark tech stocks, E-minis, with Bitcoin as well. So just something to be said about the strength of the market that we're seeing today, for sure.
And it's been the better part of a month. Bitcoin's been moving with the market for the most part. You've seen it, so it's not new.
Yeah, I think it continues. You know, when you just look at what is going to drive flows here more than anything, and of course, there are black swan events. There are things that can just pop up, and we've seen some of this at times in the markets, even over the last year or so. But when you look at, Fed or probabilities around the Fed cutting here, that seems to be pretty straightforward. You're almost at 100% for the next couple of meetings. We'll see what they have to say. You have the meeting between Xi Jinping and Trump. Wednesday, the 30th or so? Hopefully something positive comes from it. It seems like that's the likely outcome. You have the Fed hinting at kind of ending the quantitative tightening, so that brings them back into the market in terms of a buyer. Just generally it's liquidity positive. You don't have QE or anything like that on the horizon, but you're looking at a dynamic too where you have lower interest rates, and arguably you're going to see some money come out of, and we're talking about hundreds of billions of dollars, could possibly come out of money market funds seeking higher yields and kind of getting pushed farther out on the risk spectrum or curve. And so I think, again, unless something crazy were to happen, it's generally a pretty positive environment for risk assets for the time being.
Mm-hmm.
Yeah, to Ryan's point, October 30th, you do see a little bump in implied volatility in SPX, 68-point range with a 16% IV for the 30th versus 45 and 14% respectively for the 29th. That also has basically all of those Mag 7 stocks we just talked about in terms of earnings. So it's definitely a combination of both, but could still see some fireworks this week. But this market rally today is pretty wild. Liquidity pools.
Yes.
Your favorite, one of the favorite things to do.
It really is. It's one of my primary strategies. We've talked about how you maybe want to have a small allocation to crypto. I think there's a pretty strong argument around it given the asymmetry, right? You have exponential upside at times versus it could go to zero. I don't think Bitcoin's going to go to zero, but obviously it's volatile. And so I think there's a strong argument. We've shown through some of the presentations, the live shows, et cetera, that including it in your portfolio and having that volatility has been to your benefit. I like to break that down further and then look at this in terms of the strategies that I'm going to employ in crypto. So I might have 10% of my portfolio. I personally have a bit more than that. But whatever your allocation is, then what are you doing inside of it? And you can think about that as well as it 100% Bitcoin that makes up your crypto allocation? Are you doing something with ETH? Are you staking your ETH? Are you trading meme coins? Or are you participating in some capacity on-chain through DeFi protocols? And so anyone that's not familiar with this, when I'm going to use a lot of different terms and some jargon here, and we'll try to do our best to explain it. But when we talk about DeFi, we're talking about decentralized finance. And what that really just means is financial services that settle on blockchain networks, applications that perform these services on blockchain networks. They use smart contracts. We can talk about that. But generally, this all happens on Ethereum. So you don't really have these activities on Bitcoin, the blockchain network, but you have them on Ethereum, you have them on Solana, and other smart contract-based networks that you can build applications on top of and use the networks for transaction settlement, data storage, et cetera. So one of these activities, and I want you guys to stop me at any point in time if I say something that you're not familiar with or doesn't make sense, please let me know as we go through this stuff, because it is generally, it's novel, but I think it'll make sense to a lot of people that are watching this because it is somewhat similar to selling premium in some ways. But one of these services that, and really the primary service, when you think about DeFi or decentralized financial services, one of the biggest services or use cases is trading. Trading on a decentralized exchange. So when we talk about providing liquidity or liquidity pools, that's the process of providing liquidity to facilitate decentralized exchange. And so one of the biggest, I should say, decentralized exchanges on Ethereum and other Ethereum-like chains, those could be layer 2s, could be Ethereum scaling solutions. I think it's now on Solana as well, but started on Ethereum. One of the biggest here is the Uniswap protocol. And this is a decentralized exchange where you connect your wallet. So instead of having an account with a traditional brokerage firm or crypto exchange, which is centralized, you basically take that account with you in the form of a wallet. You're the only one that has the seed phrase or has access to it, can sign transactions and control the crypto. And you use this wallet as an account where you kind of plug it in, plug and play, unplug it, go somewhere else. You don't have a single account with Uniswap, but you use Uniswap to trade. If you prefer a different decentralized exchange, maybe there's ones that are cheaper, faster, have different tokens, you just go and you connect your wallet. There's no, I open an account with Uniswap or Jupiter or any other decentralized exchange. I just use it or connect to it. It's just simply code on a blockchain. So kind of bouncing all over the place.
So Uniswap is a type of code on a blockchain.
That's right. It's a protocol on the Ethereum network, and the protocol allows you to swap tokens, assuming there's liquidity for those token pairs, but allows you to trade without a third party, without an intermediary. It's not a brokerage, but through this process, you can swap tokens. You can trade USDC stablecoin for Ethereum. You can sell Ethereum for USDC. That's a simple example. You could trade one token for another token. As long as it exists on the Ethereum blockchain, you can trade that token. And there's no brokerage. You don't go to Coinbase. All you need to do is connect your wallet. So decentralized, permissionless, open protocol for trading. And right now, when you look at trading volumes and you compare the amount of activity that's occurring on protocols like Uniswap versus a Binance, the largest exchange on earth, or Coinbase, it's about 20% of what we see in terms of those are centralized exchanges. This decentralized exchange has grown to about 20%. I imagine it's going to continue to grow, but we're at about 20% relatively speaking here today. So going back over to our slide here, decentralized exchange, as I mentioned, is facilitated by liquidity pools. And the interesting thing about this is you as a participant can use the exchange or the protocol in a couple different ways. You can clearly swap tokens and trade using it, but you can also participate by providing liquidity. So you can be on both sides of this. You can use it to trade, or you can generate yield by providing liquidity. You can facilitate the process. And when you do that, you earn a portion of the fees that are generated by the protocol. So the way that I would think about this is that it's almost as if you're able to run as an individual your own brokerage firm on a blockchain network and collect the commissions from when people use that network or this protocol and they trade. So if every trade they charged, or the protocol through the code charged 1% on the notional value, if you provided liquidity to facilitate that trade, you would get a portion of that fee. And so you're now generating a yield by using your crypto to facilitate this activity. And then on the other side of that, anyone that's trading is going to pay a small fee to use the protocol. That fee is going to go to the people that are providing liquidity in the form of a reward or a yield.
So that's similar to like an equity market, somebody being like a market taker, basically.
Yep.
Market maker, sorry. And then they're able to sort of get rebates in a way. Yeah.
In a way, anyone, and the participants on these exchanges, they could be large institutions, they could be individuals like ourselves, but anyone can provide liquidity and can participate in this process. It's all facilitated by something called an automated market maker. This is an algorithm that executes the trades versus like a limit order book or central limit order book with a bid ask. This is going to use a algorithm to rebalance the pool. So you facilitate this process, you generate fees. It's non-custodial. So what we mean by that is that you are always in control of your funds. You're not depositing your funds with a company or anything like that. You're just using your wallet in order to do this. It's trustless, it's permissionless. I mean, you have to trust in the code base, but it's audited, it's open source, it's open in that sense. So it's trustless, it's permissionless.
So the way I'm thinking about this is like you've got, let's say you have this nucleus of liquidity with the coding parameters. You don't have to do anything with it. You are just a node where you are connecting your wallet and saying, I'm accepting the liquidity, I'm accepting the parameters of the liquidity pool for this. I have this liquidity pool that you are requesting, this nucleus. Connect my wallet, set this range where I'm comfortable trading within that parameter. And if we're in that range, you'll see the fees go in and out based on the liquidity provided from your wallet.
Yeah, the way you might want to think about it, I guess, is like in the analog sense almost. So let's just assume that we have 2 buckets, or we're a marketplace and we all sell the same thing, whatever. We have 2 buckets. And in one bucket, we have Ethereum, we have ETH. In the other bucket, we have a stable coin like USDC. So we have dollars and we have ETH, 2 separate buckets. And someone comes to this marketplace and they want to buy some ETH. So they have USDC. They're going to give us some USDC. So our amount in the bucket of USDC is going to increase. And on the other side, they're going to take some ETH out of the other pool or out of the other bucket. So we're going to have less ETH than when we started, but we're going to have more USDC. We effectively sold some ETH at whatever the price was at the market. There might be a big board and we can all see it and it's the same price at the same time. And then when that amount at the marketplace and all the different pools, when that changes, that's going to update the price. And that's all going to happen algorithmically and automatically. But we, as the liquidity providers, when that person comes and they put that USDC into the bucket, they take the ETH out of the bucket, we're going to take a little fee, or the exchange is going to take a little fee, and that's going to go to us. And so that fee is going to be in either ETH or USDC, whatever's being traded, and you're going to collect more of that in the form of fees over time. But the amount that you start with, you have a finite amount that you start with, right? It might come in with $50,000 worth of ETH and $50,000 worth of USDC or dollars. So you have a $100,000 pool, and it's going to change in terms of what makes up that pool. Now, you could get to a point where the entire pool is just one of the assets. In the event that the price of ETH is falling, people are coming to the exchange and they're saying, I don't want this ETH. Take my ETH and give me dollars. Well, we only have so many dollars. We sell out of all of our dollars in effect and we buy all of the ETH. Now we just have one bucket of ETH, and on the exchange, the price is still going down. That's your risk. So it's like a short put. But we can walk through all of that. I've got some visual representations here too that might be helpful. But it's exactly right. I mean, that's what this is you're just kind of this node as part of this network and you're facilitating this process, but anybody can do it. You just have to have some crypto and you have to connect your wallet. You have to have a self-custody wallet. So just to run through a couple more of the slides here and can get to some questions as well. But as we've talked about, trades are executed against a pool of funds instead of a central limit order book. Liquidity providers deposit pairs of tokens into a pool. So I have ETH and USDC. I just deposit those 2 assets, receive a liquidity token as a result. So the other side of that transaction, you sign a transaction with your wallet, you receive a liquidity pool token. That acts as your receipt or your claim on this activity and those assets in the pool. So it represents your share of the pool, right? There might be $20 million of assets in a pool, and you might have $100,000 of it. This is what represents your claim on that share. And then trades are made on the exchange, they generate a fee, and then that's going to go to you as a liquidity provider for your contribution to this whole thing. Next slide. Really quickly, it's permissionless. Again, it's decentralized. I think I've made it pretty clear. Anyone can do this. You need some crypto and a self-custody wallet. Get your crypto, connect it, and you're good to go. You go through the process. You select the token pairs. You might want something that's extremely volatile. You might want something that has no volatility. You can do this with 2 different stable coins. I can USDT, USDC, put them both in the pool. Now, the yield is going to be less, but the volatility is much less. If people want to swap from one stablecoin to another stablecoin, just different versions of dollars on a blockchain network, there's a small fee to do that, but very little volatility. It could depeg, I suppose, but it's a way to generate yield on your stablecoin holdings. generate fees, you manage your pool, you rebalance. So there's some kind of tactical elements to this as well. But why don't we just take a look at the next slide so you can see what this looks like here. So this is a real pool that I have on currently. I put this on a couple of weeks ago. So to give you a sense of the types of yields you can generate, this is probably what people care about more than anything. There's always risk. The risk here is simply the price of ETH. And I guess on the upside, there's an opportunity cost. So if I come in here and I put some of my money in ETH and some of it in USDC and I provide liquidity, I'm going to generate fees. But if it goes straight up, and let's say that the price of ETH goes to $5,000, well, I'm not going to make as much money versus if I just held ETH. I'm going to make some money, of course, but it's similar to a covered call.
Yep.
Right? You're going to generate yield by selling the call, receive the premium, but in the event that the stock price doubles after earnings, well, you've capped your upside. You're capping your upside here. So there's that opportunity cost or upside risk. The downside, though, is very similar to a cash secured put. If it goes below the bottom of your range, your pool becomes 100% ETH. And if the price of ETH goes to zero, you lose all of your money. So that's the maximum risk to the downside. But when you have a pool where one of the pairs of the assets is dollars or stablecoin, then you do eliminate some of that volatility versus if I have two volatile cryptocurrencies that make up the pool. So dollar pairs are what I typically like to do. That it leaves your risk on just one side then, which is in this case on the ETH side. So back to what matters, the yields. We're looking at $2,200 in yield generated off of 28,000. I don't know, maybe it started with 27,000. It's actually gone down a little bit, so it would have started with more because you can see that we have more ETH than we have dollars. In the upper right corner, we got 24,259 at the current ETH value, and we only have $4,000. So when you start these, typically start with about 50% of each asset. So this just alone tells me that the price has gone down. And I can also see that with the price range. So the max price range for this pool in particular is $43.98, and the downside is $3,800. And at the time of this screenshot, the market price is $38.88, so closer to the downside. Going to have more ETH in the pool, but this is going to automatically rebalance. It's going to change on every trade and as the price changes, right? And if it didn't, you would have an arbitrage opportunity, because if this pool value wasn't updating and we had a much higher price somewhere else on a central exchange, for example, then there would be an arb. You know, there's a degree of timing associated with it, but they generally are going to be the same price across decentralized exchanges and centralized exchanges, even though the market's somewhat fragmented. It's not perfect. It's definitely not as efficient as what we see in the equity markets, but the arbitrage opportunities are what, you know, keep this all balanced out or in line. But yeah, that yield is, I think, probably, again, you do have volatility here, but this is just a couple of weeks old. I put this pool on right around the time that we had that volatility at the beginning of the month. So this is 2 or 3 weeks old. And that's the type of, when you have a lot of volume, the type of yield you can generate off of that capital.
Love it. So just to hammer this home, so what we're looking at on the left here is that like shaded gray area is your liquidity range.
Yeah, that's a visual representation of what you see at the bottom there, 3,800 to 4,398.
So if we are near the bottom of the range, you are ultimately, so if we look at on the right hand side, the position with the pinkish, reddish, and then the blue bar. So as the price comes down, you are getting more long Ethereum.
That's right. Yep. You could think about it as kind of gamma delta dynamic, where I'm picking up delta. In this case, they're static deltas, but I'm picking up deltas as a function of the price moving lower, and I'm buying more ETH at lower prices, but I have a limited amount of dollars to buy that ETH with. Eventually, I run out of dollars, and I only have ETH within that range.
Yep. And then on the upper bound, so let's say you're mostly ETH at the lower bound. As the price moves up, you're selling out of that ETH, getting into more USDC, and ultimately you end up with 100% USDC if it goes above your range on the upper hand.
That's exactly right. So here, if the price of ETH goes above 4,400, this pool will be out of range. And you'll see that the position is all blue, and it will be, I don't know, let's say give or take, it'll be about $30,000 worth of USDC. We have effectively sold out of all the ETH that we have on the way up. Now, if the price comes back down to 4,200 suddenly, automatically, we're right back to providing liquidity. There's nothing that we have to do. If it does go out of range, you can remove your liquidity, you can rebalance. So in this case, I take my $30,000 USDC, and I would want to buy ETH at a higher price, so that there's some risk in rebalancing, to be able to put that new pool back on at a new range. And you can set up whatever range you want when you do this.
Okay, cool.
And I'll show you guys that. Yeah, I'll show you that in just a second. But that's what would happen. So you go out of range, you can do nothing. You can sit there, you can wait. It's similar to, again, a covered call, right? If I had the underlying shares, I have the automatic exercise and assignment at expiration. I sell out of the shares if the price is above my short call strike. Now I just have dollars. If I want to put that same covered call strategy back on in that underlying stock, I'd have to buy the stock again and then sell a new call. The risk is, of course, the stock price could go lower from where I had to buy it. Same thing here if you rebalance, but that's what you would see. And again, it goes back to this idea that people are coming to the market, and in this case, they're giving us ETH if the ETH price is going down, and they're taking the dollars. So they're selling ETH, they're buying dollars, and vice versa. If we're seeing the price go higher, they're selling dollars, they're buying ETH, giving us dollars, taking the ETH. And then the fees, really quickly, are going to be generated in both ETH and USDC. So you can see that the fees are split about 50-50. And that's a way that you can not only generate some yield, but acquire more crypto over time via this process, because it's not just in dollars, it's also in ETH. So you have these fees, you can see the fees move a bit as well. If the price goes up, those fees are going to go up because the value of ETH has gone up. At least 50% of the fees that I've collected are in ETH.
And with this pool, since the transactions are not full coin transactions, you don't need to have a full coin of whatever you're doing.
You can do this with a couple $100, right? And then you're going to generate that yield, and that yield is variable, but you're going to generate that on whatever amount of money it is that you're using. It's not like the more money you have, the greater the percentage return is. Percentage return is relatively static. I mean, it's variable, but it's static versus whatever amount of money you have in here. The thing to consider, and I've been doing this since about 2021, so it's really interesting to see how this has just evolved and how much better the technology has become. But when I first did this, was in 2021, it really was only on Ethereum. And on Ethereum, you have much more expensive gas fees at times, depending on how much network activity there is. There were not really these scaling solutions. We're looking at one that's on Base network, by the way. That's Coinbase's layer 2. And the layer 2s are just much, much cheaper. But when you were only on ETH, the L1, you would have to pay these crazy gas fees. And in 2021, I can remember there was a point, and this is, just a learning process, really, but you have this NFT craze that's going on. Everybody is transacting on Ethereum, all of this activity. I want to say I paid $600 in gas fees to put a pool on. Now, when it's really crazy, you might be able to generate on a large enough amount of capital, you might be able to recoup the $600 gas fee in a week, 2 weeks. But that was always the constraint to using smaller amounts of capital in terms of how much liquidity you could provide. Because on the layer 1, if you have to pay even a $50 gas fee, you can't really come in and put on a pool with $1,000 in it, because in the event that it goes out of range, you have to pay a gas fee every time you interact with the Ethereum network. So to take that liquidity position off, to put a new one on, to collect your fees, you're going to pay this high gas fee each time. And that's why, it really wasn't conducive to $1,000, even $10,000, right? You could come in, you pay a $150 gas fee. Now, those gas fees have come down over time. Ethereum network has had a series of upgrades. It's gotten better. But the layer 2s, where you're seeing a ton of activity as well as this whole thing scales and you see mass adoption, Base has its own network, or Coinbase does through Base. You have Uniswap has its own chain, Unichain. These are all layer 2s. They're all Ethereum, but they're Ethereum scaling solutions. And to put pools on now, 1 penny, 2 pennies, sub penny, maybe. So you can trade these things too, right? You obviously have the volatility of ETH. But if you go out of range, you're not really sitting there thinking, oh man, should I just wait because it's going to cost me $200 to get in and out of this position and put a new one on? It's pennies, if that. So the technology has gotten so much better.
How long does it take you to set pools? Do you rebalance daily, weekly?
This one here, it's a function of whether or not you stay within the range, right? So you're implicitly short volatility. You want high trading volume, but at the same time, you want volatility. It's kind of like selling premium, and this is essentially a strangle. And so you want it to stay within the range, but you also want to really take advantage of when there's a lot of volatility. Those things kind of counteract one another at times. The way that I approach this is mathematically, calculate one standard deviation, and then add a little bit of, a kicker to that volatility, or just model it, I guess is probably a better term. So let's say that the realized vol is 60% in ETH, implied is 65. I might use the implied. I might look at where realized has been, or what the average true range is over a 14 or 21 day period. A lot of different ways that you can kind of just analyze vol, right? Regardless, you come up with some sense of what's the thing doing, what could it possibly do, and then you want to account for that. And so usually go a little bit wider. If our one standard deviation range, as we showed, is $400 for ETH for this week, maybe you go $450. Maybe you go a little bit tighter, and you have that kind of short premium or short vol view where you're saying, look, vol's really high right now. I think it's going to come in, so I'm going to have a little bit tighter range, and you're going to participate in more of the activity at the current price. Because that's the other thing. You're only generating fees if you're facilitating the trades at the current price. So the more concentrated your liquidity is around that range, the more fees you're going to generate. You can do the whole range, but then you're not using your capital as efficiently, but you're running, when you are using a smaller range, you're running a higher risk of going out of range, right? It's the same idea. If you sell a straddle, you're going to collect more premium.
I feel, right? Like more like when you say, because it feels like you can make it super wide, like you just said.
Yep.
You can make it super wide, but you're not using your capital efficiently, right? And the closer you come in, you're going to collect more, but you have to run the risk of possibly going out. It makes sense.
Exactly right. Yeah.
Good analogy.
Yeah, so that's what this is really. It's it seems complex on the surface. It's really not. It's a way as an individual to really be a market maker or participate in that process via an automated market maker on this exchange. You collect the fees. You can get a little bit more sophisticated with this too, right? You can model out what your delta is at certain prices, and you can hedge that. You can dynamically hedge it with futures, with perpetuals, with options, right? You have to understand what the equivalent values are if you go into ETH, but this game has changed, my friends. I mean, from where I was in 21 to where it is today, it's night and day, which is awesome about this. And you can run these strategies, and you can do them very effectively. And if you go to the next slide, you'll see what some of these yields are. So these are just looking at the fees that are generated over a 24-hour period and then extrapolated on a yearly basis. But if you were taking more risk, you certainly can generate on an extrapolated annualized basis, you can generate a higher yield. This is just looking at what is the current amount of fees generated by the pool in a 24-hour period, and then looking at that as a percentage of the size of the pool and extrapolating that over 1 year. But if you're most of the pool, then you might have a slightly better yield. But when we look at these here, hopefully everybody can see it on the screen. You have at the top, and I've just sorted this by the yields. These are going to change, but you have some that are crypto pair. It's all crypto, but I think about it as like crypto and then stable coins. So virtual and game, there's 7.9 million in the pool, 54.95% annualized yield. And then if you look at the 1 day volume, 4 million, 30-day volume, 21 million. And so the 1 day volume to the TVL, right, 4 million of the almost 8 million gives you a sense of where that trading activity is and where the yields are coming from. So what I like to look for are pools where they're turning over all the time. A good example of this would be if we go down to number 6, ETH USDT. So this is Ethereum and US dollar Tether stablecoin, the biggest stablecoin. The fee tier is 0.01%. You can see there's 12.6 million in the pool. The APR is almost 30% annualized. The volume on a $12 million, $13 million pool is 99.8 million in 1 day. 30-day volume is 4.5 billion on a $12 million pool of capital. So you have a ratio of 1 day to TVL of 7.91, almost 8. This thing is turning over all the time. So even though the fee tier is very, very low, it trades like crazy as a function of that low fee, right? People want to trade tokens in the pools that have lower costs in some cases for obvious reasons. If they're smaller value trades, I'm not going into the 30 basis point pool. I might go into the 1 basis point pool, or through some of the smart routing that occurs, it's going to route it in that direction. So you're going to see a ton of activity that's going to make up for the generally low fee. And then you have a higher yield as a result. But that's how you read some of this stuff. And you can just, again, see what these yields are like. And these yields are kind of low versus what you'll get at certain points when there's some craziness in the market. I've seen yields well in excess of 100%. It doesn't stay there. But as a snapshot in time, and when you look at, okay, if I'm just going to do ETH USDC, now there's a strategy around what pools am I participating in and when. Because ETH USDC on base might be at 35%, but on Arbitrum it's at 45% right now. And it might not stay there, but when we're looking at providing liquidity, if you have hundreds of thousands of dollars or millions of dollars in some of these pools, as some institutions and more sophisticated players do, that 10% or 15%, sure, 30 is good, but 45 is a hell of a lot better, right? And so there's that strategy in terms of going cross-chain and moving your pools around.
Would you say going to the much higher volume, lower yield pools gives you a better baseline of what to expect each day? Because to your point, like you might have a lower liquidity, lower turnover, higher yield, but like one day you might make $10, the next day you might make 150. Like, do you get a better expectation of, like, the volume's going to be there, so you're going to get higher transaction fees, or is it really more about your range that you set?
It's definitely the range for sure, but yeah, there's also something to what's happening in the market and what are the sizes of the trades that are going through, because you could be in a pool where it's a 30 basis point fee and you are going to see larger rewards as a result, but you might see less trading activity. So you could be, I think anecdotally, I would say I probably see a more consistent return at times where it's a little bit more predictable or sticky around a certain yield in these pools that have a smaller fee associated with them, because you tend to get more trading activity of smaller amounts that then keeps that yield consistent versus something where because of the size of it, the only liquidity at times is available in these larger fee pools. But yeah, one more slide for you guys if you want to see what this looks like and how you set these up on the interface. This last one here just shows you how you customize your range. So you come in, you select your pair. So you select USDC, ETH, you select the fee in terms of the pool that you want to participate in. So it could be 5 basis point pool, 30 basis points, or as we showed, the 1 basis point pool with ETH USDT. They've got a couple controls here to allow you to just quickly set up a certain strategy or a certain type of pool in terms of your range. But what I like to do, like I said, is just go in, calculate the 1 standard deviation move, figure out my range, maybe just eye it up on the chart, whatever. And then you set that in here at the bottom. And typically come in with about 50% of ETH and USDC, so each one. But you could do this too, where you set it up where, maybe I think at 4,500, I think ETH's going to trade back to 4,000. Well, you can set it up then so 90% of your pool when you go into it is USDC, and you have a little bit of ETH, so you're buying and generating fees on the way down, but you're buying more and more ETH to where you get to your kind of like support level or whatever. So you can have these more dynamic ranges is my point.
Love it.
Yeah.
Yeah. You've shown me this before, but to your point, like the dashboard visibility is way better than I remember. Like
it's gotten so much better. Yeah. It's amazing.
Love it. A couple of quick questions from the YouTube chat. Can you set up liquidity pools with a MetaMask wallet?
Yeah, absolutely. Any self-custody wallet piece of software that you want to use. I use Tasty Crypto, MetaMask, Phantom, Coinbase wallet. Here's the best way to think about that, in my opinion. The blockchain is the internet. The wallet is your browser. You can go to all the same websites with Google Chrome, Firefox, Safari, whatever. Same thing. Some of the wallets have different user experiences or interfaces. You might prefer one feature over the others, but they all do the same thing. You are in control of your crypto, and you can import the same wallet address via the seed phrase into a number of different wallets. It's like an email client as well then, right? On your phone, you can have Gmail, Apple Mail, Outlook. It could all be pointed to the same email address. That's how I think about the wallet. It's just a client. It's just a front end.
And then for the transactions and pools and the results of it, how do you keep track of it on the wallet? Or is it really just on the network we just showed, the liquidity pool? Like that's where the information is, and then the transactions are just happening in the back end through your wallet. Yeah,
the user interface here that we're looking at is actually Uniswap. So it's going to give you, these details that we've talked through. This is an opportunity, right? We started to try to build some of these things through Tasty Crypto, but it isn't really the best in any one location. A lot of these things I put into my own spreadsheets. So I think that changes over time. There are some dashboards, some different things that you can connect to that read the on-chain data and then synthesize it so it presents it to you. But what we're looking at is the user interface for Uniswap. Some wallets might do a better job than others, but there isn't a single spot. Sometimes you have to just do it manually. And that was probably the case for some trading platforms too, right? Track your portfolio manually at times.
Yeah. So order chains for us. Like we used to use spreadsheets. I'm like, why are we doing this? And now it's in the platform. Can you use wrapped Ethereum if it's on Polygon?
Yeah. I mean, you can go to the Uniswap, and this is just one decentralized exchange. Let me be clear. There's many. This is one of the bigger ones, and it generates a couple $2 billion in revenue every year. That revenue goes to the participants that provide liquidity. It doesn't go to the company necessarily. Some of it might, but or the company behind it. But you'll go to that Explore tab, and then you can see where all the pools are, the size of the pools, the yields, and then what networks they're on. And nowadays, this is on close to 10 networks or so. So yes, you can, as long as there's liquidity, then you can do anything.
Yeah. And I would imagine you're using Uniswap because it's super liquid, a lot of flow in there.
Yeah, it's just really the biggest exchange. I have provided liquidity on Solana-based exchanges like Meteora before, Jupiter, but on ETH, when you look at where is most of the activity in terms of DeFi, it's on ETH or Ethereum chains. So if you look at TVL through a dashboard like DeFi Llama, you'll see that the majority of total TVL, capital that's being used to facilitate these activities and other DeFi activities, this is just one, decentralized exchange is just one, but most of that is locked up on ETH. Most of the participation is on ETH today. And this is the biggest on ETH, Uniswap is.
Love it. Incredible stuff.
Yeah, man.
Love to see it. But yeah, it's like we always talk about use cases for crypto. This is certainly one of them that not many people know about. Or at least, the average person probably doesn't know about this. I think the deep crypto heads do know about this for sure. But it's another opportunity to make money on your assets, ultimately.
I shouldn't even be talking about this on here because these yields are going to go away. But I think it's clear to see, right? Let me just take this one step further. So you've seen this here. I know we got 1 minute. Now imagine a world where, and this is coming soon, right? This is coming within the next few years. This isn't even like what if. This is literally what's going to happen next. When you tokenize all assets, all securities, they're represented as a blockchain token. You no longer need intermediaries. It's not overnight, but when the blockchain is the clearing corporation or the settlement layer, and the protocols, the interfaces are Uniswap, the accounts are just wallet addresses, what role does a brokerage play? What role, and it's not going to happen overnight, but what role does the traditional market maker play in a world where the market maker is a smart contract and it has an AI overlay? It's just going to be different. There's going to be new ways to participate. But to me, this is almost the equivalent of like there was open outcry. It went electronic, went high frequency, and now it's shifting or evolving again, right? We have a paradigm shift underway. But if I have a dollar token, USDC, and I have an Apple stock token, well, just substitute that Ethereum token in this example with Apple stock token. Now I'm using my Apple stock token to provide liquidity for others that want to trade Apple stock. Now, not everybody's going to want to do this, but that's what's coming next.
Wow.
Yeah, and really, like a use case of similar but different, like stablecoin deposits withdrawals, which is now available on Tasty. I did that this weekend just to be like, I just want to see how this works. So I took money out on a Saturday morning, took money out of tastytrade, put it into PayPal, their stablecoin, got it in like 5 minutes, transferred from that coin to cash, and then brought it to my checking account. The whole process was like 10 minutes. And I'm like, this is the future. The future is immediate access to cash.
Yeah.
None of the T+1, T+3, like that's the future is immediate access to anything. And this is another example of just that. Just ways to participate, make money in unique ways, and put up your assets to provide liquidity to get a yield on it. It's amazing.
Future looks bright.
Yeah. And that's it for today's show. Thanks so much for tuning in. If you have any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Ryan is at Ryan Fred Grace. Give Tasty Crypto a follow as well. You can sign up for their newsletter for free on tastycrypto.com. On the homepage, just scroll down just a little bit. You'll see it there. But yeah, hopefully that was helpful, insightful. The future is bright, as Jamal said. But we got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Howdy, everybody, and welcome back to another always wonderful installment of Risk and Reward. Hope you enjoyed that beautiful segment before us. Mike and Jamal and Ryan really diving into liquidity pools there. It's really, really interesting stuff. I enjoyed listening to it. We're going to go through today's market action, the big movers, throw some trades on. But as always, I'm here joined by my co-host, Errol. Errol, how we feeling?
Feeling good, feeling great. Market's gapping up again. I know we'll get into all the market details. Hope everybody else is doing well today. I mean, it's Monday. It's another Broncos W, so another one in the books. But I mean, it was a good weekend. It was a little colder. Was looking forward to the market opening up. I mean, I know especially in our first or second year getting into the market, like we can't wait for the market to open up again on Monday. And honestly, it's not even that I'm looking forward to trade on Monday. I'm just looking forward to see what the market did over the weekend. So last night with the futures opening up after a gap up, it was nice to see. Surprising, not so surprising, but surprising, another all-time high. But it was nice to see some movement.
Yeah, I think that's a funny sentiment you just detailed there about how when you're kind of getting started, you just can't wait for the market to open up on Mondays. And it's funny because that's totally true, but it's also insane how fast that fades. Like I've been trading pretty religiously for 5 years now, actually pretty much 5 years on the nose this month. And I already, like, I'm excited for the end of the week, and not even just in the work context. I just mean because I'm like, whew, like I don't got to worry about these positions for 2 days. Like I get a second to breathe. And I feel that it's, a nice little much needed break. Like anytime they talk about wanting to go to, 24/5 options trading or getting some future options action on Sundays or whatever, I'm kind of against that. This is plenty of market for my liking. Although being able to react to after hours information quickly would be nice, I suppose.
Yeah, that'd be nice to maybe adjust, manage some position. But I'm in the same boat there. Over the weekend, it's like, make it 24/7. I mean, I probably won't be partaking, but it'll be nice to see the volatility and keep an eye, see what the market's being up to. But
Well, yeah, and it's hard. I mean, especially in the case of like 24-hour markets, which we're really far from that. But if that ever were to happen, like in the case of, crypto and futures markets that are 24/5, you often run into where it's not even a level playing field just based on who is awake when information comes out and who can trade on that information right away and who's going to have to wait until the morning. I feel like it really smooths it all out. But anyway, yeah, it's we're at new all-time highs, as Errol alluded to. It's a green day, and there are all sorts of movers in the market that we're going to dive into here shortly. What are you laughing at over there?
Oh, just Jared doubling down on the Broncos absolutely destroyed Dallas. So let's get it, Jared.
Yes, it was not as good. It was not as fun of a football weekend for me as a Bengals fan. That was quite the crushing blow yesterday.
Who were they playing yesterday?
We lost to the Jets, who were 0-7. And then on top of that, we had a 15-point lead in the fourth quarter that we blew. So.
It's all right. We got some good news today, right? Especially in the portfolio.
It's true.
So we'll get into all of that.
And hey, those fighting Texas Aggies, number 3 in the country. At least I got one good football team.
Pem does, all right. It cancels out.
It's true. Anyway, yeah, let's we can dive in and look at some of these markets here. First thing to touch on, obviously, SPX at new all-time highs, as is Nasdaq. Pick your index; they're all at all-time highs, and in fact, gapping to all-time highs and then moving higher. When we gapped up, I kind of thought that we would open and move a little bit lower, but that does not seem to be the case. Additionally, the headline story for today is that trade tensions seem to be easing with China. There's been good word this morning that we may be really close to reaching a resolution on this China deal. So that has all sorts of things shaken up. On one side of the equation, you have AMD and NVIDIA and what else? Oh yeah, Broadcom all up. Your chip stocks are up, as it seems like there may be lower or significantly less tariffs on imports from China. And then additionally, with all of this easing, it has taken the market off of the rare earths a lot, which has obviously been a massive trending topic over the past few weeks. But yeah, you look at these rare earths, we'd already kind of started to slow a little bit, and now that we have this information, we're taking the gap down. That's USAR, that's what else? UAMY, not Sammy, UAMY, trading down. We got, what else is in there? MP is another one. Trading down.
Mm-hmm.
What's last in my bucket here? Oh, yeah. Sizzle. Oh, wait. Do I have the wrong ticker? Guess I got the wrong ticker. You guys know what I'm talking about. Anyway, so rare earths trading down, chip stocks trading up on that news.
Mm-hmm.
Also in the vein of chip stocks, Errol saw me react quite emphatically earlier. Qualcomm is flying today. They announced that they are going to start making AI GPUs. And as we say all the time, we joke all the time, but if you say AI, your share price goes up 10%. And that joke really does largely hold up. But in this case, I think it actually might be substantiated. This is like the biggest and baddest way you could possibly say AI.
Give us a little bit more context onto that, because you've touched on QCOM before, right?
Yes, I've been high on QCOM for a little while just because I felt like they've kind of been the quiet, I don't know, sleeping dragon is the term that I want to use, but they've been very quiet in the AI space, and it feels like it was only a matter of time until they got significantly more involved in the AI space. So the last time they took a dip, not Liberation Day, I believe this dip right here, actually, the early August one. I don't know.
It's at like 140, 130s, 140s, 50s.
Yeah, as we took this gap down and dove, I had sold a naked 130 put, which then worked out for max profit last week. I also had opened a 250 call into June of next year, just one naked June 18th expiration 250 call.
Mm-hmm.
I got out of that this morning for a 528% gain as Qualcomm mooned, I believe 196, 197.
Let's check out that 1 minute chart.
Yeah, let's do that. We can do that.
Like that 1 minute is crazy.
Yeah, there you go.
That's the 1 minute.
This is the 1 minute. So yeah, it was insane trying to price this information in. I mean, the initial bump happened, and I said, it went to 177 was the first spot that I noticed it. And I said, woohoo, Qualcomm. And I was like, Errol, look at this candle on Qualcomm. And I made him pull it up. And then not 5 minutes later, I mean, literally, I guess 1, 2, 3, 4,
it's
5,
just
6,
spraying.
10 minutes.
Just spraying to the
10
upside.
minutes later, I look back, and we're over 190. And I was like, what in the heck is going on?
Yeah.
And then 4 minutes later, I look back, and it's at 196. And I was like, okay, this is too crazy. I need to sell. Had a little bit of FOMO as we went up here and tested the 205 level, but ultimately happy with my exit. It's really, really hard to time your exits in times like that. And I got the full extent of the premium there. So pretty pleased. But yes, they're going to make AI GPUs. Their Snapdragon software has been used in Android phones for like years and years now, which was another part of my calculus, is just that as AI takes over, I think that stuff's going to have to become more suitable. But yeah, now they're actually making the big push.
Yeah, no, I love it. I mean, even I know we gave back a little bit of the gains, but I mean, it was up. I think it was up 20-something% at its peak, or 20 or 30%, and on a $200 stock or a sub $200 stock, that's a pretty massive move. So to see QCOM move like that, I mean, on the 1 minute chart, looking at it live, it's like, what am I looking at, a penny stock right now? Like, this thing is so extremely liquid, so much volume, so much momentum. A difficult trade to manage if you're getting involved today, but I think you managed it really well up into the profit. So well done
definitely.
as well.
It did move literally like a penny stock.
Yeah.
And honestly, now that we're kind of coming back down and testing some of these lower levels again, like under 185, especially down to 180, like this might become a buy again for me, because I think that's a pretty major move for them to make.
I mean, wow. I mean, I could only imagine short sellers that were positioned in this move. Good Lord. I mean, that was
the first thing out of your mouth. You were like, somebody is getting murdered. Somebody is getting murdered right now.
Yeah. No, love that. It's holding about half of its gains on the day, so it'll be interesting to see how QCOM digests the rest of the week.
Yeah, absolutely. I see Jared said, got that Beyond leap on when it went under $2. Beyond is another one that I had in my notes to talk about today. Let's just do it right now. Beyond, lacking a little bit as the meme stock craze kind of dwindles out here. It's down 7% on the day off of open. We're pretty much at open price, though, as you can see from that price action. But yeah, this is kind of the level. I might have to get some of this on. I may even just buy shares to like really kind of, take down my risk, because it's like, I mean, usually the benefit of options is that you can. You can put in a somewhat sizable position without having to buy full shares, but with something that is as volatile as this is proven to be, and is only $2 per share anyway, and I can just get 100 shares for the price of a typical options contract, that starts to become a little bit more appealing to me. Yeah, I'm definitely gonna throw something on.
Yeah, especially with any type of any type of pops on the way down as this thing starts to.
Yeah, I don't know, because like
wither away.
Let's do it. I'm just gonna freaking value invest, man. Give me
shout out Warren Buffett. Where he at?
Give me 150 shares. we'll get long 150 shares here. Hopefully I can get a fill at this 202. If not, I'll just whatever. I'll eat my $1.50 of slippage. There we go. All right, we're long some Beyond.
I like it.
But yeah, it's just at a point, it was obviously a meme up here, and it's obviously a meme in here, and but at what point does this shift over from being a meme to just being fair value for a company that just got a bunch of Walmart stores to stock their products?
Personally,
this is about it.
Yeah, absolutely. Personally, into 5, 10, 15, 20 years, fair value might be 0 for Beyond Me, and that's pretty much on mine. No, I'm just kidding. I don't know. I'm just not a big fan of the company as a whole.
I don't disagree either. But I don't know. I mean, what you'll see a lot is when companies like this can kind of make a pivot into an adjacent sector, sometimes they get a big bump. And Beyond, I'm eyeing the lab-grown meat, which is not something that I endorse either, or would ever necessarily eat myself. But I think that has slightly wider appeal than plant-based meat, and I think that's a very logical pivot for Beyond to make if they wanted to. So I don't know. We'll see. If this goes to 0, it goes to 0. I mean, again, I posted up $300 just now. That's essentially an options contract. But if we, go retest this, I mean, we're talking about we're testing $5 just in July, before any of this is even really relevant. So yeah, if I could catch another little run like that, make 50%, I'd be very pleased, especially with a position on shares with this thing. This chart might as well be a chart for your options position.
Yeah. No, 100%. I mean, especially with Beyond, anything lab grown just sounds off to me, and I'm just not with it. Especially if I need to digest these items. So something like Beyond Me, I'm okay. I'm gonna have to take a pass, even without doing further research. Just hearing about it, I'm good. I'm gonna have to take a pass on that.
Yeah, it's very strange. I'm big on eating things that are grown from the ground or having mother
lab grown. Nah,
yeah, and if you
nah.
Also, the whole thing, like, I guess I can understand the appeal, but like, if you're vegan, you better like vegetables. That's really kind of where I've always been. I can understand being vegan for moral reasons and still wanting to get the taste of meat or whatever, but no, I say just stand by your morals. All right, if you're going to be vegan, you don't get to do imposter stuff and pretend that you're still eating meat. You got to lock in and eat the grass in your front yard.
So, 100%. I was scrolling on Twitter last night, and I'd seen someone whip up an amazing dish of ratatouille. Like, it was real life, not the cartoon. Yeah. It was like real life ratatouille, and I was like, that looks so fire. Reading through the comments, someone was like, what? If you're vegan, especially, you love your vegetables, you would love this dish. When I heard that, I was like, ratatouille looks so good in the cartoons, but with just vegetables, I'll eat my veggies, but I'm not the biggest vegetable guys. But seeing somebody whip up that dish last night, I was like, I might have to reconsider.
They just need to say AI a few times and go to $20. That's exactly right. You're so right, Jared. They should just say, we're going to make AI beef. That's it. That's all you got to say, Beyond. You heard it here first. I charge $300,000 a month for consulting. Get at me. I had vegetables for breakfast today. Hell yeah, Grumpy Mike. Oh, you're not even a vegan. we meet again at the battle to resolve our beef with regard to meat alternatives, Gus. That's like a triple entendre. You went for some double entendres in that one. Meet again, resolve our beef. I'm with it. That's a solid comment, Wanderer. Yes, I will say I think I can certainly myself get behind plant-based meat more than lab-grown meat. If you were asking me to choose between which of those two I'm going to eat, I don't have a preference for either. But I think that studies do show that the wider appeal is actually for the lab-grown stuff. There's a lot of people that don't have a problem with that. And lab-grown meat is vegan, no?
I think it falls into the category. It's like
it's not. It's
a synthetic vegan.
That's quite a paradox, actually, because it's not animal. Well, it is an animal.
It's a
product.
synthetic vegan.
It's an animal product. They're just growing meat instead of growing the whole living organism and then killing it for the meat. But it's still like molecular level. It's still beef.
The way that I see it is, I just put on a zebra and Beyond, and it's like, technically, I have the impact of 95 positive Delta shares right now. But it's technically not 95 shares, technically. So that's kind of how I see it. I see the zebra position is more like it's more like the Beyond Meat.
Sure.
Of the meats.
Sure, I get what you're saying.
Yeah.
All right, pivoting here. What else we got? Lululemon trading up. They announced this morning that they are signing a deal with the NFL. I guess they've given pretty much all the gains back. They're still up 2%. Announced this morning they're partnering with the NFL and Fanatics to launch a new apparel collection. I personally am excited about this. A lot of NFL stuff, and particularly a lot of stuff on Fanatics, especially. I will call them out by name. Is highly low quality, and so I would love if I could get like just a nice Bengals shirt or whatever athletic shirt that'll last. That seems like a logical partnership to me. Moving beyond that, let's see, we touched on Qualcomm. GameStop. But you didn't think you'd hear that name today. GameStop is trading up this morning and has given pretty much all of it back, and rightfully so. They opened up 5% this morning because the White House retweeted them. That's the short answer for why this happened, and that literally just is the reason. The White House retweeted a post that was made by GameStop where they had made Trump look like Master Chief from Halo. GameStop was making the post to celebrate that Halo will now be available on PlayStation. It's been Xbox exclusive this entire time. It's going to be available on PlayStation as well now. So that was the reason for the post. And they said something about, maybe they said make video games great again or something, make consoles. Oh no, they said the console war is over.
Who said that?
GameStop did.
Right.
Anyway, so the White House Twitter account, X account, retweeted them. Like I said, they've given it pretty much all of it back now, as they should. I don't see any reason that this would be a substantiated move for GameStop, but did have to touch on that one. What's last here? Oh yeah, last in our daily news. Nancy Pelosi, the greatest trader of all time, has exited pretty much her entire position of Apple. She still has a few $100,000 in Apple. The amounts are always hard to exactly deduce, but she still has a few $100,000 of Apple, but did make an exit on Friday. So for anybody who's long Apple, if you needed a bearish indicator, perhaps there it is. She does still have a few $100,000, but this Apple position in question started at about $10 million in value. So we're talking about cents on the dollar from the original position that she took. So
yeah, after Apple taking the highs as well.
Yeah,
so, I mean that's in hindsight it might end up being a pretty good profit taking spot.
Or she's going to be a pretty good profit taking spot. In hindsight, she's Nancy Pelosi.
Yeah, the greatest of all time.
So yeah, that's where we're at. And then yeah, big earnings into the rest of the week. That's sort of the last line item here. Tomorrow, UNH pre-market, Visa after close, and then it really heats up. Wednesday, Thursday is the peak of earnings season. Wednesday, Microsoft, Google, Meta. Thursday, Apple, Amazon, and then Eli Lilly as well on Thursday. But five Mag 7 stocks going off Wednesday and Thursday.
Yeah, Jared, they're not gonna make God of War for Xbox. There's so many exclusive video games on Sony that I wish would have been on Xbox growing up. So I know there's always been the Xbox versus Sony deal. That's why I'm excited to see what GameStop ends up coming through with. But
yeah, it goes both ways. And I mean, I guess like Microsoft and Sony must just bankroll the hell out of those games because it makes no sense for the manufacturer
Yeah, it makes no sense
to do it that way.
Right. It was almost revolutionary to even get cross-platform multiplayer games, right? It was so it's like now we can play cross-platform. That was much needed from before, but I don't understand the business logic behind some of those decisions, especially coming 10, 20 years later when I feel like I don't know, maybe video games is growing. It felt like the core base back then. It felt like they were never listening to the community, but times have changed.
Yeah, it's really interesting to me. Yeah, I mean, they must pay them so much money because you lose so many sales. And I just don't know. I've certainly never heard anybody in my real life say, I want to play this game so bad that I am buying a console.
Neither have I.
I don't know.
It's all usually left to convenience. Oh, I want to play this game so bad. Oh, I happen to be on the operating
I guess there is
software
like an aggregation, like brand awareness angle to it as well. Like if you have a PlayStation forever and ever, then all of a sudden you're like, you know, the next gen rolls around and you're like, man, I've been wanting to play all these Xbox exclusive games and I can't. Like that's so annoying. I'll get an Xbox this time.
Yeah,
like that sort of appeal as well.
100%.
That's
true. Jared does make a good point. I will say about 10 to 15 years ago, Halo had such a strong pull that in the beginning, it sounds like the Bible first. In the beginning, people were buying the regular Xbox. Before the Xbox 360, people were buying the regular Xbox just to play Halo 1. And then I think Halo 1 became very popular. So then when the Xbox 360 came out, when people were making that decision on going from the PlayStation 1, PlayStation 2, that jump from the PlayStation 2 to PlayStation 3, I feel that was a huge bridge.
Yeah, and that's kind of what I'm getting at.
Yeah,
I do think that it probably has appeal in that regard when people are going to upgrade. I just don't know that anybody's going to switch specifically for it, especially in this day and age. I mean, if I see a game that I want to play, everything I do is on Steam. And if I see a game that I want to play and it's not on Steam, I'm just like, oh well.
Yeah. Well, let me ask you a question real quick. So when you're on Steam, are you using mouse and keyboard or are you using controller?
It varies. I mean, kind of whatever.
Is it dependent on the video game itself?
Yeah. Okay. The games, and it depends how suitable they are. Like because Steam has like a native thing where you can just use a controller on any game and it'll take your inputs in.
Okay, right.
It's really wonky. It doesn't really work like CSGO, for instance. Like you could never play that on a controller.
Is that a PlayStation controller or Xbox controller?
I use an Xbox controller.
Okay. Did you grow up on Xbox?
Yeah.
Okay.
I grew up on Xbox. Well, I played PlayStation. I probably have more hours on PlayStation actually because that was like my primary thing. Like,
Which one?
At my peak on the PS4.
Okay, gotcha.
That was like my peak console probably. But I like the Xbox controllers more. I always have. When I made the switch to PlayStation, I was like, these controllers suck.
Interesting enough, I love playing shooter games on an Xbox controller. And when it comes down to sports games, I actually prefer the PlayStation controller. It's kind of weird. I don't know why that is.
Interesting. Yeah, I don't know. The buttons on the PlayStation controller. The Xbox buttons are rounded and almost feel like glass. It's like a good hard plastic, and the PlayStation ones are like a sharp edge. Like it's not rounded 100%. Like that on the sides, and it's kind of just feels cheaper to me.
Yeah. Before we pivot here, though, Jared made another comment. Online play for Xbox was way better than PlayStation was too in the beginning, 1,000%. And you know what's funny about that?
I mean, the interface and stuff.
100%. And what's funny about that is in the beginning, PlayStation had free online services, if I'm not mistaken. You could go and play online for free. Maybe that allowed them to be a little bit more competitive. But I remember from day one, you had to have those Xbox Live.
Yeah,
I think it was called Xbox Live Gold. Yeah, those gold cards. And then, so good times, extremely nostalgic. I'm sure you can relate there, Jared.
For sure. It was my first 2001 console because of Halo. There you go. It's working on people right there. LMAO Nancy. In the beginning, PSN was free. Yeah, I'm sure you said that before Errol actually said that. I heard the stream delay. Okay, what else we got here? Can't have any pudding if you don't eat your meat. I don't remember what that was in reference to. Nice win Saturday, Gus. Thank you, Mike. Appreciate it. I don't know how the Razorbacks did on
Which game was
Saturday.
that?
Do they have a bye?
Which game was that?
Texas A&M is what he's talking about. But yeah, that's pretty much everything that we have topical going for today. I put some Beyond on. What do you have going on your side?
We can jump over here to the NASDAQ on the TradingView platform. We'll look over here. Not too much going on. It's been a little bit more of a boring day, trading at all-time highs here. We'll circle back around to our conversation, Jared, talk a little bit more about those LAN parties and stuff, because that was fun. I will have to say, I do believe that, especially if you were into video games around that time and age, you might have gravitated towards Discords, towards Reddit, towards the stock market, towards crypto. I just kind of have a hunch that if you were into technology back then, you probably have a better chance of somehow finding the world of finance, especially being online.
Man, that's quite the hunch. Because I can name a lot of people that I played with at that time that are just categorical dumbasses now that don't do any of this.
Really?
Yeah. Oh, yeah.
Damn.
I think there's certainly...
I think we had different friends.
I think you could sell me more if you took the angle of like competitive nature and like wanting to win, because I think that ultimately like it's finance, wealth.
More in
is
terms
kind
of
a very
technology.
big game at the end of the day, and
100%.
like wanting to win. I think that there's an element.
Capitalism is a game.
Yeah,
regardless people want to admit it or not, it is a game, and people are playing it very well.
Yeah, absolutely, absolutely. I plan to win.
But if we go over here to NASDAQ over here, if we go to the 5-minute, we can see that really not much going on. Trading at all-time highs, we didn't really have much. We didn't have much clarity. We know at all-time highs, the market tends to make another all-time high. I think the probability of getting another all-time after getting another all-time is somewhere in the is sitting around 70%. Don't quote me on that, but I think it's in the ballpark.
I think it was like high 60s.
Yeah, it's kind of crazy, right? So
we're both referencing the same team's message we saw like 2 months ago right now.
I think so, right? but I'm sure that still holds. You know, honestly, the data could be skewed a little bit because who knows? We might have put in like another 20 all-time highs since then. So if anything, maybe the data went up.
Maybe it's more frequent now, yes, because we make a new all-time high 3 times a week.
Yeah. He says capitalism is a game where the referees have been bought and paid for. Look, I'm not saying I disagree, but we're not going to get into all that right now. But let me go over here to the larger time frame, and then we'll get a better perspective on what's going on right now. I'm on the 30-minute. You can see the gap up overnight. So I opened up the platform Sunday night. I closed the platform, and I opened it up again because I was like, my charts aren't populating. So if I go back to the 5-minute, a smaller time frame, this is exactly what I saw Sunday night when I woke up, right? So this is all I saw. I'm like, where are the candlesticks? I'm like, the market's opening up. Like, do I need to go down? Did we gap? Where's the candles? And I just had to keep dragging it up here. So saw that we got the massive gap up, and then just through the pre-market this morning, kind of had a hunch that we wouldn't get too many opportunities, because as we know, again, we try to trade off of those levels of value. And when we're trading at all-time highs, we have no established levels of value because we never traded at these price levels before. So the market is still in a price discovery mode. And where's fair value? Who knows? The buyers and sellers would determine that, but it's not obvious until hindsight. And then it's like, then we can make decisions off of that data once we get it and once we see it. It's like when there's no clarity in the market, I just think to myself, like, okay, let's allow the picture to paint. It's like, no matter what strategy you're using, you know, we don't have to force the trade. It's like, just let the picture paint, let the market show more of its hand. It doesn't mean you're going to nail the trade, but it's to where you can at least have the level of conviction to pull the trigger with a level of confidence anyways. Because I do think great trades, if you pull the trigger and you're a little bit timid about it, if you are a little bit gun shy, I think you can ruin your own trade.
Sure.
In that sense as well. So I think it's important to do that, even on the other side of things, like being able to take those confident losses. And I think that if we step into positions where we weren't even, too confident about taking in the first place, sometimes I think that can bleed into maybe bag holding a position, maybe this or that, maybe we didn't even have a plan for it. And then at the same time, when it's a trade you didn't have much conviction in, you're not going to be very decisive on when to get out. So that pertains a little bit more to directional trading using those futures contracts. Got to be a little bit more nimble and thoughtful about those little details. But that was a reaction off the bat. We gapped up. We're running towards the highs. We don't have many levels to trade off of. We're going to have to be a little bit more patient. Don't quote me on this, but I think later this week too we have PPI. That might have been Thursday or Friday. I need to double check on that. And then I think we have one more thing on Thursday. So I think heading into the end of the week, Monday, Tuesday, Wednesday, really just let the market show its hand, develop, and then build a game plan off of that. But I think in terms of directional trading, it's going to be tough at all-time highs. So unless you're riding the wave and buying some significant dips, I'm not going to be too comfortable on much. Did you have any thoughts on NASDAQ overall, your reaction over the weekend gapping up?
Yeah, I mean, I think that what I'm going to wind up doing into this week is I think that we are going to, and I mean the market is going to get a bit overzealous with these highs, and excitement is up right now in the market.
Yeah,
clearly, and so I think that we are putting ourselves in a position where if any one of the aforementioned 5 Mag 7 companies that report their earnings on Wednesday and Thursday have a considerably bad report, that's going to be enough that we tank the entire market for the day. Tank might be a strong word, but I think that we're presenting the possibility for some sizable red days if we are doing too much right now, so to speak. If the
mark is doing too much.
Yeah. I mean, if it's
doing too much, calm down.
Because now we're talking. I feel like this market action moves the goalposts for Microsoft, Google, Meta, Apple, and Amazon, who all have to report earnings this week, to where later, if we had ran sideways, if we had gone red to start the week, they would just need to meet or slightly beat expectations. But I feel like we're setting ourselves up for a situation where they are going to need to absolutely smash expectations in order to be able to do anything, because they're all moving up alongside the market right now. Amazon up 1.5%, Meta up 1.36%, Google up 3% today, 3.13% on Google.
Right.
And so yeah, I think with how much these companies are beginning to be a little bit overextended, the market is going to be a lot, I should say, more inclined to move down off of these earnings reports, these major market-making earnings reports, than move up. So that's sort of where I'm at, and I think I might take a couple shots in this conviction, just do some like very low risk, very high reward, like very short dated 2 and 3 DTE stuff,
right,
into Wednesday and Thursday, just to see if we do happen to catch that type of market action. That would also serve as some good short delta hedge against the rest of my portfolio, which is still aggressively long. Although I got my beta weighted delta down to 79 now, so we're reining it in a little bit.
That's pretty good.
And my
especially towards the highs, it's not
power up too.
Yeah, especially just ripping towards the highs, bring that delta down. That's fire. I mean, getting the gap up and just to rip into the highs. I mean, I don't think that. I mean, that's picture perfect, especially with how you're positioned. So.
Oh yeah,
100%.
And of course, UNH earnings tomorrow morning has the ability to make or break my entire week, maybe my month.
That was UNH.
Yeah. They report tomorrow before open. So yeah, we'll see.
That'll be a good one.
That one's going to be a critical report at the Bank of Gus.
I know gold has been a little bit quiet. I know we're selling off a little bit today, but I mean, I was still pretty surprised. I forget we got the moon over here. I was still surprised on how long it took for gold to make this move, or maybe that was just my, I guess not as much screen time looking at gold, right? I think the timing is a lot different. Gold seems to move a lot slower, with the exception of the insane rally that we had seen the other week. But we got a position in there too. We have a little bit of long delta. We have a little bit of short delta. We're net positive on the overall position so far, but it's kind of sitting around break even. The market hasn't really made any decisions on whether or not it really wants to make a new leg lower, or if it wants to consolidate a little bit longer, maybe put in a little bit of a bigger bounce within this range here before it wants to sell off a little bit more. But gold has been a little bit, indecisive on my end at least, but the position has just been chilling there. Got to be more patient here, but let us know if you're trading gold. What position do you have on gold as well?
Yeah, I'm just I'm maxing and relaxing on my silver position. We're finally coming all the way back down. This silver position, if this works out, this would be one of the I don't want to say better trades I've ever made, but I would be very pleased with it just because it was pretty
percent wise.
What?
Percent wise or like directionally?
No, it's defined risk. I just sold a call vertical for them actually, but I don't know how I managed to let this slip by me so bad, but I really went way too aggressive on my levels here. It's just direct to SLV, but I needed it below 42, and I put this on at like the 48 level, and I wasn't really thinking about the fact that what I need there is a 15% down move in a metal.
Right.
So as we kind of started to get the down move and silver was only towing this like 43 to 45 type of range, I was like, oh man, I might have been way too aggressive with this. But we did open below 42 today and have since worked back up into the mid 42 range. So it's looking like it might work out. And this thing is like a 3-to-1 like risk to max profit ratio. So yeah, we just flipped green actually since we've been on air. I'm at just barely green on those.
Greg mentioned it would be cool to see if Tasty would do a market measure on trading 1 days till expiration to 3 days till expiration contracts. If there's a difference from 0 DTE, such much. We will pass along the information. I'm sure they'll do something like that.
Yeah, absolutely. We can get that to the right people.
Yeah, I know the skinny on options this morning. Dr. Jim actually went over normal distributions, which was pretty fire. So you guys should check that one out if you can.
I might get a nosebleed in 5 minutes. We'll see. I apologize for testing my nose out here on air.
Guys. Say that one more time.
Professional me. I just said I might get a nosebleed here.
I got you.
I got no idea.
Can you feel it sometimes?
Yeah, I kind of can. Is there? Oh, sweet. Nikki's got some tissues on the ground over here. All right, beautiful. That's going to be a good SOS if I need them. I think GME just made me throw up in my mouth. Where you mean just like the looking at the chart made you throw up in your mouth, or I assume that you mean a position made you throw up in your mouth. Yeah, GME. I'm kicking myself right now. I should have been. I don't know why I didn't do this. When we shot the morning market today, I totally said, why is GME up 5% just because the White House retweeted them, and then I did nothing on that conviction. This came right back down nicely. I should have gotten a short there.
Yeah, it's looking a little dead now here. The volatility looks like it's lacking a little bit. Not too much volume on GameStop today. A little bit more than the previous days though.
Gus, with you on the nosebleeds, man. That time of year, yeah.
Is it more of a seasonal thing?
Yeah, it's whenever it gets dry. Like as it starts to get cold, they come on worse. I've always had problems with them. It was nice while I lived in Texas, and it was always just warm and humid, and they would almost never come. But yeah, if I ever anytime I travel to the Pacific Northwest. I get nosebleeds like crazy.
I gotcha. Google's looking like NASDAQ today, actually. I'm looking at GOOGL. I mean, we have the gap up and then the grind higher. Again, this price action is extremely difficult to trade if you're directionally trading, by the way. But, I mean, we're gapping up. It looks just like NASDAQ. Let's go to a larger time frame to see what that perspective looks like.
Yeah, I mean, it is a bit more aggressive than NASDAQ. There doesn't seem to be any concrete reasoning for that. But like I said, I mean, they do report earnings later this week. So I think that with the overall market enthusiasm, perhaps people are just getting a bit more amped with upcoming earnings and pumping this up a little more than the broader trend.
100%. A bloody stash for October, though? That would go crazy.
Oh. That's got some implications, I think.
Oh, yeah.
If you... You're not. Mm-mm. I'll tell you off.
Okay.
Somebody's going to pick up on the implications I'm talking about here. There's only so many things you do that might get your mustache dirty, and I will quit there before I get in Omaha.
Oh, no.
Okay.
No, if you could elaborate for us now.
Oh, I see. You're not even talking about a Halloween thing. You're just saying if my nose started bleeding. I retract.
No, I'm picking up what you're putting down, though.
I'm rolling back. I thought you were talking a little Halloween costume action. I guess it is spooky season. Yeah. What if I said nothing this whole time? My nose started bleeding, and I just acted like it was normal.
Well, I literally would have been like, this has got to be a little bit of a shtick going on right now, because I walked in today, actually getting into the elevator. Somebody he walked in. I'm pretty positive it wasn't a real axe, but he walked in this morning. It was like mask, everything, and we just looked at each other. I went in elevator D. He went in elevator E. I was like, all right. What you guys got going on in floor, whatever is that?
Halloween is Friday.
It's right around the corner.
Guess people might be having parties right now. I don't know how everybody else does their
I know in college, Halloween started last week.
Yeah. Oh, that's true.
Or this week.
Halloween started some weeks ago if you're in college. Jeez, yeah. Last weekend, this weekend. IWM, check on the Russell. Oh, yeah. Certainly lagging the most of all these indices today. I mean, they're still up ever so slightly, but not the type of move we're seeing in SPY and the Qs. And NASDAQ. That's interesting too, because I guess the Qs are NASDAQ, but that's interesting too because we. I mean, I feel like IWM. I don't know. I guess we're just. I was gonna try to make a whole Liberation Day thesis there, but we've forgotten that. We're so far beyond that.
GGAL.
Yeah, more enthusiasm for the large caps today. That's interesting. Oh, Argentina. Did we do the thing? Did we buy the cattle? What happened? Did we give them the money?
So GJL, we gapped up. We're holding so far. It looks like NASDAQ, looks like Google, and a handful of the rest of the underlyings right now.
Grupo Financiero Galicia.
That's pretty good.
Thank you. Sorry, Argentina ETF? Argentina ETF. Somebody's made this, right? ARGT.
ARGT.
That's the Argentina.
That reminds me, as we look for those things, let's take a quick look at some of these quantum computing stocks. We got the sell-off from last week, took most of the air out of it, and now we're getting a little bit of a relief pop on IONQ. So if you're still feeling very bearish, here's a nice time where you can maybe throw on some short delta, if that's what you were looking for. We got the pop finally. Volatility still there as well. IONQ leading the charge there. RGTI. Are we still in the RGTI position, Gus? I forget.
Good question.
It's been a little bit more quiet, but we got a little bit of a relief pop on the way down here too.
Yeah, I am. I'm deeply in the money on this thing. I'm just letting that expire for Max.
Nice. I doubt we get to another all-time. We get to another all-time high on quantum, another amazing short squeeze, but that's a little far-fetched. That's a little further out on the tail. Possible, not likely.
I'm not going to do it because whenever people do it, it always winds up happening. But I want to make some egregious promise should RGTI be valued at $20 billion again. I'm not going to, but I want to. I'm smarter than that, though. I'm not going to promise to eat dog poop or cut my genitalia off if it goes back to 50 because I don't know anything. Clearly.
All I know is that I know nothing. All I know is that I know nothing. Every day.
It's true.
All I know is that I know nothing.
It's true. You got it, yeah. The second your humility leaves, the market will give it right back. That's for sure.
Let's see. QBTS. This one's pretty volatile. A lot of shares trading on the day. 33.5 IV rank. This one's having the bigger relief pop out of the three. RGTI, IONQ. Looking at here, I know we have earnings before the bell November 6th, so that will give us a little bit more clarity here. But I mean, I'm not opposed to getting short, even if it's just a smaller position. So I'm just going to see what some of these are looking for. Just not fond of earnings coming up right around the corner.
I said what I said, David.
What did you say?
That's like something people will say all the time. It's like, oh, if X thing happens, I'll cut my dick off.
Oh.
It's like, I'm not that confident.
Oh, right.
Go back to the highs.
Yeah.
But I'm fairly confident. What's like a food I don't like? I could do something
beyond.
I could do something lower hanging here. Oh, just bring it all together. All right, sure. If RGTI goes back, if RGTI makes a new all-time high before the end of this calendar year, I will eat a Beyond Burger live on air. That's my wager.
All right, no, I like it. Is this
whole thing? I'm not talking a bite. I will suffer through. I don't think they're that bad. I don't know if I'll suffer through, but I will do it.
Is that a Beyond Burger?
Yeah.
Oh hell yeah. I'll watch.
I don't know if I'm not getting in the lab grown. I don't know what kind of cancer they're putting in there.
Is this the end of AI? Meta CEO Zuckerberg appoints former metaverse executive to boost AI efforts, according to what is that? What's FT?
Financial Times.
Financial Times, maybe.
Let's guess.
Is it the end of AI? I don't know. I think the end of AI in the same. I've never heard that. I've never heard those words put together so far yet. But no, I don't think this is the end of AI. If anything, I do personally feel we barely scratched the surface with AI, and that's kind of scary for me to say because of what we've seen already, and it still feels like we're barely scratching the surface. You got any thoughts on that?
Yeah, I mean, I definitely agree. I think there certainly needs to, and this is a sentence I will rarely say, but AI is something where I think we might need more regulation to make sure that people actually have the right safety measures in place. And I mean on all sides of the equation here. I mean, for creatives, making sure that creative work can still get done. I mean, for making sure that AI won't tell people to kill themselves. We had that case like 2 months ago where ChatGPT basically just told a kid to kill himself because he was depressed. I think that we need regulation to make sure that these companies are actually doing their due diligence to prevent all of those things. And in the broader scope, I don't think this is the end of AI. I understand that what you're saying here with the former metaverse executive to boost AI efforts and that being a bad hire. I'm picking up on the joke. But holistically, I think AI is here for the haul. We're in the dialogue phase of AI. Yeah, no, I absolutely agree. I mean, because it's crazy. The number of things that the number of times that I'm not a rocket scientist. I don't work at NASA. I don't work at Anthropic. I don't work at Lockheed Martin. The number of times that I run into things that large language models cannot do is astounding. And so I know that we can't be all the way there yet because I don't even have too crazy of applications. Like I'll float one, like data scraping. And if anybody has a great solution for this, please feel free to let me know or tweet at me or shoot me a DM on Twitter if you'd like to provide a lot of details. But I'm working on a personal project unrelated to work where I need to scrape a lot of data, and I cannot for the life of me find an AI that can scrape data for me. They all struggle with it. And I've asked AIs what AI might be the best, and I've tried those, and I've tried all kinds of different methods. I've tried to have AI code things for me, and we cannot figure out the data scraping. So like little applications like that, and that's just the very, very beginning. I mean, I think we are legit 10 years from Jarvis, like for real, from you just being able to walk up to your computer and say, Jarvis, log into my platform and pull up the stream so I can read the comments, and then it would just do it on this computer, and nothing. I wouldn't have to do anything. Yeah. So I don't have to do anything now because our production team is so awesome. But that's beside the point.
No, yeah. I mean, I'm really excited, and I know another conversation that's been coming back around, and I don't know if it's a touchy subject because we're in this industry, but how is AI going to affect the trading industry? I hear that all the time. Been seeing a lot of videos about that pop off too. I don't know why people are scared to talk about it, but I feel like we're a little far away from that because the reason why I say that is because hedge funds have proprietary softwares that a lot of the public doesn't have access to. And if anybody has that type of software right now to utilize that in the market, it's a hedge fund. And I don't believe a hedge fund has some type of AI software that is outperforming a lot of the models that they do have now, because I still think there's a huge human element that AIs are still lacking in terms of their models, because yes, they're running models. A lot of quant firms are running all these models, but they're still manually adjusting and adapting them and tweaking those things. So when it comes down to the human element or the emotional intelligence aspect of AI, I think once they figure that out, then we'll have a conversation about how AI is going to affect the market. Because I think right now there's so many bots and so many quants already running the markets already. We got tons of algorithms, but when are they going to get better? So that's really the question.
Yeah, exactly. And yes, and to that point, I do think an application for AI now could be feeding in, all of the trades that your trading algorithm is making, and perhaps AI could be trained to tell you how you could make your algorithm a little bit tighter and sharper. But like,
right, from a technical aspect,
yes,
like a numbers aspect.
And after the fact, like looking back, here's some little tweaks that you could make to optimize this a little bit more. But in terms of just sticking an AI on the stock market and saying go make money, we were really far from that. I agree.
100%.
Good. Oh yeah, I had good suggestions on the data stuff here. AI for data scraping is the worst. I'm happy to hear that I am not alone in this regard. I like Julius for my data stuff. I will make a mental note of that, Jared. I appreciate that. I'm not familiar with that service. It can be illegal to scrape data, so they might be concerned. I have 2 points to make to this. 1, I'm quite sure the data I'm scraping isn't illegal. It's sports data, like lots of sports data. 2, if that's the case, and I believe you, then that is just another shortcoming of AI that I asked 3 different AI services for a service to do data scraping, and never once did any of them say, be careful, because this might be illegal.
Yeah.
So that's sort of exactly the point that I'm getting at here, is they're just not always there. It's when AI becomes qualitative instead of just quantitative. Precisely, Jared. And that's what I was just getting at, is that I think that AI could easily take a look back at your trading numbers right now and tell you some little tweaks that you could do to make you do better. But as far as looking forward and trying to, especially in terms of trying to quantify news and esoteric factors, like we're really far away on that, I think. I mean, I really far away is a relative term, because technology is a snowball, and this AI stuff is only going to accelerate the future AI stuff.
Yeah.
So far away, I don't know, 5 years, something like that.
What I think too is, and it's once I think machine learning is a little bit more integrated into some of these models, I think is when the big jump is really going to come. And what I'm really thinking too is, I just have I think it's really difficult to conceptualize, because let's think about it. If these algos get that good, AI gets that good, what is the behavior of the market going to look like? Like if we just think about it logically, what would the behavior of the market look like?
Well, I think also, I agree. I think this is a very interesting topic, because AI would look at Palantir right now and say, this is a $10 stock. Why is it trading this high?
Exactly.
And AI has a really tough time conceptualizing whether that might be overvalued or undervalued, because human psychology is the main driver.
100%. The market is psychology. Yes. It's all psychology, 100%.
Gemini won't provide answers when I ask about stock indicators, because it won't provide financial advice. Cloud outright banned me after talking stock. That's really interesting. I've done some stuff like that with ChatGPT before, and it's certainly never. I mean, it'll give me like a little disclosure at the end that says, like, you know, be sure to do your own research and trade at your own risk or whatever. But it always will give me market information and information on indicators, anything like that I need. I've never had any problems. If you have an API, that makes things easier for scraping. I do not know how to make an API. I saw that suggestion twice, that you can just API into the back end. Yeah, I'm not that proficient. I'm a guy with windsurf. I'm a vibe coder. that's where I'm at. ChatGPT, no issues with it. Yes, yet. Yeah. That was what I was just saying. I'm sure you beat me to that. In actuality, it's just the stream delay. You putting on some Beyond? You just put on some Beyond?
No, I've had this on in Beyond. It was a long zebra in Beyond. It was about 95 delta, so almost like 100 shares in Beyond. But I was just looking at some of these individual contracts. Like we had sold the at the money, so I'm just seeing relative to when we put this on, kind of where we're at. Still seeing it around break even, but the strike was sold at 63 cents. And then the other ones that I bought was 270 deltas. And if I just right click between the bid and the ask, it'll pull up the chart of the option contract itself. And both of those contracts were purchased for about 91 cents each. So not much extrinsic value on these, almost pretty much a no extrinsic value. I think it was like maybe negative 15 of extrinsic we had. Tried to get it as close to zero as possible. It was only about $117 worth of buying power. So if Beyond pops a little bit, then that will be nice to take advantage of. But I'm just going to let that one ride, honestly. I think the debit paid for that one is totally fine to use as risk for the overall position. So I'm going to let this one ride.
Yeah. See what happens. I mean, that's the thing too, and I alluded to this last week with Beyond, but you know, my thesis here is that I think that this is about fair value for Beyond, given the recent information, and that there could be upside to it, obviously, like I have a real thesis. But also, it cannot be understated that these meme traders circle back. They will circle back and give things almost meme dead cat bounces. Like that's a thing that 100%. Happens very often, is the hype is gone, and then it's all the people who missed the boat are like, oh, let's do it again. 100%. So, you know, I could very realistically see in 2 months Wall Street Bets scooping back in here and pumping this up to $4 for a day, and then it comes back down to 2 or whatever it may be. Yeah. But that's generally the pattern that we see with these meme companies is gigantic rally, dead for a little while, baby rally, gone forever. So we'll see if that holds up here as well. But I'm not ruling out the possibility that they could come through and juice these premiums for me as well.
100%. Anything else you're looking forward to most getting into the rest of this week?
Excited to see all these earnings go off and how all that affects things. It's going to be a speculative week for me. I might do a few dumb things. So we'll see. I would like to give a specific shout out to Keurig Dr. Pepper before we get off here, KDP, who in the not quite the 11th hour. I still have over 100 days left on this position, but KDP seemed like they were going to be down for the count, and they have just rallied back. Big earnings beat this morning. Shot straight up. So I'm happy to see my thesis finally coming to fruition here.
Love it. We'll see how the market digests all this news. We got a gap up over the weekend. Anything else before you head out for the day?
No, nothing else.
Cool.
I hope we keep going higher. Why not?
Yeah, why the hell not?
7,000 tomorrow.
Why not?
Let's just do it. Why not?
No, but that's going to do it for today's segment. I think I'm going to be looking forward to most just seeing how NASDAQ digests, especially after the gap up. So.
Yeah, I'm most excited to see how this gap up today plays into the broader earnings equation,
right?
And what the market action for the rest of the week looks like after this, because I think it's a very real chance that we don't touch these highs again. This week, not ever, obviously. We always go back. Anyway, all right. Well, that's going to do it for us today. Thanks so much, everybody, for coming out and hanging with us. Mike Evans, Cocky Trumpet, Big Brain Joe.
Cocky Trumpet.
Greg Lutton. All of you. Jared, as always. Grumpy Mike, as always. We love all of you. We appreciate you guys taking the time. And thank you for the great data scraping suggestions. I took some pictures of the chat here, so I'll process all this when I get home. But that's all we're going to have for today. Be sure to stay tuned for Dr. Jim coming on next. And we will see you guys tomorrow. Same time, same place.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Monday edition of what it is that we are trying to do. Welcome to the bull market is back, baby. Although it never really left edition of what it is that we were trying to do. Thank you guys for being here, being a part of the show, because it is only because of you all that we can do what we do. So thank you guys so much. If you are watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the discussion and join the conversation. And man, you can celebrate if you are a bull. You can commiserate if you are a metals bull. And yeah, it is indeed a good time had by most, regardless of which side of the fence you might be on. And of course, if you have a question for me, you can drop it in the chat box and I will try to get to as many as I can. I usually get to somewhere between 0.4 and 0.6 per show. So the earlier that you get that question in, the higher the delta that I will get to that question. So John, bring us into the market. Man, it's a Monday. All is right in the world. You've got Taco Monday. You've got this. You've got that. Even the S&P's up 68 on the day. Risk-free instrument, also known as the NASDAQ futures. Theoretically, it is extremely high risk, but practically speaking, up another 415 points today. Boomers up 207. Russell 2000 futures index, the laggard by a long shot, only up 5 points on the day. Apparently, the Russell is not opening its emails. Like it's not checking in on the Microsoft Teams discussions. Today is a big day. Today's a big up day. And the Russell is simply not cooperating. You got bonds that are about unchanged, up a little bit. You got notes that are about unchanged, down a little bit. You got oil about unchanged, down about a nickel. You got UB40s up a little bit. Man, look at the shifties though, guys. Somebody check on their local neighborhood shifty. Gold down 117 on the day. Where are my Hunt brothers at? Yikes. Silver down $1.62. Man, that's a lot of cheese and pepperoni they're going to have to sling to make up for that shortfall today, with silver getting absolutely walloped. And I think, if I'm not mistaken, gold was under 4,000 for a minute earlier this morning. It has since recovered the the big number bros psychological level that is 4,000. And then silver was, did it get down to 45? I don't think so. I think it got down to just a bit above 46 even. Let's take a look at this. So gold, you can see if we go to the chart here. Let's see here. Is that a daily? No, that's not a daily. That's that is a daily. Wow, look at that. That's a daily chart. Man, that looks like a 1 minute chart. That's what I'm used to seeing on like a 1 minute, like intraday for gold or silver or whatever. But let's click on, let's do like a 5 minute. We're not going to get Errol Coleman those royalties that we usually get them, but I kind of want to grab a bit of a broader swath here this morning. So you can see that, pretty weak for the last, I guess that's what, the last day or so. You got lower lows, you got lower highs, you got lower lows and lower highs. I mean, I don't even know how to do technical analysis, and even I can see that. So that's how you know how bad it is out there for the gold bulls. But yeah, earlier this morning, right after 10 o'clock, gold was all the way down to 85, 39.85. It has since recovered and reclaimed the 4,000 level. Will that 4,000 level now hold? I don't know. I mean, I've been reliably informed that what used to be resistance is now support. What used to be support is now resistance, and blah, 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 blah. So I don't know, man. We'll see. We'll have to wait and see if 4,000 can do its part. And then silver was down to, right around the same time. Yeah, silver did not break the 46 level, but it got down to a low of 46.055. It has since recovered all the way back to almost 47. That's quite a rally off the bottom for silver. And so we'll see, we'll see what happens over the course of the next, couple of days. I mean, we've obviously got a very, very, very big week with lots of earnings, and you've got Uncle Jay on Wednesday. You've got lots of things. I don't think we have any government data because the government is still shut down. It hasn't changed my life one iota, but I can only speak for myself. You have to let me know if it is derailing all the things you're trying to do in your neck of the woods. But yeah, silver, gold not having their best day, not by a long shot. But yeah, the market looks good. The market is back. You got volatility obviously getting smoked today with the VIX down 35 cents. Well, only 35 cents. Huh, that's interesting. I would have expected it to be down a lot more than that with, S&P 500 futures up 65, 70 points, whatever. NASDAQ up 400. And the VIX is only down 2%. That's really interesting. It's really interesting indeed. Now, in fairness, though, the VIX is at 16. So it's not like the VIX was at 20 or 22 or 19 or whatever. I mean, it was 16 and a half to open today, and now it's basically 16. So you're already dealing with a fairly low base. You're not dealing with an 18, 20, 23 print. And so the fact that it's not down more, it's going to be kind of more muted at these levels anyway, because there's not too much lower that it can go. Well, actually, let me restate that. It can still go a lot lower, but but it's not the same as going from like 23 to 18, simply because, historical norms on the VIX are right here, actually, right around 16, 17 historically. And so this is about historical average. And so once you get stretched on the top side, it doesn't take a whole lot for the volatility to become deflated and come out of the markets, and then it starts making its way back down towards its historical average. I mean, make no mistake about it, VIX can be 14. The VIX can be 12. The VIX can be 10. Hey, going back to 2017, I think the VIX printed an 8 handle at one point. And so there could potentially be a market where it just literally does not move. It just bounces between the bid and the offer all day long, and that's all the volatility that you get. I think a VIX at an 8 is basically just bid-ask bounce all day long. But the metals are not looking so good, and so we'll see what happens. I wish I knew, because if I did know, I wouldn't tell y'all. I'd be trading that information, and then I would write a book about it, and you guys could know after the fact. But still, I wish I knew. I wish I knew. So, all right, so what I'm going to do, though, yeah, we've got so many, and I see you guys in the chat, man. Look at you guys. I appreciate you. Man, Anthony Hott is here. Look at this, man. Man, I see retired Fido in the house. Man, look at this stuff. Danish Dynamite's here. Sam L in the house. Man, Wolf's in the house. Look at you guys, man. I appreciate you guys. I'm going to get to you guys here in just a minute. Let's go ahead and let's just kind of recap what we're up against here. Looking at a Tasty Default watch list. I just want to take a quick little gander. Tasty Default. Look at all these earnings coming up. Man, look at that. That is a locked and loaded couple of days. Like that is, man, that's something. Look at that. 10/29. That's going to be what, Wednesday? Yeah, Wednesday. Wow. Chipotle, Google, Meta, Microsoft, Starbucks, all on Wednesday, along with the USA, right? Along with Powell giving the State of the Union for the USA earnings report. And it's going to be very interesting to see what kind of guidance he gives. Like, I want to hear about, what are the revenues? What are the expenses? What is the profit that the USA has generated? What are the new products and services that we're considering? Like, are we considering a new CEO? Maybe a new CFO? I don't know. Like, we got to learn all these things on Wednesday when Powell tells us about the USA. But that's coming on down the chutes. And then on 10:30, we've only got 2. But I'll tell you, it is a superset like no other superset. You got Apple plus Amazon. That's kind of like doing buys with more buys, or doing tries with more tries. Like a buys and tries would be like Microsoft with Starbucks, or like a buys and tries would be like a Chipotle with Meta. But you're doing Apple with Amazon. That's like doing quads and then more quads. And so 10:30 is going to be 10:30 is going to be some crazy. I think I have lakes on 10:30. No, I've got lakes tomorrow, actually. Oh man, speaking of quads with more quads. Yeah, I got that tomorrow. And so anyway, I digress. So that's all coming on down the chutes. We have plenty of capital on the sidelines, which is nice. And so we've got, plenty of opportunities to lay some stacks of cash on fire. So I'm excited. I'm very excited about that. But let's go through what's going on in the portfolio here today, just to kind of see where the wind might blow us on the few things that are happening in the portfolio. So number one, MCL is just trucking along. Everything looks good. I mean, we're at 21 days. That's interesting. I didn't realize that. Okay, well, let's stop. I wasn't going to go through MCL because everything was just looking fine. And, much like you guys out there, I'm sure, when I think of 21 days, I always assume it's a Friday. Like when I think of 21 days, I'm always kind of expecting this on a Friday because in the regular options expiration cycles, it will be on a Friday. But with oil, you've got, jankier expirations, you've got, whatever else. 21 days is showing up here on a Monday. It's like, man, that's, if you look up the antonym to feng shui, it's going to lead you right back to a live feed of this show. Because this is not feng shui. This is the opposite of feng shui. 21 days on a Monday? No, man, 18 days should be on a Monday. 18 days on a Monday is like, all right, I'm a little bit late. I should probably do this today. I don't want to miss the mark, whatever. But 21 days on a Monday, it ain't right, man. It ain't right at all. But still, with MCL, 61.39 is the price of the underlying. And I'm kind of thinking here, I don't know that we need to hang in this position any longer. Like, I don't know that this requires too much more thought or too much more effort on our parts. I think we have a profit, right? You can see right there, I sold it for $1.84. It's currently marking at $1.29. So my P&L open is going to be the difference between those two, which is about 54, 55 cents. So we have a profit. A, it's at 21 days. B, the profit is economically significant. C, I think this is a very important piece to the puzzle, at least the way that I look at things. If I was only up 10 cents or 15 cents, I probably would not take this off right now. I would probably leave it on for a few extra days. And let's see if the stock can just kind of meander around between the strikes and we get to something that's a wee little bit, more economically significant. But 50 cents, 55 cents, I mean, I think that's probably economically significant for most traders out there, regardless of your account size. Now, again, the Shooter McGavin's out there trading 6 figures, you're trading 7 figures. Those of you with the multi-8-figure portfolios, you're probably like, 50 cents is 50 cents, whatever. But it's like, man, I don't know. You find yourself in a game of backgammon against any of the Batistas, you're going to need that 50 cents. Because when they keep passing the cube back to you, apparently, as I learned this morning, things can get pretty hairy pretty quickly. And so I would take that 50 cents where you can find it. Because the Batistas with backgammon, I have a feeling that they're kind of cutting some corners and cheating around the edges to make sure that that money finds its way back into the Batista family. And so MCL here, though, I think we take it off. I think we're done. So let's go ahead and let's close this guy down. Yeah, $1.30, that's fine. And so a nice little MCL trade. I think that was one of y'all that brought me that MCL trade. So thank you guys so much. That was ended up being a really, really nice trade for MCL. Let me delete those magenta circles. Let's try $1.32. All right, there you go. So we got filled at $1.32 MCL. We are done. Okay, beautiful. So MCL over and done with. Let's talk about MES for just a couple minutes. Like 9. So so MES, we put this string on. When did I put this string on? Let me grab my chains here really quick. Let's see. It's so funny, man. Like I was training this morning. And the chains came on, a little wood came on, and I'm like, man, I just never turn it off. Like there are certain songs on your playlist that you never turn it off. So like for me, it's gonna be Alice in Chains, Wood. I'm not turning that off. Alice in Chains, Man in the Box. I'm not turning that off. Nick Jonas, Jealous. I'm not turning that off. Like there's just certain songs that you're gonna let these things play through. And I heard one this morning with Wood. It's just some good stuff, man. But if I go into the chains here and you look at MES. What I want to do, let me look at the market state snapshots. Where was MES when I put this guy on? That's what I want to know. Yeah, wow, look at that. Man, so we put this trade on. This is crazy. This is crazy. So you can see it on the screen. This is not my opinion. This is objective truth. Objective truth. You guys get plenty of my opinions. They're worth nothing. This is actually objective truth. 10/17, we did this trade, this strangle on MES. That was 10 days ago. It's now 10/27. So 10 days ago, we did this trade. Look at where MES was when we put this trade on. It was 67.05. Look at where MES is right now. 68.95. 200 points higher. A 200-point rally in 10 days. That's crazy, man. That is 100% crazy. And so I'm bringing this up because you're going to notice that our call strike on this MES strangle, like it's getting close to being tested. Like it's getting close to like, all right, man, this thing's taking a little bit of heat. Like, I don't think we need to do anything just yet, but it's like, man, when I put this guy on, I really, really was not worried about the call side being tested. Of course, those are famous last words. Of course, I can't tell you how many emails I've responded to, which I'm still a little bit behind, by the way. So I appreciate y'all's patience with that. But I cannot tell you how many emails that I've gotten about people saying I'm done with short calls. Like I'm done. Like, I don't want to use them. I don't even want you to speak of them. I want nothing to do with short calls like ever again. Not as a standalone strategy, not as part of a strangle, not even as part of a market measures. Like, get it out of my face. Like, I've answered this email so many times, and I understand that. That makes total sense because, it's been really difficult the last, I don't know, however many months or even a couple of years at this point, where you've just been peppered on the short call side. You've just been peppered on the short call side. And to make matters worse, if you sell a call and the market goes down, oftentimes you're not even paid on that call. That's what makes it tricky, because oftentimes, the market goes down and the volatility kicks up. And so the Vega expansion, or not the Vega expansion, but the volatility expansion and the short Vega on that position actually hurts the short call, so much so that you don't even make that much money from the Delta side, because it just kind of gets washed away by the Vega side. And so I understand the frustration with short calls. I mean, personally, I still think it would be a little bit premature. It would be a little bit putting the cart before the horse if you completely did away with short calls as part of a strangle or something, where the short call is not the only piece of the strategy. Like, you have other parts to it. This could be a call ratio spread. This could be a short strangle. Those are probably the two most common examples, I think, to where it's like, all right, I don't know if I want to completely do away with short calls, but I can understand the frustration right now. And even with my MES strangle here, I mean, if I close this out now, you guys can see, I'm short a 69.50 call. You've got, the stock now at 6,900 basically. I mean, we're getting tested, end of the day maybe? Tomorrow morning's open at the latest, I think. I mean, we're going to be battling this short call. So at least you guys are going to get some teachable moments along the way of, hey, here's how you battle a short call. I mean, the first thing you do is you cry, right? You shed some tears, right? And then you kind of move on from that point. And so that's obviously what we're going to be doing live on the show when we get tested here in the next couple of hours, I think. So MES, we sit tight, we do nothing, but we cry about it a little bit. So that's MES. The rest of the positions, there's actually not too much to talk about. Well, actually, we have a winner, XLE. So this was, if I'm not mistaken, I stopped keeping receipts, and I really need to get back to doing that. But I'm pretty sure that this was Theta Trader's trade. So Theta Trader, if you're watching, thank you, my friend. I really appreciate you very, very much. You're the one that brought me this XLE trade. It was not on my radar. And so we have a nice winner on our hands. So thank you, my friend. XLE looking good. We've gotten a little over 50% of max profit. You can see that right here on the trade. We sold it for $1.86. It is currently marking at 74 cents. I'm no Julia Spina, but that looks like a little more than 50%. That looks like a little bit more than even the profit target that we were going for, which is good because it's going to help to offset some of the stacks of cash that will be set ablaze next week. So if I right click on XLE, let's go ahead and close this guy down real quick. Man, that's going to be like the quickest victory lap commentary in the history of From Theory to Practice, man. That's some good stuff. So XLE is over and done with. As far as the other positions, I mean, I'll tell you what, though. So Chipotle is looking good. Obviously, we're just going to hold this through earnings and just see what happens. And so maybe we get bailed out. Maybe we get crushed again. I mean, we'll wait and see. It's going to happen 10/29, so it's going to happen Wednesday. Man, Wednesday's show is going to be a complete circus, right? So, man, if you guys, please come back. Come back every day. I'm a little bit biased, I suppose, but come back Wednesday. Like, Wednesday is going to be bonkers stuff. So Wednesday at 2:00, we're going to have to navigate, right, all of the, obstacles and the pitfalls and the booby traps that Uncle Jay is laying down for every single one of us, right? They all lead to the same spot, of course, which is QE infinity. But I think that to get there, it's going to require a little bit of, let's call it dexterity on our parts. And so that's going to start happening at 2:00 on the nose. And then 2:30 comes, and we've all got to figure out, like, all right, is that a pinkish purple? Is that a lavenderish purple? Is that like a maroonish purple? Like, we're not exactly sure. Then obviously they zoom in when he gets up to the podium, and then we know, like, okay, that is one of his go-tos. That maroonish purple, that's one of his number ones, I think, without question. But then over and above all that, so in the midst of all that, man, we've got to trade all these different earnings, right? We've got Chipotle, we've got Microsoft, we've got whatever else. Man, Wednesday is going to be crazy. So don't miss the show on Wednesday. But right now, though, two things I want to draw our attention to. GDX, we should have done nothing. It's so funny, man. It's just too funny. It's too funny. Like, literally, this show should be from theory to doing nothing. I'll still find 43 minutes of commentary. That won't be a problem. But we shouldn't do a single thing. Not a single thing. Not a single thing. It's too funny. It's too funny. Look at GDX. So, again, let me bring up my chains. We did GDX on, when did we do the original trade? Was it 9:30? It looks like maybe it was 9:30. Let me see here. No, that's not right. Hold on. I went inverted on 10:13. So here's the inversion. Yeah, because we went to the straddle. Okay, so this is moving to the straddle. So the top magenta, hold on. Let me color code this. So the magenta circle is the inverted strangle. The glacier freeze circle is moving into the straddle. The yellow, it looks like the yellow circle is rolling the whole thing out in time. So the original Strangle, and then the original trade, which will make we don't even have any colors left. We'll do a little lilac. November 8th. There's your original Strangle. It's too funny. It's too funny. So we should still be in the original Strangle. I'm saying this jokingly, of course, because making the adjustments and whatnot, that's the prudent thing to do. But it's just too funny. There's a reason why doing nothing is my default setting. There's a reason why I love to lean on the do nothing strategy so often. It's really, really effective. I know it sounds dumb. I know it sounds crazy. But I'm just like, I don't know, man. The markets live and breathe. The markets move around. They ebb and flow. Hey, don't tell anybody I said this, but prices might even mean revert. Again, I'm just tossing it out there. This is just a friendly little secret between me and 500 friends. Just don't rat me out. For this 9-8 Strangle, though, man, we should have done nothing. We should have just sat tight. It's unbelievable. I really can't believe it. And so anyway, now what are we going to do? Well, now we're not going to do anything. So now I'm definitely going to do nothing on this inverted Strangle. And let's see if a little bit more time can kind of peel off the calendar here to maybe we get a little bit of a bounce in GDX. That would be really, really nice. And that would be really, really solid. So GDX, we do nothing. And we kind of lament having actually done something when we should have done nothing. But look at, look at Rigetti. Wow, Rigatoni. Look at this thing, man. Look at this thing. So it's up $2 today. We are, I can't believe it, man. I really can't believe it. Rigetti was, let me bring up a chart here. Forget the lilac and stuff. Let me bring up a chart of Rigatoni. Nah, I don't want a 5-minute chart. Give me like a daily chart. Give me a daily chart. Yeah, this is fine. This is all I can't remember when I put the trade on. Doesn't matter. Look at Rigatoni though. This thing was all the way up to 57, 58. This thing was all the way up to 58. Now, what did we do when it was all the way up to 58? We went inverted and stuff, so we did a couple of things. But what did we ultimately do? What did we mostly do? Nothing. We mostly did not a single thing. And look at where we are now. Like we started at the bottom and now we're here. I think that's a Drake lyric. Or maybe that's also a Nick Jonas lyric. I'm not sure, but we started at the bottom and now we're here. And look at this. We are about to get out of this position for a scratch. I can't believe we're only down like $3 on the trade. That's crazy. When Rigatoni was at 58, 59, $60. That's some pretty wild stuff, man. And so for right now, we sit tight, we do nothing. And we got to trust, we just got to trust Scott Bakula to get us out of this quantum leap. I mean, he's done it so many times, right? I mean, I think I've seen every episode at least twice, if not thrice. I mean, he was quantum leaping through the 90s on USA. He should be able to help us with this position. I would imagine so. And so anyway, so that's our Rigatoni commentary. And then what was that guy's name? What was this guy's name? Guys, help me out. His name was Sam, right? In the show. Guys, help me out in the chat. This is going to bother me all day long. Please put this in the chat. The dude with the little, like the Palm Pilot or whatever, like his little computer thing that helped him go through the different realms or times of the year or not times of the year, but times of like history. What was his name? Scott Bakula's name was Sam, right? Or was his name Sam? Anyway, I need the names for the lead characters in Quantum Leap. I think Scott Bakula was Sam. What's the other guy's name though? The other guy's name was something really cool. Like Jarvis or something. I don't know. But help me out with what his name was, because it's really going to drive me bonkers. But anyway, all right, where are we at? Oh, we're about halfway done with the shots. Perfect. That's pretty much all I wanted to talk about. I thought about maybe doing a GL. Do we want to do a GLD trade? Yeah, let's do a GLD trade. Let's see. I see you guys hooking me up in the chat, so thank you so much. Oh, there we go, Alex. Okay, Anderson, I see you, and then Alex at the very end. It was Sam Beckett, and Al was the assistant guy. Okay, there you go. So Sam and Al, that's good stuff. Very, very good stuff. All right, thank you very much, my friend. That would have really bothered me all day long. I mean, it would have bothered me for 3 seconds until I Googled it, but that would have been a really difficult 3 seconds. So if I go into GLD, though, so gold's getting beaten up pretty badly today. I mean, where are we at now? Is it rallied even more? No, it's right about the same. So I'm kind of thinking, I mean, it's so interesting, man. It's so interesting, right? You go on the morning show, right, with a little Tony and Nick. It's like, all right, now all of a sudden we're momentum guys. Very interesting. Very, very interesting. Now all of a sudden we're buying them high and selling them higher. I'm like, okay, all right. I'm not going to do that, but you do you, boo. Like, you go for it, my friend. Go for it. We're momentum bros now. Like I didn't even think that was possible. But anyway, for GLD, and you can check the tapes on that, by the way. Also not my opinion. GLD, let's see here. It's gotten beaten down pretty badly the last couple of days. I actually do think that it's due for a little bit of a bounce. I do think that this is a little bit overdone, like it's a little bit overcooked. And so it's very similar to Daddy's Chicken in that regard. But I'm really thinking here, let's play this thing to the upside. And, what if we sell a 367, 362 short put spread? I mean, this is it, man. This is kind of the Betty Crocker strategy for the defined risk category. The vertical spread, right? Where you can sell a vertical spread if you want to be short premium. You could buy a vertical spread, of course, if you want to be long premium. But generally speaking, if you want to put the probabilities in your favor, short premium is going to make a little bit more sense than long premium. Normally if we're going to buy a vertical spread, we're kind of buying an at the money vertical spread. We do that often. I'll probably do it this week for some of the earnings that are coming on down the chutes. But selling out of the money vertical spreads is a great way to build up a little bit of positive theta. Not usually a ton, but a little bit. I mean, you can see right here, we're only getting about 35 cents or so. So I'm building up a little bit of positive theta. My probabilities are still north of 50%, so that's good. That's positive, of course. And it just gives me a way to take a directional shot without having the undefined risk exposure. I don't have a situation where there is no safety net. I don't have a situation where, I've taken the training wheels off of the Schwinn, and now all of a sudden I'm out there with all the 9-year-olds on e-bikes. It's like, man, that's some dangerous stuff. That's some real dangerous stuff. And so for us right here, there are no 9-year-olds on the road on e-bikes. Now you've just got 30-year-olds on e-bikes, also on the road. Sometimes the sidewalk, sometimes the street. You just don't know. You've got to really get in there to kind of see which way they want to play it. But for us on this short put spread, I really like this as a way to play gold to the upside. And I don't know, are we playing momentum now or are we playing contrarian? I'm not really sure. So I'm going to try to check both boxes now. I'm going to try to ride the line of kind of being in both camps. It's like, yeah, I'm a novice backgammon player, but I'm also a little bit of a professional. And so I'm going to let you kind of try to figure out where you think I'm going with that. And okay, so it looks like did Autumn internet connection is unstable. Oh no, we're back? Okay, hold on. So we're back? Oh no, is Autumn not paying the internet bill? Let me try to send this. Okay, so we're back. Thank you, John. Let's see here. If I do, no, my internet's been, okay, there we go. All right, so we got filled on GLD. Okay, so we're back. And so, yeah, I don't know what's going on. It's funny, like, yeah, me plus it's brutal. It's brutal. And so, all right, we're back. I still see you guys trolling me though in the chat. That's good stuff. All right. So thank you, John. Thank you for letting me know. It looks like we're back. We're good to go. And yeah. All right. So we did GLD and okay. So we're good. Let's go ahead. We're back, baby. Let's go back to let me see if I can't surprise and delight somebody. I see you guys at the end, by the way. I see you guys laughing. I see Mike Evans. Hold on, this is pretty good. Mike Evans says, Dr. Jim, Allison changed to Nick Jones in the same sentence. Lane may be rolling over in his grave. He may be. But he's got to understand it's 2025 now, right? I mean, you've got to shock the muscle. You can't expect the muscle to grow if you keep doing the same thing, right? And so you've got to do a little Wood with a little Nick Jonas. You've got to do a little Man in the Box with a little Call Me Maybe. Like, if you're not really kind of mixing it up like that, your muscles are just going to get stale, man. They're just 100% going to get stale. And so anyway, let's see here. Where are we at? I see you guys. Let me see. Oh, here we go. Okay, Danish Dynamite is in the middle. I'm trying to prioritize new people. I'm also trying to prioritize, things that might have some relationship to actually trading. We talk about plenty of things that don't have any relationship to trading. And so Danish Dynamite says, hey, Dr. Jim, I hope all is well. What shorts would you put on if you had to? I'm currently 300 plus beta weighted delta short, have time in my positions and feel pretty good, but the P&L open bros are after me. Yes, well, so first and foremost, you got to be very careful with the P&L open bros. Because again, I mean, you think those 9-year-olds on e-bikes on the sidewalk and the street are dangerous? The P&L open bros are worse. They are more dangerous than that 11-year-old going 37 down the sidewalk coming right for you. And so just be aware of what game you're playing. It's a dangerous game. So what do you do? Well, you asked me, what shorts would you put on if you had to? I mean, you're already short, you said, right? Yeah, you're beta weighted delta short. Now, again, the 300 delta, it's hard. I don't know what that means and I talked about this just recently when I talked about the leverage pieces and understanding your directional exposure and things of that nature. It all ties back to account size. It all ties back to account size and how much leverage you want to carry. And I'm not going to go through that again today because we just did this recently. But 300 beta weighted delta, if you've got, a $10,000 account, that's huge. But if you've got, $150,000 account, that's tiny. And so it's all relative to the account size. But what shorts would I put on right now? Honestly, and I know this sounds crazy, and don't tell the Batistas I said this, but to me, when I'm looking at the overall market, it's hard to see upside potential at this point. Now, I know that sounds crazy. That sounds totally crazy, especially with the China trade deal and you got big earnings, you got whatever. But again, I'm going to kind of restate what I said this morning with Tony and Nick. What is the thing that's going to do the most damage to us as premium sellers? What is the thing that's going to do the most damage to us as undefined risk premium sellers? It's going to be the big move that gets away from us. That's going to be the thing that will do the most damage. Again, if you're doing defined risk and things like that, then that's not really going to be an issue for you. But I think, if you've been following this show for a long enough time, you know that I firmly believe that, in order to achieve the things you're trying to achieve in the market in terms of, profitability, consistency, predictability to some degree, undefined risk is going to be the thing that's going to actually get you where you're trying to go. But that's actually a separate conversation. We're already a tangent within a tangent at this point. When it comes to undefined risk, though, the thing that's going to do the most damage is going to be the outlier move that gets away from you. If I think about the next 3 to 5% in the market, do I think it's more likely to happen to the downside or the upside? I would definitely say the downside. Now, you also have to be aware, right? Full disclosure, full transparency. I've been saying that for a while now. Well, I've been kind of mixing it in with some if you beat them and join them, blah, 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 blah. But we just saw that ES just rallied, 200 points in 10 days. So there's your 3% move right there. But right now, especially with big tech earnings, so many things, it's all priced to perfection right now. It's all priced to perfection. I don't think it's going to take very much, as evidenced by the Trump tweets. Like, that's what's so crazy to me. The Trump tweets that everybody knew he was going to walk back. This isn't Liberation Day 1.0. This was like Liberation Day 13.0. Like, we've seen the playbook. We've all read The Art of the Deal. I mean, I didn't read it, of course, but I had AI summarize it for me. It's the same playbook. It's the same thing, right? And so it's like, man, the fact that the market got so spooked, and I mean 1,100 points in the NASDAQ in one day, that's crazy stuff, man. That's crazy stuff. And so I see more opportunity to the downside than the upside. So to answer your question there, Danish, I would say, being short any of the major indexes is probably the way that I would play it. And who knows, in some stealth accounts, maybe that is how I'm playing it. You don't know. You have no idea. And so let's see here. Let's go ahead and where are we at? Can I surprise and delight somebody else? Where are we at? Oh, I see people say. You guys are making me laugh, though, man. You guys are making me laugh. Brian Dowdy says he blames the wife for not paying the internet bill. She doesn't pay it half the time. Like, you guys think when my video goes out and you guys think when my internet's shoddy, you think it's my fault? It's not my fault. It's Autumn's fault. It's 100% her fault. And so she'll get a talking to later. Don't worry about it. But let's go back to the beginning. And again, guys, don't worry about me. I'm fine. Don't worry about me. I'm fine. 0 delta. She sees the show. 0 delta. I can't tell you how 0 this delta is. Again, if you guys don't rat me out, we're good. We are 100% good. And so we're all in this together, man. But let's go to the beginning. Where are you guys at? Let me see here. Man, you guys are blowing up the chat, man. YouTube's going to be really fooled into thinking this is some good stuff, and they're going to push it out to some people that are going to be looking for some good stuff. And boy, are they going to be disappointed. So Sam L says, happy Monday, Doc. What's going on there, Sam L? Back to the charts, caffeine, and chaos, man. Let's go. The P&L Open Bros are still recovering from last week's educational losses. Yeah, we've really, the P&L Open Bros don't have too much to go on anymore, for us at least. I mean, we've really kind of done some damage and done a little bit of work against the P&L Open Bros. Oh wait, not the Delta. But these guys right here, we don't even have any 4-digit guys right now. Now again, we got a lot of earnings this week, so that's going to change. But for now, at least, it's looking okay. So that's some good stuff. So Wolf's in the house. Happy Monday, Dr. Jim. Let's have another great week, man. I appreciate you, my friend. Thank you for being here. Sam L says, Doc, with Polymarket nailing those earnings beats percentages, have they been nailing it? Interesting. Should we just start tracking how it performs instead? Might actually be a better tool for our earnings trades. And then Sam L goes on to say, honestly, what are we even doing here? I don't know. Let's test it. Tomorrow, PayPal's got an 83% chance of beating earnings. Is PayPal tonight or tomorrow? Like, is it something we play today or we play tomorrow? Let me look and see. Oh, it's tomorrow before the bell. Okay. All right. So PayPal before the bell tomorrow. I don't know, guys. What do you think? A little warm-up set before the rest of the heavy hitters this week? Again, nothing crazy, just a light set of extensions. Let's get the knees warmed up. Let's kind of get the joints ready to go. We're not drawing blood. Like, there's not going to be anything crazy going on here. Let's just kind of get a little light pump going. Just a bit of a sweat. PayPal, PYPL. Stock is at 71. It's up $1.40 today. I mean, do you still use PayPal in your neck of the woods? Are you not using Venmo? Are you not using Zelle? Are you not using, Cash App and WhatsApp and, all that kind of stuff? I mean, people still use PayPal. I mean, that's what the boomers send to other boomers. And the boomers might even send to like a Gen Z or whatever. But the Gen Zer is not going to respond with a PayPal transaction. The Gen Zer is going to go with some kind of TikTok transaction. Or whatever they're calling that these days. I don't even know, because maybe I am kind of like a boomer. Somebody this morning thought I was a boomer on the show, on the Skinny on Options Abstract Applications. And I'm like, wow, really? Is it that bad? Like, I understand that we're looking a little weathered, but man, I am a proud millennial. And so PYPL, I'm thinking, let's just keep it pretty buttoned up. I think let's go to December. This is going to be very buttoned up. Let's go to December. Let's do an at-the-money vertical spread. So very simple, very straightforward. We'll save all the crazy stuff for later on in the week. I mean, tomorrow's going to be wild because we've got, all kinds of things that we can do for the Fed, of course, because I have to think about that now. Because I haven't been able to trade a Fed day with you guys, because normally we would have today's assignment on Wednesday. And today's assignment has since been put out to pasture. And so now it's me with you guys. But I'm going to be with you guys at 2 o'clock. And so, do we just jump right in and start trading the Fed number? Or do we put it on the day before and just kind of let it marinate going into the number? I don't know. I'll have to figure that out tomorrow. But I think for PayPal here, let's keep it really simple. Let's just do, let me buy a 75. We'll sell a 70. Now let's do a 72.5, 67.5. That looks a little bit better. Still about a 50-50 shot, but we're only paying $231 for it. So I pay $231 for it. I can make $269, and it's just a straight plain vanilla downside shot. 72.5, 62.5 in PayPal for earnings. And again, this is in the December cycle. So if it doesn't work, we'll just sit on it. And if it does work, we'll see how much it works by, so to speak, and then we'll decide what to do. Well, let me do a little bit of discovery. 235. No takers at 235. 238. Okay, so we got filled at 238. Okay, beautiful. All right, so thank you so much, Sam L, for some PayPal. I see Ashfin in the house. What's going on there, Ashfin? Brian Dowdy, what earnings are we going to play? There you go. We got some. Autumn just texted me. I paid the internet bill. There you go. See, I told you guys. I should show you guys this text. She just said I paid the internet bill. No, she actually just said I spent $300 on groceries. But anyway, hopefully she paid the internet bill too. And so far it looks okay. But Ashfin in the house, what's going on there? Brian Dowdy, appreciate you. Sam L, SoFi has an 81% chance of beating earnings. SoFi has earnings? Because we have a SoFi position. Hold on. Does SoFi have earnings coming up? Oh, wow. Well, look at this. Oh, man, that's a good call there, Sam L. I'm taking this off. I wasn't going to, but I'm not leaving this on. No way, man. I'm not gonna subject this to the chaos that is earnings. Let's just book the winner. Yeah, I'm going to be done with that. It's economically significant. It checks all the boxes. Let's just kind of be done with this guy. $1.67. All right, so we got filled on SoFi, so we're out of SoFi too. So that's good stuff. So good looking out there, Sam L. I appreciate you. Let's see, Greg Lutton in the house. What's going on there, Greg Lutton? I know I owe you an email, my friend. I appreciate your patience. Joe YQ in the house. What's up there, Joe YQ? Daniel Perkins. What a rip today. The P&L open giveth and the P&L open taketh away. That is correct, my friend. That is correct. And again, if you're brand new to the show, anytime I get on my high horse, I get on my soapbox about directional plays, about earnings, about the market, about whatever, you need to be on the other side of that trade. And so very recently, just earlier in the show, I talked about seeing the downside in the market. I talked about the opportunity, and I laid it on thick. I laid it on good. You need to be on the other side of that trade. And so again, that basically cements the next 3% of the market is indeed going higher. And so we talked about this just last week. You got the Santa rally, you got the Thanksgiving rally, and of course you've got the Halloween rally, which begins this week. Halloween is indeed on Friday. And so there you go. Brian Dowdy says, what about UPS? I'm going to pass now, man. We've already got enough things cooking for today, I think. And I need to be cognizant of what's going to happen later on this week. And so let's see. Rancid is in the house. Rancid Viper. What's up there, Rancid Viper? Appreciate you. Anthony Hoyt, I should say. How has PayPal performed on positive earnings news in the past? I don't know. You could probably look that up though. A quick little AI deal would probably kind of give you what you're looking for there. And yeah, I don't know that off the top of my head though. Let's see. Mike Evans, no joke, Gus. I liked your idea of watermarking anything created by AI. That would be a really smart way of doing it. But then obviously AI is going to figure that out. And then what's AI going to do? It's going to start removing watermarks, right? It's going to 100% just start just kind of that watermark is gone, right? What watermark? I don't know what you're talking about. And so, yeah, but it's a good thought in theory, at least. Let's see. Retired Fido in the house. Doctor, do you look at GEX levels? No, I do not. It's an interesting concept though, with gamma flips and net gamma exposure of dealers and things like that. I think there could be something there. I don't look at it yet, but I'm intrigued by the prospect, and it's actually on my list of things for continuing education, if you will. I'm yeah, that's all kind of, I understand the concepts, of course, but in terms of the actual practicals and the implementation, I've never gone down that road fully. And so that is on my list of something to look into in let's say the next 4 to 6 months. And so you guys might see some skinny segments on that in the future. Let's see. Sergio's in the house. What's going on there, Sergio? Mike Evans says, scrapping? Sports data is not illegal. Scarping people's personal data is illegal. Oh, that must be a previous conversation that I'm just kind of stepping right into the middle of. But let's see. There's Danish Dynamite. Let's see. Mr. King, Legend Jim. Man, I appreciate you, my friend. I don't know about all that. I'm currently holding an inverted strangle on IonQ. Short the 70 call and the 75 put expiring November 21. The position is already down 1,600. How can I manage this trade? Well, I don't know how much you've collected. That's an important piece to the puzzle. So, okay. So you're short the 70 call and the 75 put. So you have a $5 wide inverted strangle. The stock right now is at 63. So obviously you're still bullish on the stock. You need it between your strikes. So what do you do now? Do they have earnings coming up? Okay. So November 5th. Okay. So this is actually going to be pretty easy in my opinion. You got to get out of it. Between now and November 5th, you got to be done. In my opinion, you're getting hurt on the position, 1,600. And again, that's all relative. 1,600 on a $10,000 account. That hurts a lot. 1,600 on a $50,000 account doesn't hurt as much, obviously, but it's still, it's painful. There's some pain there. Don't get me wrong. Taking an underwater, undefined risk position like what you have into earnings, to me, is a big mistake because you're just asking for a total catastrophe on your hands. Now, could you get the perfect move and get bailed out? Of course. And if you roll those dice enough times, that will happen to you. But by and large, it doesn't seem to make a lot of sense to me when it really is more or less a flip of a coin, right? Because nobody knows how things are going to react. Now, again, Polymarket apparently knows or whatever, but it's still, how is the stock going to react? Like we've seen so many instances where you get a double beat, you get a triple beat, you get a whatever. I'm not sure what that third thing would be, but you get that triple beat and then the stock just gets clobbered. The stock just gets hammered, right? Because they said one thing in a conference call or there was a slight pause when the CEO answered whatever question or whatever. And so it can be really granular like that. I would hate to see that $1,600 loss turn into a $4,000 loss. Again, it's your call at the end of the day. You have to make the decision. But personally, taking undefined risk positions that are underwater through earnings is not something that I do very often. So that would be my suggestion there. Let's see. Sergio's in the house. Gasman in the house. Dr. Jim, big down move on lean hogs. Is there a play to the upside? Man, there's always a play to the upside on lean hogs. I don't have enough time to look at it right now because I only have a minute left, and I can't tell you the last time I've traded lean hogs. And so that's more something we talk about in theory, less something that we might do in practice. But again, being a little contrarian, I don't know, maybe you play the bounce. Maybe you play it to the upside. And so, man, I'm like out of time though. Man, I'm out of time. Look at you guys. I appreciate you guys so much. Paul Heyman snuck in at the end of the show. Look at Whiskey Richards. Look at Dan Ducarn, man. Look at Anderson. Man, Lion Forrester, Steve Aguilera. Man, I appreciate you guys so much. Appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table.
If you had to swap jobs with anybody in this office, who would it be and why?
I would like to swap roles with Vanetta for a day, just so I can, talk smack about Tony and Tom for like a full hour in the morning. That would feel kind of nice. Just like a roast to start my day off.
Oh, God. That's a good question, actually. For a day? Forever?
Ever.
Forever?
Ever.
Oh, no. I mean, Tom has a hard job. He's got to wake up really early. But he gets the privilege that he gets. He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table. He can pretty much yell at anybody. He gets first dibs at the lunch line. I think I would, maybe Tom, but I probably wouldn't last very long, yeah.
Probably Dylan Radigan, because he lives in Italy. And I live here in Chicago. So, yeah.
What's going on, everybody? Markets are flying around on the hopes of a U.S. and China trade deal. There's a lot moving there. We'll talk about what's going on. Qualcomm. Oh my God, did you see that stock rip today? It was up like 20% on news. We'll talk about what's going on there. And then finally, not to be outdone, AMD had its own bit of news that sent the shares flying earlier. So we'll talk about those three things and more. We'll talk about the week that is just basically like a Super Bowl week. I mean, it's essentially what it's building up to be. And we'll talk about some of the trades that we've been putting on recently and the things that we're seeing moving around. Welcome to the most dangerous show on the Tasty Live Network, folks. It's Engineering the Trade, and I am your host, Jamal Chandler. Hope you had a great weekend. I had a phenomenal weekend. It was awesome. My two college kids were actually home for the weekend. Both of them came to see my son play his game on Sunday, yesterday. Get to that in a second. We also went to a game at DePaul women's basketball, actually. I don't know if I've told you this before, but we have a good friend who is the coach of the University of University of Wisconsin-Milwaukee. She is the women's coach, and usually when she comes to games in the area, we go and try and check them out. And they played against DePaul women's team. It was a pretty good game, actually. Our friend's team was getting handled early on. The DePaul girls, I mean, you know, they were tough. They were tough. They were playing them tough. And our friend's team, UW Milwaukee, bounced back, man. You got to give them grit. That's what life is about, bouncing back, right? Even when the chips are down. And that's what we had to deal with on my kids' football team. I mean, the chips were down a little bit. We won 6 in a row to start the season. We lost 2 back-to-back games. Tough losses, too, especially the one last week where we lost in overtime. But we came back this week, and we put the boom on the team that we played this past weekend. Great job. The team finished 7-2 in the regular season. Nice job. That's right. Nice job. It was awesome. Very proud of them. And now we got playoffs. We're waiting to see what the bracket releases, who we're going to play. I got to tell you this, though. We didn't play this team. We didn't play the guy I'm about to talk about. We didn't play them this season. We played them last season. Very noticeable, this guy on the one team, this other team that we played against, the coach. Very boisterous, loud dude. He shows up at our game scouting for next week for playoffs in case he was going to face one of the 2 teams that was playing, us and the team we played against. But yeah, this coach from this other team that we played last year saw the guy. I'm like, this guy lives 40 minutes away, and he showed up at a 12-year-old kid game to watch these football teams play. And mind you, the teams usually give each other film beforehand. They share film. It's like, man, you don't have anything better to do on a Sunday than show up and watch a kids game? That's not where your kids aren't playing? You're not just to scout? Come on, man. Be serious right now. Let's pull up the slides. Let's talk about what's going on today. Markets are flying around because, Trump's in Asia, and he's there to talk with President Xi. And they've been saying since yesterday, over the weekend, they're saying, well, they've reached a framework for a deal. Last week, we were saying, I don't even know if we're going to have a deal. Now they're saying, well, they're reaching the framework for a deal. And there's a lot to discuss, right? You know, tariffs and the purchase of soybeans, which, by the way, are moving big today. We'll talk about that. And other things, rare earths, if you will. If you've noticed, rare earth stocks are getting slammed today. Pretty big. You wonder, I don't know how much that trade is going to ebb and flow. I really don't. I do find it interesting overall. But a lot of those are getting slammed. Gold has been getting slammed. Gold is one of those things where they've been saying, China's buying up gold. Central banks, and specifically China, central banks are buying up gold. So I think that's what you're seeing here, a lot of release of that pressure on some of the metals and some of the other things that have been sort of held hostage, if you will, whether positively or negatively, through this U.S. and China trade war. There's a lot with that, right? So a lot of stuff moving on there, but I don't know. I think we're going to hear more throughout the week. I believe they talk on Thursday, so stay tuned. Qualcomm, oh my God, did you see the stock move this morning? It just literally, the headline drops and boom, stock just shot right up about 20%. Supposedly they're going to have a debut of AI data center chips. Now NVIDIA's basically had the lock on this, so they're trying to eat into their dominance. I was surprised that NVIDIA stock didn't move at all, really, on that news. But it's Qualcomm. It's another name. And I tell you what, I keep saying this more recently. I find myself saying this a lot. When it comes to gold, when it comes to rare earth metals, I've been in this game for 20 years. I've seen a lot of things. Rare earth metals, I talk about 2011, like late 2010 to 2012. Those stocks are moving around a lot. 2013. For those of you who trade in a long time, if you know what I'm talking about, Molycorp was like the epicenter of the rare earth metal movement back then. MCP was the ticker. Doesn't exist anymore. Gold, 2010, 2011, huge bull move in that. And gold and silver, big moves, similar to what we're seeing again. Again, I don't think these things repeat. I don't think you can time and repeat these things. They just rhyme, and they're similar. Different reasons for what was going on with rare earths versus now. But same. It was still a China-U.S. thing. There was no battle back then, though, right? Very different administrations, very different the way that things were handled. So I think that's really then in itself is the big thing, the big differentiator, how things were handled during a different administration versus how they're being handled during this administration. And I think that's why you're seeing the movement that you're seeing. So keep that in mind. I don't think there's no playbook. There's no playbook, compared to what happened before. But nevertheless, just understand what's moving these things, right? And clearly in this case, as you see, silver, gold, these rare earth metals kind of moving down today. I think a lot of it has to do with obviously the relationships between U.S. and China. You can't doubt that. Finally, the AMD, not to be outdone, announced a $1 billion partnership with the Department of Energy. They're supposed to be building 2 supercomputers, obviously using AMD chips. Stock moved a little bit on that earlier, kind of faded, didn't do the Qualcomm move, but nevertheless, it did do a big move. So it's quite fascinating. I feel like every week we come in, we hear about a new deal with Qualcomm, with NVIDIA, with OpenAI, with AMD, and it's all centered around AI, right? Like AI data center chips, supercomputing and AI partnership. It's probably a little nerve-wracking when you're long these stocks and you're wondering like if this is going to be the case. Do they need to keep announcing deals to keep the bid going in these names? I don't know the answer to that, but tread softly. Be careful out there. Leftovers. YouTube leads TV streaming in the United States. No surprise there. Let's move to the next slide. Chat, what's up, people? How you doing? Howdy, Rancher. What's going on? Scramble everything. What's going on? You have M fan. So you're Michigan, I assume you're talking about? I'm a UM fan, which is Miami. I always make that distinction between UM and U of M, Speaking of college, I tell you, these buyouts, they're getting out of hand. They are getting out of hand. This week, of course, the most popular one is Brian Kelly is getting basically a $50 million buyout to leave. Can I make a campaign right now? Right now. Look, there's nothing, I'm not one of these people who puts the blame all on one person. As you know, I'm a University of Miami fan, and everything's great there. And trust me, it wasn't great not that long ago. Things were really tough. And now my other team, the University of Wisconsin, is going through a similar thing. It's very tough. It's very tough. You get spoiled by winning. And I've told my wife this plenty of times. Obviously, that's where we met. She went to undergrad and grad there. I went to grad there. That's how we met. So that's her number one college team. University of Miami is her number 2. Miami's my number 1 college team. Wisconsin's my number 2. But I often said to her, this is what happens when you win. When you win a lot, you get spoiled by winning, and it seems that that's the case at LSU. Dude, they're 5-3. He's 31-14 since he's been there. It's not terrible, but it's just not the measure of success that they have. They've won national championship more recently. They're used to 1-loss, 2-loss seasons. You already got 3 losses. You got to go, I guess. And so, yeah, it's. I just want to make an open campaign for Brian Kelly to come back to the Midwest, bro. Come to Wisconsin. And again, I don't. It's not all Luke Fickell's fault. I'm sure there's other people at play. But come to Wisconsin, man. We'll take you. That dude can recruit. That dude can coach. Come to Wisconsin. Come on. Leftovers. This is a chart of share of total television usage by type in the U.S. Streaming, 45.2%. If you haven't cut the cord yet, what are you waiting for? Why not? You're still paying like $300 a month for cable? Come on. 22% of the people, 22.3% of the people. I bet you could do this with demographics and age too. I bet you easily could. You easily could, right? 22.3% broadcast TV. How old are you? You know what I'm saying? Other 10%, I don't know what that is. Are you watching on the internet, I guess? I don't know. Internet websites? I'm not sure. So within that, the interesting thing here is within the streaming of the 45.2%, how does it break down? Well, YouTube is 12.6%. Netflix is 8.3%. Watching that Philadelphia Mob show on Netflix right now, really interesting stuff. 4.5. I can't tell if they're if they're perfectly casted actors or if these are like real people, but they are real people. There's pictures of them from back in the day, and it's wild. They look like they're right out of central casting for a show about the mob. I'm telling you. 4.5% Disney Plus, 3.9% Prime Video, 2.8% Roku. We used to have a Roku. I feel like Roku's going to, I don't know, somebody's going to get Roku, buy it up. Tubi, 2.1%. I forget who owns Tubi, but Tubi is actually owned by like somebody. It's one of these bigger ones own it. And then 11% are the others, you know. I mean, God, take your pick. Apple Plus probably is in there, and the others, and whatever else you can figure out. Oh, man, Prime Video also, too. The John Candy documentary. Watch it immediately. Put it on your list. Watch it this week. Really great stuff. If you don't know who John Candy was, well, I think if you're watching my show, you probably know who John Candy is. But it was just fantastic. Loved it. Loved John Candy, too, man. He was great, man. So, yeah, Disney Plus obviously includes... Disney obviously includes stuff on Disney Plus, ESPN Plus, and Hulu. But, it's what it is. It just shows you... the Disney Plus obviously includes the stuff on ESPN and Hulu. But yeah, it shows you YouTube is running things right now, and you imagine, I wonder if they're going to grow or if it's going to shrink or something else is going to enter the market. You just never really know. Let's move to the next slide. Soybeans is the biggest move we've seen since February. Big move in soybeans today on this idea that China is going to start purchasing soybeans. They don't have to purchase U.S. soybeans, but I think this is part of the deal. We'll see if this leads to more action here. Soybeans had been kind of in a rut. A lot of the grains have been in a rut, and a lot of them are moving today. There's been no mention of China buying wheat or corn, but I think they're just catching a bid because the grains overall are catching a bid today. So really interesting stuff there. Let's move to the next slide. So I've shown this recently, the forward curve. You know what's mostly going on this week and the next week and whatnot. But I just find it fascinating that the FOMC is pricing very little volatility. On average, I think we've seen like 1.6% moves on that day or that type of range. Right now, it's pricing in a 14 vol, which is less than 1%. You think about it in the rule of 16. For those who don't know about the rule of 16, you divide the VIX number by the square root of 252. Why 252? It's the amount of trading days in a year, right? It's not 365. We trade Monday through Friday, 252 days. Square root of 252 is about 16, and that's kind of what because square root of 256 is 16, right? So it's like 15.84 something. We just rounded up to 16. And if you divide the VIX current number by 16, that is telling you the amount of percent moves in the SPX in either direction on any given day. So right now, if the VIX is trading 16, you divide it by the square root of 252. That's 16 basically divided by 16, which is 1. 1% moves in either direction in SPX. This is forecasting less than a 1% move. And I just told you that most of the FOMCs this year have been a 1.6% move. So yeah, this thing's pretty underpriced. You know what is not is Friday, which is the end of the month. And we might get PCE. I'm not really sure. Kind of fascinating. Let's move to the next slide. Got a lot of earnings this week, folks. This is third quarter earnings reporting by the week. You saw the early reporters. You saw week one, which was essentially where we had the banks. Then last week, and then this week we got 43% of earnings by sector reporting this week. A lot of the S&P. And matter of fact, of those four, like the five names that we have, they represent, gosh, how much is it? I think 1/4. I can't remember. I think about 1/4 of with Google and Apple and the like that are reporting this week. I think it's about. Let me see. I know I saw a number earlier. It is 1/4 of the S&P 500 market cap, with Microsoft, Apple, Meta, and Amazon reporting this week. Microsoft, Apple, Alphabet, Amazon, and Meta reporting this week. So yeah, a lot of names reporting this week, as you can see here, and then it starts to die off. So this is the week. This is like the Super Bowl for the stock market, at least for this quarter anyway. It's a major week. Let's move to the last slide here. Obviously, I'm not going to fit all the earnings on the slide here, but we do have earnings from NXPI, from Avis, from Waste Management, Rambus, Nucor. Nucor, I'm just thinking about FCX, what the earnings did recently. There's some of the metals I feel like have been moving on earnings. BBY, I don't even know where that stock is trading now. Does it like come back to the market or something? I don't remember. Whirlpool, FFIV, METC is one of the rare earth names. I don't know if they move on earnings, but I think we're going to find out on some of those really soon because I feel like MP might have earnings next week. Yeah, I know they're all coming up. We'll see if they move on earnings or not, or do they just move on basically U.S.-China relations. SoFi has earnings. UNH has earnings. PayPal, little housing market, and DHI, and Wayfair has every style, every home. Microsoft, Google, Meta, and Amazon, and Apple all have earnings this week. FOMC and Bank of Canada have their policy meetings on Wednesday. BOJ and ECB have their policy meetings on Thursday. Trump and Xi are supposed to be meeting on Thursday. I imagine that's happening before we all wake up. Not really sure. And then we got the end of the month on Friday. Number of S&P 500 stocks above the 50-day moving average, 277, 55%. Up 10 from Friday. Woo! Busy week. Let's move to the platform. Busy week. What's my take on the gamma exposure in 0DTE? I think I think there's something there. Where there's smoke, there's fire. And so for those who understand, the question that is being asked is, from all the people who are trading 0DTEs and all the market makers taking the other side of those, are there situations where they're going to have to hedge? I think it can be a factor only when markets get a little scary, right? Like only when you have a situation where there's really it's like some kindling for the fire and markets are getting very scary at certain key levels. I think it's interesting to know, but to know where the gamma exposure lies is what I'm trying to say. I think it's interesting to know where the gamma exposure lies, what levels. But I don't think it has a huge effect day to day on markets, right? I think it's just only at certain times. Jamal, YOLO, the betting port on the Chiefs tonight. Who's the game tonight? I totally forgot. NFL Monday Night Football is Chiefs and who is it? Washington, and it's at Chiefs, right? I mean, why would you look? That's why they play the games. I get it. But why would you not bet on the Chiefs? And why would you not bet on Mahomes and Monday Night Football? Why would you not? I hope Mahomes doesn't have a good night. I hope Debo does a little something. I got a little fantasy situation going on. I'm winning in the game, I think, by like 15. How much am I winning by, actually? I need to see. Not that I can do anything about it, but I'm winning in a game, I think, by 20 points. And I have Debo going, and he's got Mahomes, and who the hell is B. Smith? Random running back? Wow. Did he do anything last week? Yeah, I don't know. I mean, I should be all right, but this is one of those leagues where, like Mahomes, he throws like 4 touchdowns, bro, like quickly, easily. I don't know. I'm a little worried about that. Anyway. Oh, man. How about Tesla today? What a move, huh? I had a long call. If you remember, I had the 475 calendar spread from earnings. Stock didn't do anything. It went down, actually. Remember? And so I still had that call, and it was gaining some value this morning. And so I ended up selling the 465 calls against it, turned it into a call spread, short call spread. We'll see how it works out, but I'm collecting 285, I think, overall for the spread. No. Yeah, 285 overall for the spread is what I collected. We'll see. What else is going on? Deer, I think I need to close this. This is a calendar call spread I've had on for a while, playing the rebound in the stock. It has been working more recently. Currently, it's 475. Sometimes when these things, and my short call is actually got a decent amount of value. I mean, maybe I hold on to it for a little bit. I don't know how much more the stock is going to run. I could close it out now. I'm up 70. I'm up basically 70%. I don't know. It's been slowly grinding up. I was thinking about closing it out before I got on the show, but now that I'm sitting here talking to you guys, I guess I could leave it for a little bit. I'm not tripping. MP, I do have a position in here. I'm short a put. I haven't moved it yet. This is roll week. Let's start there, right? This is roll week for a lot of us. 25 days, as you can see, on a lot of different options here. One thing I did do today, I had Newmont. We see the bounce in gold. You probably saw me with two different entries in MGC. And so one of the things, you saw me pound the table last week when we saw the big, huge move in gold. Oh, excuse me, that's not gold. This is gold. The big, huge move last Monday. I pounded the table. I thought it was stupid. Sure enough, here we are, right? 1 week later. And you can see that gold is really teetering on the edge here. Look at this. Look what's going on here. And I always thought that this level was key from this bounce on 1013. I always thought that the low there was always going to eventually be challenged, and sure enough, it was 40, 11, 30. And you can see that's basically where we're hanging right now, right? That is essentially the low. We're either going to come in tomorrow and this thing is going to be trading down 3% again, and it's probably scary and a little bit over, or it's just going to bounce off of this level. There's a lot of buyers that got in at this level here, and so they don't really want to capitulate just yet. But if for some reason we sell off hard, if we sell off, I should say, not hard, if we sell off first, then it's going to sell off even harder, because that means these buyers that bought on 1013 are going to be capitulating. So I like identifying areas. I think it's fascinating, and so I think there's a chance that it could bounce back, and that's one of the reasons why I got long today. At first, I didn't know what fashion was going to happen during the trading day early on, so I got long at 40, basically around 40.13, 40.11, around that area. It did fall through 4,000, and I thought, okay, it might be selling off here. It might do exactly what I was just describing, right? It might sell off, and then those buyers that got in it on this day might be like, I'm out, and then it sells off even harder down to like, who knows, 3,900 or something. So I decided to close it at 39.97 once it broke 4,000. But then it came back up, right? And so this has been sort of the action that we've seen today. It dipped earlier. Let's do a shorter time frame. Let's do a 10-minute. Dipped earlier this morning, right? And then came down here with some strong fashion. I closed it in this range. It started to bounce back, and it stabilized. And it stabilized above 4K, right? And so you could see where we've been trading for the rest of the day. I'm interested to see what it does overnight and the like. I have, I think, some orders in here just to see what it does. It did breach that earlier. Now I want to see. I think I'm going to hold on. Let's see what's the low. 39.85, 90. So when something is moving very strongly, I don't know how much you guys use sort of alerts like this. I use alerts a lot, especially when I'm trading something heavy. And so what I'll do, here's where real liquidity kind of happens. Instead of just saying what the last is and how it, obviously this is the bid and the ask, right? For those who don't know, this is the bid and this is the ask. When something is really selling off fast, it'll go through the ask. So what I want to know is if it drops below this low, which is 39.85, I want to know if the ask is less than that 39.85.9. Because if it is, then I think that means it's selling and it's going to hit a new low, and I just want to get out, right? So I just want to be aware of that. Gold is one of those things that trades overnight, so this is going to be one of those things that could wake you up in the middle of the night. We'll see what happens, but yeah, I'm really curious to see what happens from here, and I got something out. Hey Jamal, any thoughts on getting into a Jan Nov call ratio in BMNR? BMNR, huh? Yeah, this is one of those bit mining things, right? BMNR. Let's see. It's interesting. This thing's been kind of quiet more recently. Call ratio, right? You want to do the Jan 75, but buy the Jan 75s and sell the Nov 75s against the DEES 80s against longs as a play for the coming run in ETH. So you want to buy DEES 80s? Why so far up? It would be my question. Why not a little closer to the money if you're going to do this thing, right? Where are some of the recent highs in here? The recent high, this really hasn't breached highs in a while. 65, you could do something under the 65, huh? That was a more recent high. I mean, I would, a ratio. You're doing a Jan Nov call ratio, right? You want to buy the Jan 75s? Oh, Jan, you said Jan, my bad. You want to buy Jan 75s and sell those against the DEES 80s. I don't mind that. It's $5 wide call spread. And you want to sell no 75s. I personally don't like to do that far upside when I do. And basically what you're doing a ratio. So you want to sell both upsides. You want to sell the no 75s as well. Yeah, that's a little up there. I've never done a trade like this. Let me see how I feel about this. I don't know how much I love the risk. I personally would just do kind of a diagonal. If I really feel like it's about to run, that's personally what I would do. I don't know if I'd go out to Jan. Jan might be a little expensive. I would do something. If I feel like it's about to run. We could do whatever trade you want. But I feel if I feel like it's about to run, I'm going to do more of a diagonal, right? That's more my way of capturing the move that it's going to do to the upside. If I feel like there's more upside, I wouldn't want to sort of sell myself short at that 75 strike. I personally would just want, if I really think it's going to move to the upside, I'm just going to do a diagonal personally. Is ETH going to dip and continue playing with my mind? You think ETH is going to dip, huh? Oh, okay. I'm actually kind of long ETH. I'm long ETH A. Ooh, any other questions in here that I've seen? Oh, okay, I haven't seen any. Yeah, so what else have I done today? I did SPX one day call spread. So there's this new thing that maybe you've seen on YouTube every now and again. Check it out. Let me know what you think. I've been doing 0-day trades that literally the day of we post it. But I just bought the call spread today. Very simple trade. I figure we're going to keep going up, and we've largely have. We haven't breached my strikes yet, but I got long to 68.65, 68.70. It was just $1.10. Very simple trade. And let's see, I still have this meta on. I told you about the deer trade. I closed out TSM. That was a Strangle that I've had on for a little bit. Basically, this IVR came in to below 20. So I mean, it was like 21. So we closed it out. But any other trades I got, you'll see in the follow page. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, trade them often. I'll see you on last call. Peace.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Hello everybody, I'm back from my very brief time away. Wasn't here Friday. That was CPI day, the market shot higher, and today the market's shooting higher again to lifetime highs, this time because of Asian deal, the framework of a deal being agreed upon. This is going to be one of the biggest weeks of the year. We've got the presidential administration this week in Asia. We've got the FOMC on Wednesday. We've got basically every giant tech company in the US reporting on Wednesday and Thursday afternoons. I'm probably forgetting some other stuff. I mean, any one of those things would be a big week, but they're all crammed into the space of really just Wednesday through Friday is going to be monstrous. So having said that, let's catch up, see what's going on since I saw you last Thursday. Here we have, as usual, lifetime highs. We are blasting higher. This is the spider. And a couple of Fridays ago, we had this big plunge, and it shook that right off. Kind of stabilized itself for this week, and then another week, and then whoosh, up it goes. What's this line all about? What line are prices approaching now? Well, that just happens to be the upper line of this wedge that I talk about every day. So we were ambling within this wedge for the longest time, broke it, and have stayed beneath it ever since. And we are blasting higher and just about ready to tag that thing. Maybe it doesn't matter, maybe it does. When you're at lifetime highs, there's precious little to go on because the only thing that determines when the market will start falling is more sellers than buyers. That's it. Fibonacci extensions and such, I really haven't found to be anything magical about those. It's just vapor up there. So when does the psychology exhaust itself? So since we don't have any of that, I rely upon, if available, things like these principal trend lines that we track. So that's the spider, and that's where we are, boink, right there, just below that trend line. The Dow is also up. The amount the markets are varies widely. So for example, at this moment, the incur is up 1.63%, whereas the RTY is up 0.32%. So like, what is that, 1/5, something like that, of the amount. So pretty big disparity. Tech is still ruling the world, and the diamonds are on the lower end of the vivacious scale today. You can see here another lifetime high, been pretty much blasting higher the past couple of weeks ever since that one-day plunge, and kind of the same wedge setup there. Although in this instance, we aren't approaching the underside of that line. The IWM, as I said, is the weaker amongst the strength. It is up about 1/3 of a single percentage point, and it hasn't, unlike the others, it has not made lifetime highs. Just about everything else has. The small caps had their own record just days ago, right here, and it wouldn't take much to make another record, but it hasn't done so today. It opened strong, and it's probably going to close on the weak side, even with a net gain from Friday to today. We also, it's just kind of a footnote, we did do a little bit of damage to this ascending trend line last week. So it's this triangle that it's all about right here. How will it behave within the confines of that? Will it break to the upside like everything else? Or will it get back down to the briefly broken trend line and get to the other side of that? Now, within the strongest area, of course, continues to be tech and semiconductors. Here are the cubes, and they had their own little zone of resistance here, which we leaped above on Friday. I wasn't here to talk about it that day, but it just jumped right to the other side and has augmented those gains today. So there's our lifetime high there. And all these trend lines are anchored the same way, to the April 7 bottom. And across the board, with the exception of SMH, they have broken the uptrend. This has been kind of skirting the edge of it right here, fell hard a couple of Fridays back, and has blasted to lifetime highs, but remains beneath that sharply ascending trend line. So it's still, busted though it may be, it's simply changed roles. It's not supported anymore, it's resistance. The thing with these sharply ascending trend lines is that you can really move a lot higher without conking your head against resistance. Digging deeper into tech, of course, the king of kings here is NVIDIA. It's not an impressive setup at all. It's doing well. It's the biggest company on the planet. It's up 2.2% today, all good things, but it is pretty sloppy as a chart right here. It's been pretty much a mess for months at this point. So not a very clean, you're just going to need a lot more, OpenAI deal announcements or fresh buyers or something to really get this thing goosed to something clearly positive. Even with that, though, a lot of other semiconductor companies are doing well to make the SMH a much cleaner chart than NVIDIA. This is the wedge, same wedge we have for all the others, but we have never broken it. And we peaked above this level last week, but we blasted above it on Friday, and here we are yet higher. And once again, this trend line here, which is not too far away, represents important resistance for SMH. You're just going to have lots of happy new press releases hurled into investors' laps to keep this thing going. But as I say, individual semiconductors are just blasting to lifetime highs almost on a daily basis. Here's AMD, for example, up again 1.28%. And here's ON Semiconductor, up a lot more, but in a lot more precarious place. This is up a full 4.21%, but it's nowhere near lifetime highs. It's got a lot of overhead supply, so it's going to be much, much easier for the likes of AMD to keep pushing higher, as opposed to ON, which has just years of folks that are showing a loss on this holding and would be very pleased to get out at break even. So good day for ON, but longer term, not so much. China, by way of FXI, is also up 1.31%. Not to belabor the point, but same trend line here, and we're getting closer and closer to the underside of that. It's broken with some drama a couple of Thursdays back, but China obviously doing well with this U.S.-China framework news. It's nothing definitive, but a lot of happy statements. The real standout with countries today, though, is Argentina. There was a big election on Sunday, and their president, who's a dog-loving chap, so I'm a fan, he did great in the elections, has a much stronger grip on legislative power, both in the House and the Senate, or whatever the equivalents are in Parliament, perhaps. But anyway, his political star has risen very high. And so this has undone months and months of slowly dripping losses. Looking back farther, you can see there's a little bit of overhead supply for the ARGT, the country fund here. And we essentially matched the peak here at today's high from way back early this year, like there, and like there. And there's this little top which began this nasty plunge. And that, as I said, was undone with the election results from Sunday. Now, okay, metals time. I had thought precious metals were getting awfully frothy. Their RSIs were through the roof. Everybody was talking about them. Mainstream media was slathered with articles about long lines to buy gold, etc. You just know that at some point soon, after you see such things, it's going to poop out for a while. And it has pooped indeed. As we look at GC here, gold, it was at lifetime highs just days ago, but it has lost hundreds of dollars since then. What's key now psychologically is the number 4000. As we've pushed through 2,000, 3,000, 4,000, those have been big victories, and it works just the opposite when you're going down. If the leading number of the price is a 3, that kind of changes people's mindset. And if you look at futures trading today, that 4,000 level is defended pretty fiercely. I don't think it's going to hold myself. The froth is off the beer at this point, certainly. It's not as zany as it was with silver and gold and palladium and the rest of the miners and all that. But the bane is sort of insufficient so far. I think it's got to take more of a drubbing before it makes it a really obvious buy. So I ain't touching it in either direction. And so that's gold GC. So at the moment, down $125 or so. Silver, by way of the ETF SLV, is down 3.55%. It pretty much matched its peak right there back in 2011. And look at that. This is not a daily chart anymore. This is looks like a monthly chart, but look at that shooting star. Just tremendous right there. Very bearish looking. And I could easily see this grinding back down to even to 30 or so. So for 3 times now, 2011, a few days ago, and 1980 or so, we've reached that nominal 50-ish type level in the futures, and it's backed away every time. Miners are getting hit particularly hard. GDX is down over 4% today. Reverting to the daily chart here, you can see this has taken a hard fall. And this line here, I don't think represents especially meaningful support. But as I say, it's the RSI is back down to like 50 instead of 94, and things are simmering down. But I do think there's more selling ahead for precious. I'd sort of taken a wild gamble with Dust last week and bought it here, sold it here, and was feeling pretty decent about that. But it's higher even than it was. But I'm not going to hold on to a leveraged fund. That's just nuts. But Dust did bottom out nicely last week at $8 and change, and now it's over 12. So pretty handsome gain there on being bearish, the miners. And even XME, which is really more of a blend, this has cracked its trend line very clearly. This is the same April 7 trend line. Did a little damage last Wednesday, I guess, and we are cleanly below it now. And almost certainly are going to close beneath that. So miners looking pretty beat up. As far as palladium, which is my principal interest in all this precious metal stuff, it's just about close to its gap. Maybe that'll be it. Maybe 125.20 is the bottom. I hope not / don't think so. What I'd love to see is for it to take another leg down and get to something like the 115 zone. Just take this out like so. This is a very handsome pattern. I'm crazy about palladium. I very much want to own it. I just don't think it's a bargain quite yet. Maybe it'll never be a bargain, but I'm wanting to see more selling before I get really interested in this. Crude oil is down just a touch. Longer term, I think it's still exceptionally vulnerable to lower prices. What is this line all about? I'll tidy that up later. Just boink, clean that out of there. So it's crucial support is remaining right like so. And one ETF trade that I'm definitely sticking with because it's a nice clean gap play is XOP. XOP, that's held quite nicely. And XOP is actually down a little today, which in a market like this is pretty astonishing. So 12:30. Okay, I better say goodbye. One last chart. I'm sure you'll indulge me. RTY. This is the RTY futures going back to that April 7 bottom. And the trend line here is busted, and we've been playing jump rope with this ever since. We have hit on an intraday basis a new high, but it looks like we're closing a little bit on the weak side. So I ended this day very, very light, like 50% committed. I bumped that up to about 120% committed. So with this good news out of the way from China. So crazy week ahead, and I'm looking forward to it, and I'll see you here tomorrow. Good night.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Jamal, my friend, we are back, and they're jamming them to the highs, as you were just saying on the break. We've got E-mini S&P 500 futures up 72 and change here. We are just below the 6,900 mark. From the open today, it was a gap and nap type trade. I've been seeing that going around. It was about a 10-point intraday range for the first 3-4 hours of the day, having a little bit of a rally here, or continuation of the rally here going into the close. You got the NASDAQ up 420. You got the Dow up 271 and the Russell up 6. The Russell actually gave up quite a bit of ground here. Basically unchanged here for the session, but was up significantly in the early part of the morning. You got oil selling off a bit, /CL 6140. Volatility futures have stayed where they are. They were much lower when we were on first call last night. Yeah. They were in the 17 handle. We're at 1820 right now. The low is 1775. You got bonds up 6 ticks. They were actually down to start the session today. Gold has had quite the move today, $132 to the downside. It did get as low as $39.85. That was the low of the session. Silver as well, down $1.80 here, basically at the lows, about 70 cents off the low. And Bitcoin has remained strong at about the 115 handle throughout the session. Ethereum at about 4,200-ish, and the VIX below 16. It's been an absolute face ripper, including the overnight, the Sunday move. I mean, it's been a massive move.
I continue to say this is one of the greatest markets I've been involved in. I'm serious. I mean, there's so many different things happening. I don't even know where to start. I mean, I'll just give you an example. I ran into Marty from the trade desk earlier. He's like, what are you trading right now? I'm trading Baba. It's up $6. I was like, it is? I didn't even know. And I rarely don't know stuff like that. I was like, what?
Yeah.
Look, I think one of the more interesting things today, first of all, we got to talk about that Qualcomm move. That was crazy.
That was insane. I mean, Gus, shout out to our very own Gus, who was talking about this over the last couple of weeks. I'm like, what are you doing trading Qualcomm? Who cares about Qualcomm? What's your play here? The thing's up, $18 now. It was at $205 earlier this morning, about $20 higher from here. But yeah, is that just the catch up? It's like, oh, all the chip stocks have just absolutely gone nuts. Here's one that hasn't participated.
It kind of feels like that. And look, the amount of deals that keep getting mentioned, right? Whether it's a deal with NVIDIA, whether it's a deal with OpenAI and AMD, whether it's a deal with Microsoft. I mean, there's just continually being these deals. AMD, even not to be outdone, came up with a deal today. Supposedly, this Qualcomm deal sort of hits at NVIDIA and their data centers. Were they phased at all? No, I don't think so. It's just fascinating right now. And that's just the big stuff, right? Like lots of movement today on the metals, as you mentioned, gold and silver. Gold is trying to hold 4,000. It really is a battleground. You can see it all day long. Like you mentioned, the low of 39.85. I did dip my toe back in 2 times today. So I went into gold at 40.11, and I said if it gets to 40,000, I'm out, because again, I'm worried about the fashion in which this thing could crash.
Yeah.
So I got out, and when it dipped below, it was like 39.97. But then, it came back, and it's been holding. And so I got back in it right here, actually, 4,003. I do have and I'm in MGC, so again, it's the future, it moves overnight. So
and
I do have.
It is big now because the product is moving 100 points. 100 points is $1,000.
Yeah.
And you get some leverage on that thing. I'm in.
So I have an alert to let me know if it gets below 39.85. I'm doing it on the offer. That means it'll be some real selling if it happens, and I'm just gonna get out. I mean, hopefully it doesn't happen like while I'm in REM sleep at 3 a.m. But that's what.
Do you have the profit order on too?
No, I don't. I never do that. I just like knowing. I like to put those numbers out, and I just like to see how it trades around there, right?
Yeah.
Because again, I just don't necessarily like if you in that case of a let's say a sell limit order, right? Yeah. And then it gets there, and then it bam hits down, and then it jumps back up like it did today. I don't really like that, so I just like to know. And literally, I'll just like look at it and be like, okay, what's going on? And I mean, maybe that's just a little trader me. I can assess how the action is.
I like it. I was just thinking from the idea of like if you get woken up by a ding, if you have both of them on, you get a little bit of like, ooh, is that the profit side or the loss side?
Yeah.
If you only have the stop on, then you're like, oh shit.
Yeah, exactly.
I just lost some money, man, and now I'm awake.
I'll wake up like, ooh, which am I gonna wake up to see? But not only those, right? I feel like with the gold and silver is one thing. Rare earth metals today, LAC, MP, CRML, Quad U, USAR, this is all clearly based off of what's going on with Trump and China.
Yes, for sure. Yeah, these they've taken a lot of vol out of these. I know you were playing some like ratio spreads and stuff. Mike got me into one. Looking to be a nice little trade here with volatility really coming in on the tail end of Quad U here.
Yep.
But yeah, I mean, it continues kind of the news-driven headlines here. You've got E-minis up 76 now, so we've blasted through the 6,900 handle to the high of the session here. Up and to the right is where we go here. I think with gold, going back to gold, because I think it's still an interesting trade. I think with the volatility that you're getting coming in, I mean, IV rank of 53, the monthly implied volatility, the last time we were looking at it was in like the mid-30s. It's now in the mid-20s. I kind of agree with you of like this being kind of an interesting spot to sort of buy the dip. It's a nice round number. It's a little more reasonable than what we were looking at just a couple weeks ago or 2 weeks ago when we were at 4,400. It's down, 10, 15%. It's a spot that looks a little interesting to take that long side.
Well, I mean, some sellers might have been cleared out.
I would think so. Cleared out and taken to the woodshed too, and escorted out there.
Some of the buyers, specifically the buyers, but some of the sellers might have been cleared out too. And I think we'll see if it stabilizes. That's really what my bet is. It's not even so much a bet on. It is definitely a bet on a bounce back, but my bet is to see if it's stabilizing. Truthfully be told.
Yeah, for sure. For sure, but it's been a wild trade there. And that micro contract, it's 100 ounces, so it moves. Each dollar is $8 or is $10.
Yep.
So you move $100, it's $1,000. So today is a $1,300 move per contract. So size them appropriately, based on that to everybody out there.
Busy week, man. Busy week.
It's going to be a crazy week. I mean, you have all the tech earnings coming up on Wednesday and Thursday. Do we have any tomorrow after the close?
I don't think so. We got Microsoft, Alphabet, Meta, Apple, and Amazon this week. That represents 1/4 of the S&P 500 market cap.
There you go.
That's a lot. We got the Fed and Bank of Canada rate decisions on Wednesday, and then we got BOJ and ECB rate decisions on Thursday.
And the China meeting on Thursday, too.
It's going to
be a whirlwind.
Does that cover it all? I mean, I guess it does. It's a lot, though. And this is the interesting thing to me. The move, we talked about this last night, but again, it still remains to be the case. And I guess it's appropriate, but I mean, again, the 1 day move for SPX on Wednesday is 46 points. I mean, that's less than 1%. most of the time we have moved like 1.6% on Fed day. So that's fairly low. You could say that, the market already knows that there's going to be a quarter point cut. Maybe that's why. Maybe the bigger move happens on Thursday, which again, we talked about last night too. There is a bigger price bump for that volatility wise for Thursday and Friday, 16.1 and 16.6% IVX respectively. So take it for what it's worth.
I'm getting long. So you got, I have long Delta, but you have earnings tomorrow morning. SoFi, UNH, PayPal, UPS, Royal Caribbean.
Oh my God.
I've taken the downside in Royal Caribbean. I don't know. We had some kind of weakness on the airline stocks when they reported, because they are usually kind of the first batch of stocks other than the banks to report. So we had a little bit of weakness there. Maybe you see some in Royal Caribbean, which was supposed to be bankrupt by the person that sat here before. It's now about a 5X from where it was. I mean, this thing traded $30, $40 during the pandemic. It's up like 50% this year. I don't know how you could stay in Royal Caribbean when you got Microsoft and Apple and Amazon earnings this week. So maybe a little bit of a pullback there. And then I got long UNH.
I just did too. I totally forgot.
Has some earnings in the morning here. I think you see some upside there. So
who else has earnings?
SoFi, PayPal's been a good one. I sold some puts there. I actually just took off today. Actually, the 65 strike puts, a little bit of a move higher. Took a couple bucks out of that, but that's another one where it's kind of on the lower end of it where it's been trading. I'm kind of looking for the stuff. Like I got long Meta because Meta hasn't hit new highs.
Yeah, exactly.
I'm looking for things that it's easier for me to get long Meta into earnings than it is to look at, Apple that's just rallied $60.
Exactly.
And be like, you know what? I'm going to play for $5 or $10 more there.
Exactly. I'm long the Meta 800 calendar call. Actually, I'm long for like a week now. I identified that one early. I don't always identify them early, but sometimes in ones like that, it's like, I'll identify this one a little bit early. So I'm in that one.
Yeah, maybe you get the split news. That's another
UPS has earnings.
Stock.
You know what's so funny? And this is real, and you tell me if I'm wrong. I was watching a little bit of Liz and Janie today, and Liz was like, UPS is doing this, and they have the chart up. She's like, I'm not exactly sure if I want to trade it. And I said to the crew, I'm like, it's so funny how often we say what we're really thinking on air, right? Because she clearly doesn't want to trade it, but she's looking at it. She's looking at that chart. She's like, it looks interesting. Don't do it.
It's pretty unlovable. I mean, the stock.
It is.
At 55 IV rank, it's near the lows. I have a cheap call diagonal spread here. I mean, that's the sort of stuff the sort of trades that I lean towards if I want to be engaged but don't want to have a ton of risk on. You put a couple $100 in risk on. The worst case scenario is it goes to zero. It stinks, but you size it small and you take the shot. You have kind of an asymmetric risk reward where you're only risking a couple $100. You can make a couple $100 as kind of a shot type trade. But I agree, UPS is not the sexiest thing on the board.
I mean, I don't know, man. This looks like the chart makes you want to get long it for sure.
Oh, yeah.
You could even sell a put here in the downside. I just don't know how much I love it, man. I don't know. $6.82 move for the week. That's for the week, really. Not
52-week low at 82. You could sell like the 83 puts at $1, this week if you wanted to really get spicy, but...
I know we're typically, product agnostic and all of that, but when I see this and I see UPS, you got to wonder, what's the story here? And is this thing just doomed? We still deliver packages last I checked.
Yeah.
What's the problem with
holiday season coming up?
That's what I'm saying. What's the problem?
This
is there something else going on? We don't. Usually when you see a chart like this, dude, let's seriously. Look, from this year alone, stock was trading 133. When you see a chart like this, something's wrong. Something's really wrong. I just don't know what.
UNH looks like this, too.
But that was the CEO. UPS's CEO didn't get killed in gangland style in Manhattan. UPS is what's wrong? What's the other one? FedEx? They look kind of the same. What's wrong with the industry? That's when I start wondering, what's up with the industry in that situation?
Mm-hmm.
All that said, trade it anyway. Don't listen to me.
Yeah, hey, to each his own. That's what makes a market.
Exactly. It is kind of, I don't know. I kind of want to do something here. I just don't know what I want to do.
Yeah, I did. I have a Full diagonal spread where I'm long the December 85. I did this when it was a little bit lower. It's up about $50 on this trade, but long the 85 in December. I'm short the November 95 against it. I did this at $4.50, basically marked at $5. If I was starting this now, I'd probably do like the December. I'd probably do the 85 and then I'd go to the weekly and do like the 95 just to play it as like an upside shot. You probably try to make like $100 on this trade. If you get a move to 95, you probably make 100, maybe $150, like a cheap little shot. Mine has some duration on it, which, won't hurt, but it's not going to move as quickly. And you've got kind of a bounce here. E-mini's up 80 now. Nasdaq up 440.
Love it. We've been doing this little series recently, 0 DTE trades. I am really not afraid of much, but I'm afraid of being wrong on those trades. I'm not gonna lie. I was right today. I bought a call spread. I bought the 68.65, 68.70. Let's go.
There you
Winning,
go.
baby. $1.10.
I know those trades.
Profits if you got it.
The SPX trades, they move quick.
They do.
And it's all or nothing.
60.73. I'm going to close this thing. I'm going to close it. 420? Why not? That's a great price.
There you go.
Come on. Yeah, man, UPS. It's interesting here. I don't know. Now I'm looking at
now you're like this. Well, you know what? When everything's just going nuts to the upside, you start looking for the stuff that hasn't participated. It's kind of an easier upside play. So I feel what you are.
Well, let me ask you this: which one would you get long right now? UPS or IBM?
Oh my God!
Look at IBM. IBM's up again.
Yeah, the IBM move is one for the ages. Stock up $5. I mean, this is one of the wilder charts I've experienced here. $50, $60 3-day range here. I don't know if I could do that. I think UPS would sit well with me, but
yeah,
the problem is that the UPS move, like you're not going to have like a tail type move. Like it's not a move where you're getting, you wake up and it's at 110 tomorrow.
Right.
It's probably an inside move. That's at least how I'm thinking here. But
well, the other thing too about UPS is that stock is down, but it's still is it still in the down? I can't remember.
Ooh, that's a good question.
It's still truth be told, is like my point is like it's really way off of its highs, low on valuations. At some point or another, something happens that makes the valuation come back. Whether it's private equity comes in and says I want to buy. I don't know if private equity buys UPS, but my point is like stocks like this. I don't want to say exactly too big to fail, but I mean in a way it's a little bit big to fail. So it's not it doesn't have much lower. Mm-hmm. There's going to be a bounce at some point. It's just a matter of when.
Yeah, agreed.
If it doesn't happen on earnings, if it gets crushed on earnings, I actually kind of like the idea of just getting long it for a long-term play, like long-term.
Yeah. I feel that too.
Like long-term zebra, something like that, or leap call, or I don't know, but this thing has a dividend though. It's always doesn't it?
Yes, it does. I think they cut it at the last.
Yeah, it's a big div. So that's the one thing. If you get a leap call and a div name, you're gonna have to watch out every now and again. But
yeah,
it could be something could happen here soon. Maybe they announce AI and UPS.
Probably. I think that's the risk you run with any of these like non-tech names. If they somehow come up with a way to incorporate the AI fad into it, then you can see some wild moves. I mean, Walmart did that and had the $5, $6, $7 move. It's kind of reversed that over the last week. But I agree with you. I think that's like the risk that you're going to have in some of these names, as well as the big name stocks too. Have you done anything in any of the big names reporting today? Microsoft, Amazon. Amazon was up a couple earlier today. I feel like.
I am. I'm kind of waiting, but the one I am probably most interested in is Amazon. Like you said, based on like the way the stock looks right now compared to where it is recently and what it could potentially do on earnings. That's probably the most interesting one to me. I mean, I'm already in meta, like I said. I mean, I usually like to play the Mag 7s, even if it's very cheap, these calendar calls. So that's probably what I'll end up doing. I usually just wait for day before, usually, but I mean, I don't think it really matters right now. I mean, typically I wait just in case there's like a dip the day before and then I get my strikes right. That's probably what I'll do. But more than likely, I'm gonna play all 5 of the ones we mentioned.
Yeah, it's getting a little harder to trade all these names without the same level of volatility that we're used to. But all these, you see some call skew here. So like, you look at Amazon and you go to November, stocks trading at 227. You go to like the 210 put versus the 245 call is about, $15, $16, $17 out of the money. You got 80 or 90 cents of skew to the upside, which is, doesn't sound like a ton, but when you look at it as a percentage, it's a 25, 30% premium on the upside. Even if you go to like the 250, it basically trades at the same amount. It's further out of the money there. That's $23 out of the money. So
actually, I think that's what I'm going to do. I'm going to do the 250 calendar. And again, those 250s in the near term, I can do this thing for $1.70 right now.
It's cheap.
That is cheap. And
as a cheap shot. And then like at the, if you get the move up towards the strike, you basically finance your long call. You take a shot.
Yep.
I don't mind that.
Yep. Let's put that on. Oh, look at that. I'm going to put on like 3 trades here on
last
call.
I think everybody's itching a little bit for some trades here in this market. E-minis up at 83 now. You got the NASDAQ at the high, 465. You got to get them.
Got to have them now.
Can't go home without them.
No, you cannot. Volatility is definitely gotten hit here towards the end of the day.
Yeah.
It was a little closer between the X contract and the Z contract. Now it's about 90-cent difference.
Yeah. I don't know. We getting a 7 handle on the E-minis this week?
It's why not? Yeah, why not? Didn't we just look at the expected move for the week? What was the
70 points yesterday?
Yeah, that's what I thought.
Just buy that straddle on Sunday.
Absolutely.
Do that every single week. Just buy the straddle. It's free money.
My gosh.
It's incredible.
Incredible. Again, what are the 3 things right now that scare you about the stock market?
I don't have anything. I think the price obviously gets scary because things are just, they seem very high, but I don't know. I don't know what could go wrong this week to move this market down. Maybe that's what's scary.
Maybe that's
is that I look at this and I'm like, they can't possibly keep this thing down.
No, I don't see it.
No.
Yeah, jeez. What's gold? Gold. So gold is still holding. I'm actually this is encouraging to me. It's still holding here.
The 4,000 mark?
Above 4,000. Still holding. And, that's a good sign, I think. But again, it is probably going to be one of those things that moves pretty heavy on Wednesday. Even if you don't think the market moves big, gold and bonds should move big, I would think, or not necessarily big, but they should have some movement, if you will. That expected move last night in gold was like 115, 120, 134 points today. So
here's one thing that could be spooky. You've got SPOOs, less than 1 million contracts traded today. So, pretty low volume day, which isn't a shock given the move that we've had. Usually you have kind of you never short a dull market kind of, the phrase here is playing out perfectly with the E-minis at the highs here up 84. So definitely a light volume day. A lot of Tesla trading. So you got 2.4 million Tesla contracts. These are coming from my inside source, aka Mr. Frankie Walsh there in the chat, in the YouTube chat. Say hi for me.
Frankie.
Does that worry you not to see the volume? Or is it
a little bit? As you said that, I just looked. I went to Friday and I'm looking at a put butterfly. That's again, what's the point of trying to short this market heavy? But that's not expensive. Put butterflies. Where it lands, I don't know. I'm looking at the 6850, 6800, 6750 for Friday. SPX. That's $5.25. And that's 50 wide. You obviously can tailor it lighter, but the hard part about that is I don't know where the hell it lands if it does go down, right? I just don't.
And how fast does the dip get bought?
Exactly.
That's the big question.
So that trade is there. I'm gonna wait because I bet you can do this thing tomorrow for $4.40.
Yeah.
You know what I'm saying? Who knows where we're actually tomorrow? But that's one way to do it. instead of trying to buy a put spread. And again, like Ilya said last night, it's never been cheaper, but what the hell am I going to buy a put spread for?
I know.
That's going to be too much money. And the way this market is moving, the current fashion in which it's moving, I should say, it's moving big enough for you to make money on a put spread. It's just not moving down enough.
Yeah.
And that's a lot of premium to pay for like a $50 wide put spread in SPX. I don't really want to do that. I would rather do a put butterfly here, but I'll probably wait till tomorrow, maybe ahead of Wednesday. So, game tonight. Who you got?
Ooh, I mean, it's what the spread's at like 12 now, 12 and a half. I usually like a double-digit dog, but I don't know. The Chiefs have looked very good the last like 2 weeks. The Chiefs are back. I think Rasheed coming back was a big move there, but yeah, I think it's tough. Double digits. It's a lot.
That's a lot. Yeah, that's a lot.
Betting man says to take the points, but
I saw yesterday. What did I see? I saw yesterday. It was during the Sunday night game, but somebody said, "Congrats if you took the over and was it the favorite to win every game? It was like 18-2 yesterday."
Yeah, app for sports books.
Yeah, I know, right?
That's what everybody's taking. Nobody takes unders and hopes for like a low scoring game.
Were we like whether it's the Bears game, one of the ones where that missed, maybe?
No, the Bears were not favorites.
Oh, okay.
But the line moved a lot. The line was like a 2-point line by the game time with the situation. This situation. Hashtag FBI. That's good. Make sure they haven't been calling Chauncey over there.
Yo, John Harbaugh, he backtracked real heavy. I'm not involved in those decisions.
As we go into the close here, E-minis up 82. Been an all-out rally to the upside. NASDAQ up 460. You got the Dow up 327 and the Russell up 9. Oil basically unchanged here. Volatility futures pinned at 18. Bonds on the highs up 9 ticks. You got gold and silver both much lower. Gold's at 4,000. You got silver 46 cents. Bitcoin up at 115 and change. ETH at just under 112. Been a nice strong rally of a day. So think this continues tomorrow?
I'm gonna say we're gonna be a little bit quiet, maybe. I mean, we'll be positive, but I think we'll be a little bit quiet heading into Thursday. Thursday's a massive day.
Yeah, I agree. I think so. I think this was at least our short-term move. So, well, sir, thank you for joining on this beautiful last call. We're gonna take a quick little 90-second break. Come back with the overtime, boys. You're listening to Tasty Live. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I'm still coming down from the weekend. Saturday night like I should. I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know what I know.
And we are back. This is Overtime. I'm Ilias P. back here in San Francisco. That is Dylan Radigan in Milan. Mr. Jamal Chandler, our returning champion in Chicago. Gentlemen, I guess thought is back in the box, and we're just going to go ahead and rally into this crazy week that we have in front of us.
Supernova, right?
So it looks.
Supernova.
So it looks. I believe that's the word. Yes.
If you had on your bingo card that I'd be the first one to say that, then that's amazing.
Thinking is for losers.
Clearly.
Thinking is for losers.
I mean, you've been spot on about that, man. I mean, this market is it's incredible. It really is in a multitude of ways. And I'm not even just talking about, obviously the market's up. It's crazy. But just the all the different things you can trade right now. I mean, you had crude up on the screen. That's been moving more recently. Ethereum and Bitcoin moving. We've talked numerous times about the different sectors of the market that are moving. Ones that took big tumble today was rare earth names, along with metals names. I think that's clearly the U.S.-China trade war trade, and
without question, I think
it's fascinating right now. But yeah, market at all-time highs.
I think there is without question a story here because when you look at what happened, I mean, we've been basically inching our way higher all day. The bulk of the move happens at the open. We really didn't do a whole lot as far as upside progress throughout the day. All of it happened right here. And that was, of course, that China news. So over the weekend, you have Scott Bessent out there saying, listen, this whole 100% tariff thing on November 1st, it's basically off the table. We've got this expansive deal. All that Trump and Xi have to do is basically rubber stamp it. And that was kind of the vibe. So they've set up a whole array of deals, apparently, and when they meet on Wednesday, they're just going to nod in their general direction, and that's it. So the market is clearly happy with some degree of hope that whatever scary thing there was to worry about on October the 10th when everything sold off, as we, of course, have seen, that would be this. That whatever that is...
I'm glad you reminded me because I really don't... I barely remember when that happened.
See, there you go. There you go. So when you get this and the market goes holy moly, well, apparently not. And obviously this follows what was Friday's CPI report. You could see it clear as day on this chart. Here it is, right there. So you can see we went very quietly into it. It came. It was a little bit lighter than expected, 3% versus 3.1%. We didn't really do much of anything for the rest of the day. We just digested in this spike. But this was it. CPI, boom, that was the whole day. Now, we went quietly after this news that apparently the risk is off on China and the US. That is to say, we probably have some kind of de-escalation. So the question that I have for you gentlemen is less so what could go wrong, more so what else can go right. So this week we've got a bunch of tech earnings. There's some big names on this calendar now, Meta, Google, Apple, obviously. And we've got this China thing basically, it looks like, in the bag. No one is confused as to what the Fed is going to do. We're approaching 100% likelihood that they're going to cut. By the way, not just this time, but in December as well. And inflation is apparently not the world's biggest concern. So, what don't we have priced in yet?
We don't have the upside priced in yet.
The upside to which one of these
AI, of the efficiency, of the incredible abundance that is about to yield itself to the world as the profit margins of these corporations explode as a result of the fact that they can fire most of their employees.
Interesting.
Yeah.
Interesting. I have one question, and we brought this up on last call on Friday, and I think brought it up going in to first call Sunday. The question of sort of the disconnect between what's going on in tech itself and what's going on in the money spigot that feeds it. Because obviously we can say that there is the banks, and they were a problem last time, and I think anybody looking at what the banks look like now would say, well, they're probably not an issue now. But for that reason, because the banks have been made safer, tons and tons of money has been coming out of private equity and sort of adjacent things. And a big concern, obviously, has been that these are non-bank institutions, that they have ridiculous amounts of outstanding exposure because all of the money to fund all of this has come out from the likes of them. And when rates go up on them, they don't have the same kind of regulatory and capital requirements that banks do, so they're not safe. And all the bonanza blow up is going to happen there. Now, here's Blackstone. It's been down for a while and looks obviously not at all like the indexes. In fact, if we look at the beginning of the year, it hasn't even reclaimed its way back to where it was at the highs in late November, early December. It's not dissimilar for, let's say, Apollo, another kind of similar name in the vein. So square this circle for me. If the people that are funding this thing in large measure, if the capital behind a lot of this is as hampered as it is, but the abundance is coming, why not both, and why the disconnect? Why are these names so down?
Why not both what?
Why are the people whose investments are planting the seeds for the supernova that we're now watching, why are they so...
You're saying Apollo and Blackstone are the financiers of the supernova?
I'm saying private equity and non-bank capital in general, and these are sort of the avatar names.
I don't know if I accept that, though. I don't know if I accept that. I mean, I feel like the financiers of the supernova, I don't see how private equity is long the supernova, the same way that Meta, Microsoft, Tesla, Google. I mean, I think the supernova resides in the equity of the Mag 7 much more than it does in private equity.
Well, sure, but where does that money come from? I mean, where does a company...
From the equity valuation of the financial markets. I mean, Microsoft is not relying on Apollo for its cap table.
Sure.
Yeah.
But OpenAI is relying on private credit to a very large extent. I mean, they're making outlays out here billions and billions above what their last raise was. So there's a big bet here that they're going to come up with a bunch of money.
Maybe. I would say that Apollo and Blackstone trade much more based on expectations for future rate cuts and their overall exposure to aggregate growth than they do to anything related to the supernova.
Oh, I mean, I would agree. I mean, I think it's both. And I think therein is sort of the interesting question. We have all of these rate cuts on the menu. We're confident that one of them is coming this week. We're confident that another one is coming on December 10th. And the markets are not only confident that there's more in 2026, they have about 50 basis points more than what the Fed has told them they're committing to. So there's this vast expectation of easing on easing on easing, more easing than the Fed has owned up to so far, well, once you look beyond this year. And yet these exposed names are down, and I'm not saying that these individual companies are exposed to this or that. Who knows what they're exposed to? That's kind of the point. It's darker money. Not dark, but darker than, let's say, the banks. But these are the sort of liquid avatar names for the non-bank lending universe. And I think they look very similar for a reason. There's concern. So to the extent that this is where the capital has come to fund every which thing, much more so than the banks in recent years, if they're also funding the supernova, and of course they are, then certainly not Microsoft, certainly not Apple. There's plenty of cash going on there, but the sort of larger universe of AI names, startups in particular, if this is what the funders look like, why?
Because they're incredibly irrelevant to the supernova, that they're not even secondary, they're tertiary. The supernova resides squarely in the balance sheet of the Google cap table, of the Microsoft cap table, of the Meta cap table, and the adjacency of publicly traded private equity is such a far distance from the epicenter of the supernova that it's not a relevant barometer of expected performance as it relates to AI efficiency.
In other words, they have money out there, but if they didn't, other money would come because the sucking sound that is the supernova is just waiting for money to come into it.
And furthermore, the private equity firms are much more a barometer of expectations of leverage returns as it relates to interest rates more than they are to any interpretation of future industrial growth.
Well, I think that's the connection. I think expectation of future sort of leveraged expectations of the future bake into them rate cuts, cheap capital, and the feeding of this thing.
Yeah, I think, to answer your question, I mean, I think it shows in the stock price, they're clearly not participating as much. If you look at like a SoftBank, like SoftBank looks totally different than like APO or BX, right? I think APO and BX are just not doing the same thing. I mean, I don't think we have it, but
I don't think we have that.
But just saying, like, from what I've seen, like, you could Google it and you can see the chart on SoftBank. It looks totally different because they definitely are invested in this whole situation. I feel like these guys aren't to some degree, and who knows? Maybe they know something everybody else doesn't know, or maybe they're just trying to zig while everybody else is zagging.
Could be. Let's see if we can get a chart of SoftBank.
And that's probably what it is. These guys are probably zigging while others. Maybe they're doing, I don't know, they're clearly doing more different type of deals, and then maybe they're doing a few more credit deals or something like that. But you're right, it doesn't look the same. And I think it's one thing that the stock chart never lies. That's for sure.
Right.
I mean, as we were looking at, not to pull, we don't need to pull this up, but we were looking at the idea of a UPS trade earlier, and that stock looks terrible. There's clearly something wrong going on there. So I think that this just tells you, like, these guys, they're involved. You know what I mean? Like, you can see it. And they've been involved for a long time, right? Like, they were choking on it early a couple of years ago, and now it's been starting to pay off.
That's the thing is this is where a lot of the seed money comes. Again, not this specific firm or that specific firm, but this universe of money is where a lot of the seed capital for this comes in. And to your point, here are SoftBank ADRs, and you can see here. I mean, granted, this is OTC; we don't have it on our platform, but you can see this looks much more like NASDAQ than the others. I mean, this basically appears NASDAQ adjacent.
Yeah. So what are they doing to offset their risk? Or do they say to hell with risk? This is what we're here to do.
I'm gonna go with probably the latter. They're just like, listen, we have all the money in the world, and if we need to go to a few international conferences and scare up some more, we could. So let's send our guy Masayoshi out there and have him talk to his boy MBS, have him talk to whoever else he's got to talk to, and scare up some more, because they're not a timing kind of operation. They're an idea kind of operation.
Very true. Yes, it is.
You're saying SoftBank specifically?
Yes. SoftBank believes in things and then invests in them, and if and when they don't make money, they just go bigger and more.
Well,
until eventually.
How's that different than Buffett?
It's not.
You know what I mean? Same thing. They got deep pockets. They can hold it out and wait it out.
Yeah, it's not that different. I think thematically the idea is it's whatever either one thinks is a good idea. I mean, I think the rubric by which Buffett values things is different than the rubric by which Masayoshi-san values things, and one is riskier in their appetite than the other, and the metrics are different, but thematically it's, do you think that this company is worth more, and do you want to buy it on that basis? Yes. Okay, well then, if we're doing that, then we're holding until all eternity expires.
By the way, I didn't even realize that they approved a second installment of a $22 billion investment in OpenAI. I didn't even realize this. It just happened like yesterday, apparently. I didn't even see that news. There's so much damn news out there today. I didn't even see that one.
That's the interesting thing is you look at, and this is to Dylan's point, that it doesn't really matter what this area of funding companies does or that, because the sucking sound is apparently so loud that if there's not money here, there'll be money over there. The commitments that OpenAI has made to buying stuff far exceed how much money they've raised, but here they go, raising some more. And just chipping away now at the pile. Ostensibly on the assumption that they can raise however many they need to raise. I think they've made commitments to the tune of $600 billion or so at this point.
I mean, I think that's what I'm getting at, which is that it's easy to explain why this thing's ahead of itself or overvalued and all the rest of it. But it's also, I could also argue that but not for the tariffs, and if in fact AI is more powerful than people realize, that the market is actually underperforming. And that as tariffs either become less relevant or fade away because they become less politically popular, and as AI proves itself more effective than people's wildest imaginations, that the market's level actually is less effervescent than we would all rationally come to believe, and thus the value in not thinking.
The value in not thinking has certainly proven itself out time and again. There's absolutely no question. I mean, you can get yourself into all kinds of knots thinking, but the market clearly is, by definition, one would think a market that is any kind of feverish would be characterized by not thinking, and there is absolutely no telling when the fever breaks. So, I mean, I ran away from my shorts on Friday. When the CPI number came and hit the way it did, and the markets responded the way they did, that was curtains on my index shorts. I left right then and there.
I mean, that I just want to... It's so funny how things get framed too, because I've seen stuff that said CPI came in lower than consensus, but yeah, it's still high, right? And we're cutting into high CPI, and it gets to my point. Like that's clearly should be one of them, but it's not. But the thing that I asked yesterday on First Car, and I'm gonna ask it again here. Like, what are the three things that scare you right now about equity markets? I mean, it's true. There's no thinking going on and people are buying, but what should they be afraid of? But truthfully, that should be one of them, right? And it doesn't seem 100%.
I think for me, the number one thing that scares me about the markets is that they have assumed that everything is already great and that all of the potential risks will work out, which raises the question, well, what else is there? Like, at what point does the price reflect all of the optimism that there is to have about the known knowns? That's really it.
That's what it boils down to, it seems. I don't know. I mean, maybe it doesn't even seem, typically it would have been a little bit nerve-wracking that, two world superpowers are meeting and markets wouldn't have necessarily taken it so well. They've taken it so well before they've even said one word to each other.
Super well. Yeah.
It's a trip.
And that's really sort of where my kind of view on this, and again, I don't have exposure on it at this point. I will once the price action wants to tell me that something is wrong. But you look at this and you go, okay, well, the big scary things were Fed rate cuts, yes or no, inflation scary or not scary. escalation, US and China, yes, no. It seems like the markets have resolved across all of these various things that the answer is already everything's fine. And a lot of these things haven't actually resolved yet. But the markets have basically said, listen, our baseline is everything is cool. And so you look at that from a price level perspective and you go, okay, this is the price for everything is cool. How much more cool are we going to be? Maybe the earnings answer that. That's another big what if here. Maybe we get some really stellar numbers out of what's on the menu this week. Because Wednesday then, if the Trump meeting and the Fed become non-events as far as Wednesday goes, then we've got Microsoft, Google, Meta, and then we've got Apple Thursday. So if nothing else, in my mind, it's going to be very difficult for these markets to sell off in the near term, if only because they're waiting for the next event risk basically until end of day on Thursday.
Yeah, that's probably the only potential chance to see for markets possibly falling is after those earnings for some odd reason. And again, I don't expect them to miss, but I like to think of earnings in I mean, obviously they are current cycles. I like to think about them like you sort of see similar things in cycles and you sort of see names mooning during certain earnings cycles and others not. So far, what we've seen from some of the big ones, and really there's only been two so far, was Netflix and Tesla, and both of them retreated for separate reasons last week. I don't know if that's a situation of, you just didn't give us enough. I mean, I think Tesla kind of did miss, but I don't know if that becomes a situation. Do we not see enough? Given all these investments that we're seeing, given you hearing intraday big moves and big deals from Qualcomm and AMD, is it enough to justify whatever earnings numbers and EPS that we get Wednesday and Thursday with these big names? Is it enough or is it going to not be enough? And then the market gets a little weak. That's the only thing I could possibly see. But outside of that, I mean, this is the first time in a long time I can't think of like 3 or 4 things on the wall of worry. I really can't. You can manufacture, but truth be told, there's nothing that is bothering this market day in and day out that we're talking about. I really don't remember the last time that happened. I mean, even in 2021, which is a really good market, meme, all of that, people talking about, these stocks, this is ridiculous that they're like, that was a bad thing. And we all knew it. It was too much volatility. Those names looked crazy. It was FOMO like you'd never seen. Well, like you hadn't seen in a long time. And that was kind of scary to see that. This is FOMO, but this is almost like 2017 FOMO, except with a lot of other different things going on. Obviously a lot of it circles around the Trump administration, let's be honest, with regard to like China stuff and rare earth metals and quantum computing potentially and just all of those things. So this is a fascinating stock market. And like I said, this is the first time in a long time I can't tell you 3 or 4 things you should probably be worried about because stocks might fall on those.
How many? Go ahead, Elliot. Sorry.
Oh no, please. I was gonna pivot us into how we might still benefit from the Trump Xi kumbaya, but you go first.
No, I was just gonna say, how many times does this have to happen before you just buy the dip?
Once. I mean, that's what I see in the stock charts, right? I mean. A few days, 4 days ago, we had a little dip and it was bought. You mentioned the 10th of October, that dip was bought.
That was a big one.
So over the last couple of weeks, it happens maybe once and then it gets bought.
Yeah.
And truth be told, I don't even remember why we dropped on October 10th.
China, ostensibly. That was the whole, oh no, 100% tariffs on China on November 1st because the trade deal is XYZ in the wrong spot.
And see, that's why I don't even remember, because remember we said at the time, wow, we've been hearing these headlines since post April,
why
May.
Are they responding now?
Exactly. Yeah, remember? That's why I forgot.
Yes. Well, and this is the really interesting thing, and why I start to kind of think like, okay, have we seen all the good news that there is to see? Because the market is responsive to things suddenly. And then when those things get resolved and he gets exuberant for a day and then goes, wait, what? And stops. Now, obviously, CPI, woo-ha, we break the rage. It's the first piece of real data in 3 weeks. Shutdown continues. But we get a special dispensation. So we get one piece of data. Ooh, sigh of relief. Okay, over the weekend, we diffuse Wednesday's meeting with Trump and Xi. Ooh, sigh of relief. This is all event risk. But these markets outside of these periodic, like syringe of adrenaline to the neck moments, it's not finding natural lift. Now, that might mean that it was worried about those things, and now that they're resolved, it will find natural lift. Maybe. I don't know. We'll see. But it is seeming to be kind of responsive to news flow, as bull markets usually aren't. Bull markets usually could care less about the news. They're just going higher. And that's really what we've seen since April, the Liberation Day lows onward, is the market has said, tariffs, whatever. Inflation, Fed, It's a supernova. Who cares?
Well, look at the chart. Look at the gap higher this morning, for God's sake.
That's right. In response to news. So suddenly, at least we care. And either we care because we care, or we care in that the potential for shenanigans has been diffused and the supernova is back. Could be. I don't know. But whatever we've seen over the past 48 hours, Friday and today, is news response. CPI response, China, Besant painting the tape pink response. That's really it. Now, maybe we have independent levitation from here. No idea. But, and I'm not in it because I don't know. So I'm not trying to bet against this thing. I do have an interesting question for you gentlemen on crude oil, because if all is great in the world of the US and China, one thing you could get at this conversation, because recall this jump in crude was mainly about the US sanctioning Rosneft and Lukoil. So, and China obviously likes their cheap crude. Much of this sanctioning is the kind of thing that the US did to Huawei once upon a time, where it basically said, look, you can either do business with the US or you can do business with Huawei. You choose. It wasn't so much aimed at Huawei as it was aimed at everybody else. It's like that scene in Thank You for Smoking where Aaron Eckhart's trying to convince his son that vanilla is better than chocolate ice cream. And at the end, his son goes, but you haven't convinced me. He goes, but I'm not trying to convince you. I'm trying to convince them. And so it's sort of policy like that, where you go, well, we're not so much attacking Huawei as we're saying, if you third parties do business with Huawei, you're not doing it with us. So you pick. That's what's been done with Lukoil and Rosneft now. So the question becomes, is this a thing that Trump is going to trade to Xi this week? Basically saying, you keep buying Russian oil. India, we haven't finalized the deal with yet, but you keep going. Is this geopolitical risk for us to sell now?
I mean, I think
disclosure, I've sold here.
Meaning that oil's mini spike here is an opportunity to sell on geopolitical hype, basically.
Yes, because we've stalled. And we haven't come down yet around this idea that all is well in Xi Trump world. So maybe this is a latent opportunity, like a second order idea. Stocks have already bounced, but this has not sold off yet.
I mean, I think it's possible, but if that's the case, this ain't high enough for me. I saw copper. I saw what happened there. I'm not selling here. I tell you that. I mean, it's got to be like 70 to 80 for me to get interested. And again, he's shown he knows how to move markets. He enjoys moving markets. I'm not going to lie, I would too. But he really likes. I feel like this could be higher for me to really get interested in selling. But it's clearly somewhat of a bargaining chip, I think.
You'd figure, because who are these sanctions aimed at on the big Russian oil producers? I mean, yes, ostensibly they're aimed at Russia to the extent that stopping those huge companies from making money on oil directly impacts Russia's ability to finance the war in Ukraine. But through what vector of action, as it were? By saying, we now have these companies on our entities list. You can't do business with them and with us. You've got to choose. What you're saying is, hey, buyers from these companies, you got to go elsewhere. Well, who are the buyers? Overwhelmingly, it's China and India. And he's meeting with Xi this week. So it seems like crude is very much on the menu here as far as things they could agree on.
Good point. That's something to keep an eye on this week, because I mean, there's obviously it's of importance to both of our two economies, right? I mean, we're the two largest, and so obviously China has a vested interest as well.
So how did you do it, Ilya?
So the way I did this was by buying USO puts, and what I did here was I went a good deal out. So I went all the way out here to December, and you can actually see it right here. So what I did, rather than basically go at the money, I wanted to maximize capital efficiency here. So I went where the liquidity is and bought this put vertical. So 71 to 64. And if you look at what this looks like, essentially, you're looking for something like a break through this underside and to catch back to here. In other words, to say this bounce was wrong, this break was right. This is some sort of geopolitical shenanigan situation over here. So if we get back under here, we've undone whatever this is, and we're looking for this as the move. Somewhere into here.
But guess what, though? How about China doing this kind of a similar thing with soybeans? How about that?
Yes.
They're saying, "Hey, we'll you do that. We'll buy some soybeans. We're willing to do that." Big move today there.
Big move today in soybeans. Yeah, I mean,
are you suggesting Jamal short a short soybean spike as sure as Ilya's suggesting a short oil spike?
Yeah, I'm saying if you believe that these guys are all sort of using these things as bargaining chips, this is definitely the way to play them. You could take the other side at some point in time. I don't really want to short either one of them. I don't feel the same way, like obviously, I did about gold last week, but I think that's clearly what's going on here, right? Like these are the different bargaining chips that they're using with the talk with this whole deal. I mean, they've said they've come to an agreement on a range of issues, and obviously these are clearly two of the issues that are at stake right now, along with rare earth metals.
Well, and it's really funny too, because the degree that the president has become upset with Canada and stopped negotiations around an ad that the Ontario provincial government put out there. I mean, he basically just pulled the ripcord on this thing. Makes you sort of think, okay, Besant and his counterparts on the Chinese side have negotiated this whole thing, and then she will nudge Trump the wrong way or shake his hand weird or whatever. And this whole thing goes up in smoke for no apparent reason.
I mean,
who cares what the provincial government in Ontario did?
I gotta say, look, politics aside, that was a great ad. I mean, look, can we just talk about it for a second?
Great ad.
I mean, look,
It was
not only was it a
hilarious.
great ad, it was great placement. It was during America's pastime. That's pretty good. That's pretty good. And to use just a speech that's a legit speech from Reagan. I mean, it was great. I can't lie. I mean, that's pretty good. Canada got him on that one. There's two things that I just can't stop watching right now. It was that, just because of the way that it was done and clearly where they're hitting at, and the news around this gambling ring. It's insane to me. Those are the two things that I just can't stop paying attention to. But that was a pretty good ad.
Update the folks on the gambling ring, because I don't think I'm fully up to speed on this chestnut.
The long story short, just the gambling ring involving the situation with some former NBA players and potentially maybe even some former NFL
that
players.
gambling. The Chauncey Billups.
Yes, that one.
Ring.
I can't stop reading on it. But. The ad. I mean, that was really interesting that he decided to shoot up tariffs on that. Honestly, though, I didn't really see anything move. Did the Canadian dollar move on that? Oil,
not really.
Didn't really. I didn't really see a whole lot move on that in the current recent threat. So I don't know. Maybe that's just taking the back burner right now. Well, to this, it clearly is taking the back burner to the U.S.-China relations.
The Canadian dollar has been an interesting character here. We can see it's really marched lower in a much more orderly fashion than a lot of the others. It's really been just very consistently, steadily sold. And I've been short. I'm doing it on the spot side as well as on the futures side.
Nice.
There's a couple of things I have on the spot side, and this is one of them.
I was about to say, now you're going to show us your real portfolio?
Well, I mean, this
where
is
you
what
really
I
live?
actually have on. This is the follow account. In fairness, in my actual SpotFX portfolio, these trades are larger, but this is what I have on the spot side. For example, dollar yen, which I'm not going to even touch on the futures side because I need to manage size more than the entirety of a 6J contract. Same thing for the franc, and Singapore dollar is not even available on the future side. So I have these things on, and of course I have 6C in miniature, so M6C or MCD is the ticker there. So I have this on. They've got a policy meeting this week as well. Not that anybody's paying that much attention.
They're probably not going to move anything, right?
They're cutting.
Well, yeah. Oh, okay. So, yeah. Speaking of, what's the consensus on all these meetings this week? By the way, I mean, we got us, BOC, like you said.
We got us. We got the ECB and the BOC.
And what's everybody thinking about doing?
So, Fed's cutting.
I know you're boys
Canada's
with
cutting.
all these central bank people. Let me know.
Yeah, the ECB is standing still. They're keeping it at 215. They're not going anywhere. In fact, if you look at their version of Fed funds futures, which are ESTR futures, you can see what's going on there. Let me see if I can get this up on the screen.
Wait, where are they? Where'd you say they're at? What? 2? Where's their rate right now? ECB?
They're at 215.
Yeah, so they were cutting before us, right? I mean, they were cutting before us.
Yeah.
They can't do shit.
They went before us. So here's what we've got for them. These are ESTR futures, and we can see that for this year, nothing else is on the menu, and for next year, nothing else. So we've got stands still at the CB at this point.
Yeah.
At this point, it's really about the Fed. So if you look at what's going on there, that's really what we're looking at. And you can see here, by the way, speaking of the Fed, that little baby pullback in the bonds, it's already coming off a very similar sort of thing as the last time I added into this position, which was this pullback here. And I'm doing it through TLT calls, verticals. So can I get you gentlemen, speaking of this, can I get you into something at the long end, perhaps?
Long the bond here, you're saying on a little pullback. I mean, the thing is, of everything that's been discussed heretofore in this aforementioned conversation today, it is the selling of the soybeans and the selling of the oil that most intrigues me.
I'm selling the oil at this point.
I think the selling of the oil and the soybeans, just on the Trumpianism of the whole situation, is the most sort of obvious and compelling. I mean, if I'm long the bond, must I also be short the NASDAQ?
No, I don't think so.
So tell me why I'm long the bond at this particular moment.
I think you're long the bond if you're long the bond.
Yeah.
On one of two sort of narratives, and if you sort of believe that narrative or not, then there's the price action, which speaks for itself. The trend is from the lower left to the upper right, and you're stair-stepping higher. Every time you break a former high, you come to retest and go again. And that's been the story going all the way back to essentially May. So the narratives, I think, that you're looking at, either one, more rate cuts, more and more and more rate cuts, that essentially the markets are right to expect more easing than the Fed has owned up to. I am less inclined to buy that narrative. I am more inclined to buy the narrative that the markets are wrong to think that the Fed is going to do as much easing as they're saying, let's say, next year, and that what this will mean is more easing will go further down curve. That really all of the easing that the Fed is thinking about for next year is as minimal as they suspect, and that actually the bulk of rate cuts will be maybe 2027, 2028. And that what this will mean is that the curve will sort of twist rather than all go in one direction, unless, of course, something is materially wrong. So if you look at the 2-year here, you can start to kind of see it. Just looking over the past, let's call it, week or so, the 2-year has had rates come up. Whereas if you look at what's going on at the long end of the curve, there we go, not really. We tried to do this same pullback, but obviously even that's not working. So the 2-year from here is pointing this way, whereas this, again, this is the 17th, from here is clearly up or flat, depending, but is much better supported. So I wouldn't be buying the short end, but I like the long end. And I think that's the narrative that makes more sense.
And that's saying essentially, I mean, with the 2-year bouncing like that a little bit, it's saying that maybe, you know, the market has come off a little bit too much, right? But you're saying that 2-year is, well, you're not trading the 2-year per se.
You're just saying the 2-year.
You're just saying that reflection of what's happening in the 2-year that seems to have hit the 10 a little bit is too much. Kind of.
Yeah, maybe. So here's the SR3Z6 contract. This is December of next year as a kind of benchmark for what the markets are looking at. And of course, as ever, this is the quote. So this is 97.005. This is the price of the future. If you want to get to the implied rate, you subtract from 100 that quote. And what you end up with is 2.99. In other words, 3%. Now, the current Fed rate would need to go down 125 basis points to basically land us there.
Yeah.
So, and we've got 50 basis points left for this year and 25 basis points that the Fed has projected for next year. And so the markets are about 50 basis points ahead of the Fed by end of next year. So that's where I think the 2 year is going to have a hard time going higher. The markets are already well ahead of that.
If I could extrapolate, it would seem the one thing that, to get back to the top of the show in a way, seems like we kind of just found it. It would seem as though the one thing that we're not accounting for is a potential policy mistake, right?
Yes.
I mean, that's it. That's it. We found one thing. We found one. We found one thing. We should be, this is good. This is good news.
The wall of worry has a brick in it,
Oh
everyone.
my God. Oh my God.
We found a brick.
We found a brick. Yeah, I mean, that seems like the one thing.
Yeah, it does. It does seem like the one thing. I mean, this has really been the most interesting part of everything that's been going on vis-a-vis the shutdown, is we haven't had economic data to essentially resolve what is the most sort of glaring disconnect just numerically.
That's not by accident.
What is going on out here is the markets and the Fed are 50 basis points apart for next year, and nobody seems to be caring one way or another to reconcile this gap. I would surmise because there is not data to base that reconciliation on. I mean, how do you reconcile it? Based on what?
Yeah, it's not by accident, I don't think. You know? I mean, this is the same administration who talked a little bit about the idea of eliminating quarterly reports for earnings. So, yeah.
I mean, in fairness, in a lot of the world, it is 6-month reporting.
Yeah. But we're not a lot of the world. That's my answer to that.
We are the liquidest. It's not a word. We are the most liquid, the deepest, the widest used financial market across whichever asset you want to mention. And really, this is why the dollar is what it is. This is why our economic weapons work as well as they do. It's not even just cutting people off from the dollar. It's cutting off people from the financial system that is indispensable. There's just not an alternative.
I mean, I'm really happy we found one brick. I don't know about you guys. I'm happy we found one brick. This is important. This gives us the opportunity to eventually start looking. I didn't say buy yet, but start looking at some puts to buy on the market.
Mm-hmm. Yeah, I mean, this is kind of why my head goes where it goes and says, well, okay, so we got the rate cuts priced in for this year and next, and more than the Fed is saying by a good mile. Okay, cool. That's good news. We've got the China-U.S. kerfuffle at the beginning of this month apparently diffused again. Cool. Earnings at this point are looking pretty solid so far. I mean, obviously we have a big batch this week, but looking at FactSet's most recent numbers, sort of summarizing what's been going on, it's not bad. There's a solid quarter of earnings here, just all in all. It's not amazing, but it's also not terrible by any stretch of the imagination.
And to backtrack on that again, I just think that the only thing that potentially happens is, they're going to be good. Is it enough, right? With regard, especially to these big names, right? Is it enough to satisfy
Right. That's why sort of my head goes to, okay, well, everything is obviously fine, and also things are at record highs. So do we reflect all of the fine now? And are we a bad earnings report or a weird Fed mention or something away from challenging these assumptions? Maybe. I wouldn't be, I'm not looking to fight the big indexes here, though, until they show some level of weakness. Before we sign off here, we'd be remiss if we didn't take a look at gold, talking about things that we're fighting. I'm fighting this. I sold in here. Obviously, I missed this wonderful move because I had no idea, as we talked about last week, that 1 ounce gold futures exist on our platform. Live and learn.
Oh, yeah. MGC?
Apparently, apparently that they do. So I did this in GLD, but obviously by the time this move happened, the cash equity open in the U.S. was already a price taker of what happened overnight. So the place to sell might have been here, but this is before the cash equity open. So maybe even here somewhere. But in any case, now that sort of it did this, I sold calls in GLD. I'm holding them. Would anybody like to sell some gold here and maybe look for the next leg?
You know me, man. I'm a trader. I'm interested in a little bit to see the bounce now. It's been a battleground here at 4,000 for the last 24 hours, it would seem. I could totally see it falling. Look, don't get me wrong. I'm not saying it can't. I just want. It seems to be holding, but we'll see what happens. Again, right now it's below 4K. It's going to be a long night for longs and shorts here. I mean, again, there's a lot of people who bought into that October 13th move. So I think we're going to find out quickly here in the next couple of days, or especially around the meeting, what happens.
Yeah, I mean, really quickly, I'm just, again, ticker agnostic, just looking at the price action only. We had a low here. We've taken out that low. Maybe the next leg is upon us, but it's a little bit tight here as far as risk reward. So I'm not touching it yet. I would love for it to bounce into here somewhere and hold, and then I'll sell some more.
If it gets below 3,900, I'm going to be out.
Yeah. Yep. And with that, overtime is out of time. A spirited conversation, as always. Thank you, gentlemen. Don't go anywhere, folks. We'll be back in but a few seconds with macro money to go all of the various macro shenanigans on the menu this week. And we'll be back for this conversation in a mere 23 hours. So sit right there.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
It was a great show, very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch tastylive because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner
Stock market's too optimistic about China and earnings and the Fed. That's the question on the minds of traders as we kick off this week with record highs for the big indexes. And the question becomes, well, what could go even more right? And if that list is too short, are the markets vulnerable to a buy the rumor, sell the fact kind of a response when all's said and done? That's what we're going to explore now. Macro Money begins right now. Welcome to Macro Money. This is Spivak, head of Global Macro here at Tasty Live. And what we're going to explore here, as we've just alluded, is an action-packed week on the calendar, but one where the markets may have already done the heavy lifting. And the question from a speculative perspective being, are we now about as chipper as we could possibly get on all of what is coming in the immediate future? And what we'll do is we'll take a look at how the markets have done with this sort of lead up from last week coming into this week. Take a look at the price action and consider what that looked like, and then take a look at what is setting up to shape next steps here and whether the markets still have some juice to squeeze out of those next steps. So here is what we did last week. We can see here another supportive week for stocks, albeit relatively modestly so. S&P up 1.9%, NASDAQ up 2.1%. So we continue to, as it were, crawl higher. Not huge gains, not huge increases in momentum here, but nevertheless, upside progression continues. And if we look across the rest of the asset universe, we largely find a sort of familiar narrative. Now, we should mention that much of what we got here from stock markets last week came thanks to Friday's US CPI report. That was the real big catalyst that took us through October highs and not only erased that big sell-off that we had across markets on October the 10th, but took us north of those levels. And of course, we have continuation on that today. Markets continue to push higher with a gap at the weekly open, thanks to news over the weekend that U.S. Treasury Secretary Scott Bessent and other negotiators from the Trump administration have reached a whole range of preliminary goodness with their Chinese counterparts, and that the thing that's going to happen next, the big meeting with U.S. President Trump and China's President Xi Jinping this week, is almost like a rubber stamp exercise, where they are going to meet to approve all of these great things. And to paraphrase Mr. Bessent here, that 100% tariff on China due to kick off on November 1st, that's basically, according to him anyway, off the table. And so a whole range of interesting things perhaps on the menu here. The standout last week, interestingly, was, of course, crude oil, 7.6% jump there. That's after the U.S. Took sanction measures against Lukoil and Rosneft, the big Russian oil producers, and took the approach similar to what has been done before, for example, to Huawei, where rather than attack a country, these measures essentially speak to third participants in markets, so anybody that might do business with these companies, to say either you do business with them or you do business with the U.S., you choose. And of course, that means access to U.S. credit markets, that means access to the dollar, so on and so forth. And so much as Huawei was squeezed out of the 5G global infrastructure by the U.S. saying, if you do business with them, you're not going to do business with us, it seems like we've taken a similar approach here with these major Russian oil producers as a way to try to say, well, here is a way to implement sanctions whereby they would be more difficult to circumvent. And rather than essentially say, oh, well, Russia doesn't have the shadow fleet or various other workarounds to stop this, we're instead going to go to the customers and say, if you do business with these places, it's you that's going to get cut out. So do the risk management thing and don't do business with them. On this basis, of course, crude oil jumped higher. And we'll see if this continues to work out this week. One of the key things to consider here, of course, is whether this might be something that is part of the Besant and Trump and China conversation that we've been at least somewhat promised, and that seems to have the stock market all kinds of happy at the start of this week. China, of course, the buyer of consequence of Russian energy at this point. India too, but certainly China front and center. And so if there are these new restrictions on buying Russian crude, perhaps there's a deal to get done here. Perhaps this is part of the U.S.-China negotiation. And if so, then crude might have something of a wild week this week after that major rally, either building on it or coming the other way. It would seem, one would imagine, that if it is all roses here going into this meeting for Trump and Xi, then there is some sort of a release valve that is going to get turned here, and crude may very well deflate as a consequence. Gold came back a little bit last week, down 1.8%, but of course, it's still only a tenuous decline. It is a little bit lower again today around this U.S.-China hopium, but we'll see if that continues. It does look like some speculative appetite has been coming out of gold here, and it seems to be receding, but so far, relative to its aggressive gains, the pullback has been generally modest. The dollar continuing to look strong last week, up against both the euro and the yen, with the yen having the outsized weakness there as the new prime minister, dovish as she is, manages to cobble together a coalition and actually take office. Bitcoin doing its risk appetite on steroids thing, where when stocks are up, it is up more. And so it bounces 3.8%. But of course, that's after an 8.8% sell-off. So on net, the down move in Bitcoin seems to be generally continuing over the past several weeks. Now, it was the US CPI report that really got markets in a happy mood on Friday. We can see what happened here. Inflation came in a bit lighter than expected, 3% on headline and core versus 3.1 expected. And if we look at the breakdown here, we can see still the majority of inflation, of course, still in services, 2.12% or percentage points of the three at the headline is still services. Goods, though, we still see somewhat elevated and inching higher, but not worse than it was in August. So August gave us the highest goods inflation for the better part of 3 years. But it doesn't look like things got worse in September. And so you have this sense here that perhaps you don't really have a major sort of spook here, or at least a spook that's become spookier around absorbing higher costs from tariffs. On the energy side of things, a little bit perkier in terms of what's going on, but still by far the smallest contribution to overall inflation. If we look at some of the changes here, we can see a significant increase really just in the energy side of things, whereas goods inflation, as we just said, didn't really go anywhere. Services a little bit softer, just 6/10 of a percentage, or 6/100 really of a percentage point off. So very, very minor. And food basically steady as well. So not anything in this story here that would suggest that the Fed would be this or that way inspired against rate cuts, which is really the test here. This was really what we were looking for. Now, there is still some disconnect here, and this is where perhaps this story has a bit of a overheated character to it. Obviously, nobody's going to be surprised when the Fed cuts by 25 basis points this week. That much has been thoroughly priced in. This is from the CME FedWatch tool, and we can see here that we're hugging just a touch below 100% likelihood that this 25 basis point cut is happening on Wednesday. That's, of course, the biggest piece of event risk this week, the Fed policy announcement. We can see that's basically unchanged versus Friday or a week ago. And so this is fairly steady. Nobody is really looking for any kind of shock here. We'll see, of course, what the policy statement says and what Fed Chair Powell says after in the press conference, but no real shockers here. We likewise see that for December, another one of these 25 basis point cuts is firmly baked in. Now, it's not quite as dramatic as it was a week ago, where we were within a hair of 100%. Now we're sort of in the lower 90s, but nevertheless, this is overwhelmingly convincing and pretty much in line with what the Fed has given us in September's summary of economic projections. If we see here, we've got 3 rate cuts implied here, from 4.4 as the median rate down to 3.6. And we can see, of course, September has already given us 1 cut, and the other 2, October and December, are fully baked in for the remaining 2 meetings of the year. So there's really no controversy at this point. There is controversy, however, about what happens thereafter. 3.4 on the Fed's view here implies only 1 cut next year. And that's against the backdrop of revisions to inflation on the upside, the unemployment rate lower, growth higher. And this is where the disconnect is, because the markets are much more dovish in their thinking. They've got 64 basis points on the menu for next year. So that's at least 50 basis points in cuts and 14 basis points in the direction of a third cut. That puts it narrowly better than even odds of occurring, 56% chance that we're going to get a third cut. So we are between 25 and 50 basis points apart on what the markets expect versus what the Fed is committed to seeing, and we're narrowly to the dovish side of that. So we're closer to saying the Fed is 50 basis points off as far as the markets are concerned. But in any case, the markets are more dovish than Fed officials are allowing. Still, even though we can see that this is slightly corrected here. And a piece of data that wasn't as closely discussed, but certainly seems consequential here, it came out after the CPI report on Friday. This S&P Global PMI's data set giving us accelerating growth and showing us that manufacturing accelerated, services accelerated, the composite accelerated. And so we're looking once again at the heady levels of growth that we were looking at in the second half of 2024, which, if we look at sort of what the reference points are there. We're looking at second half of 2021, early 2022. So 2 and 3 year highs for economic growth. So if that's in fact what's going on, that ostensibly has a upside knock for inflation. And then how do you end up with all those rate cuts? Maybe the Fed is right to be more circumspect. So if we get this rate cut, which is widely expected, the question might well become, well, okay, we knew that, but what has this narrative done for us lately? The other spot where we have, as expected, types of conversations, of course, the Wednesday Xi and Trump meeting, where, again, we've painted the tape so positively going into it that perhaps the question is, well, okay, if the president can get as upset as he can to cut off negotiations on trade with Canada because of a single ad that the provincial government in Ontario put out there, what might he come up with as a reason to disappoint investors on this China conversation if all of the positivity is already in the market? And then there is the remainder of the economic calendar for the week. Other than the Fed, we are going to get a monetary policy announcement out of the European Central Bank. They're not expected to do anything. In fact, they're baked in for standstill for the rest of this year and all of next year. And then in Canada, we're expecting a policy announcement same day as the Fed. They're seen cutting from 2.5 to 2.25. That looks pretty well baked in. No major surprises there. And of course, with the gravitational pull of the Fed announcement, it's unlikely that we're going to get a whole lot of attention paid to what the BOC does. The GDP numbers due for the third quarter out of the Eurozone on Thursday. They're expected to give a slightly weaker growth, but since they're coming out leading into an ECB policy announcement, probably not a big mover. And we might get the BEA releasing the PCE inflation numbers on Friday, but of course that's a function of the government shutdown, and we'll see if that occurs. CPI, of course, came out, but PPI has not. So we don't have all of the components that we need to reconstruct it, and we'll see what happens there. If maybe the shutdown ends or there's a special dispensation that's made. The other thing, of course, where optimism has blossomed, and the question necessarily is, well, how much more optimism is there to be had, is the earnings front. And here, not much is on the menu, relatively speaking. Obviously, there is a whole sea of names on this calendar this week, and so I've boiled it down just to tech, and already even in that space, there is a sea of names. But of course, the really big news here is going to start, as most things apparently this week, on Wednesday, where the trillion and higher market cap names are clustered. Microsoft, Google, Meta, all reporting. This will be a interesting after hours cherry on top of the event risk Sunday here. Obviously, we are going to have the Fed already out by the time these numbers are out. We are going to have the Bank of Canada rate decision out. Ostensibly, we might even already have the Trump-Xi meeting results somewhat at least understood, because they'll be meeting in South Korea. So by the time we get the market close on Wednesday, it will have already been the business day of Wednesday the 29th in South Korea. So perhaps we will already know what the Trump-Xi situation looks like and where it stands before even the Fed's out. And by the time these numbers are out, the Fed will be out as well. So we'll see what that looks like. It'll be interesting to see if, even on the basis of all of that, the markets are able to find some sort of directional conviction, because Thursday we get one more little tidbit by way of earnings from Apple, another of the Mag 7, and of course also a trillions market cap type of name. So lots and lots of heft here for the overall market. And again, the question, as it is across all of these narratives, well, we're as happy as we can be about the US and China. Good. We're fully baked in for what the Fed might do and more. So we're as happy as we can be about the Fed, and happier even than the Fed is actually admitted to themselves in their forecasting. We're exuberant on earnings, at least as far as the market has not sold off when those earnings have missed a bit. They haven't very much, but if anything, Tesla was a bit soggy. But for the big names, Netflix was a bit of a letdown and didn't really impact sentiment. Tesla was a bit less than great, a bit underwhelming. That didn't impact overall sentiment. So what would need to happen here from these results? How much of a blowout would there need to be for the markets to get even more happy? And are we now asymmetrically more vulnerable to a slight miss than we are to even a great upside outcome on any of these narratives? And so with that in mind, I have somewhat adjusted my exposure. Of course, when stocks broke out after the CPI report on Friday, I took my shorts in NASDAQ and the S&P off the board. Small losses as we continue to find where this speculative top might be. It's obviously not here because we've now made a higher high. So I'm out of those, and I do those in small size and in risk-defined verticals for a reason, because fighting a market is expensive if you don't do it in very, very, very risk-defined small exposure type of ways, which is the way that I've approached it opportunistically when opportunities present themselves and when the breakout occurs. If it occurs the wrong way, well, then idea tested and no, not the time. So back up, take your loss, and look for the small losses to be very much overwhelmed by a large, big sell-off when invariably it does occur. So I still have long dollar exposure. I haven't touched any of that. Still short against the Aussie, the pound, the euro, and the Canadian dollar. I am, strangely for me, for how skeptical I am of the of where the big indices are going at this point, slightly net long in stocks world, because I still have this long-term exposure to Brazilian stocks. I'm still holding that. Still short a little bit of gold. That continues to work. I sold calls last week when things started to break down, and I still have that. Still a little bit short Bitcoin, which is obviously not working, but it hasn't crossed the kind of Rubicons that stocks have, and so I still have a little bit of risk-off exposure here. Still long the bonds. Those continue to climb higher. In fact, the long end continues to outperform the front end. So the calls I have in TLT continue to quietly work in the background. And I've gotten a little bit short crude oil here, looking for maybe some sort of a dispensation for China out of this conversation with Trump and Xi this week. Maybe that gets a little bit of relief. Maybe China gets some kind of a door to keep buying cheap Russian crude as a part of this negotiation. And so maybe some of this concern last week about Lukoil and Rosneft gets undone. So just tactically a little bit short with a put vertical over 53 days here, taking a little bit longer to dilute exposure to Delta so as not to get my face ripped off were this to suddenly rally up a storm. And so far looking at that as the portfolio for the week ahead. And that's Macro Money. As ever, we are here Monday through Thursday, right after Overtime, a show I typically co-host with Chris Vecchio and Dylan Radigan, looking at the Wall Street close and where things may go therefrom. Also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. Thanks very much for joining. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Happy trading.
Hey, welcome back to the Tasty Crypto Show. I'm Dan Cecilia. Today, I'm joined by Kyle Samani. Kyle's the co-founder of Multicoin Capital, one of the largest crypto-focused investment funds, and he is also chairman of Forward Industries, a crypto treasury company established to become the largest public holder of Solana with over 6.8 million sold tokens held to date. Kyle helped lead the seed round of Solana back in 2018 and has been actively investing in crypto through Multicoin since 2017. Hey, Kyle, welcome to the show.
Hey, Dan, pleasure to be here. Thanks for having me.
Yeah, thanks for joining us. Really excited to talk about this. You know, Solana has been in the news. These DATs have been in the news. Forward Industries, I think you guys, have recently raised that $1.6 billion PIPE investment. But I want to start at the beginning. I want to learn more about, your start in the space. And I know early on in your career, you were working in software sales, co-founded a software firm in Texas. How'd you decide to pivot into crypto, and what led you to the Solana seed round in 2018?
Yeah, appreciate the chance to be here. I kind of found my way into crypto over the course of 2016. I discovered Ethereum in March of 2016, and I looked into the API and how to program it. And at the time, the term DeFi didn't exist. The term permissionless finance didn't exist. But after looking at the API, I kind of understood those core seeds of those ideas, even though we didn't really have the vocabulary at the time to describe them. And that struck me as very important. And kind of from there, fell down the proverbial crypto rabbit hole. By early 2017, I had developed a full-time internet hobby and kind of made the decision to launch Multicoin in May of 2017. We launched on October 1st of 2017. So that was the first part of the question. And what was the second part of the question?
Yeah, I want to know how you came across Solana. Like, how'd you meet Toli and some of the early co-founders and ultimately lead that seed round?
Yeah, I had a chance to meet Anatoly and Raj for the seed round. At the time, I was very actively looking at alternative L1s. I was very disenchanted with Ethereum. Ethereum was my first true love in crypto, and I've obviously done a full 180. At this point, and really don't like it. My kind of moment when I flipped was DevCon 3 in November of 2017. It's about 6 weeks after Multicoin launched, and I've been following Ethereum at that point for, call it 18 or 20 months, and I started to go very frustrated. I was like, hey, you guys have been talking about scaling this thing. There's a lot of research papers and ideas, hypercube routing and sharding and state channels and plasma chains and all these different things. And I was like, cool, what's the game plan? And obviously it's hard to appreciate this, but just how much Ethereum was the star of the show in 2017. Ethereum went from $10 to $1,000 in 1 year. And Ethereum was the fastest asset in human history to 100 billion in market cap. And so it was, what's it called? It was the fastest asset in human history to $100 billion. The chain was not performing particularly well. Every time there was an ICO, the chain would get congested, transactions would drop, fees would spike. When CryptoKitties launched, same thing happened. And I was like, all right, well, it's your annual developer conference. You're literally the star of all of finance. Obviously, this is when you've been doing all this research in public for 3 years. Tell us the game plan. And DevCon comes and goes. Vitalik gives a keynote. He shares some research ideas, but does not lay out a game plan. And I was just so flabbergasted because I was like, how could you possibly be? Not only could Vitalik be in the position he was in, but then all of the people around him who were advising him and to go into your annual developer conference and not have a game plan. And I was totally baffled. And that's the moment I gave up on Ethereum. And I set out to go find alternatives. And ultimately that search led me to Solana. And Anatoly really stood out to me for a handful of reasons as a founder. The most important was he was focused on a use case. At the time, he was calling it blockchain at NASDAQ speed. That kind of core idea has now evolved into what we call internet capital markets. But he understood intuitively, even in 2017, 2018, that these blockchain systems were going to be first and foremost trading systems. And he made all of his design decisions focused around that. And all of the other L1 founders were just like, oh, I'm here to build a better blockchain without like a use case focus. And so a lot of things stood out, but that was probably the biggest.
Yeah, so I think that's a great story. And I think, I was early in the space. 2017 is kind of when I got in. I was out here in Chicago working in brokerage industries, saw that spike in Bitcoin to 20K. CME launched the futures and the bubble kind of deflated. And, that led me to look for alternative use cases as well. So I kind of echo that sentiment where, there needed to be an alternative. There needed to be something that was usable for useful for users that could build performant apps on it, low fees, and scalable, right? So, I definitely echo that story, being in the space at that time. So fast forward, walk us through the forward industry story. You recently closed that $1.6 billion PIPE financing led by Galaxy, Jump, Multicoin, heavy hitters in the space. You have 6.8 million sold tokens on the balance sheet. What's the flywheel for forward? How are we generating cash flow here?
Yeah. So in terms of how forward came to be, people have been asking me to do this for about a year, and I kept on saying no. And then what caused me to change my mind was a speech that SEC Chair Paul Atkins gave on July 31st. In that speech, he announced Project Crypto, and he said unequivocally, we're going to move U.S. securities markets on chain. And when he said that, I was like, you know what? I actually think doing a DAT is interesting because now it allows me to basically operate in the domain of U.S. equities and then to try and advance the interests of Project Crypto even faster than they would otherwise move. So that was kind of my impetus for getting this thing off the ground. In terms of like what we're looking to do on a go-forward basis, we want to be doing things natively on the Solana blockchain. We've already started that by staking. Today we're staking the vast majority of our Solana tokens. And we've talked about this already. We very much intend to deploy our balance sheet into DeFi. You can think about the balance sheet in two segments, dollars and SOL. On the dollar side, we can borrow today at roughly 7.5% to 8% from various crypto lenders. And we can deploy that on-chain on Solana in the 12 to 20% range. So there's a nice kind of cost of capital arbitrage there. It's not risk-free by any means, but we feel that like given the intrinsic risk profile and mandate of this entity, that is exactly the kind of risk that our shareholders should want us to take as management and as board. So we'll be doing that soon. And then the other side of the balance sheet is Solana, of course. And we, are seeing all the SOL, and there's a ton of vaults you can deploy into so you can earn incremental yield on top of the staking yield. So you should expect to see that stuff start to ramp up in the fairly near future. I'm excited to talk about it when it becomes available. Beyond that, we have aspirations to get even more advanced on chain. I can't quite share those details yet, but I do think I'm optimistic that Forward is going to be a pretty active participant on chain, both directly and through kind of vault products.
Gotcha. Yeah. And, I know I was reading a bit into the company and some of the press releases, and I know you've acquired some validators, so you're participating in the ecosystem. You're obviously staking in DeFi to sort of generate that yield. So it is, in other words, this SOL is being productive, right? The SOL is being productive for investors. You're contributing to the growth of the Solana ecosystem. In some ways, you're working with the foundation to do some more staking DeFi essentially support Solana. So you recently released a press release around your deal with Superstate. So this idea of tokenized equity, this idea of tokenization, right? We've heard it in traditional finance. Our viewers, our retail traders, Robinhood's been talking about it. Obviously, the big banks have been talking about it. So you announced this partnership with Robert Leshner's Superstate. Can you give us an overview of this deal? Like, what do you believe the deal unlocks for your holders?
Yeah. So look, our as part of Project Crypto, like we look at our job is to accelerate this transition to moving U.S. securities markets on chain. We realized very quickly we can obviously issue forward industries equity on Solana. I've known Robert and the team at Superstate for a number of years. I consider Robert a friend. He's obviously a well-known and successful crypto entrepreneur. So called Robert and was able to get to a deal very quickly with Superstate. As part of that deal, Forward Industries actually secured a right to get a substantial equity stake in Superstate for no cash consideration, but rather for being kind of like a flagship customer. And what I mean by that is, step one is tokenizing our equity and putting it on chain. Fine, whatever, that's easy. But like beyond that, like we want to be able to prove that you can run all capital markets operations on chain. That includes shareholder governance, that includes future fundraises, that includes dividends, that includes mergers and acquisitions, that includes stock splits, all of these other kinds of things. And if we're going to move U.S. securities markets on chain, then someone needs to be first and just like do all of that stuff.
Right.
And we clearly view it's in our mandate to be the guinea pig and to do all of those things first. So part of our deal with Superstate was not only are we going to tokenize our equity, we're going to raise our hand and do all of these things first so that they can prove it out. And then obviously for then all of Superstate's follow-on customers, there's a known and proven path.
Gotcha. Okay, cool. And as part of that, like you said, the tokenizing the equity, that's easy, right? That's kind of table stakes, but you also plan to allow forward stock or forward shares to be used as collateral in DeFi protocols like Jupiter, Drift, Camino. Do you see an appetite for that? Is this just something you're kind of testing? Like you said, you're trying to be the first, trying to prove this use case. Like, how does that work briefly?
Yeah, so as part of our announcement with Superstate, we also announced our intents to work with specifically the three large borrow lends, Drift, Camino, and Jupiter, to make sure that they can support forward equity as collateral in their respective systems. So I'm optimistic that will go live in a couple of weeks when all this happens. The intent here is obviously like assets are objectively more useful if they can be used as collateral than if they can't be, and obviously those are the three major borrow lends on Solana today. So it was just kind of natural to call those guys and make sure they have the technical integration ready to go. Obviously, the other benefit here now is for companies 2, 3, 4, 5, 6, 7, 10 who follow in our footsteps. They'll know that again all of the technical integrations are ready to go, right? So someone has to be first. Someone has to call all these guys. We're very fortunate that we have pre-existing relationships with all of these teams, so we can pick up the phone, call them. And they'll get the engineering work done that they need to.
Gotcha. Yeah, and I think you made a really interesting note, especially for our users, our investors, traders at the firm here at tastytrade. It's useful, borrow lend, using collateral to go out and do other things in the space, right? So most retail traders here, they're familiar with MicroStrategy, they're familiar with IBIT, right? Trading options on IBIT. BitMine, Tom Lee launched a DAT recently, so. I kind of want to know, how does Forward set itself apart from these other retail accessible vehicles, that retail traders are familiar with?
Yeah, I mean, we look just like issuing security, common shares and buying SOL is like good and interesting. Well, obviously, we have an ATM. BitMine has an ATM. MSTR has an ATM. We have that, but like that's not what's interesting here. What's interesting here is our ability to be capital allocators and to produce cash flow and yield for our shareholders. Step one is staking. That was the easiest step. We're already live with that. We're staking the vast majority of our SOL today. Step two is participating in DeFi, and we're now getting all of the infrastructure in place so that we can do that at scale. I'm optimistic that Forward is going to be one of the largest, if not the single largest entity on chain in the not too distant future. And so we want to be a part of the Solana ecosystem, and we want to produce as much cash flow for our shareholders as possible. And I believe we are in a position to do so by leveraging our scale, by leveraging our brand and our relationships. Moreover, in addition to just like deploying capital on chain, we've actually been able, we're working on negotiating deals with these various DeFi teams so that we can actually earn tokens from them for participating in their respective systems as one of the largest on-chain players. And so by doing all of this work, again, by leveraging our scale, our relationships, and our network, we want to be able to do all of that and then drive even more value back to our shareholders at Forward.
Gotcha. Yeah, it's interesting because you look at MicroStrategy and what Saylor's been doing, who's pioneered this. He was the first, right, to kind of move into this space, and he has these ATM vehicles, he has these preferred share vehicles. But like you mentioned before, and in other interviews I've watched, Bitcoin doesn't generate that much yield, right? There's not really a lot you can do with it.
It generates zero yield.
Zero yield, right? So to be a productive asset, I think your bet is Solana, right? And you're not only just buying it, like you said, and holding it on the balance sheet, but you're moving into DeFi. You're allowing this yield to be generated. You're running infrastructure. You're doing things that turns this into a real viable business, and also with your scale, with your partners, allowing other projects to kind of piggyback off this. So this DAT craze has really blown up over the last couple of months. Obviously, we know Bitmine, Tom Lee, he's on every single, major media network, doing it for Ethereum. There's a bunch of others. I did an Athena one the other week. There's 40, 50 of these trading right now. So I'm wondering what your thoughts are on that. Is it a crowded space? Is it in some ways maybe not a bubble, but could use that term? Do you see an opportunity for consolidation, and how are you positioned for that?
Yeah, look, there's always bear markets in crypto, and then I think in DATs that we'll have a bear market. And look, in a lot of ways, the bear market is already here for DATs. A lot of the DATs are trading well below 1x MNAV. I was actually looking this morning. One of the Bitcoin ones is trading at 0.3x. There were a bunch trading in the 0.5 to 0.6x range. So that's already started to happen. There's going to be a shakeout in this industry, in this space. It's inevitable. The world does not need 13 Bitcoin DATs. The world really only needs one Bitcoin DAT, and it's obvious which one that is. Strategy is in a league of its own. The world, I think, only needs one Ethereum DAT. As of now, it does not appear that SBET versus BMNR is in any way differentiated. Again, that may change, but so far they haven't done anything to differentiate. And then you look at the Solana DATs. Right now there's 7 or so, roughly.
Yeah.
I don't think the market's going to sustain 7 of these things, and we're doing everything we can to differentiate. We started step 1 with Superstate. We have a bunch of other stuff in the works, and I'm excited to share it when it's ready.
Great. Yeah. No, I think it'll be interesting to see how this all shakes out. I think a couple of the other Solana ones like Upexi, and I can't even remember, but there's not a lot of information on them. So I think Ford's well positioned in that regard. So I want to get into something a little bit more specific to Solana, a little bit more specific to you. It's this idea of internet capital markets, right? If you've been in the space, if you're a crypto native, you're familiar with last cycle, kind of the ETH maxis kind of yelling about, ultrasound money, right? There's always these narratives and stuff that pop out. And one thing that I think is admirable about you and multi-coin and what you've done is you had conviction, right? And you rode the Solana, you saw it early, you got in, you held your conviction. We went through that 2022, 2023 bear market, and we came back out, and now we have awesome applications, Pump.Fund, we have Jupiter, we have Camino, we have Meteora just launched. But I want to specifically focus on this narrative and your thesis around internet capital markets. Can you explain this? Can you just give a brief overview of what that means?
Yeah. At the highest level, the idea of internet capital markets is quite simple, which is any person anywhere in the world should be able to trade any asset from just their phone and having an internet connection. And that's it. And if you think about it, it's like a shockingly simple concept.
Right.
It's very libertarian, kind of naturally. And it's just what you would kind of assume, why isn't that the way the world works? There's no obvious reason why the world should not work. But as a practical matter, the world does not work that way. And in fact, it's still probably many years away from working that way. So that's the basic idea. As I think about the internet capital markets thesis, I think about it kind of through 2 distinct lenses. One is the simpler lens, which is just let's take Apple and Google and NVIDIA and all these things and trade them on chain so that they're 24/7, so that you have DeFi, you have programmability, you have all these other things. You have access, making it easier for guys in the Philippines or Argentina to own these assets. That's kind of the obvious side. And I think when you see Larry Fink going on TV talking about tokenization, I think that's primarily what's running through his head. The other side of internet capital markets is the stuff I spend more of my time thinking about, which is this idea of embedding trading as a new modality in new contexts. And what I mean by that is, for the last 35 years of the internet, finance has lived in its own little bubble on the internet, and then there's been everything else. You could go read in the Wall Street Journal, you can go learn about something on Twitter or in Telegram or whatever. And then if you want to go and trade, you go to E-Trade or Interactive Brokers or Morgan Stanley or Coinbase or Robinhood or your Phantom wallet. And all of those things that I just named, the user interface is exactly the same, meaning the homepage is your portfolio. There's a search box at the top. You type in a ticker or a contract address. You go to the asset page. The asset page is a price chart and a buy and a sell button. And like that organizational system literally has not changed in 35 years. And it's not a bad system. It's intuitive, and there's a reason why it is what it is. But my point is that it's just lived in this little isolated bubble. And the other vision of the other side of internet capital markets is embracing this idea of finance as a internet native first-class primitive. And what that really means practically is bringing finance to new places around the internet. The first real version of this was actually the Telegram bots, which launched in the summer of 2023. And for the first time ever, when you were trading out of a Telegram bot, the trading UI did not look like Phantom or Coinbase or Robinhood, right? It looked like Telegram. And that was the first time ever there was finance in this kind of new context. And we have the single player Telegram bots. There's now multiplayer Telegram bots, meaning you can add a bot to a group chat with your friends. And then naturally the obvious actions are, if you make a trade, it'll broadcast that to the group. And then obviously your friends can either copy trade you or counter trade you. Right. And there's a lot of kind of fun social cohesion that comes from that. I expect, in the not too distant future, if you're reading the Wall Street Journal reading an article about interest rates, obviously at the top of the article, it should not be a screenshot of the Kalshi market. It should be an interactive widget with a buy and a sell button. Right. And if you're reading about Apple's earnings, let's say earnings are coming up, there should be a prediction of, is Apple going to ship more than 1 million iPhones or whatever? Is Apple going to beat earnings estimate EPS? This is like very obvious that you should be able to embed prediction markets on media, all sports media. I mean, if you have a football game coming up and you're reading about something, clearly there should be a prediction market on the game, or if the guy's going to score this many points or whatever it is. So I think we're about to see finance really permeate its way all over the internet. In the presentation I gave at the All In Summit a few weeks ago, I provided some more examples as well. I'll give one more here. I mean, every podcast, you host a podcast, and if you're talking about a ticker or an asset, clearly there should be a buy and a sell button for that asset overlaid on top of your podcast, right? Like, it's just obvious.
Right.
And it's actually crazy that the internet doesn't work this way, because it's one of those things that, like, once you see it, you can't unsee it. So I expect all of this is going to kind of happen over the fairly near future. And this is really the vision of internet capital markets.
Gotcha. Yeah, I think that's a great explanation. It's the most in-depth explanation I've heard of it so far, and it's easy to envision, right? And I think we're already getting there. You mentioned the Telegram bots. You mentioned Kalshi prediction markets, which has kind of been hot in the retail space recently. Obviously, with some of these big investments into Polymarket, into Kalshi. Real quick, I know we got a couple minutes left. I want to touch base on this idea of like entertainment finance, right? The Solana meme coins that sort of led the revival of Solana, I think, back up to over $200. We had the Pump Fund, Bags app, these launch pads, right? And now we have streamer coins. And, I kind of go around the office and I talk to a lot of people on our trade desk who are familiar with derivatives. They're familiar with interest rates, whatever, Forex. And I'm like, and I kind of give them the analogy, and I'm like, well, let me, who Mr. Beast is, right? And some of them do. Most of the younger kids do. And I go, what if you could have bought a token on a stream when he launched 10 years ago and held that? Right. And I think when you give that analogy, people sort of begin to understand that there's value here. Right. Like you said, I host a podcast, live stream. We're a financial media network tied to a brokerage. Shouldn't I be able to value the attention that this gets? Shouldn't I be able to value the attention that, I can create here? And I think that's what some of these launch pads are getting at. So I just want to get your commentary on that, the meme coins and, the trenches, some of that.
Yeah. So Really glad you used the term entertainment finance. Quick history lesson. Most of your viewers, I'm sure, will be appalled to realize that the godfather of entertainment finance is Jim Cramer. Yeah. But like when you pause and think about it, it's like he was first.
Right.
Really, no questions asked. He was first. And that's boomer entertainment finance, obviously.
Right.
I think the kind of entertainment finance 2.0 started during COVID. And I think it was kind of led by first Dave Portnoy when he did Daily Day Trader Global. He had his green hammer.
Yep.
And then kind of Roaring Kitty. Right. I think they were kind of like the kicking off point of entertainment finance 2.0. Today, I think we're like squarely in the phase of entertainment finance 3.0, which is shows like yours, but there's plenty of shows where guys are pulling up charts and stuff and with their viewers and such. And then you're starting to see, I'm not sure that's what I would call 2.0. I think the 3.0 version is what basically is starting on Pump, which is you are doing a stream and then there's a token tied to it, right? And specifically in the context of trading, it seems very obvious that a streamer should go long or short something on stream, and then their audience should want to copy trade or counter trade them, clearly.
Right.
And then maybe you create some token tied to whatever the trading profits around that or something, right? So that seems very obvious. The Pump guys are obviously running a lot of experiments in here and trying to kind of figure all of that out. But it does feel to me like we're kind of on the precipice of entertainment finance 3.0. Maybe the Pump guys pull it off, maybe they don't. I don't think anyone has quite cracked it just yet. But certainly it feels like there's a lot of brain power and experimentation going on in the space. And I'm pretty optimistic that this is going to become a major new subset of the internet.
Yeah, I think it's one of my big theses too, is like creator coins. And there's indexes out there that are beginning to track it. If you look, and I know, Pump is the major platform, but I think Zora is kind of capitalizing on this a little bit. And you're beginning to see some of these creators pop up, some of these newer media models pop up. I'm not sure if you're familiar with Coinage Media at all. But you're able to own pieces of these content creators, these streamers. Like you said, copy trading, what's live is a big thing. So I'm excited to follow it. I think it's a narrative that's going to catch fire over the next couple. Maybe it'll take a year, maybe it'll take a couple months. I don't know. But it's something to pay attention to. So I really appreciate your viewpoint on that. So we got a couple minutes left, and I just ask all my guests, what's your bold prediction for the next 10 years in crypto?
What's my bold prediction for the next 10 years in crypto? I think 6 million Bitcoin will be stolen by quantum computers.
Okay, interesting. That's a good one. That's a really good one. I'm gonna definitely a polarizing.
I think that will happen well before the 10-year mark.
Okay, all right, great. So, last thing, where can our audience find you and follow along after today's show?
Yeah, I'm super active on Twitter. My handle is just my name, Kyle Samani, and I always have a lot of fun there. You can learn more about Multicoin on our website, multicoin.capital. And then, of course, I think we have here Forward Industries on the website here, too, on the stream. And it's just forwardindustries.com.
Great. Well, that's all we have today. Thanks for joining us. Kyle, thanks again. Really interesting conversation, and appreciate you being here, and we'd love to get you back on soon. Good luck with everything. Peace.
Dan, thanks so much.
Yep.